The pound is weaker as a result, so we'll watch gilts as well. Are they going to reprice the Bank of England a little bit, waiting for that by-election tomorrow? And Publicis, we have seen that High Touch has offered Publicis 1.2 billion for part of its business. This is all about marketing technology, Guy.
Okay, here we go. Wednesday's session is upon us. Let's show you some numbers, give you an idea of what we are delivering. We think probably a slight softening early doors, but then maybe as the session progresses, we'll see, as a result of what we're seeing in US futures, a little bit of a firming. So the FTSE 100 absolutely doing nothing right now. We are flat. The Stock 600 is flat. We saw this yesterday, looking for another catalyst. Where do we go? Does it come from the Fed? Does it come from the tech sector? What is going to be delivered a little bit later on in the Trump press conference? We're expecting to happen a little bit later on this evening. There's a lot of risk factors towards the back end of today's session after Europe has closed. So we're seeing a mixed performance. FTSE flat, CAC down by 0.1%. The AEX is going nowhere, as is the IBEX. Feels like we are on hold, which is what the Fed, ironically, is potentially going to be on a little bit later on. Is that the biggest risk event going forward from here? Is that what Europe is now waiting for, Anna?
Yeah, absolutely. Very much on hold for European stocks. That's a good way of putting it, because the Stock 600 is going absolutely nowhere. As we've said a number of times, US futures are pointing higher, so we are out of step with them, perhaps, at least for the moment. In terms of the sector picture, I see that media stocks is the best performing sector here in Europe, up by 0.4%. And perhaps this is about M&A. We see WPP is one of those stocks going higher. Publicis is a little bit higher, just up by 0.1%, but maybe that news flow I was mentioning surrounding marketing technology companies, LiveRamp and High Touch, maybe that has ignited some thinking around M&A within that sector. But that sector, quite volatile often, but it is a little bit stronger than the rest. The banking sector up by 0.3%. We see well-represented UniCredit, BPM, so a diverse, well, some Italian banks moving higher there, I suppose. Technology also moving higher this morning. No particular standouts within that space. To the downside, though, autos is the worst performer, and that perhaps has to do with the BMW story that we've been talking about, although we don't have an opening price on BMW just yet. So for the moment, the selling is in Stellantis, which is down by 2.6%, Renault down by 2.3%, and some of the suppliers, the likes of Omovio and Valeo, are a little bit weaker this morning. So that seems to be a story that is cutting through on a day that's more big picture, waiting for the Fed, really.
Let's talk about where we are going with gilts this morning. They are, I'm just trying to see if I've got a correct number yet. We're softening up a little bit, 4.756, a day ahead of a by-election, a day ahead of a Bank of England decision. We had CPI a little softer this morning than we were maybe anticipating, pretty much in line with the previous number, but services maybe looking a little bit more sticky, and I wonder whether that will be where the market's focus will ultimately come.
Yeah, it's interesting that we do see these yields coming down, particularly at the short end, actually, so down by around 5 basis points on the 2-year in the UK. So something to be taken away, perhaps, from that inflation print. Let's get some analysis of these markets right now with Hugh Gimber, Global Market Strategist over at JP Morgan Asset Management. Hugh, good morning to you on this Wednesday. It is a Wednesday, and it is the first appearance at the FOMC press conference from Kevin Warsh, the first time he will have been the chairman of this 2-day meeting to set policy rates in the United States. What can we add to the conversation? What's your latest thinking, given the big fall in oil prices, about the tone that he'll be wanting to set?
So for me, the press conference is all about whether Chairman Warsh arrives to speak on behalf of Chairman Warsh or on behalf of the committee. Because we know we're transitioning from a chairman in Jerome Powell, who is very much about building consensus across the committee and then presenting a united front when you reach the conclusion of those meetings. I think it's less here whether Kevin Walsh wants to go down that route or actually wants to say, well, I'm going to tell you what I think about the world and where I see the economy headed, and my colleagues might be thinking something differently. So that extent to which he wants to present that united front, for me, is the key question tonight. But ultimately, I think the Fed is still overpriced. We see no reason for central banks here to be hiking rates, not only because oil prices are coming down, but particularly given the softness in labour markets and wages especially. We have that for the Bank of England tomorrow. I think both the Fed and the bank can be on hold through the course of this year, waiting to see how the Middle East pans out, but importantly, offered that time by just a very different labour market backdrop to where they were a few years ago.
So how does somebody who doesn't like to give forward guidance come out and give a message? Well, I mean, he could say something similar to what you just said. He could push back against pricing of interest rate hikes, but he doesn't like forward guidance. So in that context, what should we expect?
I mean, I suspect if Chairman Walsh can go in tonight and say very little, that would be a good outcome. I think his view will be, we need to be patient. Yes, the economy is in a different place today to where it was 6 months ago, but certainly the activity that we've seen over the past week offers him that time, because the pressure for the Fed to be materially tightening up here, I think, is now gone. And we'll be watching the dots as well. It looks pretty clear that the cuts in the dot plot are likely to come out, but how long we have the dot plot for is another unknown. So it's all about tone. I think it's less about action. No need for the Fed to be taking any decisions anytime soon. If I was the new Fed chair and you offered me a few months just to sit back and watch how the economy was panning out, I think that would be a pretty tempting option.
Yeah, I wonder whether Trump would give him that time to do that. Is Walsh going to offer any reason not to buy stocks?
I don't expect him to tonight. I think the exercise that we're doing and all of our clients are doing today is, where is there still value after this agreement has come together? We published our mid-year outlook on Monday evening, which was slightly unfortunate timing given how...
You're talking about the agreement when it comes to the Gulf.
Exactly, yeah. And so, you know, in that piece, we had an upbeat view on the economy. We were expecting oil prices to come down, but the exercise we're now having to do is to say, well, how much of that has come out of the price? I still think there's value on offer in the stock market, but it's much more at a sector level.
Where is it?
It's at a sector level in consumer-facing stocks.
Yeah.
It's in some of the more energy-sensitive cyclicals, and it's in Europe, because this is where we've seen the laggards over the past few months. You look at the earnings revisions that have taken place so far this year, tech and energy have more than given you all of the upward earnings momentum in 2026, with many other sectors seeing earnings revised down. So I think there is still value, but it is much more granular beneath the surface, with, you know, the overall index level of the S&P 500 looking like it's done a pretty good job of pricing in this good news. But ultimately that's because tech's doing its own thing, and then you've had the energy strength as a result of the move higher in oil.
In keeping with that thought about Europe showing some opportunity, I mean, Barclays increasing their European stocks view to market weight today, so that seems to be a theme. Europe has some reliance on some sectors, though, that might not do well. I'm thinking about cars. We've got Mercedes shares dropping today. BMW, with their profitability warning, certainly dropping down 11% at the start of trade. I mean, this is a sector that is volatile, but it's important to Europe, or is it still important to Europe? I mean, it's perhaps a decreasing market scale.
I think that's the critical point. You know, 5 years ago, Europe was a really auto-heavy economy and an auto-heavy stock market. It's less so today. I still think there are ample opportunities within Europe to pick your spots. I think the banks have further room to run with a steepening yield curve. Again, I'd add the ECB to a central bank which looks overpriced to us. Add the ECB to a central bank which looks overpriced to us in terms of the extent to which it needs to raise interest rates. And then you think about places like chemicals, very, very energy intensive, the first place for people to look during an energy shock. It's been hard to be positive about Europe over the past few months because we know the region is much more energy sensitive, but it feels like we're turning a corner here. And so if 2025 was all about this embrace of global diversification, I see no reason for that not to continue now that we can start to think about moving past the worst of this shock.
Do you think, though, if we're pricing out rate hikes all over the place, you talked about Europe, you've also talked about the Fed, if we're pricing out rate hikes in the US, Do you think that money will have the courage to come to Europe when things like SpaceX are just climbing and climbing day after day?
The challenge with tech here is that I think you almost have to strip it out of your regional discussion. We've been doing a lot of work thinking about where you want to be placing your tech allocation. I think the emerging markets are still an underappreciated opportunity here. You look at the way that that index has derated so far year to date. We came in at about 14 times forward earnings on the 1st of Jan. We're now below 12 times forward earnings despite the strong performance, because the recipients of the big spending coming out of the US are often found in the emerging markets, Korea and Taiwan in particular. So I think there is an opportunity there. For Europe, it's less about trying to compete with tech, because we know if the tech sector is performing well, that European indices are going to struggle to keep up. But if we get this broadening out across sectors, which we are seeing working really well, I think that strengthens the case for regional diversification. When, let's be clear, there are still a lot of big unknowns that we're dealing with on the tech story.
Do you like this market? Do you like this equity market?
I mean, there's a lot to worry about, but there always is. And I think what we're learning this year is that the economy has gone through yet another seemingly massive shock.
Yep.
And yet here we are with earnings having been upgraded and with corporates showing resilience. So, we're thinking about this world where effectively the more chaotic the politics becomes, the more governments spend. Fiscal stimulus is driving growth. That's driving corporate profitability.
Is it sustainable?
Well, yes, if the earnings are still there.
No. Is the fiscal spend sustainable?
At the moment, we see no signs of governments wanting to give up. There is a pressure on politicians to be appeasing electorates globally. That pressure is going to get greater in the US over the coming months in the run-up to the midterms. So provided that the bond market is looking at this spending and seeing a growth benefit to it, it will carry on. I think you have to consider debt to GDP, not just in the terms of debt, but also in the context of what it's doing for growth and helping that denominator.
Hugh, great to see you. Thanks for stopping by to see us. Hugh Gimber, Global Market Strategist at JP Morgan Asset Management. Quick look at the Core 6. Let's see what is happening. We've got certainly some activity in the car sector this morning, but broadly, actually, some quite significant strength across Europe. You've got Novo up quite nicely. LVMH is rising. The defence stocks are having a fairly good day. Tech continues to tick on. Little bit of weakness coming through in maybe the safer end of the market. Look at what is happening with Nestle. But the real story this morning, as I say, is in the autos, and that is where Charlie is starting.
That's exactly right, Guy. We've got red lights flashing for BMW. They just had to cut those profit forecasts on the back of weakness in China. Now, we saw weak retail data out of China. There was talk that there was going to be a spillover into the auto space, and we're seeing that this morning on the back of those cuts. Cost cuts in focus as well. So we're seeing BMW down well over 7% this morning. That is red for BMW, and we're watching the broader auto space for these vehicle companies that really are struggling in that key market. But I want to tell a different story, and it's one that focuses a little bit more on the positivity on a different side of the auto space. Look at Auto One Group. That is that German online used car marketplace. They're actually up 9%, right? So selling used vehicles is actually having a positive moment here in Europe. They were able to maintain their guidance for 2026. Now, it's a different story, right? You're talking about used vehicles here, but we're seeing sort of a red and a green tail here in Europe on their Extron. So again, their price target. This is a semiconductor company based in Germany. They got their price target increased by JP Morgan. So we've seen a lot of positivity around semiconductors. This is that semiconductor equipment company up some 4% on the back of that increased price target from JP Morgan. Let's flip and take a look at Zealand Pharma. They had some disappointing results coming out of a weight loss drug trial earlier this month, and we've got Berenberg Research this morning downgrading them. The market not liking that, down well over 4%. Analysts talking about how it's going to take longer to unlock upside there. So difficulty this morning. Different story for UniCredit, up about 1%. This is interesting because banks in that Eurostock 600 index were the top performers yesterday. We're seeing a little bit of that trend continue. You saw Germany reject the bid by UniCredit for Commerzbank. Investors may be liking some of that. So does this positivity around banks continue? I think that's a big question for the day ahead.
Charlie, thank you. Charlie Wells with a run-through of those stocks on the move. Coming up, we will talk about UK politics as the UK gears up for one of the most consequential by-elections, special regional election in recent history. We speak to Richard Tice, Deputy Leader of the Reform UK Party. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherrian in Seoul, and this is Bloomberg.
Today, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Welcome back to the opening trade. 16 minutes past 8, so 16 minutes into our session, and we're pretty flat across European markets. Sorry, US futures still pointing higher. Here in Europe, under pressure, the auto space. So that's one end of the spectrum. On the other end, technology, retail, media doing a little bit better, going higher.
Let's talk about where we go next with UK assets. The next 24 hours is going to be hugely consequential. We've got a Bank of England rate decision, plus we've also got a by-election in the UK. Now, internationally, by-elections don't normally land as an area of importance, but this one really could. It's taking place in the northwest of England. It is in Makerfield. It is a northern town in England. The UK, remember, operates a winner-takes-all, first-past-the-post political system, and current polls suggest that what we are witnessing here is a big contest between Manchester Mayor Andy Burnham, who has basically got designs on becoming the Prime Minister of the UK if he wins this and ousting Starmer, and the Populist Party Reform UK, which is struggling at the moment maybe to coalesce its vote because it's facing an insurgency on its right from Restore in the UK. How does this all fit together? Where do we go from here? How important is this by-election going to be for global and UK assets? We're joined now by the Deputy Leader of Reform UK, Richard Tice. Good morning, Richard Tice.
Right.
It looks as if Andy Burnham is going to... Okay. Let me ask a question. It looks as if Andy Burnham is going to win this. We operate a first-past-the-post system here in the UK, and the vote on the right is fragmented between you, Reform UK, and Restore. How do you deal with that?
Well, this is the most important by-election this century in the United Kingdom, and it's neck and neck between Mr. Burnham and the Reform candidate Rob Kenyon. Forget Restore on the right, they'll get less than 4%. And whether or not Mr. Burnham wins, as I say, it'll be very, very close on the day. The consequences for UK politics are clear, and that is that cabinet ministers over the weekend will threaten to resign unless the Prime Minister sets out a timetable for his departure. And you will see other leadership contests emerge, although Mr. Burnham, if he wins, thinks that he can secure a coronation. There will be a contest. The two ministers who just resigned, the Secretary of State for Defence, John Healey, and one of his deputies, Al Khan's, I think they're going to put forward a leadership challenge as well. So all will change in the leadership of the Labour Party over the coming months. It's just a question of how many people go for it, how messy the contest is. And the big number to watch here tomorrow is the UK's net borrowing number after a disastrous number for April last month.
Okay. Richard, let's just return to the vote split question, if we may, for just a moment. In theory, it is, as you say, neck and neck. But it looks like the fragmented votes on the right, and you say it's 4% that Restore will get, some people put it as high as 7%, could deny your candidate the win here. And I'm wondering whether or not we should start thinking about this as being a scenario that could be represented more broadly across a series of seats in the UK. We now have an increasingly fragmented right. We are unlikely, therefore, to see a coalescing around a single candidate. Can we start to maybe question Reform's ability to win what we thought would be safe seats? This should be, in some way, a more safe seat for Reform than many others out there. If you struggle to win this, is there a message?
It's the opposite. This was a safe Labour seat. The fact that Reform are neck and neck shows the complete transformation and the toxicity of the Labour Party. Mr. Burnham has his own personal appeal. But look, the reality is voters vote tactically, and we believe that in a first-past-the-post system, we've led in the national polls for the last 300-plus national polls. On average, we're leading by 9 or 10%. And let's wait and see. But ultimately, if that is the difference, and you know, we still believe that we've got a cracking chance of winning. If that is the difference, it will reinforce to people just how damaging it would be for Restore to continue. So let's wait and see. You know, we're not afraid of competition. I'm a businessman. We believe in markets, sensibly regulated, of course. So look, that's fine. But there's lots of splitting of the left. Don't forget, there's the Green Party, who are polling almost the same as the Labour Party. So you know, that's the nature of a fragmented political system now, which is also riven with sectarian politics for the first time in Great Britain.
Richard, nice to speak to you. Thank you very much for joining us this morning. It is nice to speak to you, but I wonder where Nigel Farage is right now. We're on the eve of a big by-election, as you say, really consequential, and you have a candidate in that race. And we haven't heard very much from Nigel Farage, and people are asking questions about whether this has anything to do with the fact there's an inquiry into that £5 million donation that he received. I mean, are other people from Reform, such as yourself and others on the shadow front bench, if you like, are they taking the limelight because he is ducking the limelight? Where is Nigel?
He's literally on his way to Makerfield as we speak. He's campaigning there today and tomorrow. He's leading from the front. And on the one hand, people complain. They say that it's a one-man band. It's only Nigel. So then Nigel spreads the load to the very highly qualified team, and then we get complaints that he's not around. I mean, we can't win, can we? Look, I just make the simple point. Nigel is crystal clear. We are a growing team. We're leading in all the national polls by 8-9 points as an average, some of them by 10. They go up and down a bit in the same way that indices go up and down a bit. But The reality is this is an economy led by a party that's making a terrible job. The borrowing numbers are out of control. There's no growth, and the country wants change.
Okay, so it's a team effort. That's the message you're getting. Now, you flagged the borrowing story a couple of times, and I want to ask you actually about fiscal rules in that context, because just this week we have heard a bit from you about fiscal rules, and you said the problem with them is that they can be fudged, you don't meet them, and so do they really have much credibility? I'm slightly paraphrasing there, but if that's your view, and probably there are others with that view, but what kind of fiscal rules would you then adopt?
The most critical thing is we've got to get the borrowing down. You can't have an economy that's flatlining like ours is, that keeps borrowing £140 billion a year with no growth, and think that's going to end well. It's not. It's a bit like remortgaging the house ever upwards, hoping the value ever goes ever up, and at some point the value flatlines and then turns and you get into negative equity. So the borrowing number is a key focus. We have to cut wasteful spending, of which there's vast amounts, tens and tens and tens of billions, cut daft regulation. That will then start to trigger some growth. Only then can you achieve what we call performance-related tax cuts, when we show we can cut spending, because that's what the markets want to know. And, you know, yes, you've got the fiscal rules, but they never seem to be met, and they constantly get pushed out. And at some point, you have to say, stop spending a lot more than you're earning, start cutting spending, get some growth back into the UK economy.
Thank you very much, Richard. Thanks for joining us. Richard Tice, Deputy Leader of Reform UK. We will also be speaking to the leader of the UK Conservative Party, Kemi Badenoch. That's coming up later on the programme. You can catch that exclusive interview after 7 o'clock London time. Really interesting, then, that he is talking about how close it's going to be. I suppose maybe that's just an effort to get out the vote. That's the context around this. But yeah, working towards what will be, for international investors, a by-election with some importance, which is odd.
You don't normally talk about by-elections being important, but I think the context here is important to understand. The first-past-the-post system that we have, winner takes all. We obviously saw that in the last general election. The Labour Party's vote count was relatively low. It took a huge number of seats. What happens now in a much more fragmented situation is going to be really interesting. He was highlighting Burnham's appeal in this particular seat. But what happens more broadly if you get this much more fragmented story on the left and on the right? How easy is it going to be to call British politics, price in British politics, the turbulence that it could cause?
Yeah, Keir Starmer's currently at the G7, of course, and that's where his focus is, although back here in the UK, we're talking about this domestic politics. AI will certainly be a big feature of the G7 today, and we're going to be talking a lot about technology in the next part of the programme, so we'll keep you briefed on that front. This is Bloomberg.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Know how the market day started.
Find out how it finishes.
public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is the opening trade, 30 minutes then into today's session, and this is a pretty unchanged picture that we have on the overall markets, actually up by 0.1%, but not by much. So we're pretty flat here in Europe. US futures continue to point quite substantially higher, in particular NASDAQ futures, and we're waiting to hear, of course, from Kevin Walsh later on today. So that's the big set-piece event of the day, waiting for the Fed under a new chairmanship. The DAX is under pressure today, and that is, of course, very much to do with the auto sector. We've had a new steer on profitability from BMW. That seems to be weighing on the sector more broadly. The CAC 40 going nowhere very fast, and the same really of the FTSE 100, guys. So a lot of the action to the downside on autos, but overall the stock 600 moves a little higher.
Yes. I have nothing to add in terms of providing fireworks. Look at what we are looking at here. 301 stocks up, 283 down. I think we're fairly balanced when it comes to the winners and the losers. Volume is pretty much average, so nothing, again, therefore, to see there. Let's talk about maybe some of the single-name stocks. We're getting a bit of fireworks there. MSC, this kind of giant container ship business, looking maybe to get even bigger. There's a story that maybe it's looking, or its owner is looking to acquire a stake in Hapag-Lloyd. That stock is up very nicely. Straumann, this is a dental implants company, up by nearly 10%. Also, One Group, we were talking about the kind of the flip side. This is the used car side of the auto story, and it is up very nicely in Germany, up by 8.5%. So a mixed picture there emerging on the auto sector, because this is what we have on the downside. BMW down very heavily, talking about cost cuts, talking about a downgraded outlook. That stock is off its lows, but still down by nearly 7%. The whole auto sector is under pressure. Well, actually not the whole auto sector. If you're looking at a used car, the situation maybe looks a little bit better. Mercedes is, though, down in sympathy to BMW. And I think it's a Berenberg downgrade that is knocking Zealand this morning. It is down by 4%, Anna.
Let's get an update then, Guy, on the latest on the geopolitical agenda. Iran is set to receive broad financial incentives as part of its agreement with the United States. We understand that will include the right to sell oil immediately, to tap a $300 billion development fund, and get eventual access to frozen assets. SpaceX jumped for a 3rd straight day on Tuesday, overtaking Amazon in value to become the 5th largest stock in the world. The gains in SpaceX shares are a sign of consistent investor demand, calming fears perhaps that the record IPO would be too large for the market to digest, and paving the way for potential public offerings from AI competitors. And Federal Reserve policymakers are expected to hold interest rates steady later today, posing an early test for the new Chairman Kevin Walsh as rising inflation erodes households' purchasing power, and President Donald Trump continues to press for lower borrowing costs. Guy.
Okay, let's carry on our analysis of what is happening in these markets and get an assessment of what this morning's picture looks like. We are basically waiting for the Fed to arrive and to figure out exactly who Kevin Walsh is. Is he a dove? Is he a hawk? Does he believe in forward guidance? Does he not believe in forward guidance? What message are we going to get a little bit later on today? Let's try and answer that question. Markets Live strategist Scarlett Montgomery Koenig joins us around the table. Good morning.
Good morning. Yes, very exciting day.
It is. We're waiting for Walsh. What are we waiting for? What do we think we're waiting for? What will be a surprise today?
I mean, I think it's a relatively low bar for a surprise in terms of it's his first meeting. We have no idea kind of what side he's going to come out on in terms of we've had a shift on the Iran view and that we have lower energy prices now. So maybe he takes that as a signal to be more dovish. But we also know that AI is inflationary right now and that it's just consuming more commodities, and that's meaning infrastructure build, et cetera, contributing to inflation. So I think there are a lot of questions around what his messaging is going to be. My kind of base case is in line with orthodoxy. There's quite a lot of data still to come. We're seeing how these shocks work through the economy. So if I'm Kevin Warsh, I'd rather wait to see how that develops and take it a little easy my first meeting. I think it's also important to note that the SEP and DOTS come out this time. And so I'm kind of more thinking about how much the market looks towards that versus Warsh if you have a more divided Fed.
Yes, it'd be interesting, to see what happens to the DOTS. I wonder, thinking about AI and the role it plays, you could see a world where Kevin Warsh came out and said, in the short term, in the short term it might mean this, but I stick to my longer term view where it means something more deflationary. But then that might look a little bit like forward guidance, and then he's not supposed to like forward guidance. So how do we limit our expectations, I suppose, Skylar, with that in mind? I mean, we spoke to Hugh Gimber earlier, who said he possibly doesn't want to communicate much in terms of the outlook. Really?
Yeah, and I mean, then you have to take direction from the SEP and DOTS. What I will say is you could have a forward view that inflation will eventually come down because of AI and the productivity booms, but they need to deal with the data right now, right? We've had a very dovish Fed for years now where they've had more easing in their policy bias despite inflation being above target for years. And that was okay when inflation was trending sideways, but it's rising now. And CPI, yes, the last print was a little bit more encouraging from a core perspective, but it's still more than twice the target. And so I think the market's shifted in reaction to that data, and because the data leads what central banks are doing at this point, because we don't know how supply shocks eventually feed through over time, that's going to continue to lead, and it's a relatively low bar for the Fed to be hawkish, and I think they just need to leave the door open for tightening.
How volatile do you think UK assets are going to be over the next 24 hours?
This is the big question. I'm actually relatively positive on the pound. I think the market's, kind of tired of hearing about political noise. It's been a really long time that it's like, Starmer's going to go out of power. We're going to get someone that has more fiscal ease bias. I think if Burnham doesn't win, yes, that's kind of more negative for a long-term outlook, but Labour is not going to call an election before 2029, right, with polling so poor. If he does win, what we saw at the last election when Burnham odds were rising was your GDP spiked up, and then it came down because he sustained this idea that you're going to have deficit improvement or at least some kind of fiscal tightening in the bias. And I think that's because the market has kind of shaped the way Labour does policy now from a fiscal perspective, and that's still there in the background. So I think it's very hard to see a lot of fiscal slippage from the Labour Party. And so, yes, it's a day risk, but further out, you're not having a huge fiscal change. And I think, too, for the pound, you have to keep in mind that it has one of the highest carries in G10. It's one of the only kind of risk-positive currencies that isn't highly correlated to commodities with oil prices coming down. And there is a premium built in from a political perspective.
And for the gilt markets then, Skylar, I mean, the fiscal rules, obviously they're written by politicians. They can be ripped up by politicians and changed. But the gilt market does seem to attach some importance to them, or at least they like some fiscal discipline by some form, in some format. We spoke to Richard Tice, who, of course, is from the Reform Party earlier on, and he just this week, he's been talking about the weaknesses, which are much discussed around having fiscal rules, that they can be fudged, people don't meet them, and then you wonder whether they have much credibility. And he says, really what matters is just getting borrowing down. Is that still a preoccupation then for gilt markets? What do you think gilt markets are watching in all of this political chaos?
Yeah, I mean, absolutely. I think the UK gilt market in particular is very vulnerable to fiscal slippage. We still have this kind of scarring from the Liz Truss crisis. And I think part of that, too, is you've got a greater hedge fund participation in the market. And so flows can move quite quickly. But maybe the more concerning thing is the inflation perspective. That's really the focus now. We had UK inflation data this morning. The headline number was encouraging in that it was below consensus estimates. It was a flat reading. I think more worrying is services inflation. Yes, it came down down in the last print we had, but it rose further than market expectations, and the Bank of England's very sensitive to this services inflation. And inflation is more worrying for gilts than other markets because there's such a high share of inflation-linked debt. So as we head into the Bank of England meeting, I think the worry is that you're going to get some members voting for hikes, and that's kind of the preoccupation now, particularly for the long end, rather than the kind of fiscal slippage, which I think has gone more to the fore or background as you've had political members reinforce it.
Okay, well, thank you very much, Skylar. Skylar Montgomery going from Bloomberg Markets Live. And we'll stick with the UK theme because over at the G7, Keir Starmer, the UK Prime Minister, has been talking to the media, and he is saying that he will fight any contest to oust him as Prime Minister. We've heard that before, but it's interesting that he is still saying that, and he's saying, I want Andy Burnham to play a role in the UK government. So if I suppose if Andy Burnham does not become leader, that is Keir Starmer's view of things he would like to offer.
I think this is really interesting because basically what he is saying is I'm going to fight. And I'm going to fight. This is my manifesto, and I'm going to fight for what I believe in. And if Burnham defeats him, then in theory Burnham... It pushes Burnham towards the idea of a general election, I think, because he can't say, I'm just a continuation candidate from the Starmer manifesto. I'm coming in with something new because we've had this kind of contested story in the Labour Party. And then you come back to the question of what Tice was talking about, and this vote fragmentation becomes even harder to call what happens in all those other kind of constituencies where Labour maybe wins because because the vote split is split on the right.
Which is a good reason why we might not end up in an election situation.
Well, no, I think it would make the Labour Party more willing. If you do see the splits on the right, it would make the Labour Party, would make Burnham more willing to call a general election because he will go, we've got a split on the right. In the first part of the post system, therefore, we can maybe win more seats, and maybe I do call a general election.
Okay, a lot of moving parts then, lots to watch on the UK politics. In the meantime, Keir Starmer is still the Prime Minister, and he is at the G7 over in France, of course. We're looking at live pictures. Ursula von der Leyen gathered with other leaders from the IMF and from Germany there, I can see, and they are getting ready for their day, essentially. We've seen some of the leaders speaking to the media already. For more, let's bring in our Chief Europe correspondent, Oliver Crook, who's at that G7 event. He's in Evian in France. Iran was still a big topic of conversation during yesterday's developments at the G7 then. Ollie, we heard President Trump certainly talking about it, and a lot more has emerged in the past 24 hours about exactly what it is the US and Iran are going to sign up to in this MOU.
Yeah, absolutely. And I mean, we're all sort of waiting for that MOU, and I think a lot of the leaders were waiting for that MOU over the last couple of days. And I think that before it sort of made it out to the media, it was presented to a number of the G7 leaders. They got to take a look at it and sort of give their analysis. And of course, they've been spending the last 2 days with President Trump, impressing him in terms of what the substance of this MOU is going to be. And actually, of course, the role that the other G7 countries and, of course, the other partners, the Qataris, the Emiratis, the Egyptians, for example, attended this meeting and held meetings with the G7, what their roles will be going forward. Of course, the European role, particularly on the military side of things, trying to demine the Strait of Hormuz, reiterated yet again that that is something that they'd be interested in doing. The United States has signaled that they could actually use that help. But the problem is that these demining ships, it's a big concern for the Europeans. They're not basically appropriate for any kind of wartime activity. This is really a peace effort of demining the seas, and that is something that they need to have those guarantees of in order to begin with that. There is, of course, this other segment of this Iran deal, which has everything to do with sanctions and financial incentives. If Donald Trump wants to get the G7 on side with that, they're going to have to be part of those very sort of active discussions. And of course, the first deal, the JCPOA, the EU and many of these countries were directly involved in sort of that architecture. And of course, they have their own sanction regime. So if they want to now bring the Europeans into that, that is going to be a more extended conversation for the days and weeks to come. But that was really the geopolitical day yesterday, focusing on Iran and the Middle East and, of course, also Ukraine.
Okay, so what was the takeaway on Ukraine? Progress made?
I think so. I mean, I think that Zelensky can walk away and say, you know, he got something fairly positive from the President of the United States. I mean, Trump said very explicitly that he's sort of ready to re-engage on the Russia-Ukraine question. You'll remember that they, you know, obviously Trump said he was going to end the war in 24 hours when he was campaigning in the election. There was this concerted, really hard push, these meetings between Trump and Putin and Zelensky, of course, and that, of course, didn't lead to very much. And then basically the United States withdrew from the process. They've been distracted by the war in Iran. Iran. Now that Trump says the war in Iran is in the rearview mirror, they're ready to re-engage. And it sounds like they're ready to re-implement those oil sanctions on Russia. Many of those were paused in order to ease the oil glut that we've had as a consequence of the war in Iran. And of course, Trump yesterday said that he'll do everything he can to basically bring the war to a close. But we should say that the first half of the Trump presidency, the focus was really, as far as the Ukrainians and the Europeans were concerned, helping the Russian side of things, because what he kept saying to Zelensky is you have no cards. Zelensky's acquired a few cards over the last few months. He's gained initiative on the battlefield. He's got that 90 billion euro loan from the Europeans. So going forward, it's about trying to get the United States on side and actually saying, you know what, we're in a much better position right now. We have this money backing. Now we need some military hardware and we need some goodwill from the United States.
I know that technology is on the agenda for today, a little bit later on in the day perhaps then, Ollie. Tech sovereignty, certainly something we've discussed around the AI theme running up to this G7. I wonder if that'll get much of a mention as we see AI leaders from the United States gathering with G7 leaders and perhaps with a wider group as well. I can see that it's not just G7 leaders in attendance right now, they have invited friends.
Yes, indeed. So yesterday was geopolitics. Today is all about the economy. The session that's going to be kicking off this morning brings in the IMF and the OECD, and we'll actually speak to the Secretary General of the OECD right after that meeting to get his appraisal. And they'll really be assessing the economic impact, obviously, of the war and now of the ceasefire and potentially the end of the war. What is that going to do to global growth? What is that going to do to inflation? We'll maybe get some clarity from those discussions from the Secretary General a little bit later. But of course, the main event I think that many people are watching are the AI CEOs from the United States, from Europe, all assembling for that working lunch with G7 leaders, the CEO of Anthropic, of OpenAI, and of course some of the leadership over at Google, Mistral from here in France, and really trying to get the global conversation going on AI. I mean, of course, everybody on the planet is talking about AI, but there is not a sort of collective conversation about regulating AI, the sort of cooperation among nations. And of course, over the weekend, we've had the United States coming in and basically banning foreign nationals from using some of the more experimental models from Anthropic. You know, you're seeing that AI nationalism. So for the Europeans, they're going to want to be a part of the sort of inner bubble, the inner circle for American tech and being able to gain access to those models. So that'll certainly be on the agenda. It'll be interesting to see if you get a sort of joint statement potentially from the AI CEOs across the globe, bringing the Europeans in as well. But of course, as you've been talking about all morning, for the Europeans, the main focus here is, I mean, the valuations of these companies in Europe are all basically below $25 billion. And we're talking about IPOing Anthropic and OpenAI at about $1 trillion a bit later this year. That's going to be the main focus, trying to gain some traction, some sovereignty, and some initiative, and some capital, of course, here in Europe.
Oliver, we'll continue the coverage. Thank you very much indeed for this morning's work. Our chief Europe correspondent in Evian, France. Much more on this story is coming up. This is Bloomberg.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think
anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Today, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Welcome back. This is the opening trade, 8:49 here in London. So we are 49 minutes into a session that hasn't taught us a huge amount about appetite for European stocks. We're up by 0.1% on the stock 600. The German market certainly underperforms then, Guy. And that's really an auto story. It's interesting in this context. We've seen Barclays upgrading their view on European stocks. Hugh Gimber was quite positive with his view on European stocks and the opportunities that Europe offers now with the maybe Iran war in the rearview mirror. So interesting to see that we're making very modest gains with that as the
that trade is not on yet, is it?
Yeah.
Certainly, that doesn't feel like it is on. What has been on, interestingly enough, has basically been the tech trade. So you would have thought that you'd see a broadening out. You'd see the areas like we were talking about earlier, chemicals, energy, kind of some of the spaces that you would expect to benefit.
And Nasdaq futures are up. 0.8.
And they got hits towards the back end of yesterday's session, so maybe there's a little bit of a bounce going through there. But nevertheless, it's been the easy trade, which has been to basically go back to what the tech trade was at the beginning of this year, which seems to be driving that story. Which takes us very neatly and nicely to what is happening in Paris right now. The Viva Tech conference is underway. The reason why Tom is not here today is because he is there and joins us now. So, Mr. McKenzie, what is the vibe there? Europe obviously is struggling to gain traction when it comes to the tech trade. Is there evidence at this event, the conversations that you're having, that actually headway is beginning to be made? We heard about tech sovereignty down in Evian. What's the picture in Paris?
I think there's evidence, absolutely, that there is traction now in Europe. You've got 180,000 people visiting this event. It's billed as the biggest startup and tech event in Europe. You've got about 14,000 startups north of that. You've got the fact that Jeff Bezos is going to be taking to the stage in a couple of hours here, and that suggests that if he's interested in what's going on in Europe, then there is traction here. But I think the overriding concern right now, and certainly we got this from Maurice Levy, who's the founder of Viva Tech and, of course, the chairman emeritus of Publicis, is the concerns now that the US has the potential to cut Europe off from frontier models. The export controls around Anthropic. And Maurice Levy is saying it would be a bit like having electricity and the US having the power to cut that electricity off to Europe. He says this has been taken very badly here in Europe amongst European leaders. And it really is another, we talk about wake-up calls for Europe a lot. This is another wake-up call. We have the dependency on energy, we have the dependency in Europe on defense, and now a moment where we're showing there is a dependency on frontier, at least frontier AI. So how Europe responds to that is going to be a key question. I think. There's other paradigms, other shifts, other focuses in terms of how to build out alternative AI. We're going to be talking to leaders around world models, for example. Can Europe play a stake there? We're going to be speaking to the European Commission Vice President to see what the response is in terms of the sovereign play. To what extent should the stack on AI be owned by Europe? What is realistic? All of those questions are percolating here, but absolutely that decision to put in export controls around Anthropic has sent shockwaves through the European tech space, and how Europe responds to that is going to be front and centre.
It will, and it'll be interesting to see how it comes up in conversation as they pivot to talking about technology in Evian in France at the G7. Tom, thank you very much. Tom McKenzie, of course, at the Viva Tech conference. And he and the team will be bringing us many more conversations from Viva Tech. We'll be speaking to the French ambassador for digital affairs and AI, plus ASML's CEO, Christophe Fouquet, will also be speaking to the team on the ground there at Viva Tech.
But Europe must be looking to the other side of the Atlantic, looking at what is happening in terms of the valuation story around the IPOs that we're getting, SpaceX in particular. Just amazing over the last 3 days. Jumping for a third straight day yesterday, overtaking Amazon in value to become, get this, the 5th largest stock in the world. It IPO'd Friday. Shares closed 4.8% higher, pushing its market cap to $2.65 trillion, roughly $8 billion higher than Amazon's. We're joined by Neil Campling now, Bloomberg's senior strategist, to talk about all of these things. Somebody put out a note earlier on, which I thought was kind of about right. If I value a brick in my house at £1, does that mean I can then extrapolate that brick into all the other bricks that build my house to get you to an overall valuation? The free float on SpaceX is so small at the moment that I think the market's really struggling to deal with the demand picture that we are seeing. And I'm just wondering if we should be making that leap from kind of valuing one brick to valuing the entire house.
So if there were more bricks, they'd be worth less.
Well, I think I saw something similar this morning that was comparing the revenue pile of SpaceX today having a smaller revenue number in absolute terms than Reckitt Benckiser that makes toilet cleaner. So perhaps every bottle of bleach that we have, to your brick analogy, therefore means maybe Reckitt should be bigger than SpaceX. I know it's a little bit of a stretch maybe, but in terms of clearly there's the options market, as you called out yesterday, started trading yesterday. Quite rather concerning. Some of these triple levered funds were at one point were up 60% intraday. And then look at the options market themselves when they started trading. We noticed that the 5th most active, I think, call option was out there, was one expiring tomorrow. 300 call, so buying the stock at 300. Another, the 8th most popular, was a $380 call compared to the $200 close. So that's a big short-term bet that we're going to see significant acceleration, which kind of suggests it's more of a bet. Right. Very much a retail trade than anything else.
Okay, and just briefly, Neil, I mean, this is a business that is now minting other billionaires. We saw them buying Cursor just yesterday. It's a very busy business, isn't it? For, you just listed your enormous enterprise, and now you bought this AI coding startup for a mere $60 billion.
A mere $60 billion, but Cursor itself, we have to remind ourselves that Anthropic, and there's lots of sovereignty issues around the AI stack, but Anthropic's revenue run rate is 20x greater than Cursor. Cursor is a startup. Today I was looking at the CapEx forecast. You mentioned overtaking Amazon's market cap. Amazon's going to spend more than 4x on the hyperscaler CapEx next year compared to all of SpaceX across all 3 divisions.
Neil, staggering thoughts as ever. Neil Campling, thank you very much for joining us for the latest on SpaceX and the tech landscape. No doubt that will continue to be a feature over the G7. More on that on the Pulse. That's it for the opening trade. This is Bloomberg.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here at Viva Tech in Paris, and these are our top stories. Bloomberg learns that Iran is being offered a range of financial incentives as part of its agreement with the U.S., which is set to be signed in Switzerland on Friday. The Fed is expected to hold steady in its first policy decision under Kevin Warsh, but the Iran deal clouds the path ahead. Plus, SpaceX overtakes Amazon to become the fifth largest stock in the world, and Elon Musk's wealth climbs to more than $1.3 trillion. So there is quite a lot going on. There's a lot, of course, in geopolitics. We always look at, of course, not only the price of Brent, but also what's going on with WTI in the U.S. Now, U.S. stock futures, bonds climbing, oil falling further. Again, investors really awaiting the Federal Reserve's policy decision for any fresh clues on the outlook for global interest rates. I'm also looking at NASDAQ futures are actually gaining some 0.8%. S&P futures gaining 0.3%. Let's also look at the European markets map. Now, this is a picture across the board for the CAC, the FTSE, and elsewhere. Also, the DAX, a little bit of a mixed bag. We did have some inflation numbers in the UK that were surprisingly not bad, is maybe how I would describe them. And we're seeing the FTSE down a bit with the DAX, but actually the CAC gaining a touch. Well, we'll have plenty more throughout the day. Good morning, everyone, and welcome to The Pulse, live from Viva Tech here in Paris. Now, the conference is billed as Europe's largest event connecting startups, investors, and, of course, tech leaders. This year's speakers include Jeff Bezos, the founder of Amazon, Christophe Fouquet, the chief executive of ASML, and even Bernard Arnault, the chief executive of LVMH. Now, the French President Emmanuel Macron will also be speaking here tomorrow. Then elsewhere in France, AI and tech, high on the agenda at the G7 summit in Evian, will be live there very shortly. But our first story, let's start with the latest on the U.S.-Iran deal. Now, Bloomberg understands that Iran is set to receive
broad financial incentives as part of its agreement with the U.S. A draft of the deal seen by Bloomberg shows that Tehran will get the right to immediately sell oil, tap a $300 billion development fund, and eventually access its frozen assets. Now, President Trump made clear that he saw as the main win from the agreement.
Here's what it says. Iran will never have a nuclear weapon. That's what it says. It won't have one to buy, to develop. They will not have a nuclear weapon. And I would say that's about 99.9% of what I wanted, because we couldn't let that happen. You couldn't let that happen. And they won't have a nuclear weapon. Now, in addition to that, the Strait is going to be open toll-free.
Well, let's bring in our Abir Abu Omar in Dubai. Abir, good morning. So based on what we know on the terms of the deal, which side stands to gain the most?
Good morning, Francine. So look, you said it in your intro, all the financial incentives that Iran is getting seemingly out of this draft that Bloomberg was able to see. We still have to await, of course, the official signing ceremony that will take place later this week at the sidelines of the G7. But from what we know so far, what we can understand from this MOU, the 14 provisions in it, is that some of the financial concessions that Iran will get include a $300 billion at least of economic aid that it will help Iran rebuild after the massive economic damages that it has suffered out of this war. Other incentives include unlocking the blocked assets that Iran has been asking for since the start of this war and lifting the oil sanctions. Now, these are some big concessions delivered by the United States to Iran. For the United States, what it is set to gain out of this is the reopening of the Strait of Hormuz, which was open before this war started, and then it will stop Iran from attaining a nuclear weapon. Now, it's important to note here that Iran had always maintained that it wasn't seeking developing a nuclear weapon and that it uses its uranium for civil purposes. Now, you heard President Trump and what he said, Iran will never get a nuclear weapon. And the extension of the ceasefire over the next 60 days, Francine, will be mainly targeted towards this goal to get a negotiation going for the Iranian nuclear program. Still a lot of details there, not clear, so we'll have to wait and see what the official document actually says and what both sides will agree on by the end of this week.
Abir, I had a pretty great conversation yesterday with Jeff Curry that says, look, even if there's a deal, this is not going to reopen quickly. So how quickly are analysts saying that the Strait of Hormuz can reopen?
Well, just like Jeff, a lot of the analysts are saying this could take weeks, if not months, essentially, for traffic in the Strait of Hormuz to go back to pre-war levels. Now, we're seeing some trickling movement, if I were to say trickling, in the Strait of Hormuz. We're seeing, for example, Qatar ships making their way back to the Strait of Hormuz. Now, ships and tankers are still very weary of what the situation looks like, what we know about the mining situation. For example, in the Strait of Hormuz, we heard the latest from Italy's Giorgia Meloni, who said that Italy is not going to take an active part in the demining process unless hostilities against Lebanon stop by the Israeli side. But what we're seeing right now is still the movement in the waterway is not what it was compared to levels seen before the war. And then you have a lot of European officials at the sidelines of the G7 really questioning just how immediate the impact is going to be once the Strait of Hormuz is opened, as immediately as Friday, according to President Trump. So it's wait and see for the time being about the movement of those ships, but definitely good news for the oil market and for Brent prices that are falling below $80 at this point, Francine.
Abir, thanks so much. Abir Abu Omar there from Dubai. Now, G7 leaders have voiced their support for the deal with France and Germany, saying they're ready to help clear mines from the Strait of Hormuz. So let's get more from Oliver Crook, our Chief Europe correspondent. Ollie, good morning. So how are leaders responding to the U.S.-Iran 14-point draft memorandum aimed at really ending this war with Iran?
Yeah, I think it's a relief for everybody here at the G7 leaders meeting. It's just not just the G7 leaders meeting, of course. There's also the IMF here and the OECD, the economic session, which is underway now this morning. That'll be really sort of helpful, I think, in appraising what the economic impact will be of this ceasefire, this potential peace deal, what the impact is going to be on global inflation, on global growth. But yesterday was really the geopolitical day, the day that was really focused on the Middle East and on Ukraine. We had, of course, the leaders of Qatar, the UAE, and Egypt here also present at Evian France, holding those meetings with President Trump and other G7 leaders. And I think for most of them, listen, they may think that this is an imperfect deal. They may not be entirely clear what the sort of long-term plan is here, but it seems to show that there is goodwill on both sides, the Americans and the Iranians, to basically end the war, the kinetic part of this war. And now the Europeans can try to find what their place will be within it. As you were hearing there from Abir, there's been a lot of conversations at the European side about taking an active effort in the demining of the Strait of Hormuz. We've gotten signals from the U.S. side that that has helped, that they would be willing to sort of embrace from the Europeans. But for the Europeans, in order to be active in that sort of scenario, demining is only a peacetime activity. It cannot happen basically when there is any risk of warfare. So for the Europeans, it's going to be very important that this war is effectively concluded and that there's not really any risk there. There is, of course, the other side of this, because this 14-point plan has a lot of stipulations about sanctions, about financial incentives. You'll remember the JCPOA, that was struck with the consent and with the Europeans as part of that architecture. They are not part of those discussions right now. So if you want to enlist the Europeans to help create financial incentives for Iran, that is going to be a longer process in terms of discussions for the coming weeks and months.
AI executives are also planning to attend the summit today, so what can we actually expect there?
Yeah, that's right, Francine. I think everybody, yourself and myself, will be focused very much on the AI trade today, and very much so for the G7 leaders who have this working lunch with the CEO of a number of different of the American tech giants. The CEO of OpenAI, Sam Altman, will be here. There will be leadership from Google's AI division, as well as the CEO of Anthropic. And really, obviously, everybody around the world, Francine, is talking about AI, but there's not a sort of a single coherent AI global conversation. I think this is an effort by Emmanuel Macron to try to bring all of these leaders together, trying to get more connected, try to get more of an interconnected framework of how to deal of AI, both to unlock its potential, but also to deal with its risk profile. I think also for the Europeans, they're going to be very aware of the fact that in any conversation of AI, you can't even really call them a partner or junior partner. They are basically nothing compared to the United States and indeed China. You look at the valuations of companies here in Europe, you know, they don't basically break $25 billion, and you're talking about IPOs later this year from OpenAI and Anthropic that approach $1 trillion. We've also had over the weekend all of these reports that the United States is cutting down or clamping down on Anthropic, basically giving access to its models to foreigners. I think that the Europeans would like to see a wider circle be drawn around that American tech empire, and that the Europeans could be within that. So that'll be part of the global conversation for that working lunch, which is going to kick off over the next couple of minutes and a couple hours later today.
Ollie, thanks so much. Oliver Crook there, Bloomberg's chief Europe correspondent. Now, we'll have plenty more, of course, from the G7, Evian France. Ollie will also be speaking to Matthias Cormann, Secretary General of the OECD, at 10:40 a.m. UK time. Now, artificial intelligence set to take center stage at Viva Tech. Of course, it's getting underway in Paris today. So we have the billionaires in Evian. We had the entrepreneurs here in Paris. SpaceX has overtaken Amazon in value to become the 5th largest stock in the world. Chief executive Elon Musk, nearly a third of the way to his second trillion. It's up again in pre-market trading. So Tom McKenzie joins us now. Tom, look, I mean, SpaceX is really something that we're spending quite a lot of time on. There's SpaceX and Anthropic. SpaceX just keeps on rising.
Yeah, in this incredible moment, really, for Viva Tech, when we look at what's happening with SpaceX, because it's a reminder of the huge gulf that exists when it comes to capital, when it comes to innovation around AI and tech, and arguably, and some may push back on this, ambition as well. And you see that from Elon Musk. Now, Europe has plenty of ambition, but it certainly has a shortage of capital, and we heard that from Maurice Levy, who, of course, is the founder of Viva Tech earlier. And on the Anthropic story, this is a reminder, and then Maurice Levy describing this as a shockwave, really, for Europe. The idea that the US could potentially cut off European companies from this technology, he said, would be a bit like the US having a switch to cut off electricity to Europe. And the fact that that is another wake-up call for a European nation that's already, of course, dependent when it comes to energy on other suppliers, and when it comes to defence, largely on the US. So that Anthropic moment is really key, and I think it's going to be a key part of the conversations here, which is how does Europe respond to that? How does it own more of the AI stack so that it's not dependent on decisions in Washington, Beijing, or elsewhere?
But, Tom, so I've been told this was, started 15, 20 years ago, that actually the U.S. laid the foundation of this interdependency that now brings up sovereignty and things like that for Europe. And Europe actually can't play catch-up. I mean, they can get guardrails, but they can't really play catch-up with either the hyperscalers or the big three.
Just in terms of capital, I mean, the idea that you've got about eight companies in the U.S. that are worth about 1.5 times the entire stock 600 in Europe. They're worth about 24 trillion US dollars. 24 trillion US dollars, 8 companies versus about 15 trillion thereabouts for the European stock 600. So yes, there is a massive gap. To your point, Morris Levy, again quoting him, says, "Look, we are a fragmented market. We need to consolidate." I know you've talked to him about this as well. That is key. You need to consolidate to get that capital going. Europe has the talent, and it's building real companies that can provide solutions, companies like Mistral. But again, in terms of the valuation of that company compared to its US counterparts, it's not close. It's not at the frontier. But Mistral is working with companies and embedding with them because it offers that sovereign solution. And it may not be at the frontier, but it has AI optionality that is still very powerful.
Yeah, but would this be an integration of the systems rather than actually selling the Ferrari?
An integration of the systems, US and Europe. I mean, Europe can play. There's one argument, which is Europe can't be, tell me this how you define sovereign. It can't be fully sovereign. It can't own the full AI stack. Clearly, data centers, chips, the energy piece, the frontier models, but it can own parts of the bottlenecks. And if it owns parts of the bottlenecks, then it can sit at the table and it can have some leverage. And that's why there is a focus on alternative approaches to AI. The kind of measures being put in place by Jan LeCun, formerly of Meta, world models. Can Europe play a place when it have skin in the game when it comes to those different approaches to AI and world models? The industrial base, the robotic strength that Europe has, embedding AI and world models into that, is that an area where Europe can have some strength as well? But there is an argument as well that, and you're seeing that in terms of the numbers, Europe's not building enough data centers, doesn't have enough compute capacity. That is also something that Europe's going to have to address as well. So whether or not they can hold some of the bottlenecks and have a seat at the table, I think is going to be part of the conversation here at VivaTech.
Tom, thanks so much. Tom McKenzie there with very latest, of course, on VivaTech. And we'll also, we have some fun stuff lined up for you. Now, coming up, we'll be joined by Tanuja Randeri from Amazon Web Services. We'll discuss how European companies can make the most of AI. That's coming up next, and this is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
The conversations that matter, the insights you need. This is the Pulse, and I'm Francie Lacqua here in London. Now, European companies' margins are set to expand for the first time since 2022, driven in part by artificial intelligence as more and more companies adopt AI. Now, the EU is also aiming to boost tech sovereignty on the continent, encouraging the use of local products over foreign alternatives. Well, let's discuss all of this. Let's discuss Europe's AI ambitions with Tanuja Randeri, Vice President and EMEA Managing Director of Amazon Web Services. Tanuja, thanks so much for joining us. Look, there's a lot going on. I know there's a lot of soul searching if you're a European executive right now looking at AI into what comes next. What do you think chief executives in Europe now need to think about that maybe we weren't talking about only 6 months ago?
That's a great question, by the way, and it's wonderful to be together with you at Vivitech. Look, I think what's wonderful to see is European adoption has hit a tipping point. So we finally crossed over the 50% mark, which is great. Yeah. But what we also see is there's two kinds of users. You've got users who are using this AI technology, which is transformative, to do some basic email, summarization, chatbots. Then you've got the advanced users who are using them in their processes, take claims processing or predictive maintenance in the factories. When you're embedding AI into the core of what you do, you're getting significant more productivity. I mean, the difference is stark. It could be 40% or 60%. And that advanced usage is what I would encourage European CEOs to think about.
Tanuja, at what cost? So we speak to a lot of, the banks. I mean, if you call them digital tokens. I mean, in certain cases, we've reported that, for example, an employee spends more in digital tokens than their own annual salary. So is this now the time to play around with it because then companies will cap?
Yeah, it's again a very good question. And by the way, it's true. I mean, token consumption is increasing. We see that. But I think the way you think about this is when you've got a very clear AI governance and strategy, and you know that there's three things that are going to make EBITDA better or your growth better or your innovation better, and you throw your resources behind that rather than filtering it all over the place, then I think you get a great return on your investment. On top of that, I will tell you, it's not just about the AI or the generative AI technology. You've got to get your cloud foundations. Right. I'm obviously biased to some extent, but having that cloud foundation in place means you can scale at lower cost. Yeah. Then having your data modernized and available, then you can layer on the generative AI. And I think if you've got the full stack, and that's what we've been very focused on, you can drive great innovation at lower cost. I'm confident about that.
I mean, do you have difficult conversations with chief executives or even heads of state that say, look, I'm worried about a kill switch, that if tomorrow the U.S. asks Amazon Web Services to no longer provide or service or give, that you'll have to comply?
There's clearly a lot of conversation around sovereignty, as you know, in Europe in particular, but not only. And look, I think we've been hearing this for some time, right? And responding to it actually extraordinarily, because sovereignty means different things to different people. True. Some people think of it as residency of data. Some people think of it as security of data. All of that is really, really important, actually. We've been operating in Europe now since 2007. It started like a little region in Dublin, and now we're 13 regions. I mean, Francine, we're talking about over 300 billion euros of investment. We have 200,000 employees here. We support 1.5 million jobs. And so the way I think about it with my customers is, look, the most important thing is your data is your data. You're the only ones who can access your data, move your data, lose your data. I mean, the keys protect that. And the way we built our systems, we put technical safeguards. So I can't access your data. Only you can. And I think when people understand that, they suddenly realize that it is the technical safeguard that gives them the biggest security. and not, sort of the rhetoric in public.
Tanuja, give me a sense, I mean, one of the other conversations that we're trying to have is actually, what do you think is a position of AI in Europe? So not using it, not becoming more productive, but actually making it, because there are a couple of bright spots, but they can't really catch up to the US one. So is it a different, proposition in the value chain?
Yeah, it's a really good question. Look, I think Europe has incredible talent, universities, research institutions, and some really great champions. I mean, look at Mistral right here in France, like we're sitting here, or look at Synthesia or Lovable. Yeah. But I think there's three things we as Europeans, government, policymakers have to worry about. One is we really need to make the regulatory environment innovation friendly. So what I hear from the startups who are the fuel of the economy, they say it's too costly. 40 cents of every pound, euro they spend goes towards compliance. Yeah. Imagine if you could reinvest that. Yeah. The second thing they say is there's no unified regulation. It's multiple markets, multiple regulations. Yeah. So I think we got to continue to regulate, but make sure it's innovation friendly. The second big thing is skills. There's that's one of our biggest problems here. Not having enough digital skills means...
Why? It's a university problem? Is it a school
problem? I think it
problem?
goes back to starting at the unis, but also, if you think about it, our education systems are great, but AI is just something new, and so we've all got to adapt around it. So I think ensuring that we are skilling in universities differently, and we're investing a lot, by the way, in AI education at university level, but then reskilling. I mean, you and I need to learn how to work differently in our jobs. And so I think really putting power behind that in Europe will make a big difference, because over half of companies say they can't find the skills, by the way. And then I think the third thing I would tell you that's really important is for public sector in Europe to be really leaning in to be the role models of using this technology, because it creates a domino impact. So I think those are some of the things. But I think Europe, with our manufacturing companies, with our service organizations, we can lead on what I call inferencing. So it's not just about the model. There will be one or two or three big models. It's how you use the model.
And integrate it.
Exactly. Yes. What do you do with your processes? Yeah. Do you reinvent your processes? If you're in insurance, you can't just automate. You need to completely rethink your insurance sector.
Yeah, and you adapt. You said we'll work differently. Are we going to work less?
Are we going to work less? You know what I think we're going to do? I think we're going to do more deep work. All of that basic things. Think how much research you probably do, right? I do. The basic stuff that we spend a lot of time on, which is grueling, is going to get done by AI. I today wake up in the morning, I have Amazon Quick on my desktop. It's read my emails, it's done my summaries, it's done all that. But I have more time to do deep work. Strategic thinking about how we in Europe are going to unlock the innovation we need to make Europe incredibly competitive.
But so it changes you as a leader. I guess your function is deeper, but is it also one of morale boosting of employees? I mean, do you have to become a cheerleader or an enforcer?
Look,
whatever.
I think, as a leader in today's age, with so much change coming at us, some of the core things you do in leadership during change is, in fact, that. Spend more time with your customers. Understand what it is that they really want to do differently. In Amazon, we call it the why quotient. Spend more time with your teams. There is anxiety about this technology. I mean, my son's 25, but if you've got a 10-year-old or a 9-year-old, you're wondering, what are they going to do? And then I think the very important thing is, as leaders, we really need to make sure that we're also helping stakeholders understand how this technology can be put to good use, and being conscious of responsible AI at the same time. So there's a lot coming at us as leaders, but there's never been a better time, I think.
Tanuja, thanks so much for joining us. That was Tanuja.
Thank you so much.
Randuri, Vice President, EMEA, Managing Director of Amazon Web Services. Now, coming up, we'll have plenty more, of course, on the pulse. It will not be from Paris. It will be, of course, from London. That's it from Viva Tech for today. We'll be back tomorrow. Again, there's a lot going on. Here we hear from Jeff Bezos. And then in London, Guy Johnson will be speaking with Stefan Hoops, the Chief Executive, of course, of, DWS. So this will be a great conversation on asset management and the rest. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Welcome back. You're watching The Pulse. I'm Guy Johnson. We're back in London now. Quick update on what the top stories look like first thing this morning. Bloomberg is learning that Iran is being offered a range of financial incentives as part of its agreement with the United States, which we think now is set to be signed in Switzerland on Friday. The Fed is expected to hold steady. Remember, it's the first policy decision under the new chair, Kevin Walsh. The Iran deal certainly complicating matters. What's happening with inflation? What kind of a message are we going to get from Kevin Walsh? Plus, SpaceX overtaking Amazon to become the fifth largest stock in the world. Elon Musk's wealth climbing to more than $1.3 trillion. So that's where we are this morning. Those are the main headlines. There is a lot going on. We've got a G7 meeting that's taking place in Evian. We've got Vivatech, as we've also been understanding. We've got a Fed meeting coming up a little bit later on. The UK is going to be active tomorrow. There is a lot going on out there this morning. It is a pretty confusing picture. Let's start with the Fed and get an idea of what we can expect from Kevin a little bit later on. The Fed is expected to hold interest rates steady. It's the first policy decision under the new chair, who is, of course, Kevin Walsh. The outlook for inflation, confusing at this point. We've got developments in Iran. We've got uncertainty there. We've also got uncertainty on what the picture looks like when it comes to the AI story. Is it inflationary now? Is it deflationary later on? How will Walsh pitch that one? Let's try and find out. Alistair Bull, Bloomberg senior editor, joining us on this. Alistair, I don't know what to expect from Kevin Walsh. Does the market have a clear picture of what he's likely to deliver today?
No, I think the market's going to be listening very carefully to find out whether they're going to get the recent Kevin Walsh, who sounded quite dovish. Critics would say he sounded dovish as he was auditioning for the job with President Trump, or hawkish Walsh, which is based on his track record of when he was a Fed governor and the comments and remarks in his writings when he was at the Hoover Institute. So a lot of the questions in the press conference are going to focus on his read on inflation and how it could be shaped by the events over the weekend with Iran, which has obviously lowered fuel prices quite a bit. But there's also a lot of details to dig into. So expected to be a unanimous vote to hold rates. There's an expectation that the language in the statement will be tweaked to remove a line that's come to be synonymous with easing. Is that a hawkish signal, or is that consistent with what Chair Walsh has said in the past about wanting to withdraw forward guidance? And then you have a summary of economic projections and the dot plot. The dot plot in March showed a quarter-point cut. That's expected to be pushed back into 2027. But then there's the question of whether Chair Walsh will even submit his own dot. He suggested that the dot plot is kind of constrains the Fed's flexibility. So that would be a big statement if he didn't submit a dot.
Okay. So there's a lot going on. There are a lot of questions. Isn't there an argument to say, actually, that we may all be disappointed if we're expecting detail? That actually, in some ways, Kevin Walsh, and there's evidence of this already, in as much as he hasn't come in and made big changes at the Fed already, that what he may do is just say, we're going to figure this out. Don't expect answers today. We'll give them further down the road. We're establishing a policy framework working forward. We're not there yet. Are we overestimating the details that we may get today?
Definitely. He could easily argue that he's only been in the job for a couple of weeks. He hasn't had enough time. He wants to review communication. He could announce a broad review of communication strategy. That would give him a bit more sort of runway to sort of socialize the ideas that he's thinking about changing things at the Fed. He said in his nomination hearing that there's a lot of things he'd like to change and like to look at. Those things could take time. They certainly require a certain amount of consensus and could even require votes. He needs to build the consensus and coalition around that. So it probably, dialing up expectations probably isn't going to help the market, but they can't help themselves. I mean, the Fed's been leaning into, the comments have been leaning into a more hawkish stance. Now we've had over the weekend developments with the oil price. That could give him a little bit more breathing room. Every word is going to be weighed and listened to so carefully as the markets build their own assessment of how he's going to communicate. They've had 8 years of listening to Jerome Powell. Now they have to sort of learn the muscle memory of listening to Chair Kevin Walsh.
It's going to be fascinating. 7:30 tonight, London time. That is when we're going to be watching that. Alistair Bull, thank you very much indeed. And of course, Bloomberg will have full coverage of the first Fed decision under Chair Kevin Walsh. It's going to start at 6:30. Presser, I think, is at 7:30. It's going to be an exciting evening. Plenty of football to watch as well. This could just be the warm-up act. You can watch not only what is happening at the Fed, but also England winning at football. Maybe that's going to happen a little bit later on. Stefan Hoops is the CEO of the asset manager, the asset giant, DWS. Good morning.
Good morning, Guy.
Nice to see you.
Very nice to see you.
I'm pretty confused about what is happening in the world right now. Got the Fed. Don't really know what's going to happen there. Got a deal potentially coming out of the Gulf. Don't know what's going to happen there. I've got an AI story. I don't know if it's inflationary or deflationary. I've got a SpaceX story that's taking off to the moon and Mars and beyond potentially. Don't know what's going to happen there. What is your degree of conviction right now as the head of one of the world's biggest asset managers? How do you see the world?
Well, I mean, as you just said, it's quite exhausting, all the things that are happening at the same time. And obviously, our job is to make sense of it for our clients.
Yep.
Now, one of the things that I found remarkable over the last 6 months or so is that whatever you throw at the market, it finds a way to go up. Right? I mean, you have so many conflicting messages. I mean, is AI inflationary because of all of the capex or deflationary because of efficiency gains? You look at the wars going on, which obviously should have had a massive impact, but the market's rallied back, and therefore it's quite remarkable how many competing forces are at play. But so far, the market is always finding a way, at least the equity market, of going up.
Yeah, equity market, big shiny thing, just keeps going. Are you surprised by that? Did you surprise that it passed the test of the Iran war as easily as it did?
So typically, when you look at political events, they tend to have a pretty short-term impact on markets, right? So typically, after 60 days, markets tend to be where they were before, and we've seen that play out now. Look, it just seems that retail investors, I mean, they're just investing, right? I mean, you just mentioned SpaceX. I mean, for SpaceX to now be more valuable than Amazon is quite remarkable, right? And so to some extent, what asset managers, what fund managers have to focus on is really supply and demand as much as valuations.
So how do you position your business around all of this? This turbulence that we're getting, this shiny equity market that is taking off, a bond market that maybe lacks conviction, an oil market that's all over the place. Hard to get a handle on what is happening here. How do you position DWS for that?
So our story is a pretty simple one. I mean, we work very hard to make sense of markets for our clients and therefore drive strong underlying organic growth, and at the same time keep costs stable. Right? So what we've been able to do over the last couple of years is drive net income in 40% last year by simply doing those very, very simple things. Now, going forward, we want to have the same. So cost should stay flat. I mean, frankly, I don't expect cost to go up ever, at least the controllable cost. And at the same time, on the revenue side, we benefit from what we call gateway to Europe, where there's lots of interest from people around the world in all the things happening in Europe, and we are one of those asset managers providing solutions.
You don't expect costs to ever go up again?
Well, we have been able to do it for the last couple of years, and I think the combination of thoughtful management of your workforce, investments in automation, and lots of efficiency gains have been able. I mean, we decreased our costs over the last 4 years, and so yes, I expect them to the controllable cost to not go up ever.
Okay, that's an interesting point. You have invested in the Middle East quite significantly. How is that playing out, given what we are now seeing in the Gulf? There is certainly the message I get from investors I'm talking to is there is a desire to keep money in the Gulf now. How is that working out for you? Do you regret it in any way? What do you think the trajectory looks like?
So Middle East investor base has always been important to us, and then we opened an office last year to actually be on the ground in Abu Dhabi. I mean, what I like about the region is when you think about a proper melting pot where you can have a dinner with friends, smart people from the US, China, Russia, India, Turkey at the same time, you know, Abu Dhabi, Dubai may be the only two places where you can actually have that.
That's still the case now?
I think that's still the case. I mean, obviously there was an impact over the last few months, but I think that they are ready to get back to what it looked like before. Now, at the same time, yes, you certainly have Saudi Arabia that have lots of internal, so like infrastructure investments on the ground domestically. But I think Qatar, you know, the Emirates, Kuwait, they will continue to be a net investor across the globe. And you know, again, when they want to invest in Europe or India, you know, we are one of those providers.
So you don't regret that decision?
I think it was the right call. And again, very smart people and lots of interesting things that we pick up from there.
One of the stories since the start of the year, certainly back into last year, going into this year, has been private credit.
Yeah.
And the redemption story that we've seen kind of quarter after quarter and what's been happening there. How has that changed your thinking around private credit and your position in private credit?
So overall, when you think about private markets, we are very optimistic. We think that's an amazing investment universe for institutional and retail investors. Now, there are some parts which are very hot, infrastructure, for example, and some private credit vintages have had issues, no question about it, right? I would say there's really three reasons for that. One, when you think about what private credit does, it really invests in private equity-owned companies, at least in the US. So it's not that private credit said, we want to have software. It's that private equity invested in software companies and private credit funded that. Secondly, you have the issue of, you know, lots of dry powder which sat on the sidelines, and then private equity owners that had every incentive to throw in leverage. So probably a weird incentive structure to some extent. And then thirdly, putting that into retail vehicles with a promise of instant liquidity is definitely leading to some of the issues we see now. But again, I think those were some very specific vintages. Overall, we are very optimistic.
So it's those vintages. So the latter point of putting retail into, like sophisticated retail, into those kinds of investments, has the calculus changed there?
I think you shouldn't be promising instant liquidity with very illiquid underlying. So the idea that you can have the benefit of the illiquidity premium with instant liquidity, that just doesn't really work. And I think people have learned. But again, the underlying thesis of private credit being an interesting, diversifying asset class for institutional retail investors, that's still intact, and we are quite focused on that.
Are you going to partner with insurers going forward? Are you having conversations with more insurers? Is that the nature? I'm trying to work out which direction you take the business in. And that will be one partnership idea that's certainly being explored elsewhere, done elsewhere. And I'm wondering whether DWS is going to be the next one that I think about.
I think going forward, people will focus much more on actually the origination side. So the insurance partnership is one where you get essentially the investments from the insurance company, which in the past, because there was so much supply of private credit, the problem was, or the focus was where to actually invest, like where the investors. I think going forward, it's going to be much more differentiating to have strong access to origination. There, our partnership with Deutsche Bank will be benefit from the vast origination channels of Deutsche Bank's corporate bank, investment bank, wealth management that we find
that sounds like a no to me.
How?
Well, do you need the insurers? You've got Deutsche Bank. You've got that kind of flow story. Do you need something else?
Well, on the origination side, I think you need to have differentiated access to risk, and I think that we get that through Deutsche Bank and potentially other partnerships. And then when you think about the investor base, for sure, insurance companies will continue to invest, but so will sovereign wealth funds, pension funds, and other investors. But again, I think going forward, the origination side will be more differentiating.
It's great to see you. Thanks for stopping by.
Great to see you.
Stefan Hoops, the Chief Executive over at DWS. Staying in Germany, BMW shares under a little bit of pressure this morning. Earlier on, I think they were down 11%. We're now down by 6-7%. The German auto giant slashing its profitability forecast. What it's basically signaling is that it's struggling in China. This is the biggest market, and this is now rippling across into some of the other areas of the market as well. Let's talk to Danny Lee, get his sense of what is happening here. Danny, we're down hard, we're off our lows. Investors are clearly concerned. Is BMW basically signaling that it can't make China work here? Like, the Chinese market is unbelievably competitive. Is this a signal that basically it is not going to be able to deliver on the promises that were made regarding that market?
I think there are big questions for BMW in particular in the China market. You know, the longer run, given the competitive backdrop and the pressures that all automakers, including now the Chinese, but foreign makers at large, there are questions. But the fact that the stock fell to almost its lowest in 5.5 years, and the worries that it brings to investors and to analysts who are reappraising this stock, who thought that BMW, frankly, was in a much better position than your Mercedes and your Porsches. That is now not the case, according to analysts who have seen this stock being pummeled, and the fact that the shares dropped by almost 12% at one point today in Germany. So the fact that the BMW is looking at a margin of around 1% from as high as 6%, and the fact that the guidance only a month and a half ago was held steady, but under new CEO Milan Nedeljkovic, he is really clearing the decks here to try and get a better sense of what is going on and to try and give some kind of base for investors and shareholders, especially as he starts his new tenure, that this is a difficult situation for BMW to navigate, particularly because of the China market, because of the war, and now that he's looking to deepen cost cuts. We've seen efficiency savings, cuts to R&D and investments, but now Nedeljkovic is looking to deepen that and go for more structural cuts and bigger efficiency savings. The question really is, how far will he go, and will that include job cuts? So it remains to be seen just what detail there is, but definitely look to go harder and faster, given sales will not grow and will in fact fall.
Yeah. What does this mean? How do I sort of translate this story into what is happening in Europe, core market, the United States, core market? What is the read across from China into those other areas?
Well, I think for the China market, it's certainly having a downturn moment. But I think when you look at some of the peers, your Mercedes, your Porsches, with the new models they're bringing out and focusing back closer to home and to other areas, mature markets like the US, this has all been well received. The fact that they are seeing sales optimism, stuff that will help offset their declines in China, that is definitely not the case for BMW, who's rolling out these new EVs under the New Class brand. They've invested billions of euros. The fact that there is a big weakness with BMW, they are struggling, and therefore their new rollout of EVs could face an even bigger problem, the fact that they are going to see a sales decline. So there is a real contrast there, but overall the China market and the wider slowdown there, it's also going to be just a challenge for wider automakers as they try to wean themselves off a little bit of China. But yeah, not a great day for BMW over the last 24 hours.
Danny, great stuff. Thanks for the update. Danny Lee joining us out of Hong Kong on the BMW story. What are we going to do next? We're going to discuss how we fund European defence, the build-out, the energy story. How do we fund data centres here? That conversation we're going to have with Nadia Calvino, the president of the European Investment Bank. It is coming up. It's next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
.49 minutes past the hour. Welcome back. Let's talk about European investments. The European Investment Bank says it's on track to commit 5% of its financing in the EU on security and defence, with support for Ukraine still a priority. But that's not the only issue that Europe now faces. We've got a whole range of issues that we've got to figure out how we're going to finance them, build them. There's a lot of challenges ahead. Nadia Calvino is at the forefront of all of this. She is the president of the European Investment Bank. Good morning.
Good morning.
Europe has a sovereignty crisis in a number of different areas at the moment. Defence is one of them. We rely on others for our defence. We rely on others for our energy. We're trying to figure that one out. We rely on others for our technology. We're trying to figure that one out. What is your assessment of the progress that we are making, the EIB is making, to solving some of those challenging sovereignty issues that we now face?
Well, you're right to say that the fundamentals underpinning the phenomenal success of the European Union for the past 80 years, since the end of World War II, are being put to the test. They're outright attacked from many areas, from many sides. Whether it is the economic foundations, the defense foundations, technological leadership, etc., the multilateral framework, rules-based, rule of law, respectful international framework. But I do think, and I do see, that the minds are focusing, and we are making progress in a number of key areas, and the European Investment Bank is playing its role as Europe's financial engine.
So if you are Europe's financial engine, what is the brake that is stopping us accelerating at this point?
We're actually putting our full power to work, Europe's capital to work, trying to mobilize private investment. We just had our governors, that's the 27 finance ministers of the European member states, and they have fully supported our strategic roadmap to support Europe's top priorities and trying to maximize the impact of our power, our capital, our capacity to crowd in private investment.
You look at the United States, look at SpaceX this week. Say what you want about SpaceX, but what it has been able to do is harness the power of the US financial markets to deliver a phenomenal outcome. Why can't we do that?
I was discussing that yesterday with a couple of people. I mean, we shouldn't underestimate the importance of Brexit in terms of because
access to London.
But London was Europe's financial market.
Right.
And after Brexit, we have divided our forces, if you will. And we have been trying to create that internal, strong financial market ever since. I see progress in the integration of Europe's capital markets. This is probably one of the top 3 priorities ahead. And I see progress, and I think by the end of the year, we will have made significant progress so that we can really put Europe's capital and capacity to its maximum impact.
Can we prioritise between energy sovereignty, defence sovereignty, and technology sovereignty at the moment? Are they equal? Is one a priority over the other? Do we have the capacity to solve 3 problems? It used to be that we had just one, which was to solve the energy crisis. Now we have a defence one and we have a technology one. Do we have the capability to deal with those 3 issues?
Absolutely. Of course we do. Of course, Europe can do and deal effectively with these 3 challenges. But I fully agree, these are the 3 top priorities for all of us, because Europe needs to break free of the excessive dependence on fossil fuels. So we need to regain energy autonomy. We need to reinforce Europe's tech leadership. We do have this tech leadership in a number of areas. Now we need scale and speed in this regard. And thirdly, we need, of course, to regain our autonomy, or maybe not regain, but gain, our autonomy and strategic independence in security and defense. But great progress is being made in these three areas. It's just, I think we were just a moment ago saying the world seems to be turning faster.
Yeah.
So we need to gain speed, in undertaking these reforms.
Otherwise you get left behind. You've made progress. Obviously, you've been a huge participant in the energy transition. Now it's defence and now it's sovereignty. Can the EIB do more when it comes to the defence story? You're beginning to make progress in that area. Do we need to see the EIB moving into the data centre story and other areas that Europe needs infrastructure in?
Yes, we certainly need to do more. We can do more. We will do more. In the last 2.5 years since I became president of the European Investment Bank, I've tried to align the bank much more with Europe's strategic priorities and tried to reach the necessary scale to make a difference for Europe and for the world. Whether it is in the green transition, making it a success. Just yesterday, for example, we announced financing for the largest onshore wind park in the Nordic region, in the Baltic region. Today, we are announcing the acquisition of a green bond in Latvia. Latvia Energo, 20 million euros we will invest in this green bond. So, pioneering the green bond market shows that we can really scale up our capacity to make a difference. We're in the area of tech leadership, you mentioned it. We are currently assessing very important large-scale investments in AI infrastructures in Europe, and we see things are also moving in terms of regaining independence. And security and defense has been a real game changer for the EIB in the last 2.5 years. We have, as you mentioned, reached the 5% of our investments inside the EU. We have a robust pipeline of more than 20 flagship projects throughout the whole EU. And I think we will continue on this upward trend in the coming years.
Can we talk about Spain for just a moment? I won't mention the football. We'll talk about that after maybe England have won tonight.
Okay.
We'll do that further down the road. Do you think a Spaniard should lead the ECB next?
I think there are very good and strong Spanish candidates to lead the ECB, for sure, also from other member states.
Who should it be?
I really cannot express a view on that. No, it's not my job. In the past, I could have expressed that view when I was a vice president in Spain. I cannot now.
Okay. Could it be you?
Oh, no. I am definitely where I should be, leading the European Investment Bank, which is actually, I think, a key player in Europe and the world right now.
I only ask because I checked back and I've heard your kind of, no, it can't be me. No, it can't be me.
No.
I also heard that from Christine Lagarde.
Okay.
When she was looking to maybe take over that position.
I'm quite honest in my reply.
Okay. So what do you 2.5 years?
Yes. And I have a 6-year mandate.
I was about to say, you have a very long mandate.
Yes, and
so
I'm
what do you want to do with it? What do you want to do with the rest of it?
Well, right now, scaling up in these three areas, so energy autonomy, tech leadership, security and defense, these are our 3 top priorities. And I really hope that 2026-27 will be a game changer for Europe in terms of financial integration and the ability to scale tech effectively to try to match the developments that we're seeing in other parts of the world that you referred to.
Okay. Thank you very much, Steve, for coming to see us. We always appreciate your time.
Lovely to be here. Thank you.
Nadia Alcovino, the President of the European Investment Bank. Talking of scaling, we've got some great interviews coming up from Vivatech. This is the scale-up centre of Europe at the moment in Paris. Look at these great guests we've got coming up. Europe needs to scale up in tech. We're going to be talking to the key people that are going to be potentially doing that. Up next, it is Bloomberg Brief out of New York. I will leave you with this great lineup of guests coming up. This is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures rise as markets await the first Kevin Warsh-led Fed decision. Details of the US-Iran memorandum reveal Iran would gain major financial relief. And the last day of the G7 summit, AI executives gear up to meet with world leaders for security discussions. Don't miss our interview with one of the participants, Synthesia CEO Victor Riparbelli, later this hour. Let's get a check on markets around the world now, though. First over to Asia and Winnie Su. Winnie.
Good morning, Bonnie. Well, all eyes are on that upcoming Fed decision meeting under Kevin Warsh later today. But for now, MSCI Asia rising for a 4th day as oil remains under $80 per barrel. Now, technology shares still leading gains today with the Kospi here up about 1.6%, and also the Nikkei 225 to another fresh record. Now, today's drag, though, is in the Chinese offshore stocks as we flip aboard and see how that underperformance has been worsening over the past year. We're talking about the MSCI China here down about 10% so far this year versus a 24% gain in the MSCI Asia index. Now, we are just about 2% away from entering that bear territory. However, the headwinds still remain, especially with that lack of AI exposure, the weak earnings growth, and also sluggish economic outlook.
Absolutely, Winnie. Thank you so much, Winnie Su there. And now let's get to London for a look at Europe. Louise Moon joins us. Louise?
Morning. So first up, taking a broader look at kind of the European space. We've got the European Stock 600 pretty flat, unchanged, staying steady at kind of those record highs. The attention now really is on the Fed and what happens later today. So holding there near record highs. But one of the key sectors that we should be really looking at is autos, dragged down over 2% into the red. That is, of course, on the back of BMW, which you'll hear more about in a bit. But BMW, their forecast and profitability going lower. So dragging those auto sector, that's the worst performing sector here in Europe. A quick look at yields here in the UK. The 10-year yield dipping, gilts rallying on the back of this inflation print that we've seen, holding steady in May here in the UK. Surprisingly, holding steady given everything that's going on in the world, but holding steady there, and traders trimming those rate hike bets for the BOE tomorrow. That is coming up tomorrow. Taking a quick look finally at the krona over in Sweden, krona versus the euro. Again, holding steady. It's risen slightly over in the past few days ahead of the Swedish interest rate decision, which was this morning. That was held at a flat, and the krona there keeping those gains, but again, the main attention really is on the Fed and that impact on the global environment.
Absolutely. Louise, thank you. That is Louise Moon there in London. As she said, the focus is on the Fed, and one of the key questions for the Fed is how disinflationary is this move in oil going to be? As you can see, it looks like we're higher, but in fact, Brent crude below $80 a barrel now, and if you look out forward month contracts, so the December contract, the January contract, we're down at around 76 and change. WTI already trading at 76 and change. So this oil market has really priced in the reopening of the Straits. Assuming it all goes well, and it's a big assumption, and it's a big assumption that barrels come back on the market very quickly, then the Fed may have less of an inclination to indicate that a hike, for example, might be next. But the question is, what is next for the Fed? Could it be a cut? Could it be a hike? Or what will the expectation be like as we head into it? Certainly for now, we're seeing futures bounce back. We did have a major sell-off yesterday. The SOX index was down almost 5%, for example. The NASDAQ 100 bore the brunt of it, with energy and financials outperforming. But right now, it looks like all of the major indices are going to be bouncing back just a little bit today. That chip trade coming back online as well. And if you look at yields, they're at close to a one-month low, not really moving. Nobody is taking any further bets. There's about an 80% chance of the next move being a rate hike, and that before the end of the year priced in. And nobody is doing anything to upset this apple cart, at least until we hear from Kevin Walsh. All right, let's get to some individual movers now for that. Back over to London and Chloe Melly. Chloe.
Good morning, Bonnie. So here up on the board, there's NVIDIA, but there should be Lionsgate this morning, which is a downer this morning after Netflix said it was not interested in acquiring the studio. And we had seen the shares in Lionsgate really jumping on the back of those takeover rumors and reports. But Netflix denying it has really dragged down those shares this morning. Moving on to the furniture manufacturer La-Z-Boy, which is up quite strongly this morning after earnings beat estimates. And this is something analysts have said that this was really thanks to some acquisitions and some divestments, and that really helped this company really, the weaker consumer spending that's been affecting that sector. It has been resilient in the face of that. And finally, BMW over in Europe is down this morning after cutting its profitability forecast. That is due to some weakness in China and also the impact of the Iran war. And so this is really going to be a wake-up call for the entirety of that European car-making sector that has been really struggling in the face of those competitive pressures.
Chloe, thank you so much. Chloe Melly there in London. And coming up this hour, our exclusive interview with Victor Riparelli, CEO of Synthesia, as AI executives are set to meet with G7 leaders. We'll also push ahead to the Fed decision with Ian Lingen of BMO Capital Markets. Turning to the US-Iran MOU now, Bloomberg understands that Iran is set to receive broad financial incentives as part of its agreement with the US. A draft seen by Bloomberg shows Tehran will get the right to immediately sell oil, tap a $300 billion development fund, and eventually access all frozen assets. For more, let's talk to Bloomberg's owner, Ant, in Dubai. Owner, based on what we've seen, Iran stands to gain pretty nicely financially if it meets certain conditions. Can you give us some more details?
Sure, Voni. There are two parts to the financial gains, the financial relief that Iran should expect from the signing of this interim deal. One, the immediate ones. It will be allowed to resume its oil and petrochemicals exports, which is going to be a source of much-needed effects that the Islamic Republic was grappling with since the start of the war. In addition, we expect a timely release of frozen funds, estimated to be in the tens of billions, according to the text of the MOU that we have seen overnight. What is a bit less clear is going forward how much exactly does Iran stand to gain from the so-called Economic Development Fund. The U.S., according to the MOU, undertakes to put together a development fund that is going to be at least $300 billion in size, along with its regional partners. The MOU doesn't say when exactly that fund might be created or who pays for it, but it is there, and we expect that to be a prominent feature of the talks going forward, because that is something that the Islamic Republic has been very persistent about since the beginning of the war. It wants the rest of the world, or US and others, to pay for some of the damages that it says it suffered since the war began in February, Ronnie.
Presuming the MOU is signed, how quickly could the Strait of Hormuz theoretically reopen, Onur?
Well, the Hormuz will probably reopen almost immediately, and we are already seeing signs that quite a few companies and countries, including Iran or Qatar, the world's largest LNG exporter, are sort of turning their ships towards the region, expecting that the closure will come to an end as soon as the signing is confirmed on Friday between the US and Iran. How long it takes from the reopening of Hormuz to the pre-war levels, where we saw about 130, 140 tankers or ships going through the strait on a daily basis, it is less certain, but at least we know that the two sides, according to the MOU, commits to try to bring the maritime traffic through Hormuz to its pre-war levels in about 30 days following the signing of the agreement on Friday.
Well, speaking of going through the waterway, the UAE telling Bloomberg that they're now moving to cut dependency on the Strait of Hormuz to zero. Is that even possible, Onur? What more do we know?
Maybe cutting down to zero is a very ambitious target, but we know that since the war began, some efforts have been made, not only by the UAE, but other Gulf countries, to mitigate the impact from the closure of Hormuz on their economies. Some of that response was obviously about mitigating the impact of the war, but some of them actually points to a more strategic shift in the way the Gulf countries see where Hormuz lies in the overall economic ecosystem that they are living in. And yes, that would require them to work on ways to circumvent Hormuz as a choke point for trade with the rest of the world, including for oil.
Fascinating. Onur, thank you so much for bringing us all of that reporting today. That's Onur Ant in Dubai. Stocks and bonds rising as we look ahead to the Fed decision and Kevin Warsh's debut as chair. Joining us now is Bloomberg's Ven Ram. Not too much difference in positioning in the last couple of days. It seems like the bond market has made its call, or at least is holding its breath. Then what would surprise the bond market today?
There's plenty that can surprise the bond markets today, Vonnie, and the markets are just not positioned for that outcome. If you look at the MOVE index, which captures volatility expectations and swap rates, I mean, we are at lows. They're thinking that, you know, we could see a 50 to 60 basis point move in swap rates over a 1 year horizon. So, and I think that the markets are underpricing the risk that Kevin Warsh is going to be someone like Alan Greenspan, not someone like Powell. He's already expressed his distaste for Fed's communication style. He thinks that the Fed should be talking less and working more behind the sidelines. And I think that, you know, he could very well miss the dot plot today. We may not get a dot from him, and he may eventually come out in the press conference and say that, look, he's not for holding long press conferences, 1 hour style, as has been the case for so long now. But if you throw back to 2011, pre-2011, Bonnie, the Fed wasn't even in the habit of holding press conferences. He may well come out today and say that, look, we are not going to hold these press conferences regularly from now on. He could say that he could do away with the dot plot altogether and the summary of economic projections. That means that the markets will have to work out on their own what the Fed's next move is going to be. So it's going to be a guessing game, which is not factored in by the markets at all from the positioning today.
No, it would be back to the old days. And as you say, you know, it's been a long time since we've had a very expressive Fed. So there's a whole generation of people that don't know anything different. Would less talk, less expression work for these markets?
Well, I think the markets have to make it work. They don't have a choice. If you throw back to the era of Greenspan, the markets were constantly on their feet, guessing what the Fed's next move was going to be. Greenspan once famously said that, you know, if you think that you've understood what I've said, you must have misinterpreted what I actually said. So I think that, you know, we are going to go back to those days, and that means that higher volatility. And if you take that together with Kevin Warsh's inclination to shrink the balance sheet, it means higher rates. And I think that, you know, that is the game, that's the trick that the markets are missing today.
All right, Ven, we'll be waiting with bated breath. Bloomberg's Ven Ram, thank you so much. Now to other top stories trending on the terminal this morning. China's central bank signaled a potential shift towards an overnight policy rate, a move that could give policymakers tighter control over short-term funding costs. It's also a sign that the PBOC may eventually move away from the 7-day reverse repo rate as its main benchmark. The move to an overnight rate would bring the PBOC closer to global peers such as the Fed. Why the Luce move up the waitlist? Bloomberg sources say Ferrari is using orders for its poorly received electric car as a loyalty test for wealthy clients. Buyers are said to be told that purchasing the $36,000 EV could help them preserve access to future exclusive Ferraris. Prices for gasoline cars in China slumped after the Iran oil shock weakened demand. A new locally made Range Rover is going for almost 60% less than the recommended retail price. Used car prices have dropped by 19% almost. The weak car sales weighing on automakers and the economy. Chinese retail sales declined for the first time since the pandemic. Coming up, G7 leaders and AI executives are scheduled to meet at their summit in France. Our exclusive interview with one of those participants, Synthesia CEO Victor Riparelli. Up next, this is Bloomberg.
'Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. As the G7 summit continues in France, leaders have been discussing access to advanced AI models from U.S. firms. It'll be a key topic of discussion at today's lunch, which will include executives from OpenAI, Anthropic, and Google DeepMind. Bloomberg's Oliver Cook is in Evian, France, with a guest who will also be attending that lunch. Ollie.
Yeah, that's right, Vonnie. If yesterday the focus was all about geopolitics, today it's all about the economy and, of course, the companies that will be increasingly driving that economy forward, the AI companies, with a number of CEOs attending the G7 leaders meeting with Donald Trump and, of course, the leaders of those G7. So I'm very pleased to be joined by the CEO of one of those companies here on the sidelines of the Evian Summit, Victor Riparelli, who is the CEO of Synthesia. Thank you so much for joining us here at the sidelines of the meeting. You're about to go into that meeting with the G7 leaders and President Donald Trump. What do you hope to get out of that meeting?
I fundamentally hope that Europe and the US can get together and work together on winning in what will be the most important paradigm shift in our era. I think what we've seen is that the US have built the best frontier models. They're really good at that. They have the world's biggest labs. And in Europe, what we are seeing is that we're increasingly becoming very good at the application layer. So taking those models, building products, building businesses on top of them. And I really think it's super important that we work together and that we don't end up as less allies than we were before.
And so what is the risk of that happening, of that sort of allyship sort of breaking apart? Because, of course, over the weekend, the headlines were all about the Trump administration effectively blocking foreigners from using the sort of avant-garde models of Anthropic, the sort of AI nationalism. What are the risks associated with that?
Yeah. I mean, look, I think there is a risk, but I think if I look back at the past 2 years of AI, it's just been a frenzy, right? It's been up and down. The narratives switch all the time. There's a lot of fear, there's a lot of excitement. But I think in general, when we look back at what's happened the last 12 to 18 months, I think even though we may be over-indexing some of these things, like what happened over the weekend, I'm definitely hopeful and positive that we will get to a solution where we work with the U.S., not against the U.S.
And for something that is so present in the global conversation all across the planet, there is not really a sort of global way of addressing the sort of issue of AI, whether it's regulatory, thinking collectively between nations, how they can work together. And it seems like Emmanuel Macron is trying to begin that conversation here. What should that conversation sound like? What should these leaders be focused on?
I think it's very important that it becomes practical. We've heard a lot of talk the last 2 years, and there's a lot of uncertainty because the market and the technologies move so fast. But what I really hope to do is that we can create a great environment for both American companies and European companies to work together, to build great tools and make sure that we maintain our world-leading power in AI. So for me, as a business leader, it is things like access to models, for example, ensuring that the European Union doesn't over-regulate, making it harder to compete on the American market, for example. So I hope we can focus on those things and less the sort of existential risk, more sort of sci-fi conversation that's always going on. I think that is really important, and philosophically, I think it's very interesting. But there's a lot of things in front of us that we can do today that will make the environment much better for businesses like mine.
And also sort of expanding the dialogue, I think, between the AI companies, the private sector, and the public sectors. What sort of information do you need to convey to global leaders? What do you think that they miss about AI and the transformatory power that it has on the economy?
So I think one of the things I would love to change about the conversation is right now everyone is talking about the frontier labs, the large language models, the lowest level of the technology, which are very important. But most consumers, most businesses are going to interact with these technologies through what we call the application layer, right? So companies like Synthesia, like 11 Labs, like many of my other peer companies who take these models and build products around them. And that is really, really important. And we should not focus all of our efforts purely on the underlying foundation models. That's kind of like the cloud providers of the next era. There's going to be so many companies built on top of it. I think particularly for the European conversation, it's so important that we focus on the application layer. That's where we've proven that we're really good. It's where we have a real chance to win. And I think pouring lots of money into government supercomputers and efforts to nationalize LLM development, I just think it's a losing battle, and I hope we can be smart about that.
And do you think that we could get something like a communique? Do you think we could get the CEOs of these companies from the United States, from Europe, to come together and kind of get a collective message out? Do you think that's on the cards for today?
I hope so. I mean, I think that's why a lot of us are here. Yeah. There's already, I think, a good community, especially the business community, where, you know, we talk, we develop technologies together, lots of partnerships going on. So I'm hopeful that we can get to an agreement today.
And thinking also about, obviously, we talk about the sort of the race in AI. Obviously, everyone is trying to sort of win in this technology. The United States is ahead by, you know, I think it's fair to say at least a country mile. The Chinese are sort of gaining speed. In Europe, I think it's again fair to say that they're very, very sort of far behind. How do you close that gap? Is closing the gap, should that not be the focus in Europe? And what ingredients do you need from governments in order to sort of change that narrative?
I think we need to look at this as a business strategy that's practical. And I think a business strategy would not be, let's try and replicate the American frontier labs in Europe.
Yeah.
We don't have the talent for it. We don't have the capital for it. And I just think it's going to be a losing battle where we're going to end up with a subpar technology. Let's focus on where we actually can make great strides, which is in the application there. Let's work well with our American counterparts. And I think really just, you know, focus on where we can actually win. We want to play to win. Historically, I think Europe has not been very good at this. Yeah. I think in America, they believe in capitalism for good and for bad. In technology, in China, they believe in technology for good and for bad. I'm not really sure what we believe in Europe anymore. The most obvious answer is regulation.
If you can have one thing change in Europe, is it regulation? Is that what they should be focused on, getting out of the way and letting companies sort of experiment and sort of get off the ground?
Yes.
Absolutely.
Less regulation and easier cross-border
And as transformative as AI technology is, I think we can all acknowledge that there is also some fear that there is a bit too much hype in there, that there is a bubble growing. When we think about the valuations of these companies, you had SpaceX, and of course, you have the sort of pure play AI companies, Anthropic and OpenAI, $1 trillion valuations, something around that coming into the end of the year. Is that a place that we as the rest of the world should be comfortable with?
I mean, there's definitely bubble tendencies, right? I think we're seeing all sorts of crazy things, but I think there's undeniable a huge macro trend. In 5 years, everything is going to be AI-fied. And I think if you look at the revenue ramp of these companies, in particular Anthropic and OpenAI, it is very real. In the short term, maybe we'll see fluctuations. I'm seeing, especially in the early stage, the seed stage market right now, valuations are going absolutely crazy. I don't think that's necessarily a good thing, but I do think these big companies are going to be able to live up to the valuations that they have today.
It's obviously we're talking about the products, the sort of applications for businesses, for people. Of course, there's the question of compute, there's the question of energy, and everything upstream, and of course this issue of critical raw materials. How sort of secure do you feel in the way that the governments are dealing with that? That obviously is going to be a focus for the leaders here. Do you feel secure with these sort of upstream that, they were not going to block there that will really hamper your ability to grow?
I mean, I think we're hearing politicians say the right thing. I think we need to see the investments. I think in the UK particularly, like, we need more power, we need more data centers. We're still so early in the age of AI, and I think we will need many, many, many multiples the capacity that we have today, and I hope we can move really, really fast on getting that done.
And thinking about your business specifically, what is your sort of focus going into the next 6 months, the next 12 months, and trying to sort of gas up the sort of interest and, of course, experiments with AI?
Yeah, so we already work with 90% of the Fortune 100, the world's largest AI video platform for businesses, and what we're actually focusing a lot on is training and upskilling the workforce. So we signed an MOU with the government of UK last week, which is basically us promising to help upskill millions of workers. I think that as much as AI will change jobs, will displace some jobs, I think the core DNA of a great company and a great country is great people. And I think that's going to be the same in 5 or 10 years. So upskilling the workforce is going to be should be one of the most important priorities for any country leader.
And you also run a global business. I want to think specifically within Europe, obviously large operations in the UK and France and Germany. Yeah. Do any of these nations stand out of getting it better in terms of how they're creating the environment for you?
Well, I think in the European Union, there's no doubt that the UK, I think, is the best place to build a business. In some ways, the fact that they're not actually in the EU, I think, has been a benefit for them because they don't have to follow all the same bureaucracy that's going on in the EU, don't have to follow the same regulations. And I think there is some sense of a close relationship with the US. So I'm happy to have my business based there. I do feel like there's been a vibe change the last 12 months. Everyone is realizing that it is not a nice to have to become a player in the AI economy. It's a need to have. And so I do think there is, in general, a positive shift toward country leaders and business leaders like wanting to succeed.
Well, Victor Ripardelli, thank you so much for your time, the CEO of Synthesia there. It really sort of getting into that meeting with the other AI CEOs coming over from the United States and the G7 leaders, including Donald Trump. And of course, you don't want to hear it where I'm from, based in Brussels, that actually it's an advantage to have your company outside of the European Union, but something that hopefully the EU is waking up to.
Ollie, thank you so much. Bloomberg's Oliver Cook covering the G7 for us. Time now for your front page news. And first up, the Wall Street Journal looking at the Georgia primary results. Trump-backed Mike Collins winning the GOP primary runoff, setting up a showdown with the Democratic Senator Jon Ossoff. The Times says it'll be a key battleground state in November. Next up, the Financial Times leading with bullish dollar bets. The FT saying investors around the world flocking to the dollar in a bet the AI boom will push the U.S. economy ahead of its peers and force the Fed to keep interest rates high. And finally, on the New York Times, the World Cup GOATs. The Times looks at Lionel Messi's hat-trick against Algeria in Argentina's first game of the World Cup. Phenomenal game that was. Coming up, Countdown to the Fed with Ian Lincoln of BMO Capital Markets. That's next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures rising as markets await the first Kevin Warsh-led Fed decision. Details of the US-Iran memorandum reveal Iran could gain major financial relief. And the last day of the G7 summit, AI executives gearing up to meet with world leaders for security discussions. One thing and one thing only on this market's mind today, and that is the outcome of the Federal Reserve meeting. But one question that will be discussed at that meeting, no doubt, is oil and how disinflationary a force it will be. Look at Brent crude trading below $79 a barrel now, and that's right out through the winter months. If you look at the December and the January contract, we're talking about $76 and change. WTI trading below $76. So that market really pricing in a pretty straightforward reopening of the Strait of Hormuz, it would seem. Seeing a little bit of an addition to gold now. Bitcoin bounced back as well, although we're a little bit lower now. The idea is that some money came out of these asset classes, perhaps for the SpaceX IPO. That's at least one theory out there. Let's take a look at futures, because yesterday we had that sell-off. The SOX was down 5.7%. We might be getting some of that back today with NASDAQ 100 futures pointed pretty substantially higher. Also, just in general, the mood has shifted because of the Memorandum of Understanding and the fact that we're finally here. It's a Fed day, and to that end, let's take a look at bond yields. We're pretty much at our lows of the month, down less than a basis point across the board, really. The two-year yield at 404.53, still pricing in there about an 80% chance of a hike this year. Let's get to some individual movers now pre-market. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Lionsgate shares are in the red this morning after Netflix said it was not interested in acquiring the studio. So we had seen the shares in Lionsgate initially jumping on the back of those takeover rumors and takeover reports. But now that Netflix has fully denied it, we are seeing a reversal in sentiment, and we're down about 6% for Lionsgate this morning. Moving on to the furniture manufacturer La-Z-Boy, which is up very strongly this morning, about 16% after delivering solid results. And the analysts have said that the company has really benefited from the recent acquisitions that it's made, and also some of the divestments that it has made as well. And so that's meant that the company has been able to be really resilient, even in the face of that weaker consumer spending that we've been talking about a lot for retailers. And finally, let's cross over to Germany, where BMW has been having a tough morning. It's down about 6% this morning after cutting its profitability forecast. It blamed a slump in demand in China, and then that broader hit on consumer confidence from the Iran war. And so this is really piling pressure onto the new CEO who's just started, and is really seen as a wake-up call for that broader car-making industry in Europe that's been dealing with so many competitive pressures, especially in the key Chinese market.
A bit of a ding there for BMW stock. Chloe, thank you so much. Chloe Melly there in London. BMO's Ian Lincoln looking ahead to the Fed's rate decision this afternoon, writing, quote, monetary policy is set by the majority on the committee, not a single participant. It's a process of consensus building, one that we suspect Warsh will prove adept at over time. Ian is head of US rate strategy at BMO Capital Markets, and I'm pleased to say he joins us in studio now. So Ian, what preset notions is Kevin Warsh coming into the job with? I mean, we know that he thought the Bernanke monetary experiment went on way too long, for example. Is that something that we're going to see evidence of today?
Well, I do think that the market is expecting him to push back against the amount of communication that the Fed has typically been engaged in. The size of the balance sheet is also topical. But I think that the market is overpricing the ability of Warsh to come in day one and make a great deal of changes. The idea that he would attempt to get rid of the dot plot on his first meeting, he might be laying the groundwork, he might be having the conversations behind closed doors or even at the FOMC meeting itself. But those type of announcements and those type of changes will probably take several meetings or quarters to actually come into effect.
So I hear you that he's going to want to build a consensus on the committee, and it's been a pretty dissenting committee in the last few meetings. At the same time, he's going to want to come out strong and show the market that he can gather a committee around him. And also, any changes that he might make, he might want to signal them now, no?
Well, I do think a lot of that comes out in the press conference and the way in which Warsh chooses to respond to questions about the balance sheet, questions about the SCP and the dot plot. I think that will really set the tone more so than being able to build consensus to make wholesale changes. Now, I do anticipate that it will be a unanimous vote, in part because he will probably drop the slight dovish lean in the statement, and we lost Mirren on the committee, so there's no one left to dissent effectively. So I would characterize that as a successful first meeting and one that he does come out strong with a unanimous vote.
Who does he most align with on the committee? Who will be his allies, let's say, when he makes whatever arguments he may make for reducing the size of the balance sheet or changing how the Fed communicates?
I think that he'll have an ally in Williams because that is...
John Williams?
Yeah, because that is typically a position, head of the New York Fed, very markets-oriented, very in tune with what's going on. So I suspect that while Williams has a unique seat in terms of the FOMC as a whole, that is a good place to start for consensus building for Warsh. Aside from that, he is a known quantity, and I wouldn't be surprised if more members than not ultimately did align with him.
I would have thought Williams would lean a little more dovish, though, in terms of monetary policy and just money supply than somebody like a Kevin Warsh.
Well, we are operating under the assumption that the Warsh Fed chair is the same as the Warsh governor. And I would caution against doing that because it's not entirely clear that Warsh is going to be hawkish per se. In fact, given that he received the nomination from Trump, there is some assumption that he's going to make the case for lower rates over time. Now, that case might be accompanied by a smaller balance sheet, which kind of intuitively makes sense, which is less accommodative on one side, but not necessarily hawkish per se. It's more a function of being less involved in the markets. And that's also consistent with his communication stance. It's less involvement, it's less direction, it's allowing the markets to engage in the process of price discovery without too much guidance from the central bank.
And he's expressed a number of times his view on American productivity and, America first, and how, the economy needs to support American business, right? So that would tally with what you say. That said, how will the Fed be speaking about this decline in oil prices and its impact on inflation going forward? Will we see numbers come in slightly?
So I think that that's actually the most relevant conversation piece within the Fed at the moment. We've spent the last 3 months with energy prices running ever higher, gasoline contributing a significant amount to headline CPI. What happens if there is a continued flow-through of lower oil prices to lower gasoline prices? What had been a pillar of inflation will become a drag over the course of the next 3 or 4 months. And that, if anything, that just reinforces the prudence of the Fed's decision to wait and see how it plays out. There has only been a small amount of pass-through to core inflation. Core goods last month was negative in outright terms. That buys the Fed plenty of time. So I do think that the energy shock remains extremely topical for monetary policymakers and will probably ultimately drive the tone of what we hear from Warsh.
If he does decide to thread the needle and not give away too much about whether the next interest rate move might be a hike or a cut. Does this market reprice, particularly the front end?
I think that the reason that 2-year yields are at 4% or effectively hovering around 4% is because we've priced in the probability, very low probability, but of a rate hike sometime over the course of the next 6 or 8 months. So the market is comfortable with the idea of symmetry around the current policy rate. So I wouldn't be surprised if we shrugged off a slightly hawkish tone. I think the bigger risk is that we're all poised for a hawkish, ready to fight inflation wash. What happens if he comes out and he's a lot more dovish or erring on the dovish side of balance? I think that we haven't had that priced in. That gets 2-year yields to 3.85 pretty quickly.
Wow, so that could happen in the next couple of days. Potentially, it's one of the outcomes, right?
Yeah.
If that happens and, front-end yields come down, is there also the potential for a market event if he starts talking about maybe reducing the size of the balance sheet at some point? Several guests have said, look, the economy has changed now. It's not going to be able for that, not immediately at least.
So I do think that the argument for a smaller balance sheet over time makes sense. If it were to come to fruition, it would be runoff of maturing Soma holdings. I don't think there's an appetite to sell bonds outright. What I'm more worried about is I'm more worried about what it does to risk assets, because there was a very strong correlation between QE and the performance of the equity market. You take away some of that support, now do we start to see a repricing in equity valuations over time? I think that is one of the wild cards that's out there.
Fantastic, Ian. Very briefly, what was your reaction to the amount of appetite there was for NVIDIA's offering? I know you don't specialize in corporate issuance per se.
I wasn't that surprised given the fact that the sector has been performing so well, and there's money on the sidelines and there's cash to be put to work. So there's going to continue to be strong demand on the corporate side, I suspect.
All right, Ian, thank you so much. A real primer there for your Fed meeting and news conference ahead. That is Ian Lingen of BMO Capital Markets. Now to other top stories trending on the terminal this morning. United Arab Emirates is working on a plan to end dependence on the Strait of Hormuz. The plan includes a major expansion of several eastern ports. It's also looking at building at least one other harbour and investing in new pipelines, rail and road networks. China's central bank signaled a potential shift towards an overnight policy rate, a move that could give policymakers tighter control over short-term funding costs. It's also a sign that the PBOC may eventually move away from the 7-day reverse repo rate as its main benchmark. The move to an overnight rate would bring the PBOC closer to global peers such as the Fed. SpaceX shares poised for a 4th straight day of gains. It's already overtaken Amazon as the 5th largest stock in the world. The strong gains in SpaceX shares are a sign of consistent investor demand, calming fears that the IPO would be too large for the market to digest. Coming up, we'll get into the details of the US-Iran interim MOU as President Trump is set to hold a news conference on the last day of the G7 summit. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. It doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Financial details of the US-Iran interim deal emerging. Bloomberg learning that Tehran is set to receive broad financial incentives as part of its agreement with Washington. President Trump had denied that the US would pay $300 billion noted in the draft of the deal. For more, Bloomberg's Oliver Crook is live at the G7 summit. Ollie, what more do we know about the actual agreement and what the response of America's allies has been?
Yeah, so we saw some drafts of this MOU, the 14-point plan that came out sort of overnight, and we understand that those were also shared with a number of the G7 leaders yesterday with Trump, who sort of talked them through it and sort of, continued to sort of tout his deal, sell his deal to the world. And again, it sort of seems to be, in some ways, kicking a lot of the more complicated issues a little bit further down the road. You'll notice that there was no reference to the sort of, the ballistic missile system that was supposed to be, at one point, one of the war aims was to dismantle. But of course, a large part of it, and what the Trump administration will point to, is some of the agreements that were made by Tehran. Although we should say that the language said that Iran reiterated they will not pursue a nuclear weapon, because of course Iran's public position for many years has been that it is not in the pursuit of a nuclear weapon. What is interesting about the proposal is it begins to move from the stick side of things, that was the military operation, to the carrot side of things, trying to build financial incentives, potentially reduction of sanctions, and that is something that the Trump administration is going to try to use as a lever going forward in order to try to get the compliance from the Iranians. Now, where the Europeans can play a role is really twofold. There's one big conversation about their role in the Strait of Hormuz, potentially being active in there and demining. If that is going to be the case, the Europeans need very, very clear assurances that the kinetic part of this war is over, because those demining ships are not really built for battle. They are built really for peace times. And then the question of where the Europeans come in on the sanctions front. Of course, the Europeans have their own sanctions, and at the JCPOA, the Europeans were very much involved in sort of negotiating that full architecture. And now it seems that the Europeans are coming in fairly late into that discussion. And of course, this is something that's going to be worked out over the next weeks and months, but that is going to be a very active conversation in terms of how to create that incentive structure and what role the Europeans themselves will play as well.
Absolutely, and I thought it was interesting, Ollie, that the 14th point in the MOU is that the final agreement would be approved through a binding resolution of the UN Security Council. People will have their voices heard. Now, when it comes to other matters, the other theatre of war that we keep an eye on, G7 leaders agreeing to strengthen Russian sanctions and boost defense help for Ukraine. So what more do we know about concretely what they'll provide?
Yeah, so what's interesting is, of course, this was the first opportunity for President Zelensky to have a one-on-one or have really any kind of face-to-face discussion with the President of the United States, Donald Trump, in basically the last 4 months, because obviously the United States has been very distracted by the war in Iran, but the United States also effectively entirely withdrew from the negotiation process. You'll remember in the lead-up to the presidential election, Trump kept saying he would end the war in about 24 hours. That has, of course, proven much more difficult than he had anticipated. But we've been hearing from the president here in Evian, France over the last couple of days that he's effectively ready to now re-engage in that conversation. So for Zelensky, it's an opportunity, A, to get the Americans to re-engage, but to do so on terms that are potentially more favorable to the Ukrainians than the first half of the Trump administration. You'll remember the first half of the Trump administration has been focused basically solely on this idea that the Ukrainians have no cards and that basically they should accept a lot of what the Russians were trying to foist upon them. This sort of narrative has changed in the last few months. The Ukrainians are in a much better position on the battlefield. They now have this 90 billion euro loan from the European Union that can fund them for the next 2 years that had been blocked by the Hungarians. Now with Viktor Orban out, that clears the way. So for Donald Trump, who really understands these geopolitical dynamics in pure power terms, the Ukrainians are in a much better position to have those negotiations and hopefully potentially want to rely on American support, not just in terms of course, the sort of moral support, but of course also in terms of military hardware, and potentially some of those flows can recontinue now that they're less distracted by the war in the Middle East.
Yeah, and then a separate question completely, Ollie. We know that AI executives, including Demis Hassabis of Google DeepMind, also Sam Altman, are joining G7 leaders for a lunch discussion. What could they possibly want, if that's not too bold of a question?
Yeah, I mean, I think that for the Europeans, I mean, we just spoke to one of the CEOs of the European companies there, is that what they want to make sure does not happen is some of the things that we saw over the weekend, which is effectively the Trump administration banning foreign nationals from using some of the more experimental AI models that Anthropic has. I mean, basically what he was saying just a little bit earlier, as a company that's based out of the UK, but really with a global footprint, was that the Europeans are too far behind on AI to really compete on the sort of models themselves. What they can be good at is integrating the existing American models, really finding applications for that to boost productivity and sort of contributing to the ecosystem there. So I think for Europeans, it's going to be really about not bifurcating the whole AI ecosystem, not creating this sort of AI nationalism, because they're so reliant on the United States. And of course, if you do ban foreign nationals, I think what the Europeans will sort of be angling for is to try to draw the circle a little bit wider, not just around the United States, but also some other partner countries, potentially the G7.
Yes, trusted partner countries, right, Ollie? Thank you so much. That's Oliver Crook there at the G7 in Evian, France. BMW shares falling as much as 11%, down about 7% at this point after it slashed its profitability forecast for the year. For more, we're joined by Bloomberg's autos and aviation reporter, Danny Lee. So Germany is just getting so much bad news these days. Danny, what's gone wrong for BMW?
Well, Bonnie, good morning. The fact that BMW is struggling in the China market is unsurprising. A whole slew of foreign automakers are finding the competitive pressures increasingly tough, and particularly at a time when China's auto sales are continuing to fall. But for BMW, they're being hit harder against the expectations that they were doing better than some of its rivals like your Mercedes and your Porsches. And with them in the backdrop of sales will now fall this year rather than be flat, this is a bigger blow for them, considering its rivals are in a much better position, whether it be rising sales, having new models to stimulate that, or are cutting deeper. The fact now that BMW is going to have to cut deeper already, having already cut its R&D budgets, investment budgets, now looking to do more structural changes. What that ultimately means remains to be seen, but the fact that you have a profitability margin going to down as low as 1% from 6% clearly spells a lot of trouble for the German luxury automaker.
And Danny, I thought it was interesting, Range Rover is also having problems in China. Now, is it because the Chinese want to spend less and that's why they're moving to EVs, or is it just a very different culture at this point because they led so strongly on EVs?
Well, for Range Rover, it is a symbol of the gasoline car market that is really struggling as the transition to EVs continues to take hold, the fact that fuel is more expensive. And what we have seen is that for a Range Rover, the Evoque L SUV can be bought new, locally made in China for a 60% discount, according to one media report. So it's a significant discount. And when you bring the broader context of this, the fact that gasoline car sales, the discounting rather, has been around 25% for the last 3 months, is a really tough situation for car makers who still have gas guzzling cars, new or used, and yeah, very much so having a steeper discount than EVs, unsurprisingly.
Yeah, the thing is, Danny, if you're going to make an EV, you better do it right? And Ferrari did it, but apparently it's had to come up with a way to sell its poorly received EV. A little bit of pressure, actually, on potential customers.
Yeah, we have some great reporting from our colleagues in Italy that Ferrari is trying to, whether it be strong arm or convince its most loyal customers that if you buy the Ferrari Luce, the EV, you will get top priority for some of its more exclusive, limited edition models, having better priority. And it's that way that they can start to drum up and stimulate sales of its very poorly received EV. The fact it has been panned and criticized by some of the more loyal fans of Ferrari. It's Ferrari's way of trying to issue a loyalty test to its most beloved customers, those who could really afford €550,000. And yeah, this is an interesting kind of stance that Ferrari is taking. They have confirmed that they are engaging with customers to try and drum up a unique kind of sales, but it is an interesting tactic given that it has been widely criticized.
You have to wonder if it won't backlash on Ferrari, right, Danny? Danny Lee, thank you so much. A font of information. Coming up, we're going to get you set up for your trading day, and what a day it is. The first Kevin Warsh-led Fed meeting. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. First up, we do get retail sales at 8:30 a.m. Eastern. And then President Trump is set to hold a news conference from the G7 summit. That's due to begin around 10:30. Then the Fed's rate decision, 2 p.m. Eastern, followed by Fed Chair Kevin Warsh's first news conference. That news conference at 2:30. We imagine there will be more, but you never know. So we will be tuning in for that. Let's take a look at your macro picture before the Fed news conference. S&P futures pointed higher, but this isn't giving you the full picture. NASDAQ futures pointed even higher after that sell-off yesterday, particularly semiconductors, so we might see a rebound today. The dollar index holding in there, and the two-year yield just not moving for now, 404.53. That's it for Bloomberg Brief.
being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Walsh will say, there's tremendous uncertainty. I expect his tone will be a little bit more dovish.
Too high inflation, strong labor market, that argues, of course, for the Fed needs to move towards a more hawkish stance.
The Fed's primary job is controlling inflation.
It's a long shot to call for a rate cut this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Welcome to the Fed, Kevin Warsh. Markets looking for guidance from the new Fed chair with the central bank's rate decision coming later this afternoon. Investors bracing for more volatility as SpaceX surpasses Amazon as the world's 5th largest company, even with rates a bit higher than they had been, and with details emerging about the memorandum of understanding between the U.S. and Iran's financial benefits coming right now to Iran.
And you know what, Lisa? These stories are really intertwined. We might have easier inflation, not so high inflation, given the fact that we're going to see more oil flowing if the Strait of Hormuz does open in earnest. And also this administration, if you look at the MOU that our Bloomberg colleagues got a hold of, it looks like more Iranian crude is going to be able to get to market. We're going to see some sort of waivers on Iranian crude. So you're going to see oil prices potentially even lower than they are today.
And right now we're looking at oil prices that are about $6 to $9 above where they were before this conflict started on February 28th of this year, which raises this issue. Is the inflationary push that we've been seeing entirely due to the oil price increases, or is there something else behind it that Kevin Warsh has to pay a bit more attention to?
Well, this is going to be the big debate amongst him and his new colleagues as he takes over in the new era of Kevin Warsh. Part of it is going to be potentially they're going to see disinflation when it comes to the oil prices. And Citi yesterday was talking about how now they think there's a dovish risk to today's meeting because of what we're seeing in oil prices. But then there's the entire AI trade and build out and all the capital expenditures that is going to that trade. And in that, at least in the short term, I know what he's going to say long term, but in the short term, does that put inflationary pressures on this economy?
There are inflationary pressures in Elon Musk's bank account because right now we have seen SpaceX become the 5th largest company in the world, surpassing Amazon, even though people talk about the fact that its earnings are a fraction of Amazon's total earnings. And this is a new company less than a week after its IPO, and suddenly it has hurtled to almost $3 trillion valuation. Is this a bubble? Is this healthy? A lot of volatility in some of the memory stocks, the chip stocks over the past couple of days. SpaceX on poised for a 4th day of gains. At what point is it just too much?
Well, this is a big test to the market. How much can the market digest? Well, they're certainly digesting SpaceX. Are they going to digest more down the road the rest of this year when we get these liquidity events? When you talk about revenue of SpaceX, all the banks are saying it's going to be by 2030, maybe close to $500 billion. Well, Elon Musk says that is going to be $1 trillion. And if you believe in that, then potentially, you know, where the stock price is trading right now makes more sense.
$1 trillion here, $1 trillion there. I think that right now Elon Musk's net worth is equal to about the total net worth of the 5 next richest people in the world. Right now we're looking at a market that is trying to inflect higher after yesterday's sell-off, led by the tech trade. This has been incredibly volatile. Yesterday it led the way down. Today it's leading the charge up. 0.4%, essentially flat on S&P, as flat on the Russell 2000. Can we get a broadening out? A lot of that is hinged to the bond trade. Do we see a rally into bonds after the news conference today? Who is the real Kevin Warsh? Remember, he was the youngest youngest governor on the Federal Reserve Board back in 2006 when he was nominated under George Bush. Now, can he come out? Is he going to be hawkish the way he was, or is he going to be a dove? And if you bleed this through, ultimately, a lot of this has to do, as Anne-Marie was talking about with the oil market, continuing to see it hold below $80 a barrel, though today, some questions about the MOU, whether it will stick, whether this is going to be something that can truly bring an inflection point for the conflict. Coming up this hour, George Goncalves of MUFG as Wall Street awaits a Fed rate decision. Stephen Cook of the Council on Foreign Relations as details of the U.S.-Iran truce emerge. And Henry Schwartz of SIBO as SpaceX soars past Amazon in market cap and trading rises to records. We begin this hour with stocks pushing higher. Treasuries holding steady as investors look to Kevin Warsh in his first moves as Fed chair. George Goncalves of MUFG writing, inflation concerns have been misplaced and rates may have seen the high prints for 26. That plus Warsh talking hikes off the table is about to unleash a bond rally. George joins us here this morning. George, great to see you.
Great to see you. Happy Fed Day. Happy
Fed Day, if you celebrate. A real question about how much this bond market can rally, given some of the inflationary pressures that, yes, are tied to oil, but also to some other issues as well.
Yeah, look, I think we are entering a summer of the bond market. I think we probably have seen the high prints for rates for a whole host of reasons. Look, oil prices, even in the midst of like literally 1 billion plus barrels of like less production getting through the Strait of Hormuz, managed to stay contained, right? So like this idea that you're going to see like a second wave of higher oil prices, I don't buy that. We don't buy that. We've been skeptical of the move in general, and inflation has largely come from the inflation from the oil shock, and then some second order round effects around. Some sort of pricing surcharges that were added to core prices. But in general, there's not really an inflation problem. Look at wages. Look at the way that the jobs market's behaving. It's still low-paying jobs. You're not seeing the sort of impulse of inflation. We think that we've kind of seen the highs in rates.
So we'll get to the economic discussion later, because there's a lot of divergence, even within pros, about exactly whether all of that is true in terms of wages and some other aspects. Do you think that Kevin Warsh truly can unleash the summer of bonds, given the fact that ultimately he's really squaring off against credibility on one hand and the overhang of what could be coming from the White House on the other?
Look, I think everyone has to temper their enthusiasm, including myself, because let's see what happens with the MOU, and if that gets done, it's a done deal by tomorrow, I think, right? So let's see, or Friday. Let's see what happens there. But I think we're going to start off at 2 o'clock into 2:30, right? 2 o'clock, we're going to see. Did Kevin Warsh participate in the dot plot submission process? Like, that's going to be a big deal. And like, what are the dots telling us? Is there going to be like a removal of the easing bias? At first blush, I think this is going to be a kind of gradual toe in to becoming more like a changes at the Fed. But we don't see a drastic change at the Fed starting off today. But we do think that this is going to. He's going to start pivoting the Fed differently, and that's going to rearrange the focus and less forward guidance and a shift from focusing on other policies towards rate policy. I think that if inflation truly has peaked, if oil's peaked, if rates have peaked, then you're going to see, you can open up a window to cut rates at the end of the year.
Does the labor market need to weaken further? I mean, it's not weak now, but does it need to weaken for him to be able to cut interest rates? I
mean, I think we have to realize, we have to look back and see if the labor data actually is honest. We've had 2 years in a row of massive revisions every single year. The later we get in the year, we'll get more clarity on the true health of the jobs market. So it doesn't have to necessarily weaken. I think it just has to be a combination of it's not strong as people think it is, and 2, the inflation story probably has peaked. It gives a window for the Fed to cut.
But they're not going to get back to the 2% target this year. So what is going to be the catalyst for them to really have that confidence, given the fact that there are a lot of members on the committee that are concerned that basically inflation prices are still too high and the labor market's not weak enough to have this bias?
I mean, look, there's a whole host of things. I mean, depending on how you look at the data, and you look at real pure cores, you can get down towards mid twos by the end of the year, and into projecting into 2027, you can start to get into the twos. So I think it's not about, and plus, by the way, the Fed's eased in the last 2 years with inflation well above their target, right? So it's more about what's your understanding of neutral, and that's why I think today's we get the dot plot most likely, how the dot plot looks like, and then what is the glide path from this year, which we think they're going to remove the one potential cut that was in the last forecast or projections, and what is the path towards neutral? Because like they've been very gingerly moving up neutral rate to around 3 1/8. Are they going to move that up now at Kevin Warsh's first meeting? That would make no sense. So like they had to get down to neutral or redefine what neutral is.
Well, that's something people are looking for. What is inflation? If you could choose your inflation, is it an inflation target that we're going to care more about? I'll choose one inflation target. How about anyone who's invested either in Cursor or SpaceX and the new billionaires that have been minted? There's some inflation there. Given the fact that markets have absolutely been on a tear, how does that factor into the Fed's assessment of current conditions?
I mean, look, the going is great when it's going. The question is, how does it look like at the end of the year? We've had moments where we have these massive euphoric moves like we're in right now, and then they peter out and they burn out. So the question is if the momentum continues and stocks continue to make new highs, yes, then you're building in financial conditions easing, which takes pressure off the Fed to do anything. Or like at least in their calculus, it would be less of a need to ease. But that's really a judgment call on where you think markets are going to be at the end of the year.
If you put this another way, is the summer of the bond going to be also the summer of the stock? Because we've seen correlations between stocks and bonds essentially go to one, right? They've been directly correlated rather than inversely correlated as they have been historically. Why wouldn't any additional bond rally just continue to fuel an even bigger move in the equity market?
I mean, for like the long duration type sectors like technology, it probably would, right? I mean, until something breaks that correlation down completely, it probably would have kind of a self-reinforcing mechanism. But I do think that as we get towards the end of the year and we realize that our more optimistic outlook, collectively the market's more optimistic view on the macro is proven wrong, you're going to see the bond market end up winning out versus the stock market.
George, wonderful to see you. Thank you so much for being with us this morning. George Goncalves of MUFG on This Morning, where Kevin Warsh leads his tenure at the Federal Reserve. He was the youngest Fed governor back in 2006 when he first came in. He left in 2011 after the financial crisis. Now coming back at a moment of real question, and given a reprieve, as you've mentioned before, AMH, given the fact that we've seen a subsiding in the tensions in the Middle East.
It's kind of a gift to him this week that he kicks off, and you have Brent crude trading and holding as of yesterday under $80 a barrel. That is definitely going to be a massive sigh of relief for Kevin Warsh as he greets the press and his colleagues. Bank of America has a note out this morning: is he a hawk, dove, or none of the above? I love, have you been saying, will the real Kevin Warsh stand up? Because when he was governor and the youngest governor, he was an inflation hawk. And then, of course, during his interview process with the president, he leaned very dovish. I think the world really wants to understand where he sees the economy and the Fed going forward.
Yeah, a lot of change between 35 and however many years later. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Bonnie Quinn.
Lisa, thank you. Details are emerging of the US-Iran interim peace deal. The draft of the Memorandum of Understanding shows Iran is set to receive sanctions waivers that allow it to sell oil immediately, with other financial incentives deferred. SpaceX overtaking Amazon in value to become the 5th largest stock in the world. Shares closed nearly 5% higher, pushing its market cap to $2.65 trillion. At the stock's intraday high, SpaceX topped Microsoft to briefly become the world's 4th largest stock. The NBA Finals drawing a massive audience of 20.6 million viewers per game, making it the most watched since 1998. Game 5 scored the highest viewership in the series with 24.5 million people watching as the Knicks beat the Spurs to win their first championship in 53 years. That's your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Did you see people with televisions on their heads and broadcasting it on the walls of buildings?
Yes, my favorite is the projecting it onto buildings, but you know what's even better than watching it on TV?
Oh, God.
Being
Don't even start
Game
it.
5.
Don't even start it.
Incredible.
She still has the glow. Many days later. Up next, learning the details of the deal.
We just signed a deal with Iran. Here's what it says. Iran will never have a nuclear weapon. In addition to that, the Strait is going to be open toll-free. We were focused on Iran. That's going to be in the rear view mirror.
Stephen Cook of the Council on Foreign Relations joins next. This is Bloomberg Surveillance. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Trying to get a bit of a gain this morning after yesterday seeing a decline led by the tech stocks, led by the memory chips, led by some of the high flyers that we've seen really lead the charge up on up days and lead the charge down on down days today. A rare respite from some of that incredible volatility, at least at the headline level, essentially flat on S&P futures, seeing just a little bit of dollar strength. And this all being led by what's going on in the crude space. Crude essentially flat up about 1/3%, although still far below $80 a barrel on WTI, $76.33. Really notable given how much potentially has to be brought back online in the yield space. 10-year yields 4.43%. Down just a touch this morning ahead of that Fed meeting. A real question for Kevin Warsh. How much does this actually give him a reprieve, given this concern that inflation's coming from many places? It seems like this morning, everyone's saying, actually, maybe it really is just an oil story.
Potentially, it's just an oil story right now, but you have to think about some of the other price pressures we are seeing in this economy when it comes to the AI build-out. We're obviously seeing it in the financial markets, but we're seeing some of that as well when it comes to the real economy. But this is a gift for him to walk into this meeting and say, look, as many people have said, like tariffs, you can look through energy price shocks. The issue is, of course, and you brought this up, how quickly do we get back to pre-conflict era of 20 million barrels a day floating through the Strait of Hormuz? Yeah. I'm told it's the start of a deal, and it's going to be a little bit messy.
We're getting some details, but really a question of whether this will stick and what exactly is all in that memorandum of understanding. Under surveillance this morning, learning the details of the deal.
We just signed a deal with Iran. Here's what it says. Iran will never have a nuclear weapon. In addition to that, the Strait is going to be open toll-free. We were focused on Iran. That's going to be in the rear view mirror. And I'll go over the document with the media in a couple of days.
Here's the latest. The U.S. and Iran planning to formally sign a peace deal on Friday. The interim agreement set to bring major financial relief to Tehran. Bloomberg's Tyler Kendall joins us for more from Evian, France. Tyler, what do we know so far about this MOU?
Hey, Lisa, good morning. Well, according to a draft of the MOU seen by Bloomberg News, Iran is set to be able to immediately sell its oil to market once this deal is signed. For context here, the U.S. has long maintained that any financial relief for Iran would be conditioned and accrue based on progress and whether or not Iran is upholding its end of the deal. But this would be an immediate point that Iran would be able to access, as the U.S. Treasury Department is set to issue waivers for the export of Iranian crude and petrochemical products. In relation to this, the U.S. will also immediately lift its U.S. naval blockade even before the Strait of Hormuz is fully reopened, though the goal, of course, is to get the strait opened within the first 30 days of the ceasefire extension, which we know will take time considering that they still need to clear some mines that are in the strait. The MOU also outlines that there will be financing for about $300 billion that Iran can access in what is being called a development fund to help rebuild the country, though the draft text of the agreement does say that the actual vehicle, the mechanisms to deploy this still need to be worked out and would aim to be in the 60-day negotiating period. It is becoming clear that it seems that the U.S. is trying to use some carrots rather than sticks here to get Iran to the negotiating table for those potential curbs on its nuclear program, as the White House maintains that they are looking for a finalized deal that will include the retrieval of Iran's stockpile of highly enriched uranium, curbs on Iran's nuclear program when it comes to the moratorium potentially on uranium enrichment, and also a very stringent inspection regime. Lisa, I'll put one other thing on your radar that potentially could complicate things. The text of the MOU does say that all the ceasefire will extend to the fighting in Lebanon as well, which would include Israel's front against the Iranian-backed militant group Hezbollah.
Heather Kendall, thank you so much, as always, and we'll be catching up with you throughout the day. Stephen Cook of the Council on Foreign Relations writing, clearly the president was done and grabbed the deal before him. He is going to spin it as a victory, but it heavily favors Iran. This raises the question, why did we even go to war? Stephen joins us now for more. Stephen, why do you say that this is giving a win to Iran, given that we don't really know all the details yet?
Well, we have a fairly good sense of what is going to be in this deal based on what's been leaking out to Bloomberg, to Al Arabiya English, and a variety of other news outlets. And what we've seen so far would suggest that the Iranians will retain their right to enrich uranium. They'll be able to export oil immediately. The blockade will be lifted, although the Iranians are saying that there will be freedom of navigation through the Strait of Hormuz, but only for 60 days, and then they will levy a surcharge on transit through that waterway. Then, of course, there's nothing in the document about dismantling proxies. Yes, giving up the highly enriched uranium, but if they can enrich uranium, they can replace that stock of highly enriched uranium. Basically, the United States walks away from this with a lot of tactical battlefield achievements, but what can only be described as a strategic defeat.
Stephen, I also noticed that there is no language when it comes to Iran's ballistic missile program. Has the Trump administration given up their 3 red lines, which has always been, for years, nuclear, ballistic missiles, and money to proxies?
Yes, indeed, they have given it up. There is nothing that we know of regarding ballistic missiles. The United States and the Israelis did a lot of damage to the ballistic missile program, but the fear is that all of these resources that can flow into Iran, including the revenue from immediately exporting oil, can be devoted to reconstructing their capacity to build ballistic missiles. And it is one of the biggest ballistic missile programs in the world.
So the first point, and Tyler brought this up, according to the text Bloomberg has its hand on when it comes to the MOU, means that this would include a permanent end to the war on all fronts, quote, including Lebanon. Is Israel in agreement with this?
Absolutely not. The Israelis maintain that they will not give Tehran a veto over their security. But the Israelis are in a very difficult position. If Hezbollah attacks and the Israelis respond in a neighborhood of Beirut, for example, the Iranians will threaten to close the Strait of Hormuz once again, putting tremendous pressure on the global economy, as we've seen over the course of this war. But Israelis are in an election season, and Prime Minister Netanyahu is not going to give up the fight in Lebanon, which is actually quite popular among Israelis, as President Trump's popularity among Israelis has dropped precipitously in recent weeks.
There is a sense right now that everyone's buying time. It seems like the Iranian regime is buying time to try to survive. And it seems like some Middle Eastern nations are buying time to create alternative routes from the Strait of Hormuz to export some of their supplies. The UAE this morning saying that they're planning to cut the dependency on the Strait of Hormuz to zero, saying that even if the Strait of Hormuz does reopen, nothing will change that plan. How much is this going to be an interim type deal for months, maybe even years, trying to get enough through while nations in the region figure out workarounds?
Yeah, I think that's a very important point. The Emiratis and the Saudis certainly have options to build their way out of the Strait of Hormuz. The Qataris, the Kuwaitis, the Bahrainis absolutely do not have the ability to do what the Saudis and the Emiratis, so just by geography. So there'll be some countries that will be able to see this as an interim deal, and there are others that will put pressure on it in order to see through so that they can navigate through the Strait of Hormuz. Their economies are absolutely dependent upon it. There is a big question, though, whether we will get beyond this 60-day period of the MOU. There's lots to be worked out here, especially on the nuclear front. That took the Obama administration a couple of years. The president is suggesting that this is going to happen in 60 days. But overall, I think you're quite right, Lisa. The Strait of Hormuz is something that is now seen as a problem for countries in the region, and they're going to do everything possible they can to ease their reliance on it.
20 months. The JCPOA took 20 months. Stephen, how long do you think this could take?
Well, I think it can take quite some time, unless the president really goes back on his red lines. There's every indication to suggest that he will. And the U.S. intelligence community has warned the president that their Iranians are unlikely to give up their nuclear program.
Stephen Cook of the Council on Foreign Relations, thank you so much for being with us this morning. And we will keep parsing through that this morning. If you take a look at oil prices, they are essentially flat to where they were yesterday. I'm looking at WTI right now, $76.23. If you take a look at the beginning of the year, I mean, it's sort of interesting to look at a benchmark to in January when you saw oil prices hovering around that $55 a barrel mark. So we have priced in nearly $20 of premium. How much of that comes out? Do we get back to where we were before? And ultimately, how much of a risk premium, a la what Jeff Curry was talking about, remains baked into these prices?
This MOU is not just about reopening the Strait of Hormuz. According to the document we've seen, point 10 says regarding after the signing of this MOU, the U.S. Treasury is going to give Iran waivers to be able to export their crude. So it's not just that the Strait of Hormuz is reopening, it's the fact that they're going to be helping Iran export Iranian crude. So this is not the maximum pressure we've seen under the Trump administration of the past. And this is all to get the deal across the finish line.
It is boosting at least expectations for a potential easing in some of the pressures on Kevin Warsh, on inflationary pressures ahead of the midterm elections. It has a real moment where we are currently. Is the inflationary pressure coming just from oil prices, or is it a broader base kind of push up? Coming up, Adam Posen of the Peterson Institute predicting a year-end rate hike from the Federal Reserve. Plus, Yahaira Anand with your morning movers. SpaceX, once again, fourth straight day, moving up about 3% in pre-market trading, shooting for the moon.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
If you just take a look at the broader indexes, it really doesn't give you a sense of just how much action there is under the surface. This morning, we're looking for maybe something of a reprieve from yesterday's declines, although we've really faded a lot of the earlier gains, at least in the S&P futures, down essentially now flat. NASDAQ, though, regaining about 0.5%, flat on the Russell 2000. Yesterday, we did see a decline led by big tech, but most S&P constituents were higher on the day. The KBW Banks Index was at a new record at the end of close yesterday. At the same time, you saw the SOX, the Philadelphia Semiconductor Index, plunging more than 4%. It just shows you the incredible volatility under the hood, where there is not volatility. With the MOVE Index falling to one of the lowest levels of the year, with just a real sense of steadiness, is the bond market. And you can see that this morning with a sense that, yes, yields have ground lower, and they continue to do so, albeit higher than where they were to start the conflict. 10-year yields at 4.43%. That two-year yield, 4.05%, continuing its inflection lower. And now we're pricing in about an 80% chance of a Fed rate hike for the remainder of this year. Does Kevin Warsh push back? Ultimately, that's a real question. Yes to Dodd or not to Dodd. Yes, some of these other questions. Does he reframe the way that we look at inflation? But does he allow this sort of hiking bias to remain in markets, even though we're still with an easing bias, at least on paper, at the Federal Reserve?
Right, and we spoke to Betsy Duke yesterday, former Fed governor, and she thinks actually the statement's going to be completely rewritten, given this is a new Warsh era at the Federal Reserve. But he has, of course, a difficult line to walk. Of course, he's going to have a message to the markets, but he also has to have, because he wants to anchor inflation expectations. At the same time, he's going to have a message to an audience of one. And that's the President of the United States, who obviously is giving him a little bit of reprieve when it comes to this deal. And you see yields lower because oil prices going much lower based on the fact that the president says the Strait of Hormuz will be reopening on Friday. I don't think anyone thinks we're getting 20 million barrels a day floating through on Friday, but this direction is that they want this to get back to pre-conflict levels, even so much that they're willing to give waivers to the regime once the deal is signed.
Take a look at oil prices, as Emery was just talking about. You can see them just flicking higher a touch this morning, but still far below where they have been. You can see WTI, $76.25. Brent crude at $79, with the IEA seeing a potential supply glut coming as soon as 2027. 3 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with SpaceX heading for a fourth straight session of gains with a move of 3.3% in the pre-market. The stock has surged over 50% since it IPO'd less than a week ago, marking a remarkable start to its life as a public company. The rally has pushed SpaceX to a valuation bigger than Amazon's, and Microsoft is the next mega cap that it could surpass if this continues. Meanwhile, we are seeing a rebound in the chip stocks with names like Intel, Marvell, and AMD all higher in the pre-market after a day that saw the Philadelphia Semiconductor Index fall 5.7%. Marvell was the biggest decliner amid that pullback, now getting a 3% boost. Intel also seeing a boost up 4% after it announced production of its most advanced chip yet, as rumors continue to swirl about a future relationship with Apple, and this could be a step toward that. And we end on Lionsgate. Those shares are falling 5.9% in the pre-market after Netflix came out in disputed reports that it was interested in acquiring the studio. The stock had rallied on that speculation, giving all that back. But the idea was that Lionsgate could emerge as a potential target as we continue to see this wave of consolidation across the media industry after seeing Fox saying that it plans to acquire Roku, saying that earlier this week. Lisa?
Thank you so much, Yahira. On our radar this morning, the interim deal between the U.S. and Iran set to bring major financial relief to Tehran. The deal will allow it to begin exporting oil immediately and give it access to a $300 billion development program. Elsewhere, SpaceX soaring out of the gate in its first 3 days of trading. Shares rallying a mere 49% since its IPO. Its valuation topping $2.6 trillion, overtaking Amazon as the world's 5th largest public company. And top AI executives are gathering alongside world leaders at the G7 in France. CEOs from OpenAI, Anthropic, and Google taking part in a lunch today. As AI rises to the top of the global agenda, the U.S. and the move on Mythos 5 and Fable 5 really setting a shockwave across the world, saying, hold on a second, this is a sovereign issue, not just potentially a technological one.
And already there was concerns in Europe about having too much dependence on US AI companies. Now that's been absolutely heightened given the fact that you have these export controls on these two models coming out of Anthropic. At the same time, did you see the semaphore report about Commerce Secretary Howard Lutnick and Treasury Secretary Scott Bessent are talking about and trying to figure out how actually an equity stake or some sort of nationalization of Anthropic would look like. So Treasury Secretary favored using equity in AI firms to seed Trump accounts. The Commerce Secretary, Howard Lutnick's preference was that any equity be directed to a type of sovereign wealth fund. How is this the beginning of more we're going to see when it comes to the AI space from this administration?
There are two separate issues here that are important issues. On one hand, it's how does the broader public participate in what seems like a sea change that could potentially have malicious effects on the labor market, could potentially lead to some changes in composition there. The second thing is national security and questions about what this AI can do with respect to eating into some of the software holes and other bugs that this software is able to discover that other people really haven't. And those are two separate issues, a question of what this does to national security, a question of what this does to sort of popular support and popular prosperity. And both of those are at the top of mind this morning.
Well, if it's a national security issue, where are they with the other AI models? Where are they with OpenAI and XAI and some of these other models we see that everyone in the market says they are basically competing at the same sort of levels? Are we going to see export controls on them, or is this an Anthropic issue in itself? And we know that Dario Modi is having a lot of problems with the DoD. The DoD has labeled Anthropic a supply chain risk. So this does feel a little bit messy. And does it just get, figured out because the United States government says we're taking a stake in it?
Well, meanwhile, we're going to hear maybe from Kevin Warsh what he expects to see from the AI outcropping, counting down to that Fed rate decision at 2 p.m. Chair Warsh's first press conference at 2:30 p.m. Adam Posen of the Peterson Institute writing, the statement will shift to a neutral bias. They won't hike before the election. They will hike in December 2026 and January of 27. Adam joins us now for more. Adam, always great to see you. Thanks for being with us. So what are you expecting to hear today from Kevin Warsh?
Thanks, Lisa, to you and Anne-Marie for having me back. I think Kevin is going to do, I should say Chair Warsh is going to do something that he's very good at, which is say a lot of things that sound deep about monetary policy while not committing to anything. And I'm not saying that to be dismissive. That kind of worked for Greenspan, and Kevin has said repeatedly that's a model he has some sympathy for. As you quoted me, I think they're going to move the statement a tiny bit. There's the one passage everybody interprets for the bias, and I think they're going to move it to a neutral bias. In contrast to what you cited a minute ago, I don't see any way that they rewrite the statement in this amount of time. Everybody knew Kevin was going to be chair. Everybody knew the meeting was coming up, but you haven't been able for the chair to have more than a bilateral meeting with each member at best. So I can't imagine they've rewritten the statement.
Do you think that he will try to make a bold statement by, say, not putting a dot on the dot plot, not putting forward some sort of projection? Or do you think that he's going to try to toe the line and gain popular support on the FOMC?
I think both, actually. I think he is rightly, in my view, going to downplay the dots. The dots now, and have been for some time, like the monetary aggregates were after the 80s. They were something that nobody wanted to take away, even though they were not a predictor or indicator of much of anything. So I think it's entirely justified for him to say, I'm not putting up a dot, we're going to change that. But I also think that is not so bold. I think that's a reasonable communications improvement, just as his pressures to keep the cacophony of too many members speaking at once will kick in. But I don't think he's going to want to rock the committee. I expect him, again, to sort of dodge things and talk about not the meaning, not the word transitory, but he has the gift, in a sense, of the Iran deal, being that he has legitimate reason to say, let's wait and see, and the committee will live with that.
Yeah, and he has legitimate reason to say we can look through, at least right now, the energy shock price. So you think they're going to hike this year. How offsides is this going to put Kevin Warsh with the Trump administration?
And Marie, I actually think it's a legitimate argument in theory to look through, but I don't think it's right in practice. As we've discussed before, as Peter Orszag and I have written about, there's a lot more inflation in the pipeline. We're still seeing the import prices go up. We're still seeing the lagged effects of tariffs, and the lags are because companies had to make really hard decisions. Similarly with migration issues, we're seeing a labor market that the Fed has repeatedly underestimated for 2+ years now. And we're seeing some erosion of inflation expectations. So I think he will argue that they can look through it. He will argue that productivity growth is going to disinflate, which for reasons you've discussed with others doesn't seem imminent to me. But in the end, I guess the rate hikes are going to be inevitable. Chair Warsh, I do think, knows enough Fed history and cares enough about being a central banker that he will, in the end, say, I'd rather be Volcker or Greenspan than Arthur Burns. And B, that whatever President Trump says, and he may say some awful things, it will not be seen as effective if Trump tries to use lawfare against a second straight Fed chairman, particularly if inflation is rising.
Adam, what do you see as Jay Powell's role going to be, given the fact that he is sticking around?
I must admit, that's the forecast I got wrong and I'm surprised by. I am very surprised former Chair Powell decided to stick around. And I think we have to take it at sort of face value. There's something there we don't see, which is that the lawfare threat to him and the Fed over the costs of the new building, making it criminal rather than political oversight, and the ongoing non-resolution of the, in my opinion, totally unjustified attack on Governor Cook. Jay obviously thinks there's more threat there than we realized. I expect him to stay totally mum on monetary policy issues.
Adam, just real quick here, do you expect to hear anything on the balance sheet today?
I expect some vague rhetoric latest on the balance sheet and commit to shrinking it, but maybe the most you would get is him saying we're going to have a study group on it. I don't expect any firm commitments of any kind.
Adam Posen, thank you so much for being with us this morning. We'll all be watching, I'm sure. Adam Posen there of the Peterson Institute. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. BMW slashing its profitability forecast for the year due to worsening demand in China and negative sentiment from the war in the Middle East. The German automaker also expanding a cost-cutting program, leading to a one-time negative impact in the second half. Microsoft is considering using Chinese company DeepSeek to power its Copilot Co-work. Axios reporting the company is looking for cheaper alternatives to Anthropic and OpenAI as bills for compute skyrocket. And Lisa spoke to RBC CEO Dave McKay about the growing demand for artificial intelligence.
The push for AI and capacity, compute capacity, memory capacity is driving an insatiable appetite for all forms of capital, debt and equity.
Okay, going on to say RBC has the capacity to meet lending demand for the AI build-out. And that is your Bloomberg Brief. Lisa.
Thank you so much. Right now, there is a bilateral meeting happening between President Trump and Egypt President Abdel Fattah el-Sisi as they meet at the sidelines of the G7 summit. We want to listen in.
Of your kind person, and thank you very much for allowing this opportunity despite all of the hard work and very busy schedule that you have, Mr. President.
هبدأ كلامي بالتهنئة والتهنئة الكبيرة جدا جدا على ما أنجزته فخامة الرئيس فيما يخص استعادة السلام في الشرق الأوسط والاستقرار.
Well, let me start by expressing big congratulations for the breakthrough that you have achieved, Mr. President, of restoring peace to the Middle East.
اسمح لي فخامة الرئيس إن بمجرد الإعلان عن هذا الاتفاق كان في تقدير كبير جدا لفخامة الرئيس، ولكن هذا التقدير زاد والإعجاب زاد في إدارة أزمة بمثل هذا المستوى، وإحنا مستنيين الإعلان عن هذا الاتفاق حتى يتم توجيه الشكر والتقدير علنا من خلال مؤسسة الرئاسة والدولة المصرية لشخصكم لهذا الاتفاق الذي أنجزتموه.
Once the deal was announced, there has been great appreciation, but the admiration has increased in this marvelous management of such crisis at the highest level.
Thank you.
We're waiting for the deal to be declared as a final deal so that we can react appropriately and state our positive views and perspective of that great deal from the presidency and on behalf of the Egyptian people.
Up next, we'll be talking more about this and we'll be tracking it throughout the morning, particularly given its timing ahead of that MOU and the announcement of a potential signing of that deal on Friday. Key to hear both of those commentaries plus questions. Up next, we'll also be looking at SpaceX.
It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing.
They're totally overvalued, and it's so obvious. When you have these great winners, you have to let them run. We're at the beginning of a new frontier here.
Henry Schwartz of the SIBO joins us next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Coming into another day of volatility chop, we saw earlier futures inflecting higher. They're essentially flat on the S&P, although still maintaining about 0.1% gain. You're seeing a much bigger gain in the tech space with NASDAQ leading the charge once again. A little bit of, well, essentially stasis. The euro-dollar cross 116. 10-year yields just a little bit lower, nudging lower ahead of that FOMC meeting and press conference of Fed Chair Kevin Warsh later this afternoon. 10-year yields 4.43%, and crude essentially flat here at $76.28, with a real eye toward that MOU and what will happen on Friday. Under surveillance this morning, betting on SpaceX.
People are playing a little bit of hopscotch amongst the AI winners.
It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing.
They're totally overvalued, and it's so obvious. When you have these great winners, you have to let them run.
This company kind of feels like a growth company on steroids.
We're at the beginning of a new frontier here.
Here's the latest. SpaceX shares rising in their first 3 days of trading. Its market cap topping that of Amazon, making it the world's 5th largest stock. Options trading kicking off with a record volume. Henry Schwartz of SIBO writing, volatility skew indicates a high degree of upside interest, aka speculation, and is sharply inverted with higher upside call volatilities. Henry joins us now for more. Henry, can you just give us a sense, and welcome, of what yesterday was like, given that it was the first day of publicly listed options trading on SpaceX?
Well, absolutely. I mean, the options market's been setting records actually for 6 straight years. And I think everybody knew SpaceX was going to be big. And we used an accelerated listing process to get options just 3 days after the IPO. And so that first day activity, we saw 1.77 million contracts trade. It was very interesting, basically, because we saw a very balanced flow between buyers and sellers. I mentioned that the volatility skew favors the upside. So basically, it implies a distribution where investors are actually more worried about a move to the upside than to the downside. We call that kind of a speculative setup, but we've actually seen a trend this year. About a third of the listed stocks out there kind of have this upside skew, which is actually what we saw during COVID as well. So it's not kind of unheard of, but it really does tell you what investors are thinking.
How are people using options right now? Are they using it to hedge positioning, or are they using it as retail investors to just get in as early as they can and bet, as you've been mentioning, to that upside volatility?
Well, it's a mix. So in terms of the larger trades, and we did see some very big trades yesterday, some 7,000 contract trades, which equivalent to 700,000 shares. We saw some big hedges. So we saw basically people buying puts and selling calls. And when the volatility shape favors the upside, that collar strategy is actually very, very attractive, because in some cases, I looked actually last night at the end of the day in the July options, you could buy the 180 put and sell the 235 call for a credit, okay, and with the stock around 201. So basically, you can actually, in that case, you keep about 18% of the upside and you get a 10% downside hedge. That's the power of kind of this upside skew. We don't see it very often, and you almost never see it in kind of at the index level.
How does this volume compare to what you've seen in other mega IPOs prior?
So I went back, and the best example I could find was Meta, which was Facebook back in 2012. It did about 370,000 contracts, so it was super highly anticipated. That was around 2.5% of the market at the time, and actually the volume that we saw in SpaceX yesterday was around 2.1% of the total market. So it was actually kind of comparable. I think though that seeing that we're seeing basically put buyers and also kind of people positioning, as you said, the other way to use options is basically for upside exposure and leverage. We're seeing kind of both of these things at the same time. It was in the top 3 yesterday, and I think it's probably going to stay in the top 2 or 3 for the rest of the year.
How has some of the retail trading changed the nature, just more broadly, of markets, of institutional investors that don't want to bet against them, of retail investors that follow certain popular names and want to get in, and different metrics than, say, traditional Wall Street analysts?
Well, retail used to be kind of a pretty small segment of the listed options world, maybe 10, 15%. That really changed during COVID. So now we can look at the data. We can see basically coming out of the big retail brokers, brokers like Robinhood and Schwab and Fidelity, they make up about 55% of the listed options market now, which is really kind of amazing. And they also show a very noticeable preference for short-dated options. So you've heard about the zero DTE phenomenon that's now been running for 4 years. So I wouldn't call it it's now very well established. In SpaceX yesterday, about 58% of the activity was in short-dated options that happen to expire this Thursday. Now, there's not even weekly options yet in SpaceX, although I believe we're going to see those very soon. And then, we've recently rolled out Monday, Wednesday, Friday options in some of the super liquid names. It looks like SpaceX is going to be a super liquid name, and so I expect we'll see that as well. But retail loves to trade the shorter-dated options. They're lower priced because they have a shorter kind of time span, and they also really let traders and investors position for exactly what they're expecting within the next, sometimes within the next hour.
Well, if someone has a better sense of what's going to happen the next hour, honestly, kudos to them. Henry Schwartz, thank you so much for being with us. Henry Schwartz of SIBO here on SpaceX. We are getting some headlines from President Trump at the G7 summit in his discussion with the Egypt President El-Sisi. Emery, talking about how some of the reporting is false, particularly the $300 billion fund for Iran.
Right, and if you look at the memorandum of understanding, the text that we have, you could see at point 6, it says that there's going to be $300 billion in financing when it comes to the rehabilitation of Iran. The president also says this Iran MOU is not final. So are they still tweaking and working out some of these details? Of course, once it's signed, we should be able to see the text, and the president's going to have to answer a lot of questions. As we heard from Stephen Cook, this doesn't reach all of the U.S. red lines.
Yeah, well, there also are questions about what is and isn't accurate. President Trump saying that the U.S. is not investing 10 cents in Iran. They're not having to fund, they're not having a fund to invest in Iran. Is this about the U.S. financing of it? Is it about the access to financing by Iran? Clearly, it comes as there's some pushback. I mean, that's also part of this from within his own party about what exactly was conceded.
A lot of pushback, and a lot of individuals doesn't think it goes far enough. The U.S. made too many concessions, and obviously something the president does not like to hear because he got out of the agreement. A lot of people are likening this to the JCPOA.
We'll keep tracking those headlines as they come out. We'll also keep tracking SpaceX, as well as the rotational churn under the hood of this market. Coming up next, Mike Wilson of Morgan Stanley seeing that churn continuing. Bob McNally of Rapid Energy on what to expect for oil prices. Former Boston Fed President Eric Rosengren and Holly Liss of BTG Pactual. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, you know, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Continue to think, third inning of this AI revolution.
It's still a bull market.
We're expecting a broadening out here.
Lower oil prices and lower inflation expectations is going to fuel, hopefully, more of a rotation.
The market is sensing an economy that's been very resilient.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. As we try to see a little bit of a gain following yesterday's declines, an incredibly volatile market with so many different pistons firing. On one hand, you have a question about Kevin Warsh, the new Fed chair, who is going to be stepping to the helm of his first meeting at the head. Later this afternoon, he will be giving a press conference following the FOMC's decision. Plus, you're potentially going to get some sort of decision on Iran and the United States. Right now, markets trying to shake it all off, looking through the noise, trying to take a look at positive gains in the tech-focused sector once again. Yields just a touch lower ahead of that Fed meeting at 4.43%. Crude prices, basically flat around here. Yes, they're up about 0.5%, but this isn't exactly anything to write home with, given the WTI trading at $76.36. A key question here, Anne-Marie, going into this meeting later this afternoon and then on Friday, is how much do lower oil prices really take the temperature off Fed Chair Kevin Warsh at a time when ultimately he has to make his stamp, given that this is his first speech?
Well, we just heard from Adam Posen, even though he thinks there's so much more inflation built into the system right now and he cannot look through the inflationary pressures. At the moment, in the short term, he can look through the energy price shock and say, well, look where oil prices are today. They're not $100, they're not $120 a barrel. We heard from Citigroup yesterday, Andrew Hollenhorst was on the program, and he thinks this is definitely going to help Kevin Warsh have a bit more of a dovish tilt today. And that's what everyone wants to hear. They want to hear how he speaks about the economy right now. And where is his tilt, since obviously they're going to keep rates on hold?
Well, SpaceX also rallying as the market seems wide open to IPOs of all types. Mergers and acquisitions are on fire. A sense that the financial markets are looking beyond and are not exactly looking for anything other than a Kevin Warsh that isn't going to stop the party. I mean, at what point does that enter into the consideration for this Federal Reserve?
Well, I think the Federal Reserve is going to be looking at the financial markets and saying, wow, they're off to the races. But of course, they also have to deal with an economy where, yeah, the labor market is okay, but the lower end of the K is still struggling, somewhat resilient, but after survey and polling you see, people are saying that they are having to dip into savings and it's becoming much harder to keep up with price pressures.
Right now, we're looking at a market that on the surface looks fairly calm. Under the hood, keep watching some of the components. The KBW index, the bank index hit a new record yesterday. You saw more stocks gain than lose, even with declines on the benchmark indexes. You saw the semiconductor index plummet more than 5% yesterday. This morning, a bit of a rebound, although how much does this churn really indicate the path forward? Coming up, Mike Wilson of Morgan Stanley saying the bull market remains intact. Bob McNally of Rapid Energy on uncertainty surrounding the deal between the U.S. and Iran. And former Boston Fed President Eric Rosengren as Chair Kevin Warsh presides over his first rate decision. We begin this hour with stocks rising, crude holding below $80 a barrel. Investors betting the U.S.-Iran deal to reopen the Strait of Hormuz will ease inflation concerns. Mike Wilson of Morgan Stanley writing, if there is a stable resolution in the Middle East, the bond market might walk back the Fed hike it's currently pricing in. Our conviction in the current bull market is intact. Mike joins us now for more. Mike, always great to see you. Thanks for being here. Let's start there. This idea of what a bull market means. Does it mean stocks just go up and to the right, or does this mean that there is some sort of cyclical undercurrent that shows an economy that truly is strengthening?
Well, let's go back to why we're in a bull market. It's all about the recovery from the rolling recession from a year ago, this operating leverage story. It's an earnings-driven bull market, right? So last year we got the multiple expansion in advance of, predicting that was going to happen. And as you recall, going into this year, there were a lot of kind of boo birds on the economy. People were very nervous about earnings. And it was like the opposite view. I mean, nominal GDP is booming. It's 7 to 8%, and that's in place. So what's going on now is the multiples coming down, over the last 6 months, but the earnings have been so good that the market can still go up. So the next phase of the bull market at this stage typically is multiples are flat to down. Earnings come through as expected, but that can drive the stock market higher. And you get rotations to the areas where that earnings growth is underappreciated. And we think that yesterday's action is some evidence that maybe we're going to have that next rotation. We've already had several rotations this year, and we think that next rotation is in some of the areas you mentioned, like regional banks or consumer goods, which are asymmetrically, positively, inspired by oil prices coming down.
This has been the argument that the rally in the equity market is entirely driven by fundamentals. And then SpaceX happened. How much does that kind of torpedo some of this thesis?
Well, look, I mean, markets are driven by fundamentals and animal spirits at the same time. I mean, you can't separate the two. They work in harmony. And so, yeah, I mean, is it a little frothy right now in certain areas? I mean, not necessarily. In areas, there's a lot of leverage in the system in semiconductors, as an example. And that's coming out now a little bit. That's something we wrote about 2 weeks ago. To me, that's a healthy development as long as there's some place to go to, right? And so if there's no place to go to, then you can have much more serious downturn that can turn into something that's more severe. We don't think that's happening. We think this is a normal transition. I want to go back once again to the beginning of the year when people were really, kind of pessimistic about growth. All we've seen this year is one rotation to the next from commodities, What happened this year? The Fed started printing money again, right? They did the RMP. That went into gold and silver stocks. Then it went into metals and rare earths. Then it went into energy stocks, ended up in semiconductors. What do all those have in common? They're all commodities, So we've had a commodity rally basically bouncing around. And we think now we're going to get that broadening out story that was kind of going in January and February. Then it was halted by the war in Iran and the oil price spike and the repricing of the Fed. That now is subsiding. And so we can rotate back to some of these areas, pro-cyclical areas where the earnings are quite good, but they're underappreciated by the market.
What if we get a hawkish Kevin Warsh? Could that hurt the rotation?
Well, define hawkish Kevin Warsh. I mean, there's a couple ways to think about that. I think one is on the rate side, which I think is unlikely. The other's on the balance sheet. And we don't really know yet how he's going to want to position that. What I would say, and we wrote about this past week, is we already know what's happening, which is that, Jay Powell left him a nice little package, which is that we're basically already seeing a deceleration in the RMP. So this is I've spent the last 2 years painstakingly trying to follow liquidity because that has been the main driver of kind of the animal spirits. And it was very positive at the beginning of the year when they restarted the RMP or asset purchases, and you had Treasury buybacks as well, and the SLR, increased some capital from the banks. That now is decelerating, right? You've gone from $40 billion a month in RMP to $10 billion a month. So that's a deceleration that's already in place. He's inheriting that. Is he going to come out and say, hey, we're going to increase that? Probably not. Is he going to say we're going to kill it? Probably not. But that deceleration is still in place. So I think we already know the answer to the test, okay? We're having a deceleration in liquidity in the moment, and that to me, as we've been talking about, is sort of, that's why you can have this sort of summer chop and summer correction. Like in this rotation yesterday, you said it already, we're getting a rotation in a down tape, okay? That's what I expect. We're going to get a down tape, but we're going to get a rotation, and that's a signal that we're seeing a leadership change.
What's the next risk on the horizon? The market was able to get through tariffs. Obviously, they're looking beyond now the conflict in Iran. For the rest of the year, is it just that potentially, I mean, the president says if he doesn't like what he sees in Iran, he'll start strikes again. Is that what potentially could be disruptive?
Well, I mean, your viewers probably won't like me saying this, but the market's moved past the war. You know, they moved past tariffs a year ago. I remember in this time last year, June of 2025, everybody was still harping around tariffs, and we had said a month before, like, we've moved past tariffs. And this war, which is amazing, okay, and I didn't expect this, is we just learned how much supply is out there, okay? I mean, like, if you had the situation, this is a perfect storm. If you're an energy bull at the beginning of the year, by the way, energy stocks did incredibly well, and then they peaked literally the day of the attacks. So if you think about this event, you can only get to $125 in oil. And if you inflation adjust that, that's so far below where we were in the Russia-Ukraine war that began, 5 years ago. So that to me is just a really strong signal that the world is very resilient in terms of finding energy supply. China's a big part of that because of all the storage, but to me it's a very bearish view for oil going forward.
You're pointing to something that's fascinating. Do you think that the trade in terms of bullish on commodities is ending? The idea that that is going to be the outperforming sector in the rally, which has worked at least year to date?
Well, no, I think what I'm saying is that there are multiple types of commodities. And the reason why commodities have done so well this year at different times is because of the liquidity picture, which was so robust. We've written a lot about this the last 2 weeks, which is we think that between the Fed, the Treasury, and then the deregulation, they've added over $500 billion of liquidity to the system. So the whole rates argument is a sideshow to me. It's just a sideshow. I mean, it's been neutral. Yes, to date, has the Fed been less dovish than expected at the beginning of the year, including me? Yes. Have they been way more dovish on balance sheet? Absolutely. And that has trumped, the negativity. Now, having said all that, multiples have come down this year. Okay, so multiples have come down because we're later in the earnings cycle. We're going to get a peak rate of change in earnings revisions too. So the combination of peak rate of change on earnings revisions, peak rate of change on liquidity tells me that we're in a corrective mode right now.
Well, I guess another way to ask this is, do you expect that Fed Chair Kevin Warsh to pull back some of this liquidity in the face of these pockets of froth, as you called them?
It's already happening. It's already happened. In other words, the path has already been set. We're having a deceleration, okay, or a deceleration on the rate of change of liquidity being provided to the market. That's what the market's picking up on now. The question, which you may or may not answer today, is what are you going to do going forward? Are you going to be active using the balance sheet in helping funding markets stabilize, which is what the last Fed chair did, Jay Powell, which is still there, by the way, so they're probably having a conversation about this. So, I think they will ultimately. Like, in other words, I think the Fed and Treasury will provide more liquidity if they need to. But right now they don't need to because bond volatility is totally under control. Funding markets are totally good. We're seeing issuance of equities and credit being absorbed. So they don't need to do anything right now. Why spend your bullets? And so there's a lesson in that. We kind of need the markets to pressure them to provide more liquidity. And the reason why we need more liquidity is because the economy is booming, okay? I mean, we're growing 7 to 8% nominally. That absorbs a lot of capital. Money supply is only growing 6. So that money's got to come from somewhere.
Do you think that the market could still hit your 8,000 target for the S&P by the year end if you do see a rotation away from some of the hyperscalers, away from some of the semiconductors, given how much they've rallied, given the proportion of them into the entire rally, and given how small the relative economy has gotten in response?
Yes, because I don't expect these stocks to correct more than whatever 5–10%. I mean, they're going to correct and then they're going to come back. Like, I don't anticipate that this is the end of the AI CapEx cycle or the end of these stocks working. I'm just saying the relative outperformance doesn't make sense to me given the relative earnings revisions in these other areas. And by the way, just a reminder, that happened at the beginning of the year. At the beginning of the year, these stocks were all underperforming. So, it's just the hot dot becomes all, the attention of the market goes right there. And I like to try and think 6 months in the future. Like I try, my job is to tell you what's going to happen, not what is happening. Okay, that's harder, and so people don't like to do that, but I try to do that, and I'm telling you that I think we're going to get a rotation, but it doesn't kill the bull market.
Mike Wilson, such great perspective. Thank you so much for being with us. Mike Wilson of Morgan Stanley joining us here in New York. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg brief with Vonnie Quinn. Vonnie.
Lisa, thank you. President Donald Trump telling reporters at the G7 summit reports of a $300 billion fund for Iran are false and that the U.S. will not invest, quote, 10 cents in the country. The president saying the memorandum of understanding reported by Bloomberg is not yet final, and he will share more details of the deal in a press conference today at 10:30 Eastern. Goldman Sachs marking an M&A record. According to Deal Logic, the bank has advised on more than $1 trillion worth of deals so far this year. That's the fastest any bank has ever reached the milestone. Democratic Senator Raphael Warnock criticizing Elon Musk's trillionaire status.
I think news of the first trillionaire in the world is not good news. I think that's bad news. It is a bright indication of growing wealth inequality in this country.
Warnock going on to say the tax system is structured for people like Elon Musk. And that is your Bloomberg brief. Lisa.
Thank you so much, Vonnie. Up next, pushing back on the details.
It's a memorandum of understanding, and if I don't like it, we'll go back to shooting at them. We'll go right back to dropping bombs right smack in the middle of their head.
Bob McNally of Rapid Energy Group joins us next. This is Bloomberg Surveillance. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
A lot on deck today with the first FOMC board meeting for Kevin Warsh as Fed Reserve Chairman. We're going to be getting that later today, and right now markets are pretty calm. S&P futures up about 0.1%. Real stasis in the euro-dollar cross at 116. 10-year yields inflecting just a little bit lower, 4.43%. And crude hovering around that $76 mark after plummeting from near $100 a barrel not so long ago as people look to Friday with that memorandum of understanding being called into question this morning, a question about how much this truce and, frankly, this resolution to the conflict can stick.
Well, we heard from the president in the last hour, speaking alongside the sidelines of the G7 in bilateral meetings, and he's basically saying he doesn't like what he sees out of Iran and the regime, that he's willing to go back to strikes again. So how it's been described to me is that it's the start of a very long process, and it's going to be a bit messy.
Yeah, under surveillance this morning, pushing back on the details.
No, it's not final. It's a memorandum of understanding. And if I don't like it, we'll go back to shooting at them, dropping bombs on their head. If I don't like it, if they don't behave, we'll go right back to dropping bombs right smack in the middle of their head.
Here's the latest. President Donald Trump returning threats and pushing back on the details of the memorandum of understanding with Iran. Trump saying the deal is not final and fighting could continue. Bloomberg's Oliver Crook joins us now from the G7 summit in Evian, France. Ollie, what's the sense there on the ground in terms of what the resolution is and what some of the allies, how they feel about it?
Well, I think that overall everyone is going to be very relieved to think that, there is at least a window here for the end of the kinetic part of this war, the potential reopening of the Strait of Hormuz. The Europeans have put their hands up again to say, listen, that we are very happy to be active in the participating in the demining process of the Strait of Hormuz. This is something we understand from our sources that the United States has been receptive to. But of course, they're only willing to do that once you have a final peace agreement that they can feel is sturdy and that they can feel is reliable. And comments like that from the President of the United States potentially undermine some of that faith. In terms of how the Europeans feel more broadly about how sound this architecture is, whether or not this is better than the JCPOA, and you'll remember the Europeans were actually involved intensely in the negotiations on that. They're really coming back at the end of this. If the United States wants to use financial incentives, as it seems the 14-point memorandum is really leaning on, the Europeans will have to be a part of that conversation too. I think that here there are a ton of questions from European allies about how Trump is exactly seeing the so-called new regime in Iran. He said basically that the Iranians are on their third regime now, that of course the Iranians don't see it as a new regime. And there's some real questions here, I think, about how docile, how compliant, how willing the Iranians are going to be to comply with the wishes of the United States just for some of those financial rewards. Of course, the Iranians have had sanctions on them for a number of decades. And of course, the supreme leader, the new one, almost his entire family has been wiped out by the President of the United States. So I think a great deal of a lot of sort of optimism at the front end of this conversation and a lot of skepticism and a lot of questions on the back end.
Oliver Crook, thank you so much for being with us. Ollie there in Evian, France, for the G7 meeting. Crude, meanwhile, holding below $80 a barrel following reports that the U.S.-Iran deal will reopen the Strait of Hormuz. Bob McNally of Rapid Energy Group writing, even if Hormuz tanker traffic resumes shortly, the risk of a summer or fall oil spike has not completely disappeared. Bob joins us now for more. Bob, great to see you. Thank you for being here. Let's just start with the move so far. Have you been surprised by how much of the risk premia have been taken out of oil markets since the initial discussions of some sort of resolution?
Hi, Lisa. Yes, Rapidan and I have been much more successful at predicting this crisis and analyzing it well before it happened than we have how prices behaved since it started, really. I think it's oversold. I think the market continues to have a strongly optimistic bias toward this crisis. President Trump has validated that with what looks like now a signed MOU. We have to see the details. But yes, I think I'm still surprised, and I think it's unwarranted, and I think a lot of this sell-off is going to retrace when those inventories keep drawing in the coming weeks and months.
The view on markets from markets, Mike Wilson of Morgan Stanley was just on, and he said what we've learned throughout this conflict is just how well supplied we actually are, that actually there's plenty of oil sloshing around. The reserves in China in particular have been incredibly robust, not to mention the others. Why don't you believe that's enough?
Well, that only explains how we skated by the last few months. What we have to wait for now is when the shortages start to appear in further inventory declines. On a seasonal basis, we are at 11-year lows in U.S. gasoline stocks, 29-year lows in distillate stocks, and our SPR is at 43-year lows. And we're going to be soon, IEA is reporting we're hitting new multi-year lows in commercial inventories. Lisa, I see this almost as an echo of 2022, when the market mispriced the Russia disruption. Back then, it was pessimistic. Crude oil prices roofed in the first half of the year, despite 2 SPR releases, because the market believed we were going to lose 3 or more million barrels a day of Russian supply. But in the second half of the year, when the data showed that didn't happen, Russian supply was not disrupted, it was reshuffled, prices aligned. Now the market has taken a very optimistic view of the largest actual disruption. We've lost 3 or 4 times what we thought we were going to lose in 2022. So it could be that all of us barrel counters just got it wrong, but I think there's a mispricing here. And yes, we were well supplied as long as we destock and as long as China went on a crash diet and stopped importing crude oil. It's like holding your breath, though. You can do that for a while, but you can't do that on a sustainable basis. Eventually, you got to exhale, you got to eat, you got to drink. And when Asia comes back to buying, as we get in the high demand season here in the summer, I think oil prices are going to head up.
Bob, when it comes to the IEA, they put out a report saying the impact on oil demand will be much deeper this year, but they're seeing a supply glut in 2027. Do you agree with that assessment?
Yeah, our base case has assumed that Hormuz would start to reopen in July. And in the coming months, we will see Gulf producers restore production, and we will have surpluses even by the fourth quarter, possibly. But those are surpluses. I wouldn't call it a glut. We are going to be refilling stocks, commercial, strategic. China can turn on a dime and start importing again 1.2 million barrels a day. 1.5 million barrels a day. So I don't think we have a glut in the sense of massive oversupply that OPEC Plus will have to cut under necessarily. I do think we'll have surpluses if the Hormuz recovery happens.
How many barrels do you see getting out every day now?
Well, on an average basis, so on any given day, it could be 7 million barrels a day, depending on how many VLCCs are through. We estimate a little more million barrels a day on a sustained basis is getting out now, but that number is going to go up. The U.S. has been successful at getting more ships out, and we're learning about that. So there's upward skew to that forecast. We could probably be hitting 3 million barrels a day on a sustained basis, say over a week or two.
If Iran were to put oil back in the market, how much would that affect your forecast in terms of just supply increasing much beyond what you've currently priced in?
No, that's aligned. We think that we've had the view, 70% probability, that in July, Hormuz would be open to freedom of navigation, more or less. And so Iran will start reloading quickly. They haven't had to shut in too much yet. And we'll start to disgorge the inventories. And then we'll see if the Gulf producers, how quickly they decide it's safe to restore their shut-in production. So Iran coming back fits with our forecast and perfectly.
Bob McNally of Rapid Energy, thank you so much for being with us this morning. Can you imagine, Emery, if that's part of what ends up happening if the U.S. and European nations start restocking their oil supplies with Iranian fuel?
That would be very much so unbelievable under a Trump administration that was obsessed with maximum pressure and making sure that Iran is under serious sanctions. I imagine all that Iranian crude that was going to go back to China.
Right.
Lion's share of the Iranian crude goes to China now. And Bob makes a very good point. What's going on right now is China is not buying at the rate they usually buy and import. Their thumb is on the scale. If they start buying once again, that happens this summer, you could see an elevation in prices.
Yeah, a lot to be determined as we do see oil prices stay below that $80 a barrel, with WTI trading just some $20 above where it was at the beginning of the year. Still a significant premium. Whether that premium is too high or too low, it's subject of real questions. Of course, it also is a question for inflation. How much is this the sole reason for the inflationary spike that we've seen in recent readings? Coming up, former Boston Fed President Eric Rosengren, as Chair Kevin Warsh presides over his first rate decision. Yahira Anand also joining, with SpaceX rising once again on its way to a fourth straight day of gains. This is Bloomberg Surveillance. Good morning.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Yesterday was an interesting day in markets where we did see the overall indexes decline, and yet there were a number of rotations, as we were just talking about with Mike Wilson, that were really interesting, in particular with the KBW Banks Index that hit a record high. This morning, we are rotating back into some of those high flyers, the tech names, with the NASDAQ leading the charge up about 0.5% and just 0.1% gain on both the S&P and the Russell 2000. Key question will be, how much will the Fed give a reprieve to broader economically sensitive stocks? Today, we do get, of course, Fed Chair Kevin Warsh's first rate decision at the helm of the central bank. A real question here with 2s, 10s, and 30s inflecting just a little bit lower, still far above where it was before the conflict started on February 28th with Iran, the U.S., and Israel. Right now, we're looking at 10-year yields at 4.43%, not doing much at the front end, essentially flat at 4.05%. That 30-year yield still below 5%, 4.9%. A lot having to do with the oil space right now. That quiet that you're seeing, despite some of the questions around what's in the MOU, that idea that we're seeing Brent crude at $79.34, given where it has been over the past couple of months, is truly remarkable.
It is remarkable seeing Brent below $80 a barrel, given the fact that at the moment the MOU is not even signed, and the president just said it's not even final yet. So the Strait of Hormuz is essentially still shut, with Bob McNally saying 2 to 3 million barrels a day on average that is only getting out. And we are living in basically on these buffer zones when it comes to inventories. Yet the market certainly trusts in Trump in the sense that this is the direction of travel and that he wants to see the oil flowing once again. And that is why you have individuals like Citi saying we see a dovish Kevin Warsh showing up today, and they still see 3 rate cuts this year.
Markets have moved on, in large part because they've got new shiny objects to focus on, like space, like what we could see with new programming and software development coming from artificial intelligence. Lots of specific names 2 hours away from the cash open. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. Well, we start there with none other than SpaceX, heading for a 4th straight session of gains, with shares up 2% in the pre-market. The stock has surged over 50% since it IPO'd less than a week ago, pushing it past Amazon when it comes to market value. And the gains have been so dramatic that apparently Elon Musk is already nearly a third of the way to a $2 trillion. That's according to our Bloomberg Billionaires Index, which may need to be renamed, or maybe there's a separate category for Musk. Meanwhile, we are seeing a rebound in the chip sector with names like AMD and Intel moving higher in the pre-market after a day that saw the Philadelphia Semiconductor Index close down 5.7%. Marvell was the biggest decliner amid that pullback. Meanwhile, we are seeing Intel shares rise 3%. after it announced that it is starting production on its most advanced chip yet, as reports continue to swirl about a potential future deal with Apple, and that may be a step toward that. And we end on CarMax. Those shares also, they are now falling 1.5% in the pre-market. It just reported earnings and falling despite the used car retailer reporting sales and revenue that did top expectations, though profit did come in below expectations, so the market may be reacting to that. But it is a sign that consumers are still continuing to look for value when it comes to those big ticket purchases. Lisa?
Thank you so much, Yahira. On our radar this morning, President Donald Trump denying reports that the deal with Iran includes a $300 billion investment fund. Trump adding that fighting could even continue.
It's a memorandum of understanding, and if I don't like it, we'll go back to shooting at them. We'll go right back to dropping bombs right smack in the middle of their head.
President Trump is expected to offer more details from the G7 at a 10:30 Eastern press conference. Meanwhile, SpaceX agreeing to take over software startup Cursor in a $60 billion deal announced yesterday. The move cementing key parts of Elon Musk's efforts to catch up with rivals on coding tools. The deal is expected to close in the third quarter, and kind of amazing that it was a deal so quickly after the IPO. Meanwhile, U.S. Commerce Secretary Howard Lutnick out with a warning for Anthropic, telling the Mythos maker it will need government permission to give foreign nationals access to its most advanced AI models, threatening civil and criminal penalties if the firm fails to comply. This is Anthropic. Representatives head to D.C. with Mythos 5 and Fable 5 now withdrawn due to compliance issues.
Right. In this letter from the Commerce Secretary ordering them not to give any of these models to foreign nationals, or there is going to be serious issues when it comes to going past what these export controls and licenses require. What's interesting is Dario Mode is also with the president at the G7. At the same time, I was with the president 2 weeks ago, and he was talking about potentially there's going to be some sort of maybe equity stake, public-private partnership when it comes to these AI companies. Semaphore is saying that there's a difference of opinion between Treasury Secretary and the Commerce Secretary, but mostly that the U.S. government wants to make money off these companies, essentially some sort of nationalization.
Yeah, especially to get some extra funding to fuel different programs for assistance and for transition. It's notable when you talk to corporate CEOs who have been exposed to Mythos, how alarmed they actually are about the potential to find any holes in their security, any holes and ability to get in and manipulate things. You just wonder about the timeline, whether the development of some of these AI tools is moving faster than a lot of companies' ability to really adapt and protect themselves from it.
And also to regulate it. Remember, this administration was going to have a very soft touch when it comes to AI regulation, and then all of a sudden they're actually blocking these models getting into the hands of foreign nationals. Is that going to be the direction of travel they take?
And this is going to have a huge economic implication, in part because of what it does to employment. Kevin Warsh is going to have to speak about that eventually. Whether he does today is a question as he steps into his first opportunity to shape expectations as Fed chair later this afternoon. Former Boston Fed President Eric Rosengren expecting no forward guidance from Warsh's statement, writing, "The new chair is likely to want to emphasize at this meeting a new, less transparent communication style." Eric joins us now for more. Eric, great to see you. Thank you for being with us. Can we take anything from Kevin Warsh's first appearance on the board of the FOMC back in 2006 to 2011 that we can pull forward to today as guidance over how he will really preside over this central bank?
Well, I think he's made pretty clear that he thinks that previous FOMCs have over-communicated and that it's been a bit confusing with a number of voices sometimes giving discordant opinions. So I think he's going to try to slow down the amount of speeches made by members. He's probably going to redraft the statement so that it's very factual and doesn't provide any forward guidance. And this is normally a meeting where the summary of economic projections is provided, which includes a dot plot that gives the participants expectations of where interest rates will go. It will be interesting how he handles, if they go through with that, it'll be interesting to see how he handles that, because even if there's no forward guidance in the statement, if they put the dot plot out, it's going to give some indication that many members of the FOMC think the next move ought to be up, not down.
You said if they put the dot plot out. Do you think that there's a chance that they won't?
I mean, at the first meeting, he said there's going to be a regime change. I expect this meeting is mostly going to be about communications within the committee, communications about the statement, communications with the press conference. And at a very minimum, I think he's probably going to seek to de-emphasize the summary of economic projections in the dot plot with the hope that eventually it goes away. But when you talk about regime change, sometimes it is fairly quick. So it will be interesting to see what happens at the press conference and what actually is released publicly.
Eric, you also said he's going to try to slow down the number of speeches. How does he do that while also making sure he's gaining consensus amongst his new colleagues?
I mean, I think it is a challenge, particularly given the precedent that many presidents probably have quite a lot of speeches that they've already agreed to give, as well as some of the governors. But I think he's just going to emphasize that he doesn't want to see forward guidance in any of the speeches, and that the forward guidance has often been misleading and misdirected the market. And he thinks that both in statements and in speeches, people should stick to the facts in explaining the policy that was just taken.
Well, is Warsh himself also going to speak less? And if that's the case, and Jonathan Ferro has brought up this point a lot, doesn't he just outsource how he's thinking to other members of the committee, and then they will define him?
I mean, he's indicated he thinks that the chair, as well as everybody, should speak less. We'll see how difficult that is, particularly if they're expecting to make significant changes. But I think if he does that, it's going to be in the context of the entire committee speaking less frequently and less with less forward guidance than they have in the past.
It seems like a lot of people have moved past forward guidance anyway, at least in markets. They've been looking at other metrics in terms of inflation, in terms of understanding exactly how tight the labor market is. Do you expect any guidance for at least how the Fed measures inflation, given the criticisms in the past that Fed Chair Kevin Warsh has had about the exact metric used?
The chair may talk about that in his comments. Usually those kind of discussions take several meetings. The staff usually provides briefings, and there are a lot of economists that would work on the issue of what are the best measures of inflation, what's the best way to forecast future inflation. So I would be surprised if that came out at this meeting. I think that probably will take several meetings before he would introduce anything different there.
Do you think it's bad for the Fed to communicate less?
It wouldn't be my first choice.
Why?
I think that during a period of regime change, if there really is regime change, then you need to explain what you're doing and why you're doing it, particularly if it's different than what the previous 2 or 3 chairs have been doing.
Do you think that the interpretation will be some sort of overly dovish position? Do you think the implication will be sort of political, or do you think that the implication will just be more uncertainty, potentially having the opposite effect, more volatility and leading to tighter financial conditions?
I mean, Kevin has in the past talked about wanting to go back to the day where there's a little more mystique to monetary policy and not being quite as transparent in general. I think the challenge with that is both the public and investors are now very well informed about what the Fed does and how the Fed affects the economy. So I don't think we can go back to where we were under Greenspan or Paul Volcker. And I think that Kevin's thinking may evolve on this over time.
Former Boston Fed President Eric Rosengren, thank you so much for your thoughts this morning ahead of that central bank meeting and rate decision. And of course, Kevin Warsh's first time as Fed chair on the podium. A really interesting note from Torsten Slok just moments ago, coming out and saying that there are more T-bills, more dependence on the Fed, talking about how the structure of financing of the country has really put that much more control in the Fed's hand about what our interest rates are, given that 85% of gross Treasury issuance will be in T-bills, which is the most affected by the Fed's rate.
Which is why the market wants to hear from the Fed, which is why this might be challenging for Kevin Warsh if he comes in and tries to dial that down, especially given the fact that the president's appointment of Stephen Miron, who's no longer there, of course, but Stephen Myron injected this new, fresh approach where everyone was out speaking more and everyone was more transparent in how they felt. Now is Kevin Warsh trying to put that genie back in the bottle?
Well, we will see later this afternoon if he gives a speech and if he answers some of those questions that I'm sure will be lined up in the press conference. Let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. A small passenger plane crashing near a Texas highway last night. According to the Laredo Police Department, no one on the highway was injured during the crash. It's currently unclear how many people were on board and their condition. Apple is planning to launch camera-equipped AirPods late next year as part of a flurry of new releases. Sources telling us here at Bloomberg the company plans to unveil the device around the same time as a next-generation foldable phone and a fresh iPhone model, all to mark its 20th anniversary. Ferrari is looking for ways to get people who buy its divisive EV model. Sources telling us here at Bloomberg the company is delivering a message across its collector network that purchasing a Luce is a stepping stone to other exclusive models. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. I think that John is out buying a Luce.
A Luce? I highly doubt it. But actually, this is what Hermes does. You got to like buy a bunch of stuff to then get on the list to try to get a Kelly or a Birkin. And that's what Ferrari seems to be doing. It makes me think, do people actually want this car, or they want a classic, amazing, incredible Ferrari, and they have no choice but to buy this Luce first to get on those lists?
If you want the privilege of buying a $2 million Ferrari, you first have to buy just a mere $650,000 car. Up next, Kevin Warsh stepping up to the plate.
Kevin Warsh knows what he's doing. He wants any changes. Basically, he needs to have the other 11 members on the FOMC, the voting members, on board.
Warsh will do is say, there's tremendous uncertainty that would actually be good for the Fed to have that flexibility here.
Holly Liss of BTG Pactual joins us next to talk about exactly what to expect later today. This is Bloomberg Surveillance.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Seeing a little bit of a lift. This seems like a waiting pattern ahead of a couple of key events this morning, whether it's the Fed meeting later today, Kevin Warsh's first time at the podium, giving a press conference following the rate decision as Federal Reserve Chairman. Of course, we also have the MOU on Friday, the potential for some sort of deal between the U.S. and Iran getting inked. Put this all together, markets are flat. They don't know where to go with this. S&P futures essentially unchanged. You've got the euro dollar essentially unchanged at 116. You've got 10-year yields unchanged. You've got crude inching maybe a little bit higher, but still incredibly low compared to where they've been over the past 3 months, $76.70 after rising beyond $100 a barrel in just the past couple months, given the fact that there has been a war going on in the Middle East that has stalled out most imports and exports of oil through the Strait of Hormuz. Under surveillance this morning, someone's going to have to put this all together. Kevin Warsh stepping up to the plate.
Kevin Warsh knows what he's doing. He wants any changes. Basically, he needs to have the other 11 members on the FOMC, the voting members, on board. Too high inflation, strong labor market. That argues, of course, for the Fed needs to move towards a more hawkish stance.
Warsh will do is say there's tremendous uncertainty. It would actually be good for the Fed to have that flexibility here.
Here's the latest. Investors looking for new messaging from Fed Chair Kevin Warsh today. Markets expecting policymakers to hold rates steady as inflation picks up. Holly Liss of BTG Pactual writing, there is always room for a surprise, and more so given the new Fed chair and rapid decline in crude. Holly joins us now for more. Holly, good to see you. Want to start with a question of what the bigger risk to markets is. A potential dovish tone from Kevin Warsh or a potential hawkish tone from Kevin Warsh?
Well, at BTG, we feel that the risk is more towards the hawkish side. Nobody's really looking for any change to the overnight target rate. There is a lot of speculation that they're going to tweak the statement, that the dot plot will modestly change, and that the economic projections will also be tweaked a bit. The risk is that they come out more hawkish if they eliminate that additional statement where they bias towards easing. So if they take that out, that is more on the hawkish side. However, if you start seeing Chairman Warsh eliminate his dot or even the dot plot entirely, that would clearly be viewed as more hawkish. So I think that's where the risk is. Now, let me take the other side of the coin. Of course, with the crude oil prices coming down recently, that has to fit into the scenarios they're going to be talking about, as well as inflation, and that could trigger more of a dovish statement. So it does wait and see. We'll have to see how it goes from there, but I think right now people are leaning more towards the hawkish side.
Holly, you said if they didn't put out a dot plot or if he withdrew his particular dot, that would be viewed by the markets as hawkish, potentially leading to tighter financial conditions. Can you explain how less communication is viewed as potentially hawkish at a time where there is a suspicion that Fed Chair Kevin Warsh is going to automatically lean to the dovish, given some of his commentary leading up to his confirmation?
Well, I think there are still some who recall when he was here in the chair, not in the chair position, but with the Federal Reserve in 2006 to 11, he was leaning more towards the hawkish side. So there are still some remnants of that people are looking at. Plus, the Fed has become so transparent with the dot plot, with the SEP, with all of the conversations and meetings that they give, that the transparency is viewed as more open and we will know what they are doing. If they start curtailing that, especially if Chair Warsh wants to pull back on that communication, they may be thinking something else is going on and that he is not leaning towards the easing side, and therefore it could be hawkish. Now, that said, with crude oil prices dropping, clearly there could be room for some flexibility towards the easing side.
Yeah, Holly, that's what I wanted to pick up on. This drop in crude we've seen, how much really is this a gift to Kevin Warsh as he meets members of the press and starts talking about the outlook for inflation?
I think many of us will take gifts where we can. So it certainly gives them some breathing room, and not just Warsh, but really the entire committee, those that have been a little bit more concerned about inflation. Now, just because crude is down and BTG's technical models, our model says that crude could continue to fall. We have an outlook for potential to $72 to $69 a barrel. So that would be another 7 to 10% from where they settled yesterday. So that does give them some breathing room. It is a gift for him. We will need to see that filter through into other prices, inflation expectations, and the inflation numbers. Now, if we're going to speak about inflation numbers, he has a favored number, the trimmed mean inflation number, which is lower than the other numbers and statistics that the market tends to look at, CPI, PPI, PCE. So he could clearly be leaning towards that number and the crude coming down and being a little bit less inflationary and filtering through to the easing side.
Is there any chance they don't remove the easing bias?
So as we talked about at the start of this, there's always room for a surprise. While everybody, I shouldn't say everybody, there's always risk. While most people are looking for the statement to be modestly changed, there's always the chance that it could be drastically different. This is his first meeting. He may want to establish his credentials and his footprint on the meeting and on the committee. And let's not forget, you also have former Fed Chair Powell in the meeting as a governor. It has been a long time since that happened. Not that it can't happen, but it has. And so Chair Warsh may want to establish his own sort of outlook and regime change and things like that, given that a former Fed chair is in there also as a voting member.
Holly Liss of BTG Pactual, thank you so much for being with us this morning. Can you imagine the lunchroom at the Federal Reserve, the FOMC, given the connection or lack thereof between Kevin Warsh and Jerome Powell? Will they sit next to each other? Will they sit far away from each other? Will Jerome Powell be wearing a hat and sunglasses to keep a low profile?
Yeah, he said he's going to keep a low profile. Then he went out, made a major speech, and didn't keep a low profile. I think a lot of people are wondering actually when he is going to leave the board. I guess maybe potentially when this Lisa Cook issue is wrapped up with the Supreme Court. But you have to think it's a bit of an awkward dynamic for Kevin Warsh to come in, given this is his second round at the Fed. Last time he was a hawk, and based off his interviews and his hearing in Congress when he was auditioning to become the Fed chair, he obviously had a change of heart.
There is a lot of institutional support for Kevin Warsh. He is a known entity. He has been in the field for a while. He was respected. He was endorsed by a lot of people who have been both in the Fed and outside of the Fed. Question a lot of people have is typically whenever there is a new chair, there are accidents that happen. There are communication errors, whether it's we're not here to close the spreads over at the ECB, or whether it's just potentially signaling a little bit of the wrong direction. Is that the potential risk of just sort of a communication error amid this change to potentially reshape the way that the FOMC communicates?
And does the market, but specifically the bond market, actually push back and test him? You know, does he have a moment where I'm not here to put a dot on the plot, potentially? And then I think you and Jonathan have talked about this a lot. What happens then if you outsource your views to other members of the committee? How hard is it going to really be for him to go around and say, sorry, you can't give those speeches?
Well, will there be an answer and question period of time after the press conference? Stay tuned. Coming up, we're not going to answer that question, but we will talk about what to expect. Sarah Malek of Nuveen, Dom Rizzo of T. Rowe Price with tech stocks soaring, Jonathan Pingle of UBS, and Blake Gwynn of RBC Capital Markets on a day of a bit more optimism than yesterday. Look at that, the sun coming out. This is Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market, you can get that from a bank, you can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Warsh will say, there's tremendous uncertainty.
I expect his tone will be a little bit more dovish.
Too high inflation, strong labor market, that argues, of course, for the Fed needs to move towards a more hawkish stance.
The Fed's primary job is controlling inflation.
It's a long shot to call for a rate cut this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance. Stocks rising ahead of Chair Kevin Warsh's first rate decision at the top of the central bank. All eyes on how much he seeks to reshape the institution. Traders also focusing on the U.S. consumer retail sales coming out in about 30 minutes' time. And SpaceX just keeps on rallying, boosting its valuation beyond Amazon, maybe to the stars. The question is, how does Chair Warsh reconcile that market enthusiasm with labor market concerns, given some potential wobbles that we've seen under the hood with the consumer?
Well, potentially under the hood with the consumer. How many times have people come on this program and said, oh, the consumer's relying right now on the bigger than expected tax refunds? We heard that in December on Christmas, people saying they're spending what they prepared to get. Then it was higher electricity bills in January. And then, of course, the past few months, it's been higher oil prices, higher gasoline prices. But today, you look across the continental United States, $4 a gallon. When it comes to energy, prices are moving in the right direction at a time for him to come out and start his Kevin Warsh era.
That said, this is why retail sales will be interesting, and we do get that at 8:30 a.m. Eastern time in just about 29 minutes. A lot of people have been looking at credit card data. Citigroup put this out yesterday, saying that the card data increased in the month of May, led not necessarily even by gasoline purchases or related things, but automotive retail, yes, so that might be a little more related, and home furnishing. They talk about how overall they expect a 0.9% month-over-month increase, which is beyond the 0.3% 4.6 expected by the median. You put this out and you start wondering how broad-based is the inflation, given what we're seeing in markets, given what we're seeing with the employment market, and given how we're measuring things. Again, another key question for Kevin Warsh.
It's a good question to note, too, how we're measuring things, because surveys and polls, you continuously see a very frustrated consumer, especially on the lower end of the income spectrum. We heard from David Tinsley just 2 days ago, and what did he say in his report? Sunny days, consumer spending remained remarkably resilient in May, strongest growth in nearly 4 years. So consumers might be frustrated, and they are saying this in surveys and polls, and they are a little bit cranky with higher prices, but they're still going out and they're still spending.
They're not cranky if they bought into the SpaceX IPO, or potentially if they're trading some of the derivatives that have come to the fore, options starting to trade yesterday. We're going to parse through all of that right now. A pretty muted market. You are seeing a little bit of a lift in equities led by the tech trade, which led the way down yesterday, essentially flat on the S&P. Eurodollar essentially staying around that 116 mark. Yields had started the session a little lower, now marginally creeping higher, 4.44% on the 10-year crude, essentially staying in that $76 range, although inflecting a little higher with the MOU in question, given some of the pushback that we heard from the president this morning. Again, will it last? Will this be something sustainable, or has the market just completely moved on because oil has gotten through and ultimately they are not going to get thrown around by headlines?
Well, Mike Wilson said the oil has completely moved forward, and this is in the rearview mirror. The issue, of course, is going to be that we could see fits and starts when it comes to dealing with Iran. We already saw that during the most problematic and height of the kinetic war with Iran. Right now, what you can potentially see, more oil getting out, but the president said himself he doesn't like what he's seeing in terms of the regime. He will start strikes again. And if you read the Memorandum of Understanding, the draft text we have, it talks about nuclear discussions in the future. But the other two red lines the President of the United States, Trump, has had for years is money to proxies and their ballistic missile program. And this MOU doesn't address either.
Well, coming up, we'll talk about how this bleeds through the market. Sarah Malek of Nuveen with stocks navigating that wave of volatility, particularly when it comes to semiconductors. Dom Rizzo of T. Rowe Price as SpaceX overtakes Amazon as the world's 5th largest company. And Jonathan Pingle of UBS looking ahead to Fed Chair Kevin Warsh's first rate decision. We begin this hour with stocks steady as investors count down to the Federal Reserve. Sarah Malek of Nuveen writing, expect the market to broaden and buy the dip behavior to continue. Sarah joins us now for more. Sarah, good morning. Welcome. I want to start with how much the market is really trained to the Fed, how much the market's really trained to oil, or whether this is all about deals, all about AI, and all about some of the enthusiasm for new technology.
That's an interesting question. The answer is all of the above, but really what grabbed the headlines this week was the Middle East ceasefire, and what that cleared the way for was for the market to broaden. We see the market broadening for two reasons. First of all, inflation should moderate as oil prices decline and tariff refunds occur. And secondarily, the economy is very strong. We've seen strong manufacturing data, a continuing strong labor market, and the consumer continues to spend. We should see a decent retail sales number later today. So we prefer at this point global equities, European equities, and cyclicals over growth stocks. And we think that people will continue to buy the dip, as we saw it after yesterday. When we see these little pauses in this rally, we tend to see people stepping in, buying the dip on the market, and we think it'll be a broader rally from here going forward.
This is an interesting point and something that Mike Wilson was making earlier, that this is unleashing the broadening trade that we saw earlier this year, the equal weight, the international trade. Is that also coming with potentially a fading in the tech sector, or is it a yes and type of story?
We came into this year bullish on technology stocks, and I always say don't bet against the U.S. or technology stocks. But I think there will be some give. We've seen this huge rally in semiconductors, just even double digits in the last number of days. That's not going to continue. Some of that is going to be a source of funds for buying the rest of the market. But I don't think that means that tech is going to be completely left behind. It'll just be a broader rally going forward, driven by this continued strong economy and also by inflation that is now moderating, but it's not going to go back to what the Fed has stated was their target, which is 2%, because before the war, inflation was still running in about a 2 to 3% range.
Given the fact that you said that really it is the end of the war in the Middle East that triggered this initial broadening out that we've seen over the past couple of weeks, how much do you expect this to ultimately be the arbiter of how far it can go, how low oil prices can go, how dovish the Fed becomes?
Earnings growth tend to move the market higher. And if you remove the war from the equation, and the market has generally moved on from the war and assumed that it will end in a reasonable period of time, earnings growth for 2026 should be over 20% when all is said and done. We saw better than that for the first quarter. Earnings growth can drive this market higher without necessary multiple expansion. Multiples can actually decline a bit while earnings continue to grow, and that's why we're bullish on the market and think it has upsides from here because of that earnings growth number north of 20%.
Building on Lisa's point, if the market's no longer worried about the war in Iran, what's the greatest risk right now?
I think today's risk is going to be the Fed meeting. Warsh is going to be walking a fine line between being overly dovish and overly hawkish. He needs to make sure that what he communicates is something that the bond market believes in. He's balancing the dual risks between inflation, which is very strong, and the economy that is strong. So we forecast no rate cuts for the rest of this year. Next year, though, if the economy does weaken a bit, you may be able to squeak one rate cut by. But hikes are also on the table in 2027 because it depends on the strength of the economy. And inflation, as I said before, was not near the Fed's target before the war started. So even though we're going to finally move past the bump in inflation due to the war, we still have to deal with the chronic ingrained inflation in the economy. I'll also mention payrolls. They've been so strong recently. I'm worried about wage inflation picking up again because supply of jobs has been increasing, payrolls have been strong, and wage inflation may start to pick up because of that.
Well, that's why a lot of people are also concerned about potentially the Fed having to hike, and the market is still seeing a hike, even though they retrace some of those moves because of what we saw with the president's MOU in regards to Iran. But you're thinking potentially it's going to be a cut in 2027. Does it feel odd to be at odds with where the market's pricing?
The market, it could be overly hawkish at this point. I agree with no cuts in 2026, given the strength of the economy and the issues around inflation. 2027 is still a long way away. By that point, inflation could be moderating closer to target. It was trending in the right direction before the war started, and the economy and earnings may not be as strong in 2027 as we're seeing this year. I wouldn't take rate cuts off the table for 2027. I think it's overly hawkish to assume we're going to be walking into hikes next year.
Sarah, just going forward, would anything make you rethink the rotation trade that currently is underway?
Well, first of all, I mentioned follow earnings growth. Tech is still going to be the leader with earnings growth. I just think tech has moved a little bit too far, too fast in terms of its performance, but earnings are still there for tech stocks. Second is if we go more to a defensive environment, the geopolitical issues in the Middle East caused investors to feel a little bit more defensive under the surface. That's when tech tends to outperform. Now that that is moving out of the way and we can focus on the broad economic drivers such as manufacturing data, which has had a really nice pickup and continued spending by the high-end consumer, that should be better for a snapback in financials, in consumers, and some of these industrial companies that were hurt by the squeeze of inflation and higher tariffs.
Sarah Malik of Nuveen, thank you so much for being with us this morning. As we do await a Fed rate decision, we're also awaiting those retail sales, and that's going to be really important in about 20 minutes' time as we get a sense of just how much resilience there is in consumer spending. As we did hear from David Tinsley, there has been quite a bit. Right now, let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Vani Quinn. Vani.
Lisa, thank you. SpaceX overtaking Amazon in value to become the 5th largest stock in the world. Shares closed nearly 4% higher, pushing its market cap to $2.65 trillion. And the stock's intraday high, SpaceX topped Microsoft to briefly become the world's 4th largest stock. In sports, it was a day of superstar action at the World Cup. Kylian Mbappe scoring 2 goals to power France over Senegal. Erling Haaland also scoring twice for Norway against Iraq. And Lionel Messi stealing the show with a hat-trick for Argentina in their win over Algeria. The DOJ charging 5 people in connection with an alleged plot to use explosives and snipers to target attendees at Sunday's UFC event outside the White House. The alleged plot is just the latest example in a series of attempted attacks against President Donald Trump and other prominent individuals. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vani. Up next, the morning calls, plus Don Rizzo of T. Rowe Price on what's next for SpaceX after it overtakes Amazon in value. Just what are the revenues of these companies? How does that compare to the market capitalization? That's coming up next. This is Bloomberg Surveillance.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The options market's been setting records actually for 6 straight years. I think everybody knew SpaceX was going to be big. That first day activity, we saw 1.77 million contracts trade. We've actually seen a trend this year. About a third of the listed stocks out there kind of have this upside skew. It really does tell you what investors are thinking.
And they're thinking they want to be bullish. That was Henry Schwartz of SIBO. And when you take a look at what they're thinking this morning, at least when it comes to the tech trade, you can see the optimism bleeding into equities, up about 0.5% on the NASDAQ, taking back some of the losses, down more than 1% yesterday, led by the semiconductor stocks. A brutal day for them. This morning, more broadly, about a 0.1% gain on S&P and Russell 2000 futures, ahead of what could be a really interesting day. On one hand, you got SpaceX and the ongoing rally there. On the other hand, you have what could percolate out of the Federal Reserve, with Kevin Warsh unveiling his view as Fed chair for the first time. Time for the morning calls. First up, Bernstein raising its price target on Intel to $100, saying the company should benefit from stronger server demand. Those shares up more than 3% in pre-market trading. Next up, Wells Fargo trimming its price target on FedEx to $425, saying next week's earnings results will be more important than the guidance. The shares essentially flat. And finally, Citi hiking its price target on Micron to $1,200 from $840. The analyst increasing the company's fiscal 2026 and 2027 estimates to reflect better than expected memory prices this year. Those shares almost up 3% after being absolutely hammered yesterday. The whipsawing continues in the semi space, not so much when it comes to SpaceX. SpaceX on track for a 4th straight day of gains. The company overtaking Amazon to become the 5th most valuable in the world. Ed Ludlow of Bloomberg Tech writing, the IPO wasn't just a bet that investors would buy the stock. It was a bet that existing shareholders would sell it. Ed joins us now for more. Ed, this is such a great point because we've all been wondering, what are all the newly minted billionaires going to do with their money? And it turns out, keep it there, keep it in SpaceX. So why hasn't there been more cashing out?
Well, in the first instance, like the lockup is complicated. It's staggered. You know, there is some liquidity or some freedom in the shares in August, but a very small portion of them. And so, like, we've been focused on this idea that, you know, taking into account today's pre-market gain, the stock's up 50% from its IPO price. It's probably just better to talk in terms of market capitalization. You know, it's a $2.7 trillion company ahead of the opening trade today, and there's just scarcity because only 4% of that market cap shares are available to trade right now. The retail allocation of 20 to 30% is probably a big factor here. But the reality is, like, in an environment where options have just launched, there is price discovery. There was still a clamoring to get hold of shares outside of the IPO allocation, and it's just not trading, shall we say, on fundamentals. What it is trading on is a bit of a mystery, Lisa. I think you've got great guests throughout the morning to ask about that. But, like, the scarcity element's really important here. Read the details of the lockup is the point I'm making.
Yeah, this is a great point. The idea that maybe there's not selling pressure because a lot of the holders can't sell at this point. Ed, from your vantage point, do most people in the tech space seem to think that the valuation's gotten a bit excessive?
Yes. I mean, I put a post out on X yesterday about its price to sales being above 150 compared to Amazon, right, which is low single digits. And people said, well, why are you bothering with that? Why don't you do price to earnings? And I was like, well, what's the point? What earnings? You know, there isn't a metric in these early days that gives you a fair valuation. The thing I write about in the Tech in Depth column is, like,
even when the lockup period is done, all those venture firms that have realized tens of billions of dollars of gains on their initial investment will redistribute the shares to LPs. They don't give them cash. They just say, I sign ownership of these shares to you. And the question at that point is whether those endowment funds and pension funds, like the venture capitalists, believe that actually 3 trillion is quite modest. And they see a time horizon that's near term to it being a $5 trillion company. You know, there are lots of bullish people out there that really believe that's the case. And you will have seen that Elon Musk tweeted or posted on X this week that he sees some pretty out of this world financials from this company by 2030. And it's whether you believe that or not, and you hold the stock as a result.
Ed Ludlow of Bloomberg, thank you so much, as always. We look forward to hearing more on your show later this morning. Don Rizzo of T. Rowe Price writing, at this valuation, it all comes down to long-term AI positioning. Owning and harnessing the model is key, and now they have strength in both. Dom joins us now for more. Dom, what do you make of the question that we were just talking about with Ed, which is, do you feel like this market has just gone way too far, in part on technicals that favor it for now?
Well, first off, thanks for having me, guys. It's great to be here. And, you know, Ed always does such great work. So, look, if I take a step back on SpaceX, you really have to think about it as 3 separate businesses, right? There's launch, where they have a near monopoly in sending stuff up into space. There's connectivity, where I think they have a really good positioning in terms of offering Wi-Fi, not just in the US, but worldwide. And then there's AI. Right. And, you know, the debate before is what's happening with the fundamentals at SpaceX. And I would argue that all of the stocks trading is basing on pricing in the terminal value of the AI business. And what is that going to look like in 2030? And, you know, what I referenced before is really around the Cursor merger. Right. So Cursor has a wonderful harness, one of the best in the world at coding. And now with the merger with SpaceX, they have a leading edge model in the form of Grok. And I think what we've learned time and time again is that in AI software and AI native software, owning the model plus the harness results in differentiated, wonderful user experiences. The other thing that you have to think about on the AI business is they've been renting these GPUs, $50 billion a gigawatt. So look, the stock is up 50%. Of course, in those situations, we always consider risk management. We consider portfolio construction. You have to think about position sizing. But I think what's happening with the stock is looking into 2030 fundamentals and what is that going to look like for AI specifically.
Well, 2030 fundamentals, Elon Musk says that he's going to have $1 trillion in revenue. Morgan Stanley puts it at more like $470 billion. Where do you see revenue lining up in 2030?
Yeah. Well, obviously, I'm not going to get into our internal estimates, but if we think about how you get to hundreds of billions of dollars of revenue, it comes to what can they monetize per gigawatt, right? And so what was so interesting about the Google and the Anthropic rental deals is that they were monetizing at roughly $50 billion a gigawatt, which is 2 to 3 times the average rate in the spot market today. So how much of that premium was just the fact that we're incredibly short compute? How much of it that it was Airbnb-like rental deals and that it's short-term, not long-term? And how much of it is that SpaceX is truly differentiated at standing up 100,000 plus GPU coherent clusters? I mean, I think that's the question to be seen. So how do you get to hundreds of billions? You maintain, or that number comes down a bit, 50 billion a gigawatt, maybe coming down a bit over time. And then you get to a path to 10 plus gigawatts, right? That's how you get to those type of numbers. But it's a far way out. We have extraordinary competition in the form of OpenAI and Anthropic. And I think Ed did a really great job in his piece of laying out all the different technical factors on the stock.
Well, some analysts will say that Cursor doesn't have the scale of OpenAI and Anthropic. How quickly can it get to that level?
Yeah, first off, you know that we've been investors in both OpenAI and Anthropic. And the thing that I've been so stunned by is just how quickly these businesses can grow once they catch virality inside the enterprise. And so I'll give you an example. When I did the Anthropic round in the summer in the global technology strategy, Anthropic was just doing $5 billion of run rate revenue. They're now doing 47 billion plus. I mean, I've never seen numbers like this. And why is that? Is because AI is this incredible productivity enhancing tool. You know, OpenAI and Anthropic, widely expected, you know, if you look at what people are thinking, combined a couple $100 billion of run rate revenue by the end of the year. Combined, their valuations are in the $2 trillion range. You know, I've never seen growth like this in AI. And the question is, can Cursor plus X as model plus harness really carve out a place in the enterprise? And let's see, you know, we don't know yet.
Tom, what would you see that would make you bearish?
Well, a couple different things I think about. So number one, I think about N-1 models a lot, right? Open source models outside of China, or even the open source models from NVIDIA. And do open source models come in and lower the price of a leading edge token? I think what I see today in what the tokens are going to kind of distribute like within the enterprise and personally is there's going to be a bifurcation, almost like the smartphone market. You know, the vast majority of smartphones today are, you know, Android phones, sub $400 in value. But all the value in smartphones is in the $800 plus smartphone market. I think that's almost what it's going to look like in tokens. All the value of tokens are going to accrue to the leading edge. And who's at the leading edge for models today? Only 4 companies: OpenAI, Anthropic, Google, and X. That's it. So I think the value will accrue to those leading edge models, and it's imperative to have a model plus a harness in order to have a differentiated product.
Dom Rizzo of T. Rowe Price, thanks for your insights. As we look to a 4th day of gains on SpaceX after their IPO, we're also looking for some retail sales that should come out. A read on the U.S. consumer in just over 5 minutes time. A question here about how much this starts to percolate out into consumer price inflation, but also whether it's really 2 different stories that aren't really converging in any way.
Yeah, and I'm really more looking forward to seeing the retail prices and the data after this MOU is signed, and potentially in the middle of the summer, if oil prices continue to decline, are consumers then taking that money they were spending on much higher gasoline prices and putting it elsewhere?
Yeah, are you going to start to see people traveling more, although they have been traveling? I mean, that's a question.
They've been resilient.
Where have they pulled back, right? I mean, ultimately...
They've just been choiceful.
They've pulled back on their loose purchases. It seems like that's...
Luce.
That's like what ultimately we can see with Ferrari looking to some of their most reliant customers potentially. That is clearly who we're talking about with these retail sales.
That's a different layer of inflation. You know, Knicks tickets, Luce buying. That's just a different...
Birkin bags. Yeah, exactly. This is not exactly out of my price range. Coming up, Jonathan Pingle of UBS on why the Fed could stay on hold until 2028, despite some calls and, frankly, market pricing calling for about an 80% chance of a rate hike by the end of this year. This is Bloomberg Surveillance. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Seeing a little bit of a lift ahead of the Fed rate decision, ahead of data that we're about to get about 20 seconds away. Retail sales in the United States, a lift right now across the equity space, although really seeing it with the NASDAQ in particular up 0.5%. When you take a look at bonds, you did see a bid into bonds earlier, kind of wobbling at the front end when you see just up about a basis point, 4.07%. And then in the crude space, you could see a bit of a fading in the expectations around the MOU, given some of the rhetoric that we've heard. Right now, we do have retail sales crossing. Michael McKee has the numbers. Mike, what do you see?
Well, shop we must. That seems to be the motto for Americans. Also, throw in inflation, and you get a retail sales headline number up 0.9% after 0.5 last month, and the expectation was for only 0.6. Now, take out autos, and it's 0.8. Take out autos and gas, and it's 0.5, which is still better than forecast and is still a relatively strong number. The retail sales control group, particularly strong this time. That's what goes into GDP for retail sales, up 0.7% after a 0.5% gain in the month of April. The forecast was for a 0.4 gain. So it is altogether a relatively good number in terms of Americans keeping up with the economy at this point. Now, the question is, and we can't immediately do this, but the question is, how much of that do you deflate for inflation? We know it's hit gasoline prices. What we don't know at this point is how much of it's made into other prices at this point.
And that's going to be a key question for the Fed later this afternoon. We'll get to that in just 1 second. When you take a look at the market reaction at the front end of the yield curve, it had been selling off. You had seen yields rising. They rise a little bit further in response to this, given the fact that this does just sort of lean into the idea that there is resilience, that consumers are strong. When you take a look at equities, at least in the space, in the tech space, you are seeing them hold on to gains, also just barely hanging on to gains on S&P futures up about 0.1%. Mike, how does the Fed deal with a resilient consumer at the same time that, yes, they're getting a reprieve from lower energy prices, but that isn't the whole story for inflation?
Well, it's definitely going to be one of the top questions that Kevin Warsh gets today in his first, and we hope, first of many news conferences. But Warsh has got kind of a tough job, and so does the Fed at this point, because they do have a stronger economy than they anticipated. At the same time, they've got more inflation than they anticipated. No change in rates expected today, other than we'll probably see them drop the easing bias that they had. Then the question becomes, what's in the dot plot? Do they take out all the cuts? There was one cut forecast for 2026. Do they take those out? And how do they adjust the forecast now that we're seeing stronger than expected growth? And of course, for Warsh himself, we don't know if he's going to put in a dot at all. He said he doesn't like them, and he said he doesn't want to. And as I mentioned, is this going to be the first or the last of his news conferences? He doesn't want to do as many as have been done. Communications under review, that's probably something he'll talk about today, because it's one of the things he can do relatively quickly is at least bring that up as an issue for the board to decide. And of course, everybody's going to want to know, if you have a strong economy like this and inflation up, how do you deal with the Trump elephant in the room? The question about whether you were just appointed to cut interest rates and now you really can't.
Michael McKee, we'll be looking out for you throughout the day and, of course, in that press conference. Looking forward to your question as well. Jonathan Pingle of UBS joins now, and I want to get your immediate reaction, Jonathan, to what we just saw. We got retail sales coming in stronger than expected. The control group rising to the highest pace going back to the end of March. At what point is this a signal that inflation maybe is broader based because there is this really strong U.S. consumer?
So when I actually look at these numbers, I don't look at this pace of consumer spending as being all that inflationary. And I mean, I'd like just to put some numbers on it, you know, when we got the relatively strong April data, after services were added, and this is to Mike McKee's point, it was deflated, annualized, it was only 1.3% real spending growth. We actually are tracking and thought we'd get 2.1 in the second quarter, so we were hoping we would get some decent numbers in May and June, and we wouldn't have that sort of more sluggish pace. But we also have to remember, this is like peak fiscal stimulus, right? All those refund checks have gone out. We've had the withholding adjustments. I mean, you know, yes, this is great news. Could be a sign that we are seeing a real pickup in consumer spending. But at the same time, we do have this tension where, you know, there's been a lot of cash sent back to households. And if this is it, and we're only going to run sort of a little over 2% annualized, that's not really super strong for the U.S. So I think for this one retail sales report, I think it's actually good news that it wasn't slower. But, you know, we were sort of expecting a little above consensus control, and we got that. But I don't think this is yet a sign the economy is really overheating. I think combined with the MOU, whatever that is, I think that's actually probably good news for the FOMC today.
You expect that there are no cuts appropriate until 2028, and that probably this is a Fed that is on hold until then. What would you hear potentially today that would surprise you? Are you thinking that maybe there is a bias in the markets that this is going to be a dovish Fed Chair Kevin Warsh, or that this, frankly, is going to be one that harkens back to his 2010 days and is a bit more hawkish?
So I'm prepared to be surprised. Okay, at 2 o'clock, I wouldn't underestimate the hawkish shift from the committee. You know, getting rid of rate cuts. You know, we'll see some hikes appropriate. People thinking pipes are appropriate this year. You know, I do think they're going to probably nudge down growth a little up to the unemployment rate in the out years, but certainly more restrictive policy is going to be the message from the statement and the SEP. Pretty sure. But for Kevin Warsh, you know, there's been a lot of iterations of him in his career. I mean, I was on the board staff when he was a governor. Remember him quite vividly. I mean, I don't want to oversell that, but you know, he's gone from a period of time being hawkish, more dovish lately. I don't actually know we know who we're going to get, and then combine that with he wants to talk less, communicate less, and provide less guidance. We could be setting up for a really disappointing lack of clarity after markets getting used to 20 years of Powell, Yellen, Bernanke.
How does the market react to that level of potential not having a lot of clarity on who Kevin Warsh is?
Oh, I mean, I think it does raise the risk of, you know, forward pricing not aligning as closely with where the committee is than we're used to. And also, you know, if he's going to talk less, everyone else is going to talk just as much as they were before, you know, certainly the regional Fed president. So he does risk, you know, ceding the communications to others. But I also think that, you know, if he's not going to be, you know, as transparent and clear as his predecessors, there is just going to be more room for confusion, right? Whether it's, you know, people interpreting a comment as a green light to price in more hikes or price out the hikes. We'll really have to see, but it sets us up for something really unusual because we also haven't really heard him in the public eye as much as his predecessors when they assumed the chairmanship.
Michael McKee has some more details from the retail sales report. I want to bring you back in, Mike. It is notable because there was this huge pop in gasoline sales, right? The sort of sales at the pump were up some 3.6%. What are you seeing more broadly?
Well, I think the gasoline thing is a sort of a kind of number, and nobody's going to be surprised by that. But what is interesting is that there are a couple of areas that did not see any gains, including food. And we know food prices were up, so inflation should have added to that. But food and grocery stores both flat on the month. The clothing and accessory stores up 0.3, which is a reverse of what we saw the prior month. And it doesn't, this is May, so it doesn't include Anne-Marie and her 6 million best friends buying Knicks gear the last 2 weeks. We'll see that next time. But non-store retailers were a little stronger, 1.5% up. Food and drinking places, the only kind of discretionary spending, services spending that's in this report, were down by 0.1% after rising 0.9 last month. So people stayed home and maybe bought stuff on the internet. They didn't buy stuff for their houses, but they may have bought a little more gasoline than they anticipated having to pay for.
Michael McKee, thank you so much for that. And Anne-Marie, I believe, wants to clarify that she's the OG. And actually,
I've had this mug. This is not new.
You're not buying gear because you've already had all of the gear.
I might buy something special with the finals.
You going to the parade?
Championship. Haven't decided yet, but I was at Game 5.
Just
want to rub it in.
The other way, people are looking at the World Cup type of bump and whether that ultimately is also going to boost retail sales. I'm trying to bring it back to the retail sales. Jonathan,
well, in June, in 1994, you did get a little bit of bump in June, July.
Yeah, so there you go, and potentially even more so, although I don't know if anyone has any money left over to spend, given how expensive some of these tickets are. From your perspective, are you expecting any commentary either on the balance sheet, any commentary on Fed communication when it comes to constricting other governors and how much they're going to be speaking?
I don't know how much he's going to be able to restrict the other governors. I mean, given their independent oversight boards, and many of those boards, they would like their regional Fed presidents out. You know, it draws attention to their cities, their local economies. They have sort of every incentive to get the regional Fed presidents out and on Bloomberg. You know, when I think about what he's going to do, I think one of the initial tests really will be the statement itself, right? Like, the statement has had a certain amount of repetitiveness for a while, you know, some phrases that really are just so pat they have no meaning. That if there's a significant overhaul of the statement, I would say that not only does that signal he is going to try to make changes, but he managed to get the consensus to do it at the meeting, which shows a certain amount of ability to drive consensus. Other than that, many of these changes I think are going to take longer. So I would expect him to talk about, you know, subcommittees going out and looking at their communication strategy, the balance sheet, et cetera. But at the very first meeting, I don't know how much fundamental change there's going to be.
Yeah, a lot of people saying he's probably not going to rock the boat, although we'll see. If he drops the dot, wow, all bets are off. Jonathan Pingle of UBS, thank you so much. If you are just joining the program, we did get retail sales in the United States for the month of May. Came in significantly above expectations, 0.9% for the headline versus the 0.6% expected. When you strip out autos and gas, you could see 0.5% gain versus a 0.3% that was expected by economists. And that retail sales control group, 0.7% gain. And you can see that that is the most going back to the end of March. So that resilience still under the hood. And that, I think, is the reason why some people are saying, is it just the gasoline story, or is there just a lot of cash, whether it's peak stimulus checks coming back in, or whether it's just that people are feeling pretty good from their stock purchases?
It's clearly also outside of what's going on in energy, because outside of those receipts at gas stations, which accounted for 3.4%, you're up 0.7%. So sales are happening and there is a lot of resilience. But you think about what Jonathan just said there. It's in terms of individuals and households are having more money to spend right now. But is that it for the rest of the year? That fiscal impulse, is this all we're going to be living on for the rest of the year? And that's what it looks like.
Yeah, well, right now people are looking to potential wage growth that we could get to offset what some people have been taking from their savings. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Recapping the data we just got then, retail sales coming in higher than expected in the month of May, jumping 0.9%. It's a sign U.S. consumers are remaining resilient despite the highest average gas prices in almost 4 years. In Georgia, Republican Congressman Mike Collins defeating Derek Dooley in a runoff election for the Senate nomination. The Trump-backed candidate will now face incumbent Democrat Jon Ossoff in November. It's one of a handful of races that will determine Senate control. AI taking center stage today at the G7 summit with top executives meeting to discuss policy and potential risks. OpenAI CEO Sam Altman and Anthropic CEO Dario Amodei among those joining President Donald Trump as he wraps up talks with world leaders. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, setting you up for the day ahead. Plus, Blake Gwynn of RBC Capital Markets as the bond market enters uncertain territory. From New York, this is Bloomberg Surveillance. Good morning.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
The question, which you may or may not answer today, is what are you going to do going forward? Are you going to be active using the balance sheet and helping funding markets stabilize? Right now, they don't need to because bond volatility is totally under control. Funding markets are totally good. We kind of need the markets to pressure them to provide more liquidity. And the reason why we need more liquidity is because the economy is booming.
That was Mike Wilson of Morgan Stanley looking for some sort of potential pullback that could prompt a Federal Reserve to inject more liquidity by expanding the balance sheet in the T-bill market on the margins and lead to an even higher year-end target. Right now, we're looking at a market that is taking everything in stride, up about 0.1% on the S&P ahead of the open. You can see 10-year yields now back down 4.43%, hovering just sort of oscillating around this level as people anticipate what Fed Chair Kevin Warsh might seem like in crude prices just above where they closed yesterday as people take a look at that MOU and what might ultimately happen or not. This idea of can we say the all clear really has been sounded for this war and that oil prices truly are going to be on a straight path lower.
The signal from the presidency wants this to end, but he just said in the last hour or two that if he doesn't like what he's seeing out of Iran, he's willing to restart strikes. Now, obviously, that's going to be rhetorical deterrence that the president is setting, but if you look at this draft MOU, certainly they want not just the Strait of Hormuz to be open, but willing to give Iran waivers so that Iranian crude could be hitting the market.
Yeah, people are going to be looking for all of these details to really understand what's in that. Less than an hour from the cash open. Here's where the action is. It is in the individual names. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with SpaceX on track for a fourth straight session of gains. Shares up 2.5% in the pre-market. The stock has surged over 50% since it IPO'd less than a week ago, now pushing SpaceX past Amazon when it comes to market value. And the gains have been so dramatic that Elon Musk is apparently nearly a third of the way to a $2 trillion. That's according to our Bloomberg Billionaires Index. And as I said earlier, maybe we need to rethink the name. Turning to Lionsgate, those shares are falling 6.3% in the pre-market after Netflix came out and disputed a report that it was interested in buying the studio. That speculation had caused the stock to surge, though it's now giving back some of those gains. But the idea was that Lionsgate could be the next target as we continue to see this wave of consolidation in the media industry. And we end on Lazy Boy. Those shares are soaring, up 17% in the pre-market after it blew past expectations for last quarter and delivered an upbeat outlook. And retail sales confirming that momentum, with furniture sales up 1% in May compared to the prior month. Lisa.
Everyone just wants to relax. Thank you so much. Great work, Kyra, as always, for that counting down to the opening bell. Here's the trading diary for the day and week ahead. 10:30 a.m., President Donald Trump delivering a press conference from the G7. 2 p.m. Eastern, a Fed rate decision, followed by the big one, hearing from Fed Chair Kevin Warsh himself, the news conference that could set the tone for his tenure. And Thursday, a Bank of England rate decision, plus another round of jobless claims. Friday, U.S. markets are closed for the Juneteenth holiday, and the U.S. and Iran are expected to sign an interim peace deal. Let's turn back to the Federal Reserve. Investors widely expect the central bank to hold rates steady today, and many are not expecting a policy change for at least a full year. Blake Gwynn of RBC Capital Markets writing, a flat Fed path is a very unnatural equilibrium for market pricing. Blake joins us for now. Blake, great to see you. Thank you for being here. You're not wrong, and right now what we're seeing in markets is real unease, at least if you take a look at the 2-10s yield curve, suddenly the flattest in more than a year as people try to parse out what does this mean for a Fed to be on hold. We're used to worrying about a hike or a cut. Why is that so uneasy?
The market wants a bias, right? I mean, if you look historically at the spread between Fed funds and 2-year rates, it's historically around 40 basis points. So, we've gone through a few times where the market has held on to a flat pricing, but it's only when rates are at the zero lower bound and there's really nowhere else to go. So you saw how quickly we kind of moved from a cutting bias to this kind of hiking bias. And you saw periods over the last few years where even though the Fed wasn't actively cutting, the market can just hold on to this downward slope and this expectation for cuts. And even when the Fed's not cutting, they just kind of roll it forward. So I think that's what markets are going to do now with hikes, that even if the Fed is on hold, even if they're not hiking, we're just going to keep rolling forward those expectations for hikes.
You know, the real story, though, might not be necessarily in the Fed policy rate. And this is what Mike Wilson was getting at, the idea that the Fed had been shrinking its balance sheet, sort of quantitative tightening, and then it stopped doing that earlier this year, and it started to expand it out just a little bit. The idea of injecting liquidity into the market that Mike Wilson said has been instrumental in the rally, that stopped. Do you think that that's going to restart under a Kevin Warsh that in the past has said he wants to shrink the balance sheet?
I think it's going to be difficult. The same way that I feel about his effect on rate policy is that, he's not one man. This is a committee, and I think those decisions are still going to be made by a committee. And I think that committee has made very clear that they're uncomfortable with reserves getting too low and some of the effects that come with that. And I say it's clear because last year they started buying bills again in December. So we know that they really do not like to see pressure in those funding markets. So he's going to have to convince the rest of those committee members that this is actually the right path. And I think you've seen Mirren, now he's no longer there, and Lori Logan have kind of presented these ideas of like, here's some things that we could do to get the balance sheet smaller. I don't think anybody has endorsed those, but they're just saying, here's a menu of options. And I think even, Logan, when you kind of read through her speech, there's a lot of downsides to a lot of these things. So it's really a cost-benefit analysis. I think it's something that's going to take a long time. Ultimately, I don't think they're going to get major changes on the balance sheet. I think it's going to be some small changes here and there, but no big wholesale changes in the way they operate the balance sheet.
Is everyone hyping this up too much? As you say, everything is going to take a very long time. Is this going to be almost maybe a pretty boring meeting?
Well, I mean, it can't be boring with War speaking because we just don't know. And I think, we don't have a benchmark in the way that, when Powell is out there every month, we can kind of look at the changes from the last time he spoke and, kind of sense where he's going with things. Warsh is a bit of a wild card because we don't have that prior experience. Now, I would point this out about his prior comments. One, he was campaigning for the job, and we know what it takes to get the job. He had to sound dovish. So we don't know, now that he has the job locked up, we don't know how much of that goes away. The second thing is he was talking for himself. Now he has to represent the committee if he's doing the job. And the third thing I would say is he does, I think, run the risk. If he comes out very dovish and the rest of the committee is moving hawkish, he almost marks himself as irrelevant right from the beginning. I don't think he wants to undermine his own credibility by saying, I am way out of consensus with the rest of this group.
So there's a risk that he just is a chair in name only.
I mean, I would hesitate to go that far, but yeah, I mean, he's one man on a committee at the end of the day. Now, they have some power to set the agenda, to kind of, set and frame how things are being discussed, how the research is being done. But at the end of the day, these decisions are going to be a vote with the rest of the committee, and we know where they're going. They're going to move more hawkish in this meeting.
Will he take questions?
We've been debating on how many questions he actually takes, what time the press conference actually ends.
So what's the
I think
over-under?
3 p.m. is probably the over-under here. I mean,
really?
I would not be surprised, given everything that he said about communication. One thing that he can unilaterally change is just take less questions. Or the questions he takes, he gives very brief, very succinct, short answers. So I wouldn't be surprised to see a lot shorter press conferences than Powell.
Blake Wynn, thank you so much for being with us. Blake Wynn of RBC Capital Markets. And thank you for making it exciting, because it is going to be exciting later today. And coming up at 1:30 on Bloomberg Surveillance, the Fed decides. Bob Michael of JP Morgan, Subhadra Rajappa of SocGen, Rich Clarida of PIMCO, and Kate Moore of Citi, because all of them, Anne-Marie, think that it's going to be really interesting. And that, I think, I agree with them.
It's definitely going to be interesting because it's the first meeting of Kevin Warsh. It's the tone he's going to set. But if things are going to take a really long time for where he wants to get to, from point A to point B, then maybe everyone is overhyping how scandalous he may be. Does it dot? Does he not dot? I love Torsten Slok. The number of words in the FOMC statement likely going down. So the statement comes down. I just want to do the word count.
Yeah, a lot of people are looking to Polymarkets for how long is the press conference going to be, whether there is a dot or not to dot, and how many words will be in this statement. A real question also just about what kind of tone he's going to set in terms of will he be establishment or not. After the press conference tomorrow morning, we will get all sorts of insight from Ed Yardeni of Yardeni Research, Scott Pronert of Citigroup, former Kansas City Fed President Esther George, and Charles Schwab CEO Rick Wooster, as we parse through exactly a new regime on the Federal Reserve, as well as a new regime in markets amid a tech boom and revolution. All of that coming up. From New York, thank you so much for joining us here on Bloomberg Surveillance. Good morning.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Happy Fed Day. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, it's Kevin Warsh's big day. The new Fed chair takes center stage with markets divided on what's next for rates.
Meanwhile, at the G7, President Trump warns the U.S. could go right back to dropping bombs if he doesn't like the Iran deal.
And the world's richest person gets even richer. Elon Musk's fortune continues to grow as SpaceX reaches new heights.
I was looking at Bill Ackman tweeting yesterday or posting on X. The value of SpaceX is that it's so valuable. That value begets value, and that's why SpaceX is valuable.
Yeah, right. And I mean, Elon Musk is pretty much all of that value.
Yes.
Not only is he personally worth $1.3 trillion, but this company is only worth $2.7 trillion because of him.
It's so true. It's the bet that you are making, the vision of Elon Musk, and we gain for another day. Look, this thing has been putting in double digits in its first couple days of trading, so 3%-ish isn't huge, but still this adds to a 3-day streak. Gains that have made it the 5th most valuable public company on the world. It is on the verge of overtaking Microsoft as the 4th biggest company. It overtook Amazon yesterday.
He's not only a trillionaire, but the delta between his wealth and the next richest person in the world is $1 trillion. It's insane. But we're focused not only on that. There are other areas of the tech sector rallying as SpaceX helps to lift the AI trade. Just 0.5% on NVIDIA, but it's a $5 trillion company. Micron up another 3 1/3, and Intel gaining 3.5, Danny.
Still, the big story of today is the Fed meeting, and in the background of all of that, we got consumer data, and the consumer is still spending big. May retail sales top estimates ahead of that decision, which will be the first for Kevin Warsh as chair. Bloomberg International Economics and Policy correspondent Michael McKee joins us from Washington. Mike, let's start with the data. How much of this data, surprising to the upside, was just about gasoline prices?
Well, a significant amount. Gasoline prices were up 3.8% during the month, not quite as much as the prior month, but it is a big rise. and that's where a lot of money went. We saw some flat categories, but for the most part, there was relatively strong spending across the board. Retail sales, as you mentioned, up more than twice what they were in April. You take out the autos and gas, take out gasoline in particular, and you've got a number that's still very strong. And the retail control group that goes into GDP, also very strong, up 0.7 more than the prior month. So what that leaves us with is a question about what happens if this deal with Iran comes through and gasoline prices fall. You can see how much gasoline has risen in recent months, just a hockey stick up. If that starts to come down, it should have a disinflationary impact, which should mean that retail sales take a little bit of a hit. But the question is, going forward for Kevin Warsh, are they strong enough to survive that? Probably, when you look at today's numbers. And then where do you go from here if you're the Fed? You sit.
So I noticed yesterday we were talking, you and I, Mike, off camera, about the Fed spectrometer that we have on the Bloomberg terminal. If you type FDSP Go, you can see our rating of how dovish or hawkish each member of the Federal Reserve is. And we've put Kevin Warsh up with a -2. That's max dovish. Does that really sync with the things that he's said and done throughout his career?
I think it syncs with the impression that he wanted to leave the president with when it came time to getting him appointed, but I don't think it's what you're going to see from Kevin Warsh, the Fed chair. Remember, he was quite a hawk during his last turn on the board, so I suspect he's going to focus a lot on inflation. Now, where you have to be definitional is like, what is a hawk, what is a dove these days? If he says that inflation is not as bad as it appears because it's gasoline prices and that'll go away, that doesn't necessarily make him hugely dovish. It's really going to be a question of under what circumstances would you raise rates and how fast do you think inflation's going to come down? Is there any level at which you could tell us now you would like to be able to cut rates? And that's kind of one of the central questions we'll get this afternoon.
All right, Mike, thanks very much. Bloomberg's Michael McKee there will be with us throughout the day as we get the Fed decision and the press conference afterwards with our special The Fed Decides as well. Rob Kaplan, though, joins us. Goldman Sachs Vice Chairman, former Dallas Fed President, will be on Open Interest with Danny and myself at 9:30 a.m. And then don't miss our special coverage of the Fed decision kicking off at 1:30 p.m. this afternoon. Now, SpaceX is headed for a 4th straight day of gains after adding nearly $1 trillion, adding an extra $1 trillion in market cap since it went public on Friday. Bloomberg Tech host Ed Ludlow joins us now from San Francisco. And Ed, this is just an amazing thing to behold. I mean, the amount of market cap that's been added, the IPO valuation in the first place, and the wealth of Elon Musk.
Yeah, it's definitely more constructive to measure it in market cap add rather than like the percentage gain on the IPO price. But it's an issue of scarcity as well. You know, only 4% of this company's market cap by shares is available to trade. And so like the conclusion is that, you know, markets are very willing to digest IPOs at this scale. It's why many on the buy side believe that this presages Anthropic and OpenAI coming to market and there being appetite for that. But there's also just the sheer mechanics of it. You know, an element of scarcity. You also had the options pricing on the 16th, which was yesterday, the 16th. So that's a big part of it. But I still come back to the mechanics of the lockup and how little of this company was available as part of the float.
I was reading just briefly on Substack, Michael Burry had a post talking about SpaceX, basically saying that he was tempted to short it, but ultimately decided against it, talking about the valuation doesn't make sense. It's ultimately just a small space company, but I wonder how many bears out there do exist. But look at that dynamic that you're talking about, Ed, and say, shorting this thing would be a fool's errand because of the mechanical buying that's occurring and the small amount of float.
Yeah, I mean, it's only 3 full days since public market debut, right? And a lot of this is price discovery still. You know, I put a post out on X yesterday about its price to sales ratio, because why would you put the price to earnings out? What's the point? In the moment, so the big headline yesterday was at the close, SpaceX overtook Amazon in market value and became the world's 5th most valuable publicly traded company. But right now, the action in the markets, it isn't based on fundamentals. It's still this idea that we're digesting the IPO and that because of the staggered lockup, there's a long way from more shares coming into the market. But still, a lot of what I'm getting telephoned about and what I'm reading on the research is what will be the catalysts that drive the stock in either direction, and it's Starship and the tests of Starship. So when we start to get dates of Starship tests and those tests are conducted, that is something that actually you can say we can measure its impact on the company, because everything that was outlined in the prospectus, orbital data centers, et cetera, is predicated on Starship working. And so that is something material that you can look to.
Thank you very much for joining us this morning. Looking forward to Bloomberg Tech at 11 a.m. That is the host of Bloomberg Tech at Ludlow. Elsewhere, Brent is below $80 a barrel as the U.S. and Iran prepare to formally sign a memorandum of understanding Friday in Geneva. President Trump, speaking alongside Egypt's president at the G7 summit, said the deal is not yet final.
No, it's not final. It's a memorandum of understanding. And if I don't like it, we'll go back to shooting at them, dropping bombs on their head.
What do you expect the word?
If I don't like it, if they don't behave, we'll go right back to dropping bombs right smack in the middle of their head, okay? Because they've misbehaved for 47 years.
President Trump is also pushing back on reports of a $300 billion fund for Iran, saying the U.S. won't invest 10 cents in the country. Let's bring in Bloomberg Chief European Correspondent Oliver Crook, who's at the G7 summit in Evian, France. And Oliver, that $300 billion fund had been part of the 14-point plan seen by Bloomberg. Just how much daylight is there between what we think this plan is and what both parties are actually willing to sign come Friday?
Yeah, I mean, Danny, there's been a real seesaw in sort of sentiment from the beginning coming into this summit. There was a lot of optimism. This is a done deal. Obviously, the market was quick to price that in. There was some skepticism on the other side of the table from a number of European leaders. But now, this memorandum of understanding, not wanting to be a memorandum of misunderstanding. The President of the United States there saying that he could go back to this kinetic side of this war. Really, the hope was that in the stick and carrot, the stick side of this war was over, and it was now going towards the carrot, talking about that $300 billion reconstruction fund, potentially pulling sanctions away and creating the sort of incentive structure for the Iranians. But I think that for people who have been dealing with Iran for a very long time, like some of the European partners, remember, they were there negotiating the original deal, the JCPOA. They were not part of this part of this negotiation. Financial incentives have not always been the most effective in dealing with Iran. The sanctions have been on the country for many, many decades. And I think there's many questions here for the European partners about whether or not this regime in Tehran, Trump keeps saying that it's the third regime because they wiped out the first two, is going to be very docile, is going to be very sort of compliant to the wishes of the United States, and using just those sort of financial instruments as the sort of encouragement, and potentially having to go back to the sort of kinetic side of this war. So I think there's a lot of questions coming into this week. It was certainly a lot of optimism, but I think leaving here, there's still a number of questions about what this actually looks like. And of course, the Europeans said from the very beginning, and they've reiterated over the last couple of days, that they could be active in helping sort of minesweep the Strait of Hormuz, which the Americans, we understand, have been receptive to. But if we're still talking about minesweeping, are these cargoes really going to have the confidence to go through the Strait of Hormuz? I mean, imagine one of these ships goes through in a week or two and hits a mine. That'll take us back, not necessarily to square one, but certainly will have a major impact on the markets.
Yeah, I mean, it's the most important question. How quickly does the strait open up, and how safe is it after? I don't think markets really care who won or lost here, how much we're paying Iran to open up the Strait of Hormuz. What they care about is that the oil flows. Are the other countries at the G7 willing to help out right away, or are they going to want to wait?
No, they're not going to be willing to help out right away. They're definitely going to want to wait. That is what they've been saying from the very beginning. I mean, President Macron has from the beginning tried to take a sort of constructive approach to President Trump and saying that the French would lead a minesweeping mission. And again, this is something the United States said they would like, but he's only going to do that once the peace is fully settled. I mean, these minesweeping ships are basically sitting ducks on the open ocean. This is not an activity you can do if there is any risk of fire. This is something that can only be done as a peacetime activity. But Matt, there's also another dimension to into this. If you want to construct a sort of incentive structure for the Iranians on sanctions, on financial incentives, you're probably going to need the Europeans on board too, right? They have their own economic sanctions against Iran. And if you want to build a $300 billion fund without using American money, without using American taxpayer money, you may need money from some of these European partners and European companies.
All right, Oliver, thank you very much for joining us. That's Bloomberg's Oliver Crook at the G7 Summit. And Evian, a check on your markets this morning after falling yesterday. We try to put in a rally. The NASDAQ 100 up 0.5%. It was chip makers that were really crushed yesterday. Yields little changed as oil moves higher by 1.1% with that back and forth and exactly what the 14-point plan looks like. And again, I guess bond markets aren't going to go much of anywhere because we need to know what Kevin Warsh is going to say in his first Fed decision.
Yeah, you do typically see much less movement ahead of a Fed decision, and today will be no different in terms of the benchmark indexes and rates, and et cetera. There will be individual stocks moving, and let's round them up for you. CarMax reported net sales above estimates, but profit fell last quarter. The shares were higher, but they're now down in the pre-market.
CME Group CEO Terry Duffy stepping down to become executive chairman, with President Lynn Fitzpatrick taking his place as CEO. Shares down 3 1/3.
And not that it matters, but
it matters so much.
It's funny. Allbirds changed its name to SmartBird.
Wait, what were they going to be before? Weren't they always going to be some sort of like AI bird name?
I can't remember what it was because it didn't matter then either. But remember, this company has pivoted from being the darling shoemaker of the Valley to AI infrastructure. It has tapped Nadia Carlson as president and CEO. FYI. Coming up, BMW shares plunge after the automaker slashed its profit outlook and warned of a deeper slowdown in China. That's next. This is Bloomberg Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with a debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
getting out of high interest. Look what's making headlines around the world. The Trump administration is offering Wall Street-style pay to recruit 400 deal makers for government service. Salaries could top $400,000 as officials look for experts to help finance semiconductor, critical mineral, and other national security supply chain projects aimed at boosting U.S. manufacturing. Software maker Medallia is changing hands after private equity owner Thoma Bravo declined to put more money into the struggling company. A creditor group led by Blackstone, Apollo, and FSKKR will invest $150 million, slash debt, and fund Medallia's AI expansion. Danny spoke with Thoma Bravo co-founder Orlando Bravo on the firm's obligation to investors at Bloomberg House, Miami.
We are not interested in putting more money into the company, because we have to be disciplined about that. We could do it, kick the can down the road another 5 years, pretend like it never happened, but we have a big fiduciary duty to our investors. Our investors have known about the issues of Medallia and the mistakes we made for 3 years now. It's been written down at a very, very low level for that time.
And BMW says profits will be much weaker this year as car sales in China slow and global uncertainty grows. The automaker now expects margin as low as 1% and plans more cost cuts. Shares had their biggest drop in nearly 2 years. And for more on this story, Elizabeth Behrman, who leads Bloomberg's EMEA auto coverage, joins us out of Munich. So, Elizabeth, this is interesting. BMW, which has a massive production plant, I believe its biggest plant globally here in Spartanburg, South Carolina, having to slash margin estimates to 1%. What's gone wrong?
Yeah, I mean, the fact that they've reduced their outlook somewhat had been quite widely expected. They've just recently had a CEO change. That person left on a very solid footing, having put in the new Neue Klasse line of products. And now the new guy is in charge, and he's had to clean house quite significantly and much more deeply than people expected. What we've seen over the past few weeks, what's driven this outlook cut for BMW has been a really big slump in car demand in China, not just for the European car makers, which we've been talking about, but the general market in May was down more than 20%. And that's been a really key factor behind BMW's cut. What I also found very interesting, for the first time, one of the Western car makers talked about the impact of the Middle East war, and saying how that's significantly reducing buyer appetite for new cars. I mean, we've probably seen it ourselves when you've seen fuel prices at the very high levels. You're just much less inclined to shell out for a big new purchase like a car. So that's sort of the big factors that are behind this.
Well, I noticed in our reporting, we mentioned a JP Morgan analyst calling this a wake-up call for the auto industry. I mean, Elizabeth, you're pointing out a lot of these feel quite macro. So how much of this is a BMW problem versus just the auto industry having an issue?
I think it's a slightly different take that Jose Azumendi was sort of getting at. BMW was seen as sort of this holdout, this stronghold among the particularly German premium car makers. VW's Audi and Porsche brands have had a lot of struggles. They've had big write-downs. They've had to really redraw their electric vehicle strategy, whereas BMW had been following a slightly different path, just really sticking to a more flexible approach on what sort of drivetrains they were going to put into their cars in future. And that was sort of seen as sort of safeguarding their margins, giving them a more solid footing. So what's happened now in this wake-up call for the industry is we're sort of seeing how this news on BMW is calling into question the whole business model for car makers in Germany that have been traditionally such a strong presence, such a big industry for Europe's biggest economy.
You lead, Elizabeth, our autos coverage in Europe, and of course, Italy falls under your purview. Tell us about Ferrari essentially demanding that its most loyal customers buy a Luce or they won't get access to the better cars, which is like every other car they make.
Yeah, but Ferrari is as we know, in a class of its own in terms of car makers. They are much more at home with the likes of Hermes or Rolex, and they operate on this scarcity model. They make far fewer cars than they could sell, and that's what makes them unique and so desirable to people. So to be sure, they don't demand that people buy the Lucha, the electric vehicle they unveiled, to a lot of criticism about the car's look. But they're sort of suggesting to the key collectors, the VIP clients, that if they want access to the really comfortable models, the limited edition models like the LaFerrari, which I think sells for more than 2 million and so forth, that's a good stepping stone toward that goal of getting your hands on the really desirable ones. But they're not demanding that people do that. And this sort of allocation system that they're running, they're doing this they've been doing this for a long time, and it's part of the scarcity model that also Hermes operates for Hermes and Birkenbacks, for example.
No, right. It's, I mean, famously why Jay Leno won't buy a Ferrari. Elizabeth, thanks so much for joining us. Elizabeth Behrman runs our autos coverage for EMEA out of Munich. By the way, I have an autos podcast. You may have heard about it, Hot Pursuit, with Hannah Elliott out in Los Angeles. Definitely check it out on any platform.
By the way, that's also why I won't.
Podcasts.
That's also why I won't buy a Ferrari.
Yeah,
it's not because it's too expensive.
Because
for me, it's I'm just morally opposed to
you have to buy the 296 GTB before you can get the 12-cylinder, and you don't appreciate that.
Otherwise, I would have. Yes, definitely.
Coming up, Goldman Sachs Vice Chair and former Dallas Fed President Rob Kaplan discusses Kevin Warsh's challenges as chair as we await the Fed decision and meeting today. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Why do I do this? Quick check on the markets ahead of the opening bell. We had a little bit of a drop yesterday into the close to, I think, 75.11 was the cash level. You can see futures are higher now on the S&P, but only 0.1%. NASDAQ futures up 0.6%. We have the 10-year yield coming down a bit, and Brent crude still under $80 a barrel. Less than 4 minutes until the opening bell. We begin the trading day with Goldman Sachs' Rob Kaplan. This is Bloomberg Open Interest.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller, looking at some slight gains. Remember, it's Fed Day, so markets tend to stay put until we get the decision and the pressure, really. Right now, we have futures up about 0.1% after the cash trade lost some ground yesterday, 75.11, so just about 100 points away, 90 points away from an all-time record. NASDAQ futures up 0.7%. The Dow futures are also little changed. At the New York Stock Exchange, you've got Valmont. They make poles and towers, lighting structures, surface coatings, stuff for infrastructure. So it's an AI company, and as a result, they're up like 167% over the past 5 years. Down at the NASDAQ market site, you've got Factorial ringing the opening bell. I don't really know what they do. It's like a battery company. It's a SPAC.
Okay.
So SPACs are back.
Yeah, that's sign of the times. Also a sign of the times is just the ride that SpaceX has been on. It's adding to its 3-day streak. It's up 4%. Those gains have made it the 5th most valuable public company in the world. It overtook Amazon yesterday. I need to check where this puts it. If it puts it ahead of Microsoft. Microsoft's market cap is about 2.9.
I'm doing it.
Billion. Thank you very much. SpaceX, when it closed yesterday, was at 2.6 trillion.
2.774.
Okay, so it's just under Microsoft, unless Microsoft is falling today, which I don't think it is. Anyway, so we are very close to overtaking Microsoft, now up 4.5% in the early minutes of the opening trade match.
Microsoft actually down about $5 right now, but it's still worth 2.892 trillion. I mean, it doesn't matter, obviously, right? You can say these two companies are neck and neck in terms of market cap.
Yeah.
And like I was saying yesterday, and like we all know, right? Microsoft is a household name. They have been working decades to get to this level of market cap, and it's a product that's installed across every office, not just in the US, but globally. And SpaceX is like still trying to get Starship launched with a real payload.
Well, that was like the argument from Michael Burry on Substack, basically saying he was tempted to short it because it's just, at the end of the day, a very small space company.
Right, but we're talking about scarcity, right? With regards to the shares out, 85 billion is the total market float. And for a $2.7 trillion company, $2.8 trillion company, that's tiny.
Yeah.
So, and plus you've got these built-in buyers coming with the rule changes, no more seasoning. So I don't know if shorting it would be the smartest idea.
No, probably
right
not. And he's not going to, and I think it's for those exact reasons.
It's been tough for those who shorted Tesla over the years.
Yes.
It is Fed Day, as I was saying, and joining us, we're pleased to say, is Goldman Sachs Vice Chair and former Dallas Fed President, Rob Kaplan. Rob, great to have you on the program. Thanks so much for your time. Let me first ask about Kevin Warsh. I was looking at on the Bloomberg, we have a Fed spectrometer, FDSP, and I was surprised to see that we've ranked him at the most dovish possible at a -2. Although, you know, you have known Kevin for a long time. You've worked with him. He seemed to me to be more hawkish. How do you expect him to conduct himself today?
His signature, you know, going back to 2010-11, was more hawkish. Right now, what you're going to see today, and that's why the press conference is very important, I think he's going to need to lay out a little bit of his philosophy. I think it would be wise to acknowledge that inflation has been above target for 5 years and has been sticky. And I would hope what he'll communicate is if inflation remains persistently above target, he'll be prepared to act. But he's also going to argue that some patience is appropriate. You've got the Strait of Hormuz opening. You've got an AI adoption phase that should be disinflationary. You've got Chinese overcapacity in manufacturing, which should help. And so he needs to lay out today who he is and where he's coming from. But I think he'll be more neutral. I don't think it would be wise to come across as dovish today.
There's one aspect of this meeting, which is the one we're all discussing, just how dovish or hawkish he is. Rob, the other one is just his communication style. How different do you expect it to be from a Chair Powell?
Jay Powell is a good communicator. Kevin Warsh is a good communicator. I think the difference will be Kevin has felt and has said for some time he'd like to see the Fed doing less prognosticating. He wants to take it meeting to meeting. He wants to have serious debates within the meeting, but he's a little nervous about predictions, the dot plot, other speeches that predict what the Fed might do because he's worried that it boxes them in rhetorically, and he's going to want to avoid that. But I think he otherwise, I think he should be able to be a straightforward communicator, but he's going to be clear. He wants to get out of the prediction business and more in the policy-making, risk management business.
Rob, that's all well and good, but doesn't he essentially just cede leadership and communication to other Fed members? I mean, he might stop, but who's to say that the other presidents and governors aren't going to get out there and hit the communication circuits and basically, I don't know, overtake the chair as communicating policy to these markets?
So I think that he's going to want to not be predicting, but I think he is going to want to be communicating his philosophy on how they make policy, give a little sense of their reaction function. I would think if I were in my former seat at the Dallas Fed, and if Kevin Warsh said to me, listen, go out and make speeches if you want, but I don't want you to make predictions about what we're going to do in the future. I think Fed members around the table will listen to that. I don't think that's that hard to come to an agreement on. But I do think he's going to have to find a way to explain his philosophy and what the reaction function of this Fed is going to be. And I think that's what the market's going to be listening for today and in the future.
I want to ask about inflation, your view on it. Clearly, we've seen tariffs and immigration policy, whether or not you agree with it, drive inflation higher, and then this war in Iran boosting us another leg to a point where CPI was at 4.2, so more than twice the Fed's target. But now that it seems like the war is over and the Strait of Hormuz is going to open up again, oil has dropped, the gas price has come down considerably. Now we're at $4 national average. Is inflation no longer a concern for this country?
It's not that straightforward, but the Strait being open and oil prices being down will absolutely help, because I think there was a bleed from high oil prices into other items, and I think that bleed will stop. Here's the structural issue. We are in the midst of a historic CapEx boom in the United States, driven by infrastructure for AI, data centers, power, creating compute. And at the same time, as you mentioned, we've got this infrastructure boom that creates demand for materials and labor. We've got constraints because of tariffs to some extent, and we have constraints because of sluggish, very little labor force growth. And so that is naturally creates some inflationary dynamic. The thing that oil coming down will do, it will help get goods inflation back to hopefully where it was several months ago, i.e. goods were disinflating. Ground zero is still services, but I think this structural CapEx boom, it's not a consumer spending boom, it's a CapEx-driven boom. I think that's what the Fed's got to be watching and trying to understand whether its policy setting is appropriate in light of that situation.
I mean, at the end of the day, Rob, you know, considering we have a 2% inflation target, that we haven't got there, are we just sleepwalking into a 3% world, especially with the structural changes that you're laying out?
There's some reasons. So I don't think so, and I think the Fed should not accept a 3% world. Why is that? There are 134 million households in the United States. The median income is $80,000 a year. So that's 67 million households that make 80 grand a year or less, have very little financial assets. And if 3% headline inflation is the case, that translates into share of wallet inflation for them, maybe 6 or 7%. It's unacceptable. They're getting suffocated. The Fed has got to be determined, and I think they should reiterating they're committed to 2%. But you've got these structural factors that we just talked about. And so I think what I would do if I were at the Fed and if I were Kevin Warsh, be clear that if we don't see inflation easing in the next few months, I'm prepared and we're prepared to act, because I think you want to convince the markets that we're still committed to 2%. I think they've got a little time, don't need to act in June, don't need to act in July, but by September, if this inflation print stays sticky, they're going to have to demonstrate that they're prepared to act. And I think that's the tension that you'll be hearing.
It's not, of course, just inflation, Rob. You bring up the AI spending boom. We're talking about trillions of dollars, right? That's helping to drive earnings 20% higher. That's helping to drive stocks 20% higher. And I imagine, like a railroad boom or a wartime, ramp up in industrialization, it's going to drive the economy higher as well. Is the U.S. economy more at risk actually of overheating than of slowing?
Well, let's separate out AI into two parts. There's the infrastructure boom, which is, headline $800 billion being spent on infrastructure. There's the AI adoption boom. And a lot of these, I won't go into individual companies, but a lot of the equity offerings, valuations that you're seeing have to do with the adoption boom. The adoption boom should be disinflationary. That should improve productivity. The infrastructure boom, ironically, probably puts more strain on inflation. But over the horizon, adoption, this driver that's improving corporate margins, is actually going to be disinflationary. And this is why you notice labor share of GDP is probably declining, profit share is increasing, and unit labor cost has not spiked. It's actually been under pretty good control. And so I think that the thing we're going to have to understand is how does this AI adoption develop and how disinflationary is it? And I think at the Fed, you need to separate this into two parts and try to analyze each differently.
Rob, just before you go, because obviously you've been in the room with many of these meetings and you've understood various leadership styles and you know Kevin Warsh well, how do you expect this to play out when we maybe have kind of like a two-pope situation, when you still have Jay Powell in the room as these decisions are being made?
Well, you know, I've said this. Jay Powell, I think, is going to strive to have as little imprint on the meeting as possible and to be as defer to Kevin Warsh as much as possible and not be a factor. Okay, so here's what I think, though, Kevin Warsh would like in the months and years ahead. The Powell Fed and the Yellen Fed, which I was a part of, the meetings, we had good discussion, but the meetings were very choreographed. I actually think Kevin Warsh would like, it may take a little time to get there, to have more robust debate and disagreement, less scripted meetings, more debate and disagreement. And I think if he needed to create a part of the meeting that didn't have a transcript where they could have that debate and disagreement, I think he would like that. But outside the meeting, he's going to want less prognosticating, less predicting about what they're going to do, but a lot more debate and disagreement in the room. And I think that could be a very constructive change.
Interesting, Rob. Thank you so much for joining us this morning. We'll see what that decision brings. Goldman Sachs Vice Chairman and former Dallas Fed President Rob Kaplan. All right, let's get a check on your equities market this morning, over 10 minutes into your trading day. And we gained, but it is a tepid gain of up of 0.1%. We declined yesterday, led by the chip makers and tech. The chip makers do rebound this morning. Broadcom, Applied Materials, Lam Research, Micron, AMD, all in the top gainers alongside Apple and NVIDIA. And the losers, it's a pretty bad day for the Mag 7. Microsoft, Amazon, Alphabet, Meta, Tesla, all the top losers so far this morning, putting in a painful performance. Meta down 2.33%, not on any specific news. Maybe it is more just rotating out of the big cap tech names in order to fit SpaceX in. By the way, you'll notice always with this that SpaceX is not on this board because we're looking at the S&P, and the S&P was one of the few indexes to not include SpaceX to change their rules. Looking at the individual sectors, again, a push and pull with tech. Chip makers do well. Mag 7 does poorly, but it does end us higher with Infotech up 1.1% because NVIDIA is doing better at communication services. Again, a lot of the Mag 7 lives in here. That is down 1.6%, Matt.
All right, so waiting on the Fed, but SpaceX is also taking our attention today because the breakneck rally, although it's slowed, has the company closing in on Microsoft as the fourth largest company in the world on its fourth trading day as a public company. This is Bloomberg Open Interest.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, You already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ola, Saudi Arabia, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Let's hear from the sell side now for your top calls, what they are upgrading and downgrading this morning. First up, Wells Fargo upgrades Carter's on signs that new leadership is improving, execution with stronger direct-to-consumer momentum, and tariff-related upside that the firm says is underappreciated. Shares up nearly 5%. Citi, they initiate coverage of the software company Figma with a buy. They say the company will benefit from AI-driven demand. Shares also up 5%. Finally, oh God. Did you see these, Matt? Wall Street weighing on Snap's new specs. Okay, Evan Spiegel gave this interview, I believe.
Don't you have a pair of Snap specs?
No, I like the really, really old ones, like when they first put them out. Okay, so they're AR glasses. They cost $2,000. And I was looking at this interview with Evan Spiegel talking to, I think, CNBC about them. And the things are so heavy, his ears look like they're getting crushed and like folding in half. And like maybe, I don't know, they should have spent a little bit more time developing them. I mean, I don't know. They don't look that cool. They're really big.
I like the shape, but
no, but literally his ears are getting like crushed in the interview. They look like they're crying out for help.
No. Doesn't look like they would be comfortable to wear at all.
No. For what it's worth, Citi says that it's impressed by the AR features, but wants the prices and design to improve. B. Riley says that the high price will limit demand, but future versions could become more affordable.
They look like something a bad guy in a Guy Ritchie movie would wear.
They do. That's perfect. Again, they just look uncomfortable. They look really uncomfortable.
Someday a company will. Well, I think Meta has kind of cracked this.
Yeah, the Meta ones. The Meta ones look very kind of like low key.
The way they look, right?
No, this looks like you're wearing goggles, which is a problem.
Exactly. You could scuba dive with those.
Yes.
All right, let's talk SpaceX. Let's continue to talk SpaceX. It's only the fourth day of trading. It's added $1 trillion in market cap since Friday. It is currently the fifth largest company in the world, almost the fourth if it overtakes Microsoft, only like a measly $100 billion away. And adding to the confusion about whether it's primarily traded as a rocket company, a telecom provider, or an artificial intelligence play. Let's bring in Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh, for this conversation. And you've had a lot of practice on this kind of talk because we've been doing it with Tesla for the past 15 years, right? Is that a car company? Do they make humanoid robots, right? Who cares, right? It's just an Elon Musk company, and so you should buy it.
Well, I think the difference was Tesla was quite early stage when we started talking about it during their life as a public company. And I think SpaceX, when I look at the market cap surpassing Amazon, I mean, there is a lot baked into the expectations. And look, I am excited about orbital compute. I am really excited about the Cursor acquisition. To me, you know, Cursor could leapfrog into a frontier model provider because of the compute now they have from SpaceX. So if they're able to retain the talent at Cursor and really scale Cursor, they would become a formidable player, the likes of Anthropic and OpenAI, and they could be a challenger in that regard. But it's a big if that, everyone stays from Cursor and they're able to scale that up. And it's already priced in when I look at, the market cap of SpaceX.
By the way, this market cap is stale.
Oh, yeah.
It says 2.654 trillion, but actually...
About 2.7 now?
Yeah, well, I mean, 2.680.
Round up to 2.7. And just on that note, I mentioned this earlier, Mandeep, but Bill Ackman putting out on X yesterday, one of the things that makes SpaceX so valuable is how valuable it is. Talking about the Cursor acquisition costing material less in dilution because of the high valuation. How important has it been for SpaceX to see this kind of not this kind of market action, it's only up 0.2%, but to see the prior day's market action in order to achieve the goals it wants, like buying Cursor?
Look, I think overall, where they are right now, I can see SpaceX ramping up their CapEx now. Remember, all the hyperscalers will be putting almost $100 billion plus in CapEx in 2026 and possibly in 2027. So from that perspective, SpaceX with this market cap has already become a hyperscaler. I can see them inching towards that $100 billion CapEx just to set up compute. And the reason why, we are talking about revenue growing threefold from 18 billion in their S1 is because of the compute deals. And these are terrestrial compute data centers that they're renting.
Revenue will grow threefold and losses will grow, what, 4 or 5 times? What's the loss revenue ratio for SpaceX going to grow to?
Well, the compute...
They're going to lose twice as much money as they make in revenue.
But not with the compute deals. I'm going to push back a little bit on the compute deal. So if you look at the compute rental business, yes, it's not very high margin business, but that will not compound their losses. I mean, if anything, they're renting their Blackwells and the latest NVIDIA chips for a higher rental price than your neo-cloud providers like CoreWeave and Nebius. So from that perspective, $11 an hour for the Blackwell GPUs is far higher than what anyone else is commanding right now. And I was surprised to see why Google is really paying up that much when they have their own TPUs. The answer is because xAI has the data centers with power. Everyone else is struggling to procure power right now for their chips. So it will be margin accretive for sure when it comes to the rental side.
Mandeep, thank you so much for joining us. Always a pleasure to have you. Mandeep Singh from Bloomberg Intelligence. And coming up in the next hour, more on the tech rally and the AI outlook. We'll be speaking, or Tom McKenzie will be speaking with the CEO of ASML. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment. 3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Yes, that's crazy.
Would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later on over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the trend, the technology trend and the investment is real.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
ABC News. I'm Brian Clark. President Trump is set to address reporters ahead of his departure from the G7 summit in France. He'll likely get questions about the contents of the agreement to end the war with Iran. He told reporters earlier,
"It's a very strong deal. Nobody knows what it is, but it's very strong. And most people seem to be very happy."
Once it's signed, a key issue will be negotiating the long-term future of Iran's nuclear program, and the latest U.S. intelligence shows some doubt.
The U.S. and Iran are set to kickstart detailed nuclear negotiations on Friday, but officials say American intelligence agencies predict the Iranian regime will be unlikely to make the nuclear concessions the Trump administration expects to see. The president making it plain that military action is still on the table.
If I don't like it, if they don't behave, we'll go right back to dropping bombs right smack in the middle of their head.
Shannon Kingston, ABC News, the State Department.
Today, the president's pick for Federal Reserve Chair Kevin Warsh will speak after his first meeting as chair. The central bank expected to keep interest rates unchanged. The president says another of his nominees is on hold, and ABC's Rachel Scott says that's part of a broader tug-of-war with Congress.
The president says he will not approve FISA, a key national security tool that has already expired, until Republicans pass his sweeping voter ID law. And what's more, the president says he's also delaying the nomination of Jay Clayton to serve as the director of national intelligence until his other judicial nominees get through. Clayton was scheduled to start his confirmation hearings today.
But Republican Senator Tom Cotton says on social media that Clayton is a pending nominee and will proceed with his hearing. A convicted serial killer, Rex Heuermann, will be sentenced today, says ABC's Phil Tate.
Heuermann will face a judge for sentencing. He had admitted to murdering 8 women. Now, today, inside of the courtroom, we also expect the families of the victims to be present.
You're listening to ABC. The first tropical storm of the Atlantic hurricane season may be born today.
For now, the National Hurricane Center is calling the low-pressure area skirting along the Texas coast potential tropical cyclone 1. If its maximum sustained winds reach 39 miles per hour, it will take the name Arthur. In preparation, the level of Lake Houston has been lowered by a foot.
We've also pre-staged some barricades at flood-prone locations, usually underpasses.
Houston's emergency manager, Brian Mason, says first responders are gearing up for possible high-water rescues. Jim Ryan, ABC News.
One of President Trump's projects to modify Washington, D.C. is having an issue. ABC's Mary Bruce says it's in the reflecting pool between the Lincoln Memorial and Washington Monument.
The president just spent $15 million in taxpayer money to paint the bottom of the pool, quote, American flag blue, but the water is now green, overrun with algae. Workers have been out spotted trying to clean it up. National Park Service workers dumping hydrogen peroxide into the water. In a statement, the White House says they are deploying, quote, high-tech nanobubble ozone technology to kill the algae and keep the water of the reflecting pool crystal clear.
A Russian artist critical of Vladimir Putin was shot and killed near his home in eastern Poland on Monday. Today, Poland's prime minister said everything points to it being a political murder and that if that was the case, it would constitute state terrorism. Law enforcement still collecting evidence. I'm Brian Clark, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. We're streaming live at Bloomberg.com as well. It is Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence Radio program. Coming up, President Trump, he's in France at the G7 meeting. He has a scheduled press conference at 10:30 a.m. Wall Street time. We will take that. And he's also participating in a bilateral meeting with the Prime Minister of India. And we may dip into that if there's some Q&A going on there. So we'll keep you up to date on that. Oliver Crooks is going to join us, Bloomberg News Chief European Correspondent. He's in France at the G7. We'll get the latest reporting there. Bill Lee, Chief Economist and Managing Director, Global Economic Advisors, to discuss his outlooks for this U.S. economy. Mandeep Singh, Global Tech Research Head at Bloomberg Intelligence. We've got, he'll be in our New York studio. So right now, let's head over to France, and we'll go to this bilateral meeting with President Trump and the President of India. Let's take a listen.
But it's a G7, and we have a G2 coming up, and then we have a G20 coming up. You know what the G2 is, I think, most of you. But we had in particular some very good conversations with Prime Minister Modi, India, and we're doing trade deals. We're doing a lot of things. A lot of things are happening between the United States and India. The United States is doing the best we've ever done. We have over $19.2 trillion coming in, and we're building factories. We're building everything, and Prime Minister's building a lot in the United States. He's spending a lot of money in the United States, so we appreciate that, jobs. But I just want to say he's been my friend for a long time now, and we've always had a great relationship, and it's great to be with you. Thank you very much. Great to be with you.
Thank you. राष्ट्रपति जी, आपसे मिलकर के बहुत खुशी हो रही है और पिछले वर्ष हम वाशिंगटन में मिले थे। उसके बाद हमारे संबंधों में एक नई गति आई है, नई ऊर्जा आई है और कई विषयों में हम बहुत मिल करके आगे चल रहे हैं।
Mr. President, it's a pleasure to meet you here in Avia. We had an extremely productive meeting in Washington last year, and since then we have given new speed and new energy to our relations, and we are working together on a number of areas.
और हमारे लिए खुशी की बात है कि हमारी दोनों टीमें भी मिलजुल करके हमने जो टारगेट तय किए उसको पूरा करने के लिए भरपूर प्रयास कर रहे हैं और हम बहुत तेजी से आगे बढ़ रहे हैं।
And we are also happy that our teams have also been working in close coordination and engagement, and they've been working towards achievement of the targets that we had set for ourselves last year.
एक्सेलेंसी, पश्चिम एशिया में शांति के जो प्रयास में प्रगति हुई है, इसके लिए मैं आपका अभिनंदन करता हूं।
Mr. President, I commend you for your leadership on the progress that has been made in the efforts to restore peace in West Asia.
आपके इन प्रयासों के कारण पश्चिम एशिया में शांति की एक नई किरण नजर आ रही है और हम आशा करते हैं कि चिरस्थायी शांति बनेगी।
Thanks to your efforts, Mr. President, new hope for peace and stability in the region has been rekindled, and I'm confident that this will lead to a long-standing peace in the region.
एक्सेलेंसी, आप और हम सभी इस बात से सहमत हैं कि हॉर्मुज का खुला रहना एक वैश्विक अर्थव्यवस्था के लिए बहुत ही अनिवार्य है।
Mr. President, you and I agree that keeping the Strait of Hormuz open is vital for the global economy.
एक्सेलेंसी, हम हमेशा कहते रहे हैं कि फ्रीडम ऑफ नेविगेशन सुनिश्चित होना चाहिए और इस पर हम सब ने मिलकर के बल देना चाहिए।
India has consistently emphasized the importance of ensuring freedom of navigation, and we should work together and place a particular emphasis on that.
एक्सेलेंसी, आप जानते हैं कि मैरीटाइम ट्रेड की दुनिया में भारत के लाखों सी फेरर्स आज दुनिया के अलग-अलग समुद्र में अपनी सेवाएं दे रहे हैं, विश्व की प्रगति में बहुत बड़ा योगदान दे रहे हैं और मैं समझता हूं कि उनकी सुरक्षा भी उतना ही महत्वपूर्ण है।
Mr. President, you are aware across the world, Indian seafarers in hundreds of thousands are working and they're performing their duties across global maritime trade routes, including the Strait of Hormuz, and their safety is of utmost importance to us.
एक्सेलेंसी, समझौते के लिए शांति के प्रयासों में आपने भरपूर प्रयास किया है। मुझे पूरा विश्वास है कि समझौते में सीफेरर की सुरक्षा भी सुनिश्चित होगी और उसको प्राथमिकता मिलेगी।
Mr. President, you made tremendous efforts towards reaching this understanding and this agreement, and I'm confident that the issue of seafarers will receive the highest priority during the implementation of this agreement.
एक्सेलेंसी, मैं फिर एक बार पश्चिम एशिया में शांति बहाल कराने के आपके भरसक प्रयासों का मैं पूरी प्रशंसा करता हूं और आपका अभिनंदन करता हूं।
Mr. President, once again, I deeply appreciate and I deeply commend your efforts in ensuring the restoration of peace and making efforts towards restoration of peace and stability in West Asia.
Thank you very much.
Thank you.
Thank you, friends. Thank you. Any questions?
Thank you, Mr. President. We just heard the Prime Minister praise your efforts, the peace efforts in the Middle East.
Thank you.
Do you think you can carry the momentum from the Iran deal over to securing an end to the war in Ukraine? And can you tell us about your conversations with President Zelensky here at the G7?
Well, I had very good talks with President Zelensky and with President Putin, and we'd like to see that one end. I ended 8 wars, and to be honest with you, I thought this would have been one of the easier ones, but they're not liking each other too much, and that makes it much more difficult. But we're working. I had 2 good conversations with President Zelensky and with President Putin.
Will you let them build U.S. missiles or manufacture missiles, American missiles?
They would like to be able to do that. We'll take a look at it. They have asked about it. Steve?
How close are you to a U.S.-India trade deal?
Very close. We've been there for a little while, and he's a very tough negotiator. He's one of the toughest, actually. So you look at this man. I'll give you a lesson. He's the most beautiful-looking man. He looks so nice. He's like an angel. But actually, he's as tough as he's a killer. I don't want to. He's a killer. He's as tough as they come. But he looks so good. So he gets you by surprise. But there's few people like this. People say he's such a nice man. I said no, he's very tough. He's a tough trader. And he loves the Indian people, but he also loves the USA. We had Howdy Modi in Houston, remember? And the stadium was full. Right, remember that?
He did Namaste Trump in
India. That was great. And we'll be going to India sometime in the future.
President Trump, when will you go to India, and how do you see Quad as well? This is a grouping that was started under your first term, and this is a grouping that all the 4 countries are looking forward to.
Well, we had a great visit last time in India. We opened up that new stadium, and I think there were 300,000-400,000 people. It seated like about 150,000, and there were 250,000 outside, and there were 100,000 on the grass. That was, I don't know if that record's ever been broken, but I had a great time in India.
Do you expect India to play any role in West Asia?
Say it.
Do you expect India to play any role in West Asia?
Yeah, I do. I think India plays a big role in everything. As long as he's the leader, India's going to play a big role.
You said many times that India has a great friend in United States, in Washington, D.C., in White House, till the time you are president. But some of your decisions recently caused trouble, concern in India. How would you like to assure people of India?
Well, I said it. As long as I'm president, we have a great. They have a great friend in the White House. And I don't know where there might have been a trouble, but I don't think so. I can tell you, everyone here, they love India. They have tremendous respect for this man. Tremendous.
Are there going to be sanctions that are going to be reimposed on Russia now that the focus is once again being shifted to the Ukraine-Russia war?
We are looking at that. We're seeing how far the price of oil comes down. It's really tumbling. It's, I guess, 74, 75 right now. So it's down. It's soon going to be at the number that it was 4 months ago. It's pretty amazing. And on top of that, we will have an Iran without a nuclear weapon, which I can tell you the Prime Minister feels very strongly about that, too.
What did Mr. President hear from European or G7 leaders?
They were to a leader, and we had G7 plus many others came, as you know. To a leader, they were thrilled. They could not have been happier. Well, this gentleman came, and that's a big get. He came, and they cannot even believe that it happened. It happened quickly. But it really didn't happen quickly. It's been happening for a long time. It's been happening from my first term, when a very evil man named Soleimani was killed. That's when it started. And nobody else did this but Trump. You know, you look at our president, 47 years, Iran took advantage of the world, the Middle East, but the world. Nobody did anything. The Obama deal was one of the dumbest deals I've ever seen. It was a road to a nuclear weapon. My deal is a wall to a nuclear. You're not going to have it. It's a wall to a nuclear weapon.
Minesweepers? Do you want the Europeans to send minesweeper boats? Did you talk about that?
We don't need them, but if they want to send them, I think it's good.
Has anyone committed to?
Yes, all of them. All of them.
Which nations?
The ones that have that kind of equipment have. But every one of them have committed to being involved and so forth.
And at this point, do you feel that Vladimir Putin is more responsible for the ongoing conflict in Ukraine?
Well, I don't want to comment on that because I'm trying to get it settled, and that doesn't make it easy.
Mr. President, you're on the cusp of making history with the possible peace in the Iran conflict.
I like this guy. Who is he? Do you know who that is? Your reporters are much nicer than my reporters. Go ahead.
But there is also a tragic loss of lives of Indian sailors recently, sir, in American strikes. Any words of condolences for the grieving families, sir?
Yeah, I do. I heard about that. It's a rough profession. There's no question about it. And we work together on it. This has been happening throughout time, but we work together on it. Yeah, certainly. We love all of those people. They're great people. Yeah, please.
How long do you expect Bill Pulte to be acting DNI?
Well, as long as it takes to get everybody else approved. I mean, they were doing a rush act, and we didn't get anything for it. Look, he's a very legitimate guy. He's very smart. He's a brilliant guy. Look at the job he did at Fannie Mae, Freddie Mac. I mean, it's worth probably $1 trillion right now. So we put him there, but all of a sudden it was like a rush act by the Democrats. And they said they were going to approve FISA. And I said, but we want FISA approved, but we want the Save America Act approved. Voter ID, proof of citizenship, no mail-in ballots, with exceptions, like for the military, you're sick, you're traveling, disabled. Very, open and generous. We also want no men playing in women's sports, so we want no transgender mutilization of our children. None. Those are 5 things that are 99%. I mean, that's all we want. It's not a lot. The Save America Act. And that can be passed any way they want to pass it, but I'm not going to sign FISA unless it's done. And this was like a rush act. And it was a rush act by the Democrats. All of a sudden they want to get... And why are they afraid of this guy? I mean, they're so afraid of him, they'll do anything not to have Pulte go in there. He's a very capable guy, and they're worried about that.
Mr. President, Mr. President,
yes, ma'am, please.
You said the Iran deal, the text is still being finalized. How confident are you that this Friday signing will happen?
You're talking about this one, on the deal? Deals are amazing. I've done them all my life. I've gone into deals that were 100% and they don't happen. I've gone into deals that there was no chance of getting them done, and it happens, and they happen easily. So you never know with deals, do you? But you're going to find out pretty soon. I think it'll be done. They want to sign. They want to get back to a normal life. We hit them very hard. Don't forget, people talk about when this started. This didn't start 3-4 months ago. This started years ago when I took out Soleimani. That was a big event. There are those that say it was the biggest event in the Middle East in 50 years. So we took him out, and they became a much different country. And then I terminated the JCPOA. That's Barack Hussein Obama's horrible deal that gave them a nuclear weapon. And I terminated it. And I stopped it. And then I stopped it a second time with the B-2 bombers. And these are all major events in the history of the world, in my opinion, because it prevented them from having a nuclear weapon. And now we're going to do it again, and we're going to see how it works out. So this is a memorandum of understanding, but it's a very strong one. This isn't just like a 2-paragraph. This is a long, pretty detailed memorandum that goes into a regular contract. I would think they would do it. If they don't, then that's okay. We'll have to start the process again. And we don't lose. We have the greatest military in the world. We had the greatest blockade. The naval blockade was 100% effective. And again, they have no Navy. They have no Air Force. All bombed out. I don't want to say the leaders, but first level of leader, gone. Second level of leaders, gone. Some of the third level of leaders, gone. And they want to make a deal. They are so ready to make a deal. Yeah. But you know what?
President Trump, can you speak to the defense relationship between India and the United States? Sorry, I'm speaking, I won't.
That's okay.
Can you speak to the defense relationship between India and the United States?
I think it's a great relationship. I can tell you this, without having a contract, we don't have a contract. You'd have to write contract. But if they were attacked, we would be there to help them.
And Howard's trade negotiations.
How is that? Is that a good statement? Okay, come here, man. If anybody attacks that man, we're going to be there. Now, if there's a new leader, I'm not sure about it. Okay? If there's a new leader, I don't know about that. But if they're attacked and he's the leader, we're going to be there to help. And we have, and I will say this, and everybody says it. I had a great meeting 3 weeks ago with President Xi of China. We have the strongest military in the world by far, and I built it in my first term, and we're using it in my second term, and they gave some of it away stupidly in Afghanistan, as you know, and they spent a lot on Ukraine, $350 billion, but we have the most powerful military in the world. You saw that with Venezuela, which was 48 minutes, and now our relationship with Venezuela is great. We paid for the cost of the war 40 times, taking millions of barrels out. Venezuela's benefiting, we're benefiting, Venezuela's benefiting, and then we go to Iran, and really in the first week, militarily, we defeated Iran. Nobody thought that could be done. Yeah, please.
Mr. President, do you want Israel to halt its military campaign?
No, I want Israel to be able to protect himself, but I do want them to use good judgment.
President Trump, we expect a highly skilled Indian professional to be getting more opportunities in the United States under your presidency.
What does that mean? What?
Well, highly skilled professionals to get more opportunities here in the U.S.
Oh, yeah, sure. I mean, always.
Yeah.
We've always had tremendous relationships in terms of employment with India. Very talented people.
You've seen European leaders interact very warmly with you at the summit. Do you think that they're coming around to your worldview?
Well, I think they think I was right. I'm sort of always right. You know, when you get right down to it, I think they think I was right. They feel good. Now all of a sudden they all want to be involved. There's no reason to have them because it's pretty much over. But they all want to be involved. He'd be involved if I wanted, but we don't want to waste his time or his people. No, the European leaders, the meeting we had today was you know, just the leaders. I don't even say the European, the leaders that we had met with. In addition to the 7, we had quite a few come in. They all were willing to get involved. Thank you. Thank you. We had a great meeting on AI. We had all the top people here, and it was a great meeting. And as you know, we're building tremendous numbers of plants, but AI, we're building the biggest in the world. We're #1 in AI by a lot, and it was a very productive.
How's it going with Anthropic? The negotiations with Anthropic.
He was here. Going fine. I think it's going fine.
Energy cooperation. How do you see energy cooperation? India is diversifying, buying more energy from across the world, including United States. I'm enhanceable from beyond. How do you see India buying energy from you?
India can do anything they want with us. We have the best relationship. We cannot be closer than we are. Would you say that, sir? I don't think we can be any closer. Both him and I and our nations, but it really starts with the two of us. We cannot be closer. Thank you very much.
All right, very good. That was President Trump in France with the Prime Minister of India, talking about the stuff that the leaders at the G7 talk about there in France. And we think we're going to get another press conference from the president at some point later today towards the end of the G7. Looking at the markets here, we've got green on the screen. Let's get a reset here. We will go to Alexis Christophers for a Bloomberg Business Flash. Alexis.
All right, thanks, Paul. Traders are waiting to see whether new Federal Reserve Chair Kevin Warsh will validate bets on future rate hikes or lean against them. Money markets have priced in a full quarter-point boost by the end of the first quarter of 2027, but policymakers are widely expected to stay on hold today. Taking a look at the action, S&P 500 up about 20 points. We've got the Dow Jones Industrial Average climbing 273 points, and the NASDAQ Composite up by 102 points. We've got oil on the rise this morning. Brent crude back above $80 a barrel, up 1.5% at $80.18 a barrel. West Texas Intermediate crude up nearly 1.75% at $77.29 a barrel. Pending sales of U.S. existing homes had their strongest gain in nearly 2 years in May. Contract signings rose for the fourth straight month, up 3.8%. That's according to the National Association of Realtors. Mortgage rates are hovering at 6.6%. That is a 9 10-month high. Shares of SpaceX taking a bit of a breather here, down 1.25% in their fourth day of trading as a publicly traded company. SpaceX giving back some gains after climbing nearly 50% since last week's IPO. Shares of BMW down more than 7% after the German carmaker cut its guidance on the back of heating competition in the Chinese market and the spillover effect of the Mideast war. And Ferrari says it will reward buyers of its poorly received Luce electric vehicle with favorable access to its more desirable models. Shares of Ferrari down nearly 3%. And that's your Bloomberg Business Flash. Paul and Scarlett.
Yeah, some car stories there. I like that.
I like to clump them all together.
Matt
We
Miller.
had fun with Matt Miller this morning with our car stories.
Yeah, he just texted me yesterday, sent me a little message. He got a new BMW.
I was just
going to
say, he gets a new car constantly.
Yeah, but this one he owns. He's not test driving. He actually bought it. But he said he got it used for a very cool price, and he says it's just the coolest thing. And my first question was, can it fit 3 baby car seats in there?
And apparently it can.
And apparently it
Good for
can. So
him.
there you go. All right, Alexis, thank you so much.
How
Appreciate
priorities
that.
change.
Exactly. Yeah, he got rid of his little sports car for this thing. So anyway, I said, get a minivan, then talk to me. All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Bill Lee joins us here, Chief Economist and Managing Director at Global Economic Advisors. Bill, we've got a new Fed Reserve Chairman. We're going to hear from him today. What do you expect to hear?
I hope he's going to reset the Fed in a way that brings it back to the days when the Fed was really effective under Greenspan and was well respected. It didn't go wandering off into non-central banking duties. And I think what we're expecting to hear from him is to say the data are showing things that the headlines are not capturing. The very strong employment report that everybody's making a big stink over, well, a lot of that was World Cup hiring and unsustainable state and local hiring. So when you peel away all the transitory surges in employment, we're down to maybe 65, 70,000 as a steady state level. That's not a good indication of where the labor market is. And as far as inflation is concerned, the energy spike is going away. The tariff spike is going away, and the underlying core is still a problem, but it looks like it's more supply constrained than it is demand. So I think the message that I think he's going to try to say is that we should not be relying on data that give us a false picture. We should be looking at data that gives us a better sense of where we're going into the future, and things like the 5-year break-evens, right? Inflation expectations, they remain completely anchored. And they have come down considerably by about 40, 60 basis points, so depending on where you look, over the last month. So I think the state of affairs is that inflation doesn't look like is really a problem. Employment is, and job creation is. And if we look to the future of where AI is going, it may make job creation even more difficult. Now, granted, their consumers are doing well, but that you can see is coming from a lot of wealth effect. So the mixed picture of policy is that we should not be talking about rate hikes. We should be talking about how to set Fed policy in a way that is appropriate for the 21st century.
Is the rest of the Fed board going to be on board with that line of thinking?
Scarlett, that really is the key, and it's going to take quite a case of he's going to have to make the case that the data that I just talked about are important, and not just transitory blips. And I think the case can be made fairly effectively, but it's going to take some time to convince a lot of the hawks on the Fed that inflation expectations are secure. It's going to take a lot of persuading to say that energy isn't permeating into other facets and raising prices in a more permanent way. But as long as there's no wage price spiral, and there isn't, we don't have the traditional forms of inflation that the Fed has always been afraid of and that the Fed will step in to prevent. And what we do see are the beginnings of the kind of employment difficulties that the Fed could do something about to try to ease interest rates in a way that spurs more investments in non-AI related fields like construction and housing.
I don't know. It seems like the consumer's still in pretty good shape. What do you think?
Oh, I just said the consumer's doing very well, but a lot of that is coming from wealth effect. Okay. The bottom end is holding up because they're going through savings like crazy, and the half the population is still complaining that affordability is the main problem. And the reason why affordability is a problem is because their wages have not gone up as much as the rest of the population's wealth has gone up. So I think as far as the overall consumer is concerned, it's bifurcated. And I think Tom Keene has been talking about this two Americas and K-shaped economy for the longest time. It's now become even worse. And I think the rise in the stock market wealth has really been fueling a lot of the consumer spending, but also the people are actually dipping into savings to the point where it's at an extraordinarily low level. And the only way to solve the affordability problem is not so much through raising interest rates, but in trying to get more jobs created in the high wage sectors. We can't rely on healthcare. We can't rely on leisure and hospitality, which are the lowest wage sectors in the economy, to be supporting the consumers over the longer term.
Yeah, the two sectors that have really driven hiring as well over the last couple of months. One thing that I think about here with Kevin Warsh is that he has vowed a closer relationship, cooperation with the Treasury Department. So I'm curious what you think that might look like, because Scott Bessent himself, the Treasury Secretary, has made really clear that he watches the 10-year yield, and that's what concerns him primarily. So I wonder how you see that shaping up for the bond market.
I think the research is still out as far as how a balance sheet and change and a Fed funds rate change will affect the long-term rate. I think Scott Bessent has more of an impact on the long-term rate than Warsh would, and so the deficit really is the key to the long-term rate. And I think the job of the Fed chair is to really communicate what it is that the Fed can do and what it cannot do. And I think he can say that withholding liquidity in the banking sector and lowering the Fed funds rate really influences the short to intermediate term rates much more. And any Operation Twist maneuver is going to be in cooperation with it's going to be a Treasury's job. And I think getting the long-term rate down, we have to look at fiscal policy and the federal deficit more than we should look at monetary policy and the Fed.
So on that front, Bill, talk to us about this U.S. deficit. I've been on Wall Street 40 years in one day today. It's been an issue for my entire career on Wall Street. How do you think about it? How does the bond market think about it?
I think the only way the bond market thinks about it right now, and throughout our careers, I think I've been on Wall Street roughly the same time as you have, although I've been looking at Wall Street from the Federal Reserve and I have longer. The dependence on foreign savings and foreign capital flows is really key to financing the deficit. I think it's almost hopeless to hope that American savings will be able to be high enough to finance our fiscal spending. And the key there is attracting foreign capital into the United States in a way that enhances growth rather than financing just the buying treasuries. So if we have foreigners coming in and investing in plants, semiconductor plants in Arizona and other forms of fixed investment, that's the source of high wage jobs, and that's the source of tax revenues that will be the best way of remedying our fiscal spending. It's not going to solve it, but the foreign savings will be the major part of the solution, and the foreign savings coming into the key sectors that drive high wage jobs is going to be the real source of the final solution, I think, to the deficit problem.
Bill, thanks so much. Appreciate it. Bill Lee, Chief Economist and Managing Director at Global Economic Advisors. I'm just looking at SpaceX here. Stock's trading down about 2.9%. So for the first down day since starting trading on Friday, keep an eye on that. But again, the market cap for SpaceX, $2.57 trillion. I think if you're Anthropic, if you're OpenAI, you feel like, all right, this IPO market's ready. I can come public.
Strike while the iron's hot, while things are looking good.
Yeah, absolutely. Maybe we'll get some fall listings here from some of those AI names. S&P 500 up 5, the Dow up 200, and the Nasdaq up 18 points. This is Bloomberg. Good morning.
Headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Alexis Christoforous, and this Bloomberg Business Flash is brought to you by IBKR. Trade election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Stocks have turned mixed here in recent trading. Oil is higher, though, as we count down to the Federal Reserve's first interest rate decision under new Fed Chair Kevin Warsh. The S&P 500 now down about 4 points. Dow Jones Industrial Average, though, in the green by 160 points. The NASDAQ Composite has reversed an earlier advance and is now down 34 points. We've got Brent crude at $80.20 a barrel, up 1.5%. WTI crude up nearly 2% at $77.50 the barrel. SpaceX is pairing some of its post-IPO rally. It's down about 3.5%. Still, Elon Musk's rocket company is up more than 50% since going public just last week. And shares of CarMax down more than 6% after sales at the used car retailer rose more than expected, but profits took a hit as those sales were propelled by price cuts. And Uber will offer driverless robo-taxi rides in Houston and vehicles developed by Lucid Group and Nuro. That service is expected to launch in the middle of next year. And that's your Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much, Alexis Christoforous, with our Bloomberg Business Flash. Markets are kind of unsettled. They're not doing a whole lot right now ahead of the Fed meeting. The decision comes out at 2 p.m. under new Fed Chair Kevin Warsh, and the news conference comes out at 2:30 p.m. And of course, we're still waiting details on that interim peace deal between the U.S. and Iran. No details whatsoever, but some kind of signing on Friday.
Yes.
That's still the expectation. Okay, so in light of all that, technology kind of remains the big thing that people look at in the equity market. And today, tech is higher, up 0.7%. Mandeep Singh is our global tech research head here at Bloomberg Intelligence. And Mandeep, there's a bunch of areas we can go to, but I want to pick up on what Alexis said with SpaceX being down for the first time since it went public. The stock lower by about 3.33% today. Talk a little bit about this Cursor deal, which they just announced, and we knew this was coming because they bought the right to buy the company before the IPO. Does this really change the trajectory in a way that makes people rethink what SpaceX is?
Yeah, I mean, the whole AI segment, I think, has really got a shot in terms of becoming a hyperscale-like player because of this Cursor acquisition. And right now, they're just renting the compute they have in their data centers to Anthropic and Google. But to my mind, Cursor gives them the potential to have a frontier LLM that can actually generate revenues like Anthropic and OpenAI are generating, by companies using their LLM. So Cursor was one of the biggest priced assets in the world of LLMs, and it's really focused on coding agent. And I think there was this notion that Cursor is a wrapper on frontier LLMs. That clearly is not the case. Cursor has frontier training capabilities. And with the CapEx that I think SpaceX is going to do, they will be very well spending like the other hyperscalers, $100 billion in CapEx in 2027. So that will be huge to ramp up Cursor.
SpaceX, 3 lines of business per their IPO prospectus. Connectivity. We spoke to John Butler about that. Space. We talked to George Ferguson of Bloomberg Intelligence about that. Are you the AI guy?
Well, I'm
You're the AI guy.
So AI everything guy.
I know. So what is there? Am I paying for AI now when I buy SpaceX? Is that what I'm paying this gajillion times sales multiple?
I think so. Especially the near-term growth will be all driven by AI. And right now it's AI compute rental, like the NeoClouds.
Okay.
But with the Cursor acquisition, they have the potential to actually play in that AI application domain, which is higher margins. And that's where the valuation could be justified if they are able to ramp up the Cursor side of the revenue.
Okay, so I suspect that this will be a moving target for a while to come, since SpaceX is, is Elon's vision of a vertically integrated everything in his brain company. Let's talk a little bit about OpenAI. We know that OpenAI, perhaps operationally not doing as well as it had intended. It didn't meet some internal targets. You recently published a note on OpenAI and the losses of about $34 billion, coupled with the lowering of its token pricing for its latest model, show that perhaps there are some growing pains here. Talk us through what you see.
Yeah, I mean, look, the competition has increased. Just 6 months back, you know, OpenAI was way ahead of everyone else. Now we are talking about how Anthropic is on the leaderboard, and that's what gives me hope that, you know, even SpaceX with their Cursor deal could leapfrog any of these models. So nothing is said in terms of the model race. This is not a one-player-take-all type of market, and things could change fairly quickly, what we have seen, you know, with Anthropic. And that's where OpenAI has sort of squandered their lead that they had over everyone else. And now they are lowering their token pricing to make sure they, you know, have continued adoption of their models. And that's never a good position to be in if you're lowering prices. So from that perspective, I do find them to be on the back foot. But look, things could change with the next model release. OpenAI can come up with a great model, and suddenly, because they have more compute than Anthropic and everyone else, we would be talking that OpenAI is back in that leaderboard. But right now, it clearly is Anthropic, and everyone else is playing catch up.
I mean, I'm just trying to catch up here. All right, on my little window here, in my AI window on my phone, I've got the app ChatGPT.
Yeah.
I got Gemini. I got Reddit in there because the kids are telling me I have to use Reddit. What else do I need in there?
Claude. I mean, we're talking about Anthropic. So
that's... All right, Anthropic is Claude. Claude is Anthropic.
Yeah.
What about DeepSeek? Should Paul have DeepSeek on there?
I mean, their usage seems to be growing at the enterprise level. In fact, there was some news that Microsoft may be supporting DeepSeek in their Azure cloud, despite all the pushback we hear about using Chinese LLMs. Yes, so you could see, and already in Europe, you can see DeepSeek usage is growing up. So from that perspective, don't count the Chinese models out, even though I wouldn't have thought, you know, they would do well here. But surprisingly, you're seeing enterprise interest, partly because of the token pricing and how expensive it is to deploy AI. And DeepSeek being an open weight model, a lot of enterprises are looking at using DeepSeek.
All right, I'm downloading Claude as we speak. What do you use? You're like the
I use everything. I use Cursor, I use Claude, I use...
Do I have to download Cursor now?
Cursor is more coding specific, so
Okay.
if you have ideas related to a coding agent,
I don't.
it's a fabulous tool, really. I mean, the thing that I find, you know, with these tools is Claude, for example, deprecated one of their older models. So they are making decisions on the fly, you know, in terms of what models to deprecate.
What's deprecate mean?
Like that model is not available anymore. What if if I have a preference for that model? It's not even available anymore. With Cursor, actually they solve for that problem that you can go across models, you can use an older model. So I feel that's a problem that Cursor has solved really well.
I bet Mandeep's prompts are a lot different than what you or I would put in the prompt.
Yes.
You know, Mandeep, you're probably putting in like paragraphs into your prompts.
I build a lot on my initial prompts, and that's why these tools are so engaging that, you know, once you start playing with them, it's like it brings more ideas in terms of what all you can do with these tools, and it's very iterative, at least for me. I'm not a single shot prompter where I'll have a 3-page prompt. No, I really build on stuff.
Do we use it in BI?
We do, yes. We do have access to a lot of these tools, and that's partly how we are looking to become more efficient in our workflows, and it's already helping.
I think I'm taking credit for just having downloaded some of these apps on my phone. I'm going to take that as a little victory.
Now you got to create a login.
All right.
You got to have an account.
Okay.
So it remembers who you are. You could tell them who you are,
nice.
and like
Is that
you know,
right?
explain your preferences. Don't flatter me. Don't praise me when I get
Really?
something wrong. Oh
It's
yeah.
personalized. Yeah.
ChatGPT like will compliment you when you ask a question. Like, no duh, it's a great question.
Okay. All right. I'm on it. I got a 2-hour train ride home today. I'll learn AI in 2 hours. Mandeep Singh, Global Head of Tech Research for Bloomberg Intelligence. I think he knows what he's talking about. It sounds like he knows what he's talking about, but we keep going back to him because he's the smartest guy in this building about all that tech stuff. We'll have more coming up. I got the S&P down 6, the Dow up 125, and the NASDAQ down 60. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Right now, we're going to go to Antonio Neri, HPE CEO, on the latest company news from HPE. Let's listen in. There we go. Very good. Antonio Neri joins us here, CEO of HPE. Antonio, thanks so much for joining us here. Talk to us about what are the key issues for you guys going forward here. This AI story is a story that's playing out across the tech stack.
Well, good morning, Paul. Thanks for having me. Yes, of course, today the narrative is all around the AI and the ability to use AI to change the world. And so for us, as a technology company, is how we accelerate the deployment of AI in the enterprise. And today we talked about the evolution of just large language models into agentic models, which allows to increase productivity across the entire enterprise, across processes and functions. And so we have made a series of announcements here, which brings together the infrastructure, the software, and the cloud experience into one integrated, unified operating model, including governance and compliance, so that build the trust within the enterprise to go forward.
And how does this change your growth trajectory? going forward? I know that, 1 year out might look very different from 5 years out versus 10 years out. Just walk us through how you see this changing what you had anticipated to what you now think you can achieve.
Yeah, Scarlett, so if you go back and read our earnings in Q2, we grew the company as a whole 40% year-over-year on revenues, and we expanded margins because of the content that we bring into that revenue now has a bigger mix of networking, software, and cloud services. And in that context, we believe networking is going to be the thesis of our company. If you think about developing these frontier models, whether proprietary or open source models, you need a lot of GPU power, but that GPU needs to be very productive. You don't want to keep it idle. And the bottleneck of that is networking. And so we have now, with the acquisition of Juniper, an amazing portfolio in the 3 key elements: scale up, scale out, and scale across, which position us to be a core element of that infrastructure build out. So this is why we believe the company is going to grow double digits going forward and will continue to expand operating margins. And that will translate in free cash flow. So we already guided, which is unlikely, and in many cases, for 6 quarters ahead. So think about it, because of the confidence we have in our growth trajectory.
Antonio, where do you think this technology, this AI technology story is? I mean, a lot of folks are saying we're still in the very, very early innings, but you just think about the amount of CapEx that is being spent by a variety of players within the Substack. It's just extraordinary. Where do you think we are in that compendium there of AI investment?
I concur with that. We're still early. And Paul, what you have to understand, there is 3 customer segments you have to look into it. Number 1 is the model builders, and the hyperscalers and the neocloud. We're building large amount of compute capacity. We believe by the end of the decade, we're going to build 250 gigawatt of power that will host these GPUs. And that's the capacity you're talking about it. But then ultimately, what is the mix of that capacity? It's going to be shifting from training models to inferencing models. And that's where we're going to see the large adoption of AI into the enterprise to drive that productivity. But if you put it in context of industrial revolutions in the past, this actually is very small compared to that spend that was done, in every inflection point, including the turn of the past century. So yes, I understand the concern about the amount of CapEx, but when you put it in context of changing the way we work, the change in our society, we're still small relative to that.
Just looking at how you might be deploying cash, I know that you tapped the debt market in March to refinance some upcoming maturities. You've got strong liquidity with cash and equivalents of more than $5 billion at the end of the second quarter. What might prompt you to go to the debt market again to raise more money?
Well, we do that very regularly because, remember, inside HPE, we have an operating company. Obviously, we are paying down the debt and refinancing where we need to. And that's the operating balance sheet you're referring to. So our balance sheet is super, super strong. And then we have the financing company, which has $13 billion under asset management. Think about the financing we do for customers. And we do it also as a part of the asset lifecycle management services. And basically, we have debt securitized against those assets, but the return on equity on that is super high, super, super high. So we use those vehicles when it's necessary. But what we announced just at the beginning of this month in our earnings is that we're going to pay down that debt much faster. In fact, we expect to return to 2 times leverage by the end of this fiscal year, which is 1 year ahead of plan. And we're going to start returning 75% approximately of our free cash flow in 2027 to shareholders, which we expect to generate at least $4.5 billion in dividends and share buybacks. That's how we're going to return it. So we are very strong. And that goes back to the question you asked me before, where it comes from, the growth and the operating margins.
Antonio, thank you so much for joining us. We really appreciate getting some of your time. Antonio Neri, he's the president and CEO of Hewlett-Packard Enterprises. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Happy Fed Day, everyone. This is Bloomberg Intelligence. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. Paul Sweeney, Scarlett Fu, and Charlie Pellet here with you for the hour. Of course, we are awaiting President Trump to speak. He will be holding a news conference from France, where he is attending the G7 leaders meeting right before he and or the U.S. and Iran are set to sign some kind of interim peace deal on Friday. Markets are mixed right now. The S&P and NASDAQ are lower. The Dow and the Russell 2000 are higher. We're going to check in with Mike McGlone, our senior commodity strategist, on where oil stands. Right now, today, it is higher by 2% for both Brent and WTI. Michael Dean, our head of global autos, will join us to talk about BMW. It's forecasting margins as low as 1%, and the stock is tumbling in Europe. We're also going to check in with Poonam Goyal. She is our senior U.S. e-commerce and retail analyst here on the latest snapshot of retail, especially as people question whether the consumer can continue to spend with prices elevated. And Steve Mann will be joining us to talk about some other car news, including the CarMax latest results and Carvana's new car push and how that's going to shake up and disrupt traditional dealerships. All that to come in the next hour. But first, let's go over to Charlie Pellet for our Bloomberg Business Flash.
Hi, thank you very much, Scarlett and Paul. Got to ask Mike McGlone about that stockpiles report that we got last hour. Oil stockpiles plunged to a critical low at a key U.S. storage hub. That would be Cushing, Oklahoma. We're seeing oil rallying right now. We got West Texas Intermediate crude up 2.1%, 77.68 a barrel. Brent back above 80, 80.46 right now, trading higher by 1.9%. The Strategic Petroleum Reserve dropping to a near record low of roughly 340 million barrels, the lowest level since 1983. Mixed market right now with the S&P 500 index down 9, 75.01, drop there of 0.1%. Dow Industrials up 119 on the Dow, gain right now of just about 0.2%. NASDAQ down 65. The NASDAQ Composite Index down 0.2%, but the NASDAQ 100 Index, full of big tech names, up now by 0.3%. All of this with the VIX below 17 now, a 10-year at 4.43%, the 2-year 4.07%, and the 30-year at 4.92%. Gold up $13 the ounce to $43.44, up 0.3%. And again, WTI up 2.1%, 77.60 for a barrel of West Texas Intermediate crude. Just hours away from the latest Fed decision, equities churning. The big event, though, will be Fed Chair Kevin Warsh's news conference, his first 2:30 p.m. Wall Street time. Yeah, we'll have it for you live here on Bloomberg. As for what we will likely hear from Warsh, Bill Lee is chief economist at Global Economic Advisors, and he was a guest last hour right here on Bloomberg Intelligence.
I think what we're expecting to hear from him is to say the data are showing things that the headlines are not capturing. The very strong employment report that everybody's making a big stink over, well, a lot of that was World Cup hiring and unsustainable state and local hiring.
Bill Lee of Global Economic Advisors interviewed right here on Bloomberg Intelligence. You can hear more of that conversation on the Intelligence podcast, and you can download it wherever you get your podcasts. Day 4 of trading for SpaceX. Company has rallied roughly 49% since going public, overtaking Amazon. Today, we're seeing shares of SpaceX retreat now by 5.1%. Right now, SpaceX is at 191.35. Recapping Fed Wednesday, the 10-year 4.43%. Oil pushes higher, up 2%, and the S&P 500 index down by 0.1%. I'm Charlie Pellet and Scarlett and Paul. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. So Charlie's just reporting. We got kind of red and green on the screen out there today. Let's take a look at some of the stocks on the move today. We can do that with Christine Aquino. She's a managing editor, markets today for Bloomberg News. Christine, what are you looking at today?
All right. We got to take a look, of course, at SpaceX here. I mean, Charlie mentioned it, right? We're seeing a little bit of a decline now. So ticker SPCX, those shares are now down more than 4% at the moment. So we're seeing a little bit of that kind of getting back to normal after the sky high, very hot debut last week. But still, as we know from yesterday, SpaceX did become the 5th largest stock in the world, overtaking Amazon and briefly even topping Microsoft. And, you know, retail activity still remains strong. Some data from Vanda Research showing that retail investors each day since the SpaceX IPO have been buying. And at the same time, apparently, we've been seeing a little bit of Tesla shares being sold. So a little bit of a rotation within the Elon Musk complex there.
Yeah, and we had anticipated that there would be some kind of movement like that because people wanted to make room in their portfolios. All right, next up on your list, a company based in Chicago.
Absolutely, Scarlett. We're talking about CME, of course, a leadership change over there. So CEO Terry Duffy will step down on March 1st. That's going to be next year, and transition to executive chairman. And filling his shoes is going to be Lynn Fitzpatrick. So CME under Duffy's reign has grown to more than $90 billion in terms of market cap since it went public in 2002. And of course, Duffy led a company through a series of shifts and deals, including a 2021 deal with Google to help the derivatives exchange operator with its technology needs. I was in Chicago, actually, over the weekend.
Really?
Great weather. Not sure about the pizza.
I like
sure
the deep
about
dish.
the pizza.
I like the deep dish.
Oh,
I mean, it's different, but it's got its charm.
it's not
I
really
like it.
pizza. It's something else.
It's
Yeah.
like
What's like Sicilian here?
cake with pizza.
It's like a quiche with sauce.
Yeah, it's good though. All right, Coinbase, one more.
All right, let's talk about Coinbase today. So not much movement actually there. Ticker COIN. Those shares are up now just 0.2%, but we did see some pre-market declines after the company announced that it redesigned its base app and introducing new products like an AI-powered advisor, private transactions, pre-IPO perpetual futures, options trading, and tokenized stocks. That is a lot, and analysts are receiving it as a mixed bag. Piper Sandler's Patrick Moley noting that, you know, they've announced a lot of new products, but there's a lot of pressure as well for them to monetize these new offerings. And of course, it doesn't help. Bitcoin still very much under pressure and has yet to recover to that 70,000 handle that we saw over April and May.
Yeah, we're keeping a close eye on that because that was fascinating, the drop in Bitcoin over the last few weeks, and now since then the recovery. Christine, thank you so much. Christine Aquino is managing editor for MLive Go on the Bloomberg. It's our Markets Live blog, and you can check it out on the terminal by typing MLIV Go. All right, oil prices are on the rise today, up about 2% or so. WTI trading just under $78 a barrel, and Brent is back at the $80 a barrel level. Let's bring in our Mike McGlone. He is our senior commodity strategist joining us from Miami. Mike, I know that everyone's waiting for the actual signing of this interim peace deal and the supposed full reopening of the Strait of Hormuz. What do we know so far about what is actually getting through the Strait of Hormuz?
Well, that's less significant. And we've heard things that Mr. Trump has said, Scarlett, but you look at the prices, and there's obviously stuff getting into the market. Inventories obviously are a little bit low, but the bigger picture is the bottom line. We're all learning the number one thing that matters for crude oil is the leader of the world's largest energy producer and a net exporter needs prices lower, and he will get prices lower. So let's look at the macro big picture in terms of what crude oil has done. It's gone right back to kind of the apex of the bell curve of trading for the last 20 years. It got near the upper end of the range. All that's going to do is bring on that more supply from the U.S., which has been the incremental supplier, U.S. and Canada. And it's going to head towards the lower end of the range, which I think is towards $40 to $50 a barrel. It's not profound saying that. It always does, particularly if you get a little backup in the stock market for midterm election years. But for what's happening right now, it's kind of getting to the summer doldrums. And the key thing is it's going to take something unusual to get back there near 100, and just normal cycles gets it back towards 50.
Hey, Mike, how do the traders in the pits look at this Cushing, Oklahoma stockpile data? Stockpiles declined for the 8th straight week, taking inventories to just above 20 million barrels. That's the lowest since October 2014. How do traders look at that data?
they look at like for a few minutes, Paul, and they go back to that's when something that used to matter when WTI crude oil is synonymous with being landlocked crude, but that was 10 years ago. And now we're the largest energy exporter on the planet, and a lot of that all goes down to the Gulf and gets exported out. So you don't want it in Cushing anymore; it's a waste there. That's where it used to be. So that's why it's changed. And also one thing I really enjoy, Paul, is when people talk about the Strategic Petroleum Reserve dropping to multi-year lows. We don't need the Strategic Petroleum Reserve anymore. It was set up in 1974 by President Ford to cover 90 days of net imports. With Canada and U.S. crude oil and liquid fuel surplus is running around 8 million barrels a day. So you need it for things like wars and hurricanes, but it's like saying Saudi Arabia needs an SPR. Now China does, and they've been liquidating some of their SPR, but it's massive, and they're some of the best commodity traders on the planet. And just remember, they only buy low and sell high.
If I go to Cushing, Oklahoma, can I see this stuff? Can I see like all the reserves and stuff?
Oh, sure. There's massive tanks, but I usually just see the pipes. I mean, I just read about it, So to me, it's one of those things that used to matter, and that's how life has changed. The crude oil market's completely different now. It's also when we were kids, we had U.S. was a net importer. Now we're one of the biggest exporters on the planet. And look at natural gas, the largest exporter of LNG on the planet. To me, that's your guidance of where crude oil is going. Natural gas was up 100% in January, and now it's down 15%. By the end of the year, I fully expect crude oil is going to drop another $20 from where we are now and be down in the year.
Cushing, Oklahoma, you go to eat, get some good biscuits and gravy. The Broke Cowboy.
Oh, I love that name.
I'm just looking at that right now.
All right. Maybe Mike McGlone has been there. I'm so glad you brought up natural gas because there's nat gas in the U.S. and we know that that's plentiful here in the United States. And then there's nat gas futures in Europe. And when I look at a one-year chart, it's really noticeable the spike up at the end of February, early March because of the start of the Iran war. It peaked at above 61 in March, mid-March or so, and has since come back to about $41. How do you see that shaking out once the Strait of Hormuz is open? Is there a technical factor behind this, or is this a case of it's just going to stay higher for longer?
It's unlikely to stay higher for longer because of elasticity forces. Natural gas in Europe is still somewhat pumped by what's happening in the war in Ukraine, Scarlett. But also, right now, you see 41 from TTF natural gas. Now, that's going to be higher as we get to December and January to the winter months, and then it's going to right back down. So I look at natural gas, it's probably much peaked. The front contract will probably go up for a little while and head lower. It's just opening up the strait, if this agreement is true, I fully expect elasticity kick in, and that's the key thing to remember about most notably from the U.S. natural gas and crude oil and corn and soybeans and wheat. They don't stay up very long. They go down because they went up, and natural gas is still up.
Mike McGlone, thanks so much. Appreciate that. As always, he's our commodity strategist for Bloomberg Intelligence. We'll do pork bellies next time. BMW in the news. Yesterday it started because Matt Miller sent me a picture of his new BMW that he just acquired, which is like just a monster.
Our news, that's when it started.
That's how it started with Matt Miller getting his new, M7 or something. It's got 12 horse. I don't know what it's going on, but it's a big one, and I'm sure it's all just awesome. But then BMW said its profit margin could dwindle to as low as 1% this year due to weakening Chinese demand and fallout from the Middle East conflict. We want to get some more on that. Michael Dean, head of global auto research for Bloomberg Intelligence, joins us here. Michael, what's going on with BMW?
Yes, it was a big downgrade yesterday. So, China is about 25% of their sales annually. And we've been seeing in previous months that sales have been weak. But I think they got to the point where they don't see it recover in the second half of this year. And hence they've taken, a massive cut to their margin expectations.
Does that mean that they're going to have trouble selling cars at full price? They might need to discount or look to, package it a little bit differently?
Well, China's been a really difficult market for the German brands over the past few years. Just take the example of Porsche. Porsche's sales have dropped by 70% since 2021. BMW and Mercedes have had similar issues. Their sales are down by about 20-25% over the past couple of years. They're facing heavy discounting from competitors. So that was weighing them anyway. And now the market itself is falling quite significantly. So it was down in 20% in the first 5 months of this year. And given we don't see a recovery in the second half, that's also impacting the German automakers and BMW specifically.
So if I'm a global automaker in Germany, in the U.S., Japan, how do I view the Chinese market here today? I mean, it seems like I'm hearing a lot of bad news from a competitive standpoint in that market, just generally.
Yeah, I mean, domestic players are making some really good cars. Xiaomi is a key competitor now to BMW and Mercedes. And because the local cars are so good and because they're priced so competitively, it's pushing the foreign automakers out. As I mentioned, Porsche's already taken a big hit on their volumes in China. That could also happen to the other German automakers and other foreign automakers.
What does this mean for BMW's approach to electrification?
I don't think it changes their approach. So the Chinese market is now 40% fully electric. It's probably about 60% if you include EVs. They've got a wave of new models coming out using their newer Classer platform. So they were hoping to make inroads into the electrification in China, but they're going to find it very difficult if that market is weakening and prices continue to go down.
All right, let's get to it, Michael. I need your review of the BMW M70 that I think Mr. Matt Miller just acquired. Good car?
Very good car. So Matt was talking to me about it. I think it has a double crank. So he was very impressed with that. Yeah, the new AMGs that are coming out, awesome cars. Just hopefully they'll be able to sell a few in China as well.
Okay, double crank, I don't know what that means.
No, I don't know. But it's a naturally aspirated 5.0 liter SOHC, and I have no idea what that means. V12 engine. So it's a big one, I think.
It's a gas guzzler. Yes. Does Matt drive automatic or standard?
Yeah, they don't make sticks anymore. I used to have the BMW manual transmission until they stopped making it in 2016 or 2017. And Michael Dean could not fix that problem for me. I sent him on a mission to Germany.
I did try. So very few automakers now have stick shifts. You can get a few in Porsche 911s as a stick shift, but it's very, very rare to see that across the car makers now, unfortunately.
Even in Europe?
Yeah, sure.
Oh,
really?
Yeah, it's terrible. It's a terrible thing. Michael Dean.
And with hybrids, because they need an automatic transmission, that also takes away the need for a stick shift.
So there's no standard hybrid vehicle ever. You're not going to have a stick shift hybrid. That's not technologically possible.
Exactly. Yes, that's correct.
It's a sad day in the world of automobiles. Michael Dean, head of global autos for Bloomberg Intelligence. Yeah, I had the 5 Series for Bloomberg for like at BMW for like 25 years. And then it was like 2016, 2017, my salesperson said, I got bad news for you. They don't make them anymore. So I kind of stuck with mine for longer than I usually do.
I'm like in a different car universe than you. I rented a car the other day, and it was a Kia Niro hybrid.
How was that?
Not bad, actually. And I drove about 100 miles, and I only had to fuel up before I returned the car, and it cost me about $4 something. I mean, I was in Alabama, so the gas prices were low, but I was like, I could do this.
No,
I could
you're
get this
exactly
kind of
right.
car.
Yeah, my number 4 offspring, we brought him a hybrid because he's out there in California.
And he's loving it for it, yeah.
Yeah, so it's just a
huge difference.
I think that's kind of where the industry might be going a little bit here, at least in the near term. S&P 500 down 3 points, the Dow up 110, the NASDAQ down 45 points. Gold, I'm going to call that out. It's up a couple of bucks here, $4,350, and Bitcoin down 1%, $65,000 for Tom Keen's Bitcoin. This is Bloomberg.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is the Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg Fed Wednesday. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. We have got the Dow higher, S&P, NASDAQ both declining. All of this ahead of a Fed decision, 2 o'clock Wall Street time. And Kevin Warsh's first news conference, 2:30 p.m. Wall Street time. Traders are waiting to see whether Warsh will validate bets on future rate hikes or lean against them. S&P lower, little change right now, down 3, drop there of under 0.1%. The Dow up 153, higher by 0.3%. NASDAQ down 53, a drop there of 0.2%. But interestingly, the NASDAQ 100 index, full of big tech names, up now by 0.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, rebounding from yesterday's decline, up now by 3.1%. All of this with a VIX just below 17 and a 10-year at 4.42%. The 2-year 4.06%. Day 4 of trading for SpaceX. Shares are lower. SpaceX declining right now by 5.9%. Retail sales jumped in May in a broad-based advance, signaling resilient consumer demand despite higher gasoline prices among selected retailers. Amazon down 2.2%, Walmart down 1.4%, Target lower now by 1.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Appreciate that. Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker studio and streaming live on YouTube as well. Scarlett, I think we've become a little bit numb to these monster numbers being thrown around about AI spending here, investments there.
Hundreds of billions of dollars from one company, hundreds of billions from another.
Exactly. Well, the retail analysts out there, they're not afraid. They're throwing their hat in the ring. Here's this from Bloomberg Intelligence. AI agents, marketplaces to push digital retail to $2.6 trillion by 2030. That gets your attention. Poonam Goyal, she's the senior U.S. e-commerce and retail analyst for Bloomberg Intelligence. Poonam, you're to blame for this. Talk to us about $2.6 billion. That seems like a big number.
2.6 trillion is a big number. But, that's coming off of $2 trillion expected next year. So what you're looking at is a high single-digit, double-digit gain across e-commerce for the next few years. And that's not really that big, right, when you think about it. These companies within this ecosystem have been posting double-digit, high single-digit gains for quite some time. And we're just thinking that that trend continues, largely led by AI. We think AI will be a key driver to not only driving more eyeballs into the e-commerce platform, but also to drive higher conversion.
Higher conversion and higher sales overall, but one thing that AI, people are looking for AI to do is solve some existing problems, and that includes a lot of product returns. People are returning products for different reasons. When you buy online, you buy 5 different sizes and see which one fits and return the rest. And also people are losing weight from GLP-1 drugs, and so they don't actually have a good sense of where they are. How will AI fix that problem?
So there's a lot of things that are happening in the industry when it comes to how to solve the return problem. We don't think it's ever going to be entirely solved, but definitely, you would want to see lower return rates. For online, the return rates are double that of stores. And what we see right now happening is, when you go onto a retailer's website, they have recommended sizes. So they can tell you, based on your purchasing patterns, here's what we recommend. There's also AI design sort of images where you can upload a photo of yourself and it could tell you what fits you best. Not all companies have this, not everyone can do this, but it is in progress, and we expect to see more on the fit side to help avoid what you just said. I need 5 sizes because I don't know what will fit me. That's one of the biggest areas where we do see some friction when it comes to returns online, especially in the apparel category.
So do we have an idea who's doing this stuff well? Because AI seems like any technology, some companies are going to embrace it and figure out how to use it better than others. I'm guessing it's kind of expensive too. Some I could see the bigger companies maybe being a little bit ahead. How are you kind of measuring how the companies are doing themselves?
So the thing is, it's not a perfect solution, right? So companies are testing it and trying it, including even Amazon, but it all depends on how good your image is that you uploaded. It depends on the data that you feed into the system to get the right output. So there is one area where we saw where you basically say, I know that I fit into a size X at this brand. And different brands have different sizing parameters. You could be a 4 somewhere, but you could be a 6 somewhere else, or a 2, depending on how they cut their fabric. And what it does, it says, okay, if you know for sure that you're a size X in this brand, here's what size you would be in other brands.
Yeah, that's been one of the longtime frustrations as a woman, to have different brands have different sizing, and you just have to try everything on constantly. Poonam, to Paul's point about how this can be expensive to incorporate, are privately backed companies more likely to incorporate AI than, say, publicly traded companies? Because if you are backed by a sponsor and they're going to spend this kind of money on AI, they can kind of distribute it across all their partner companies.
Yeah, so what's nice about the investments in AI is you don't have to build it, right? So I think what you're going to see is startups and private companies actually launch these tools that can be shared across the domain. And that's what we're going to see more of. It's just, how do you share technology? Now, the bigger retailers like an Amazon and a Walmart can, of course, afford to build them. But we do see technologies being shared as we move into the next era of AI.
So is this going to increase the top line for some of these retailers, do you think, Poonam, or is it just going to change the way people shop and maybe it'll have an impact on their margins? How do you think about it from a P&L perspective?
Yeah, so I think, when you think about the online space, online is structurally gaining share from the brick and mortars. Today, it's about 26% of retail sales. It will go to 31% based on our estimate, and even higher as you move forward. Some categories lean more aggressively into e-commerce, like electronics, because it is commoditized to some extent, and others don't, like autos. What I would say is, we think that not only will the consumer get smarter, but the retailer will get smarter in how to target the consumer. So what will increase is the conversion online, because you won't have as many friction points that you've had in the past, whether that's agent-led shopping. If you look at the Amazon for Shopping that they just launched, which used to be called Rufus, and we talked about this yesterday, where you can go to a search bar and now you can engage in a conversation to help find the right answer for your choice. And that's going to boost conversion too.
Power washer. That's how I found my power washer. Poonam Goyal, thank you so much. Appreciate that. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst. See, I'm using AI in my daily life.
You could have just borrowed it from John Tucker.
I know. I could have.
He's got like 5 in his garage.
Exactly right. We got a Fed meeting today, and the Fed decides on Bloomberg Radio and Television. Starts at 1:30 p.m. Wall Street time. That's you.
Yes, Lisa Bromwitz and me, because I'm filling in for Tom Keene.
Gotcha.
So yeah, it takes a village.
Yep, there you go. So that's there. And 2 o'clock we'll get the statement from the Fed, and then 2:30 the press conference. Michael McKee from Bloomberg Economics, he'll be there as well. Let's check in with Stuart Paul. He does this economic stuff for Bloomberg Economics. Stuart, what are you going to be looking for today? What do you think the market's going to be looking for? Because this is the first meeting for a new Fed chair.
That's right. So I think that expectations are that there's going to be a substantial rewriting of the FOMC statement. Of course, there is a very minor phrase used in the prior FOMC statement that was interpreted as a dovish bias. And the phrase was the committee would be basically looking to decide on how much additional adjustment would be needed in the policy rate. That idea of additional adjustments was interpreted as the next step being another cut. That's definitely going to be removed. I expect that there's going to be a lot of red ink spilled, completely rewriting the statement so that almost everything is more neutral. I think that there's going to be a lot less that backward looking and even considerations of current economic conditions, and more that's just a consideration of how the FOMC is thinking about economic developments more so than any sort of set of expectations. And when we get that rewriting, it's going to open the door for a line of questioning about what Chairman Warsh wants to see as institutional changes at the Fed, including just a complete overhaul of communications policy.
So it's going to be less about where he sees policy headed in the near term, because there's a lot of question marks over the economy, inflation, employment, and more about what he's going to be relying on as gauges for determining that?
That's what I expect, because it's very simple to start saying, look, energy prices have come down during the intermeeting period, and so We expect inflation to move in line with that retreat in the headline figures, but the extent to which that matters and the extent to which that can be sustained through time depends on the outlook for the war and whether the memorandum of understanding is all finalized, whether a ceasefire remains in place. And I don't think that he's going to view that as something that's reasonable or responsible for the FOMC chair to be commenting on or relying on in developing forecasts. I think that instead he's going to be focused on financial conditions, availability of liquidity, and the things that are downstream of Fed policy more directly.
Within the greater Fed community, how is Kevin Warsh kind of viewed?
He's viewed as hawkish. He always has been viewed as hawkish. I feel like I've been, commenting on Kevin Warsh for a decade now because he's been, even more than that, because he's been the perennial candidate offered by Republicans as a potential Republican chairman. And so he's always been seen as rather hawkish. I still go back to his testimony before the Senate Banking Committee during his confirmation hearing. And he had one line that I think stands out, which is that inflation is a choice. And in an era when headline inflation is being driven by supply side shocks, whether it's lack of availability of chips, whether it's energy shocks, whether it's food prices, it is extraordinarily hawkish for a potential Fed chairman to say that inflation is a choice. It is to say that the Fed is charged with adjusting aggregate demand in the economy. And when you see hot headline inflation, regardless of whether it's driven by cost push factors, it is the Fed's obligation, in essence, to lean against demand, to rein in inflation. So I think that that was the big tell. And I think that he's both, I think that he is and he should be viewed as one of the more hawkish members if he has the backbone to stand up to political pressure.
Okay, so that's a big if. And I guess what I've heard from a lot of people is, let's face it, why are we overthinking this? The president made him Fed chair. And he knows what the president wants, so he's going to deliver. He's going to perform and deliver a rate cut or lower rates or a move in that direction. Do you believe there's any credence to that idea that Kevin Warsh needs to do something to soothe President Trump?
I think there are two big impediments to that. I think that the first is that it would be exceptionally difficult for him to build a coalition on the FOMC to deliver a cut, and I think that the bond market is the second factor that's standing in his way. If he were to somehow build a coalition that could deliver a cut at any point in the immediate future, or in the foreseeable future, really, I think that the sell-off at the back end would be dramatic enough to catch his attention. And he knows it. He's smart enough to know that. Bessent at Treasury is smart enough to know it. And you can bet that both of them are clear enough with the president to set that expectation, which is why I expect even President Trump to back off on calling for rate cuts.
All right, Stuart, thank you so much. Appreciate that. Stuart Paul, U.S. economist with Bloomberg Economics. Coming up, we're going to check in with Danielle DiMartino Booth, CEO and Chief Strategist at QI Research, one of our go-to voices on the Fed. She's formerly served at the Dallas Fed, so she knows a thing, too. That's coming up.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index back in the green. Higher by 6 right now, 75.17 Fed Wednesday, looking at an advance on the S&P of just about 0.1%. The Dow, a record there, 52,243, up 244 points now. That is a gain of just about 0.5%. NASDAQ, though, in the red. NASDAQ lower, little change, down 15 points right now. A drop there of under 0.1%. But the NASDAQ 100 index is up 130 points for the NASDAQ 100 index, a gain there of 0.4%. All of this with the VIX just below 17. Right now, the SOX is up 3.2%, was down 5% yesterday. Your 10-year, 4.43%, with the 2-year, 4.07%, and the 30-year, 4.92%. We've got spot gold higher now by $26 the ounce, up 0.6%, 43.57. West Texas Intermediate crude back above 77, up 1.3%. Brent crude below 80, 79.97, up by 1.3%. Amanda Agati is Chief Investment Officer at PNC Bank, and on surveillance this morning, she told us Wall Street's focus is now shifting away from geopolitics.
I think we're finally seeing, a bit of a reprieve on that front. And I think it just lets the market kind of run from here and focus really on the ultimate things that matter the most, which are the fundamentals. And I've been saying for a while now, if we can get the geopolitical purple haze, as it were, to fade or lift a bit, the fundamentals are really resilient and strong. And so I think that sets the stage for a pretty strong second half.
PNC's Amanda Agati interviewed this morning on surveillance. And by the way, you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcast. Day 4 of trading for SpaceX. Shares are lower. SpaceX down today by 3.7%. CME Group CEO Terry Duffy is stepping down from that role early next year after more than 2 decades leading the derivatives exchange. Shares of CME Group, they're down now by 4.7%. Again, recapping, S&P 500 index holding on to a gain now of 3 points, up under 0.1%. The 10-year, 4.43%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, thank you so much, Charlie. Charlie Pellet with our Bloomberg Business Flash, and he gave us a setup here as we head into the first Fed chair meeting under the new Fed chair, Kevin Warsh. Always described as a long-term hawk, especially when he was on the Fed board during and after the financial crisis. We're going to get to hear from him for the first time since his confirmation hearing. Right now joining us is Danielle DiMartino Booth. She is CEO and Chief Strategist at QI Research. We also know her from her time spent at the Dallas Fed. And Danielle, the question here is really about communication rather than a decision, because the decision will most certainly be no change in the interest rate. But whatever Kevin Warsh says is going to be subject to a lot of interpretation and dissection. How confident are you that he will be speaking on behalf of the committee?
Well, that's the key question, especially if the dot plot ends up with one missing dot, i.e. his. I think that it behooves him to speak for the committee, even if he's going to be, half as succinct or more succinct than Powell's been, even if he's going to cut the press conference short. We'll have to wait and see. But right now, I think that given Warsh has not made any major changes of the Fed staff at the Federal Reserve Board in Washington, I think his main goal right now is to build a coalition to cement his leadership, leading this group of 18 Federal Reserve District presidents and the other members of the board. So I think he will try his very best to speak for the entire committee.
He's also speaking to arguably a broad audience of the marketplace, but he's also got an audience of one in President Trump here. How do you think he kind of deals with that?
Well, it's I think the most interesting facet of Trump thus far when it comes to his appointee is that he's been so quiet. We will have to wait and see because, again, has got conflicting aims right now. If he's looking to speak for the committee, as we just spoke about, he might end up really angering the president if he says, we don't know until the ink is dry what the long-term effects of oil pass-through inflation is going to be, as opposed to saying, I think inflation is going to drop like a rock, which nobody's expecting. It'll be interesting to see if he angers the president, if the president is up late in Europe sending out posts.
Yeah, angry posts.
Angry posts.
I wonder to what extent Treasury Secretary Scott Bessent may have smoothed the way for Kevin Warsh, kind of making public comments about how it would be difficult to lower rates right now, given inflation, given oil, given the war. And I know that things have changed in the landscape of what's happened with the war, but did that buy Kevin Warsh some time?
Oh, I think it certainly has. And we shouldn't look past the fact that Treasury Secretary Scott Bessent is with Trump right now in Europe, and maybe that calming influence that you describe. Again, for me, it's a matter of how he's going to talk about communications today. If you pull up on the Bloomberg terminal, upcoming Fed speak, there are very few announced speakers between now and 3 weeks from now when the minutes are released. But I'd be interested to see what he says about communication, what he says about how they're going to be. I hope one of the reporters asks him, how are you going to be looking at new data sets? Are you going to be considering new data sets that the Fed was forced to follow when the U.S. government shut down? So I'm, my fingers are crossed, which is not a strategy, for a breath of fresh air from Warsh, and I hope we get one.
This is his first meeting, Danielle, but he's been in the office here for, some time. Has he changed personnel? Has he cleaned house? Has he put his, put some new personnel in there?
That is, to me, the most surprising and unspoken aspect of Warsh, is that he really has not made any large changes to the Fed staff. And the Fed staff, they're extremely powerful. They're the most powerful entity within the institution, because as far as they're concerned, there's a revolving door of district presidents and members of the board, but they are a permanent. They're a permanent aspect, and they control the narrative in terms of what economic data are debated or not debated. He has to get through them if he wants to have the way he looks age-wise match some of the ways that they start to look at and interpret forward-looking data, as opposed to data that is looking squarely into the rearview mirror, which really has it's hurt the Fed in recent years. It's hurt the credibility of Fed leaders in recent years, that they are making policy through a rearview mirror.
Well said. I had a recent conversation with Rick Reeder of BlackRock, who is, of course, global CIO of their fixed income business. And what he said was that you want to over-communicate when you're tightening policy. You want to get the market ready for that. But when you're loosening policy, you want to surprise. You don't want to use up all your dry powder and telegraph that too much. It's more effective that way. What's your thought on that?
Well, I certainly understand where Mr. Reeder's coming from, because hikes are the things that disrupt markets. Easing are the things that make markets giddy and happy. But I agree. I agree that there needs to be much less in the way of forward guidance, that if they do indeed remove the easing language, and I don't think that he would have survived the meeting yesterday and today without removing that easing language from the statement, then he has de facto said, we're going to wait and see how the data play out in the next few months before making any kind of an indication, if at all. Again, he is looking to, from what we know and from what the comments he's made publicly, he's looking to severely ratchet back the forward guidance that is provided through Fed speak. And I'm right there with him. I'm on Team Warsh when it comes to making sure that there are fewer outside appearances, because it's become such a source of distortion and confusion for the markets.
Danielle, thanks so much. We appreciate your time, as always, when we're talking about the Federal Reserve. Danielle DiMartino-Booth, CEO and Chief Strategist at QI Research. Prior to QI Research, Danielle she spent 9 years at the Federal Reserve Bank of Dallas, so she knows what she's talking about in terms of the inner workings of this Fed. Again, the schedule today for the Fed decides 1:30 p.m. Wall Street time. Scarlett Fu, Lisa Bromwitz, 1:30 Wall Street time, Bloomberg Radio and Television. Then we'll get the statement at 2 p.m. and then the press conference at 2:30 maybe.
And it depends on how long he goes for. I mean, typically Jay Powell went on for about an hour and change.
Yep.
We'll see if Kevin Warsh sticks with that.
Absolutely. We'll see about that. Michael McKee, he is down in D.C. He will pepper this new Fed chair with some questions, no doubt. S&P 500 up 6, the Dow up 250, the NASDAQ unchanged. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. Streaming live at Bloomberg.com/video. That's where you'll find our stuff here today. Looking at SpaceX, stock's actually trading down by about 4% here today with a market cap of $2.55 trillion. Carmen Reinke joins us here, equities reporter. She's been following this IPO. So, Carmen, it got a little bit of a breather here for the stock, which has traded up really strongly since its IPO.
I know, down 4%. I mean, we're off the lows of the day, but yeah, seeing some selling pressure here. I mean, we've talked about this before. Float is so low here, you know, less than 5% of shares outstanding available.
But it's still $75 billion of float.
It's a lot of float.
There's a lot of stock out there.
That's true.
That's the way I look at it.
Smaller floats can lead to sort of exaggerated moves in either direction. So that could be what we're seeing today. It's also, you know, it gained 50% through yesterday's close. That's a really pretty solid rally in the first few days. So investors that I've spoken to so far aren't super concerned. It's hard to make any trend, you know, calls after only 4 days of trading.
Yeah.
But yeah.
What do we know about the various indexes and when this stock would be put into the indexes?
Yeah, so coming up next week, it will be eligible for the NASDAQ 100. So they changed the rules, right, to have a sort of shorter period for these mega cap IPOs, SpaceX included and other ones sort of coming down the pike, that they could be eligible after 15 days of trading. So that could add a lot of support to the stock as funds, you know, have to buy in anything that tracks that index. The S&P 500 did not change its rules, so that will take a little bit bit longer, at least 12 months. But the potentially being added to the NASDAQ 100 would be a huge deal.
I just looked at EVT function for SpaceX just to see if they're going to be talking to anybody soon. And the only thing I see is scheduled earnings for August 17th. So that's probably the next time we will hear from the management team.
It is, and that will also be a really key date because it's when one of the first tranches of lockups expire. Excuse me.
Oh, that soon?
It is that soon, yeah.
Wow.
So there are two groups of tied up stock that will become eligible to trade after the earnings. One, just after the earnings, and two, if the stock price is, I believe it's 30% above its IPO price at earnings. So that'll be a really key date for a lot of reasons.
You know, and it's interesting. I mean, they just made this monster acquisition, $60 billion of this technology, like AI company here. We don't even, I mean, $60 billion M&A trade would be blockbuster in and of itself, but it's almost an afterthought for SpaceX.
I know, isn't that crazy to think about? Like the company is so huge, it's taking up so much time and attention, but it makes sense. I mean, record IPO, huge company, hugely important space, and you know we're going to see more coming soon in the coming months. You know, before the end of the year, OpenAI, Anthropic, and yeah.
One of the things I want to try to get a handle on, if I'm an investor, is how is Elon Musk allocating his time amongst all his vast holdings? SpaceX now arguably is by far the biggest part of his net worth, which is now north of $1.2 trillion. Do we know anything about that? I mean, he wasn't really involved in the roadshow. It didn't seem that much. It was kind of delegated to the president of the company, the CFO of the company.
That's a great question, and I don't know if I have a super clear answer for you.
I don't think anybody does.
Yeah, I mean, it's interesting, though, because it's definitely something investors have called out before, right, with Elon, just that, you know, is he able to allocate enough of his attention to his existing companies? I think it's come up with Tesla before, and he's definitely showed his dedication, right? We all know about him sleeping on the floor of the manufacturing facility and things like that. But it will be interesting to see, you know, how much his time is allocated to each company, and also just what he says about it on the call, which hopefully we'll hear from him when they report earnings.
And Tesla stock down 1% today. It's down 11% this year to date, although if you look on a trailing 12 month basis, is up 27%. But still, you know, a little bit of concern there amongst maybe Tesla investors there.
I think so. I mean, there was a good note out from Vanda Research, which tracks retail data, that they've seen net selling in Tesla over the last 3 days as there was record buying into SpaceX. So there could be a little bit of rotation there. But I think also worth pointing out, you know, last I checked, every stock in the Mag 7 was down today.
Okay.
So we're seeing a little bit of pressure just on the tech side.
I guess now from a new issue perspective, the next thing the market's going to be focusing on is Anthropic and OpenAI. Now, both of those companies have filed confidentially their IPOs, so that started the process. Is the expectation is we'll get one or both of them maybe in the fall or something like that? What do we hear?
I think what I've heard is the end of the year.
Okay.
Both expected by the end of the year, but I will be really curious to see what happens. There's obviously, you know, we've also had big equity offerings from other mega caps. There's just a lot coming into the market equity-wise. So I'd be curious to see when they come out, and I would guess they might actually want to come out sooner than later.
Yeah, and Goldman Sachs just calling out today, it's just a monster year in their M&A business. They're saying there's activity there, and we're seeing tons of new issuance in the equity side, tons of new issuance in the fixed income side. So good year. And you think, boy, if you're Anthropic or OpenAI, strike while the iron's hot. The market's all-time highs. They're very receptive to this SpaceX deal. So maybe I try to get this done sooner rather than later. Carmen, thank you so much for joining us. Carmen Reinecke, she's an equities reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. We got the market turning a little bit higher here. Got the S&P up 5 points. The Dow's up 210. That's 0.4%. That's noticeable. And the Nasdaq's up 10 points here. The VIX a little bit elevated, but still below 17. Bond market steady. 10-year Treasury yield 4.43%. We'll keep an eye on that. And WTI crude oil up 60 cents, under $77 per barrel. More coming up. This is Bloomberg. Good morning.
Michelle Franzen. Details over the memorandum of understanding between the U.S. and Iran remain murky, with few details of the terms of the peace agreement coming out. President Trump at the G7 summit this week touting the deal to world leaders, saying it would be finalized Friday in Geneva. ABC's Karen Travers is there.
The president has said that he doesn't want to see it publicly released until it's formally signed, and that is not scheduled to take place until Friday here in Switzerland. Remember, the president and the vice president signed this on Sunday digitally, but now the president also seems to be casting some doubts on whether the text that was signed digitally on Sunday is actually the final text.
FBI officials say the investigation into that foiled drone attack at the White House UFC event Sunday is ongoing. 5 suspects have been charged. Authorities, though, say multiple suspects remain at large.
These defendants are facing a range of charges, from conspiracy against the United States, conspiracy to injure and kill federal officers, as well as conspiracy to commit violence on White House grounds. None of them, as of yesterday, have entered pleas in any of their cases. We've reached out to their attorneys for comment and have not heard back from any of them yet.
ABC's Alex Mallon. In New York, a judge sentenced Gilgo Beach serial killer Rex Heuermann to life in prison without the possibility of parole. That sentence in line with a plea deal the 62-year-old disgraced architect made with prosecutors in exchange for pleading guilty to the murders of 8 women starting in the 1990s. The majority of women sex workers Heuermann lured to the Long Beach Island area, killing them and dumping their bodies. Here's ABC's Aaron Katursky.
He was first identified as a suspect in 2022 thanks to his distinctive vehicle, and he was arrested the next year after his DNA was retrieved from pizza crust in the trash outside his office. Since then, the sheriff here told us Heuermann has been reading books about other murders and has corresponded with at least one other killer.
You're listening to ABC News.
Thanks for being with us on the Wednesday edition of Balance of Power with breaking news. I'm Joe Matthew in Washington. President Trump has just begun speaking in Evian, France at the conclusion of the G7 summit. He's on stage right now, just got to the podium, backed by his secretaries of State, Treasury, and Commerce. This will resolve into questions now that the president is announcing a framework, an MOU with Iran. This is live. Let's listen on Bloomberg.
The tough guys that would drive the country right down the tubes. The past 2 days have provided a chance to discuss the details of this historic agreement with many of our closest friends and allies, including the G7 nations and many presidents and prime ministers. As you saw, Prime Minister Modi was here. We had a long talk. He's a great guy. They are thrilled that we made a deal, every one of them. There's not one nation that came to us and said, please, sir, keep dropping bombs on them. Please keep dropping bombs. The stupid people say that. But I'm thrilled to report, and by the way, those last 2 days were brutal. $200 million worth of bombs. And, you know, it is expensive too, by the way, aside from everything else. And they knew I was coming for a third night. We informed them we're coming for a third night. They didn't have their Navy, it's sunk. They didn't have their Air Force, it's gone, not one plane. They didn't have anti-aircraft equipment, so we got free reign. They didn't have their leaders, but they have a new group of leaders that I think is, actually, I think they're smarter. I think they're very smart. I think they're far less radicalized, and I think they're really good. They love their country. You know, you talk about regime change, nobody will say that, but I guess that's, look, their one set of leaders is all gone. Their second set of leaders is all gone. Their third set of leaders a little bit gone, but for the most part, and frankly, I think that's regime change. I think they're going to behave much differently. I think they see a different way of life that they were never exposed to. So the one thing I didn't want to see is I didn't want to see economic catastrophe. If you kept this going, that could have happened. But all I know is every time we talked about the possibility of peace, the stock market shot up like a rocket ship. It never went down. They didn't like it. The people, you know, the stock market is more brilliant than anybody there is, including the people on the stage, other than me, of course. Let's see. I don't know. What do you think, Scott? Is the stock market more brilliant than you?
No, sir.
Oh, that's a terrible statement. All right. The stock market is quite brilliant. And every time we said something amazing, like we're going to settle, it would go up. And every time we said something negative, like, guess what, we're not going to be able to settle, it would go down very big, Peter, right? Very, very big. Tells you something. And you know, I've studied presidents, some good, some bad, some great. Not too many are great, and some really bad. We had one just recently. And the one president I did not want to be was the late, great Herbert Hoover. I didn't want that, and who knows what would have happened. But bad things happen, so the past 2 days have provided a chance to discuss the details of the deal with the closest friends and allies, the heads of countries. They were all here, a lot of them, far more than the 7, as you know, a lot of them. And they put out a statement. I think President Macron, who did a great job, by the way, did a really fan, him and Bridget, they did a great job, but they all put out statements saying they love this deal because they want to see it over, and they love the fact that the hormones, don't forget, if we were going to drop bombs, let's say we went another month, another 2, 3 months, maybe weeks, could be another 3 months, could be whatever. What do you have left? Got maybe nothing, but you don't have, the strait will never be open. Because people that own billion-dollar ships, these ships cost $1 billion. They don't like sailing ships or having their ships participate when you go up the coast and you go through the strait and there are rockets flying over your head. They want to protect their $1 billion investment. You wouldn't have oil for maybe years. These are stupid people. But nobody was tougher than me. Nobody hit Soleimani. You know, when I hit Soleimani, people thought that was the biggest thing to happen in the Middle East for 50 years. That was the biggest event. He was the boss of Iran and respected, but he was a mad genius. He was a genius, the father of the roadside bomb. When you see young men, and in some cases women, mostly men, walking around without legs, without arms, with a face that's been blown to smithereens, it's Soleimani, 95%, 96.2 they say or something, 95%. That was Soleimani did it. Happened to come from Iran, and I blew him up. You remember that? I blew him up in the Valley of Death. He got off his plane, and we followed him, and in all fairness, because they've been wonderful to me, Israel, but they didn't want to do that attack. They were all set. The night before the attack, they informed me they didn't want to do it, so I had to make a decision. I made the decision to do it. But it was a joint venture, as we say in the real estate business. That was a joint venture between Israel and us. We studied it for a month. We knew what plane he was going to be on almost a month before. He only traveled on commercial airliners, the big ones with lots of people, because he knew we wouldn't shoot him down. He's very smart. But we knew he was going to be on that plane. We followed him, and then Israel informed me that they won't do it. And I had to make a decision. I had some very good generals, and not the ones you see on television, very good. And I want to thank also Pete Hegseth and General Raisin Kane, who's phenomenal. Okay, these guys are phenomenal. They can't be better. But I had some good generals, and I said to them, well, if Israel's not going to do it, we're all prepared. Do we do it? Do you like doing it or not? He says, sure, if you want to do it, we can do it. How well? We'll do it just as well or better. Do it ourselves. We don't need anybody. So we took out Soleimani. One of the biggest events to happen, the Middle East, maybe ever, but they say 50 years, they say 100 years. I was with the Prime Minister of Pakistan. He said it's maybe the biggest event that has ever taken place. Nobody could believe it. So that's when it started. It didn't start like 3 or 4 or 5 weeks ago. And Obama wouldn't do it. What Obama did was he did the JCPOA. He loaded up a plane with $1.7 billion in green cash from banks all over Washington, Maryland, and Virginia. They were stripped of all their cash. They had no cash to do payrolls. It all went into a Boeing 757, a wonderful plane, and they flew it to Iran. And they gave it out to people. They bribed people. They thought they were going to get it done. Then they gave billions and billions of dollars after that. And they got a deal that was a road to a nuclear weapon. I get so angry, I guess. I'm allowed to get angry when I watch the Democrats. They talk about it all the time. We had this deal done. You had a deal that was going to give them legally a nuclear weapon. And if that happened, Israel would have been blown away. And in all fairness to Bibi Netanyahu, who happens to be a good man, gets a little excited sometimes. But he happens to be a very good man. We've had an amazing partnership. He's been an amazing prime minister. We have a little dispute over Lebanon. I say, you can do a little softer touch, Bibi. You don't have to knock down a building every time somebody walks into it that's from Hezbollah. But it's been an amazing partnership. But he will say, we're the big partner, and he's the very small partner, and that's true. So he came to the country, and he begged Barack Hussein Obama, the president, not to do the JCPOA. He said it could be the end of Israel, and it would have been if I didn't come along. And Obama didn't listen to him. Bibi actually went to Congress and pleaded with them, and he got nowhere. And they had this horrible deal that was horrible for Israel, and that's where it stood. And then I came along and I terminated that deal. It had very little time left. You know, it was a short-term deal. You know, with countries, you need hundreds of years. You don't need 8 years and 9 years. This isn't like you're signing a lease on a candy store at the corner. You need hundreds of years. This was a short-term lease. It expired long ago. Had I let it run, it expired. You wouldn't have been around. A lot of people wouldn't have been around. But Israel would have been terminated. I think the whole Middle East would have been terminated. You saw that when everybody was shocked that all these missiles, they were aimed at these different places. Qatar, Saudi Arabia, UAE. Think of it. Bahrain, Kuwait. They got hit. Nobody thought that was, even I didn't think it was going to happen. They didn't think it was going to happen. They were going to take out the entire Middle East, including Israel. And if they had a nuclear weapon, they would have used it within moments after getting it. So I made it very tough for them when I terminated the Barack Hussein Obama catastrophe. JCPOA, one of the worst deals. NAFTA might have been worse, but that was worse economically. This deal was really dangerous, what he did. He gave them everything, including a lot of money, which we don't give them, by the way, just in case you have any question. We'll be giving this out so you can read it and you can see. And it's a memorandum of understanding. If it doesn't get done in 60 days, that's all right. We go back to bombing. You know, I don't want to do that because it's so good. But we might have to, because we're never going to let them have a nuclear weapon. But they've agreed not to, and you'll see that very clearly in the agreement. But then the second phase of that was they were building, or they were enriching material, as they say. I call it nuclear dust. They were enriching material under granite mountains. Granite being, for those not in the construction business, granite being a very strong, the strongest stone. It's not as pretty as marble, but it's much stronger. It's a lot stronger. Like the new granite I put on the stairs of the White House going to the Oval Office, the black granite, it's rated 1 million years plus. No marble's rated that. Marble's rated 100 years if it's outside. So these are granite mountains. And the B-2s came along and they hit those air shafts in the dark at 1 o'clock in the morning with no moon. They had a beam going right up everywhere. Those guys did a job, and then they were criticized by certain members of the press, like CNN, for possibly not doing that much damage. And it turned out that the damage was far greater. Those mountains collapsed right on top of everything. Nobody's going to get that for a long time. Unless we want to get it, we'll get it. But we're the only ones that can. And they say China has the equipment to get it, and we have the equipment to get it. And it's actually not valuable. Not a lot of value, but we'd like to get it psychologically, but nobody's touching it. We also have cameras. That's what Space Force is. We have the greatest military in the world, by the way. But I'm proud of Space Force because I started it. We have Space Force cameras on every single door, well, there are no doors. They've been pretty well shattered, but every area of that, if somebody walks in and he's got a badge with his name on it, like Mohammed something, which is about a 50-50 guess, Mohammed something. They can tell the name. They can give you a serial number. We can see things you wouldn't believe the quality of the stuff that we have. That's why we've been so successful. That's why our blockade will go down in the annals of history as being unbelievable. Nobody's ever seen a blockade like that. It's like a steel wall. So what happened is we then terminated that, and I call it the nuclear dust, and that was the end of that. But if we didn't hit that with the B-2 bombers, or if it wasn't successful, they would have had a nuclear weapon, a nuclear bomb at a very high level, not the highest, but it would have been a very high level. We have much bigger, but we hope that we're never going to have to use it. We have the most. Russia has second. China is very far behind, but going to catch up, unfortunately. You know, they're catching up, but we have the most. We have the most powerful, but we also have the most. But Russia's not far behind. And then you have China in third place, but within 5 years, they'll be probably even. And we ought to make a denuclearization deal. It would be so great. We don't need all of that. We don't need to be able to blow up the whole world 300 times over. It's terrible. Really, if we could do a denuke deal, I'd love it. And one of those two is very willing to do it, I will tell you, but the other one is less willing to do it, and you need all of them. So the deal we reached with Iran on Sunday will be signed shortly, tomorrow, maybe the next day. Subject deals. My whole life is all about deals. That's all I ever did is make deals. And crazy things happen with deals. I've gone into deals where it's a guarantee. No way it can not be signed, and it doesn't get signed. And I've gone into deals that you have no chance of making, and they go like nothing. So, but we're going to most likely sign a deal. They want to sign a deal, and they've been acting very appropriately. They took a big 2 hits last week. Those were 2 very big hits. So, importantly, Iran has agreed that they will neither produce nor procure a nuclear weapon. Neither produce, because originally they said they talk about that they will not develop a nuclear weapon, and some people found it okay. These guys didn't, in all fairness, but some people. But I didn't like it. Said it won't develop. I said, what happens if they should buy? I don't know. It's very dangerous for somebody to sell, because whoever sells them a nuclear weapon will get nuked themselves. If they sold a nuclear weapon, only a few that could do it, they would be nuked. They wouldn't have that country long. So it's a very dangerous thing for somebody to do. But I wanted it in there. So it's develop, procure, buy, anything. And you'll see that when you see the agreement, but it's appropriate that we release the agreement. And we did send a copy to Israel, by the way. They've been a good partner. Again, I think they could do better with respect to Hezbollah. I'm not saying they shouldn't protect themselves. I'm saying when 2 drones are shot into the desert and drop harmlessly, you don't have to knock down buildings in Beirut. They could behave better. And frankly, they could do a better job. I love them as a partner. They were terrific. But they could do a much better job with Hezbollah. On that, I don't think they're doing well. And I feel very bad for Lebanon. Lebanon's been, it was a great culture. They had the professors, the doctors, the lawyers. It was an incredible culture, maybe the highest in the Middle East for years and years, centuries. And for the last 50, 60 years, they have been just trashed. They have been living in hell. So they'll work closely with us to turn over the so-called enriched material that's very deep in the bowels of the earth, very deep. Nobody can get it. So it's not important that we do it quickly, but we could do it fairly quickly. When we have a chance, we'll do it. But in the meantime, we have cameras on every inch of it. Nobody can do it. And if they do, we'll hit them with Patriots. That's all. And they'll be gone. And they know that. Technical discussions on the removal of all stockpiles of enriched materials will begin immediately. We're going to start that immediately. And unlike Barack Hussein Obama, who sent Iran pallets of cash, and any relief they receive under this deal, they'll have to get based on merit. And it won't be from us. We don't have to give them anything. But But some people may want to invest. Like, what are you going to do? Say you can never, ever invest in a country? I mean, it's pretty tough. I don't mind being tough, but it's pretty crazy. You can invest in a country. You can invest in any country you want, but you can't invest there. Well, they need investment because we did $1.5 trillion, maybe $2 trillion worth of damage. So somebody's going to have to help them out. There's no guarantee about helping them out, and could be their neighbors will help them out a little bit. I don't know, but it's a lot of money. Almost nobody has that kind of money. That's the kind of damage that was done. But we're not investing any money. There was a fake story. There was a fake news story that got a person, a good person. JD made a statement. It was a perfect statement. And they reported it in a very strange way, but that's why it's fake news, I guess. So we don't give them money. We don't give them any of that. And what happens is with time, if they behave, if they be a citizen of the world, a reasonable citizen of the world. And I think this group, again, I didn't do this for regime change, but I think this group is regime change. I mean, hey, the first group is dead. One little morning, having breakfast, the whole group, they thought they'd never be caught because we never bombed during breakfast, but we bombed, and they all, 88 people. And I'm not proud of that at all. But the second group came in and they were very unreasonable too. And they were all gone. They were all gone. And then the third group, we've been dealing with them. Couple left this planet, but we've been dealing with them. And again, they've been fine. I mean, I've had a lot easier. I've had some easier ones. They're tough, they're smart. Maritime traffic through the Strait of Hormuz has already increased very substantially, and the normal flow of energy will resume in the coming days, and trillions of dollars will be made by the world, and the stock market will, I believe, continue to rise. The only difference is that a player that's very volatile, very tough, very smart, frankly, you know, they have in one way a primitive culture, but it's also a genius primitive culture. They're very smart people, very good negotiators, but so are we. So rather than possibly going into a depression, rather than having your favorite president be Herbert Hoover, I was always the one I didn't want to be. I wouldn't have preferred Nixon. I wouldn't have preferred, there are plenty I wouldn't prefer, but the one I always thought of, Herbert Hoover, and he caused it. He raised taxes too fast, and he raised interest rates too fast, all at the same time. And it caused the Great Depression. So I don't think I'll make mistakes like that. I lower taxes, I don't raise taxes. In fact, we just gave you the largest tax decrease, largest tax cut in the history of our country. So we'll be working on a parallel effort with the Gulf nations to address non-nuclear issues such as the conventional ballistic missiles, which we'll be talking about, and support. I mean, they have to have some because other people have some. You got to have some. Somebody said you shouldn't give them one. I mean, I have guys. I like some of these guys, but I don't think they're smart. Sir, you shouldn't let them have any missile. I said, well, what am I going to do? Am I going to let Saudi Arabia have missiles, but they can't have them? Yes, sir. It doesn't work that way, you know? It doesn't work that way. And missiles aren't the problem. Missiles they hurt a little location, but they don't blow up the planet. So the Gulf nations will address the non-nuclear issues. As we'll be talking about the ballistic missiles, and we'll talk also about the terrorist proxies that they have. That we don't want that to happen. But I want to thank our partners in both Pakistan and Qatar. These people work so hard. And they knew him a little bit. In the case of Pakistan, quite well. In the case of Qatar, they were sort of at odds. And, you know, Qatar was great because they had right next door. When I flew from there, from that location to Saudi Arabia, I'd fly for 40 minutes, and I'd fly to UAE for 40 minutes to great leaders there, by the way. In the case of Saudi Arabia, the father's still alive, and he's fantastic, and the son is going to be great. He's going to be great. The Crown Prince and Mohammed at UAE is an incredible warrior. He was dropping bombs Last week I said, who the hell's dropping all those bombs? It was UAE. He's a good fighter, Mohammed. But every administration for decades has sought to get Iran to relinquish its nuclear ambitions, but the threat only got bigger. The words got bigger and bigger and stronger and bigger, and nothing ever happened. And Iran got stronger and tougher. If we didn't blow them up the first time and then blow out those weapons, they would have been unstoppable. This should have done what I'm doing and what I did should have been done years ago. Would have been much easier, much less firepower, but it wasn't. And again, I want to thank all those countries, and I want to thank Israel and Bibi Netanyahu. So obviously the breakthrough would not have been possible without the unprecedented pressure the United States put on the regime over the past year and a half. But again, it started a long time ago. It started with the death of Soleimani. That was a big deal. No president in history has ever been tougher on Iran than I have, and they know that. And by the way, if they don't honor the agreement, or some things aren't even mentioned in the agreement, it's a memorandum of understanding, but we have an understanding of certain things without writing it. And if they don't honor that, we'll probably go back to bombing them until they honor it. You know, it's amazing what bombs can do. So I say it, the Obama deal was a road to a nuclear weapon, and let's call it the Trump deal, was a wall for a nuclear weapon that the nuclear weapon could not get through. Nobody's going to get through it. We built a wall. They weren't going to have it, and that's what we have right now. And it says very clearly, the most important clause to me, too, number one, the Strait opens, but that's much less important than the other clause, clause number whatever, 5, 8, is a very strong statement that they will never have a nuclear weapon. And it doesn't say they'll have one in 5 years or 10 years or 20 years. With Obama, they were able to enrich very quickly. This agreement now provides Iran with a historic opportunity. If they follow the path of cooperation, we'll have opened for them. Their country will have a chance to survive. Now think of it, you know, they have 91 million people. People want me to bomb the bridges. Why don't I bomb? I already did, because, you know, they went back on one of their promises, and I bombed their biggest bridge, the equivalent of that was the George Washington Bridge of Iran. But we bombed that bridge, you saw that. One quick strike by an F-22, the most beautiful fighter jet ever made, by the way. In fact, we're ordering some more of them. We're bringing it out because it's so effective. It's incredible. It's incredible. Well, look, we have the greatest military in the world. Those B-2 bombers are unbelievable. Who would have thought they could handle, each had two because the flight was so long, but they handle 3 of the biggest, heaviest bombs, hundreds of thousands of pounds, and they handle them like they're nothing. It's amazing. And also, they're undetectable. They flew into Iran, totally, think of it, totally undetected. Now, Iran's waiting for them. They're waiting for them. And they never saw them. 1 o'clock in the morning, they never saw them. They're stealth. And we just ordered 22 more. The newer, upgraded version, which I guess is better. I don't know how the hell you get better. But as I expressed to the world leaders here this week, it's my hope that the peace agreement will be the beginning of a much larger deal all across the Middle East. We're very close. Look at the job we've done on Gaza. Look at Hamas. Hamas has been very silent. You haven't read anything about Hamas. And we're trying to get them unarmed. You know, they grew up with a machine gun in their hand. I think they actually, when they were born, they came out with a machine gun in their hand. So it's not the easiest thing, but they've actually, you know, behaved pretty well, considering this was not the lifestyle that they were taught to have. But including an end to all Iranian aggression, and they're not going to be Iranian aggression, and an end to war and terror in Lebanon. So the Lebanon peace is something we'll have to work on a little bit. It's a very small piece of the puzzle, actually, but it still makes a lot of noise. The big deal is the Iran deal. That's where the money is, where the power was. But they have Hezbollah, and you got to get that done one way or the other. We'll do it. I think Israel can do a much better job on it. Syria would love to do it. I was very responsible for the gentleman at Syria that's now the president of Syria, he's done a tremendous job. He's put that country together in a year and a half. Sort of like our country, a year and a half. It's pretty similar size. They said, please don't put him there. He's a very violent man. Al-Qaeda. I said, well, I know one thing, a Boy Scout's not going to work. And he's actually done a very good job. He'd love to go in and, Hezbollah is an enemy of his, and he'd go in but he wouldn't knock down buildings every time he hears there's somebody. He'd just go and get them with precision. But I don't know that people want that. Maybe they don't. Maybe Lebanon doesn't. We have to be guided a little bit by Lebanon. And by the way, the president is going to be coming, Prime Minister, President, going to be coming over to see us very shortly, over the next week or two. Good man. He's, man is living. What a tough life he's got, because he's got tough groups of people. And it's amazing. Amazing there is a Lebanon with all they've been through. They have been treated worse than just about, I think, anybody. Disrespected incredibly. So the expansion of the Abraham Accords is the other thing that we hope we're going to get. And I think Saudi Arabia, if they lead the way, they'd be doing themselves a big favor, because everybody that's in it, UAE went in right from the beginning. Again, he's a warrior. And they never got out. Nobody ever got out. You think maybe during the war, they were all afraid of, everybody was afraid of Iran. And that's why we ended up with the original members. But then when the election was rigged, that's right. And I wasn't here at all. Nobody cared about anything. The country went to hell in every way. That was the least of it. Middle East was the least of the country went to hell, allowing 25 million people into the country, unchecked and unvetted, many of them criminals, many of them murderers, 11,888 murderers allowed into our country. So this was the least of it. But the past 2 days have also provided an opportunity to discuss a number of other key issues with members of the G7 and our partners. Yesterday morning, we had a productive conversation on the war in Ukraine. I spoke with President Putin. I spoke with President Zelensky, and he was there. And President Putin I spoke over the phone with. And something's going to happen. They're losing a lot of people, a lot of soldiers are losing soldiers. Both are losing a lot. Russia's losing more because they're the offensive ones. And when you're offensive in war, you lose more. Pretty simple. But I provided an update on my call Sunday with President Putin and expressed my continued hope. We had a very good conversation with President Putin and a very, very good conversation with President Zelensky. I think they both want to do something. They just don't know how to do it. They want to do it. They just don't know how. In our session yesterday afternoon on international partnerships, I offered an update on how the United States is leading the world in responding to the Ebola outbreak in Africa, sending $375 million in aid so far to help stop and contain the crisis at its source. And we've done great. I was with the president of a couple of presidents came over, by the way, from African nations, and they were so happy with what we did. But where it's unfair is we gave $375 million. The rest of the world gave essentially nothing, maybe a couple of bucks, but nothing. And they were all saying, thank you so much. And I think they've done a good job. It's a terrible thing. Ebola is a terrible thing. That's an unbelievable one. Fortunately, it's not like COVID where it's that easy to spread around, but it's rough. And we've done a good job. We've moved people to certain quarantines, certain locations. But today we also had excellent meetings on the economy and artificial intelligence, which is amazing what's going on with that. It's going to be the biggest thing ever. We have to be very careful with it. It's both great and could be bad. We have to be careful with it, but we're leading China. We're leading the world on that. We're allowing them to do their own electric plants because they need, as an example, those buildings are so big, and they're not taking the community's electricity. I gave them the right. It was my idea. I gave them the right to build electric plants like Con Edison in New York. Dig we must. And they've come up with plants that nobody's ever seen anything like them. Those are like very high IQ people. So they're actually building electric plants. So because Otherwise, they could never build a building because the grid is old and tired and broken and a mess. So they're building it, and they're going to sell their, very cheaply, they're going to sell their extra electricity into the grid. So we take care of a lot of things, like California, which doesn't have nearly enough electricity. They don't know what they're doing there. And instead of having blackouts and brownouts, they'll be able not to. We found a great deal of unity here at the G7, and we signed a declaration on illegal immigration, the first time ever for a G7 statement. They did a beautiful statement. We signed other agreements to step up and to really coordinate and spend a lot of time coordinating drug trafficking and the stopping of drug trafficking, which is crazy. It comes through Mexico, comes through the southern border, the little that comes through. They find a way, they put it, they're genius. If they would use that genius for good, they'd be very rich people. They have it in engines, they have it in hubcaps, they have it in areas you wouldn't even believe. They have it in the structures of cars. Most incredible thing. But we've done a great job on it. We have drugs coming through the border are down 61%. Drugs coming through water, the sea, ocean, sea, Gulf, down 97.2%. That's the ones that get hit. Just like we hit the Iranian minesweepers and mine droppers, they call them. They dropped. Who would have 28 mine droppers? Who has 28 mine droppers? They actually had them, but they don't have many more. We hit them just like we hit the drug dealers. But drugs are down by water 97%, and over 60% they're down. And now we're going to go and focus on the land. They come through Mexico. Mexico has lost control of their country. The cartels run Mexico, and it's sad. And the president's a very good woman, but she's a very scared woman. The drug cartels are totally running Mexico. It's not even close. We agreed to accelerate our efforts to secure our critical minerals and rare earth supply chains, where we have great companies really going to town. We're going to give everybody a big run because we do it better and we had to get motivated. The G7 also agreed that the United States' new approach to international development based on the private sector investment is working at levels that they never thought possible. It's really working. I held a number of very positive bilateral meetings, including with the president of France. Well, a very good meeting, actually. The Emir of Qatar, Sheikh Tamim, who's, I tell you, I wish I could really know the guy. You know, some people say, well, he lived in that neighborhood. You can't be saying things that you'd like to have him say. He was fantastic on this, and he's been a fantastic guy in terms of energy and getting energy out there. President of the United Arab Emirates, Mohammed bin Zayed, who's an amazing warrior. President El-Sisi of Egypt. Prime Minister Modi of India. We spent a long time together today. I spoke to Mohammed. I spoke to the Crown Prince of Saudi Arabia a number of times. They're all so happy that they're still, you have to have them happy too, you know. We're using their airports, not that they could stop us if we didn't want them to, but it'd be nice that I went to get that little sucker. But I missed. I hate missing. But we spoke to all of them and many countries all over the world. So every country, I think Israel too. Look, think of what Israel's getting. They're not going to be nuked. It's very simple. I told Bibi, your biggest risk was that they drop a nuclear weapon into the middle of Israel. They'd only need one, and there would be no more Israel. Think of it, Bibi. You got the best, the most important thing that you were asking for is that. So I think they're happy. Some people are going to be, not him, but there are some people, some writers, some that I thought were friends of mine, but I don't want them as friends anymore because they're either stupid or they're bad people. But we stopped nuclear holocaust, and it stopped too. I mean, there's not going to be any of that. So from the beginning to the end, it was clear that this week America's back. It's bigger and better and stronger. We're more respected as a country right now, I think, than we ever have been. And we were a laughingstock 2 years ago. They would laugh at us. We had a man that should have never been there. You know that. A man that would walk up to a podium once every year, and they'd ask him, what flavor ice cream do you like? I like vanilla. Then he'd try and find the stairs, which he couldn't find most of the time, and he'd leave. This is very unfair reporting. And then you said you didn't know about that. You didn't know there was something wrong. We can never let that happen to our country again. To me, we had the worst inflation ever. We had the worst in prices and the costs. It's all coming down now because the oil is bringing it down. You're going to see numbers that are going to be amazing. But this evening, I look forward to a very special dinner with President Macron and his fabulous wife at the Palace of Versailles. I sort of like that palace. Has a lot of gold. I want to check it out. It's a beautiful palace, maybe the most beautiful of all. I hope you're going to get to see it. The ones that are traveling with me, I hope you're going to get to see it because it's amazing. But they asked me if I'd stay a little bit longer and go to Paris. So I'll get home a little bit later, but it'll be a nice dinner. But I'm interested to see it. That's the ultimate, I guess. It's the ultimate of its type. Louis XIV, celebrating the 250th anniversary of America's founding and America's oldest alliance. And we're celebrating that a little bit tonight. They'll have the biggest people in Europe at the dinner. And those people love our country. And hopefully Europe's going to find its way. Europe is having a lot of hard times. They're doing some things very badly on energy and on immigration. They're doing things very badly. And we'll be talking about that tonight. So with that all said, if you want to ask us any questions, and feel free to ask the people behind me. Yeah? Peter?
Bonjour. You've been clear, President Trump, the United States is not going to directly pay Iran, but the U.S. is going to let the Iranians start making billions of dollars, selling oil, accessing this reconstruction fund.
Only if they're doing things right. Only if we're not doing anything. We're not putting up money. Only if they're doing things right. If they're doing things right, if people want to invest, they can invest. But they had this $300 million fund. It's only $300 billion fund. It's only if they're doing things right. Remember this also, when you talk about billions of dollars, they've had much more than $1 trillion worth of damage done. They got a long way. There'll be 15 to 20 years to rebuild what they have right now. So they have to behave themselves. If they're not behaving, they get hit again. They'll be hit again because we can do it very easily. It's going to take a long way for them to build back their anti-aircraft stuff. It's going to take, and the other thing, I want to thank China, President Xi. I was with him, and he stayed neutral, totally neutral, and I appreciate it. And I want to thank Vladimir Putin. He was very neutral. They could have made it much more difficult for us. And I want to say it. Somebody would say, "Oh, that's terrible. He's thinking President Xi of China." Well, let me tell you, I had a long talk with him. They have shoulder weapons to knock down airplanes. That it's not like the real deal, but they're accurate. They're fairly accurate. I said, I would really appreciate you're not giving or selling any of that stuff to Iran. And you know what? For the most part, he didn't. So I just want to thank them because they made it a lot better.
Can you explain, though, what the difference is between giving Iran U.S. dollars and unfreezing U.S. dollars for
Well, the unfreezing is an easy one to answer. We have taken a lot of their money, and we have their money. We have taken their money. It's not our money. It's their money, and we froze it. At a certain point in time, I guess we're going to have to give it back. If we didn't give it back, nobody would ever invest in the dollar again. If you took their money, because I thought about it, I'm not the most perfect person. I said to Scott, why do we keep their money? What the hell are we giving it back to them? But, people from lots of nations, some nations we don't agree with, they have their money. The dollar's become very strong under me. And they don't want to have a little conflict with somebody and end up having the United States just take their money. So if you do that, you really don't have a system.
And I did just want to ask you about this. A wise man once said in January of 2020, Iran never won a war, but never lost a negotiation. That wise man.
Who said that?
Donald Trump.
Oh, that's what I thought you were going to say.
So how do you go back to the United States and convince a skeptical American public that this deal is a win?
Here they lost militarily, okay? It's very tough because I know that no matter what, if I would go, by the way, if I'd go another 3 or 4 weeks, those same people that are critical would say, he went too long, he should have done, no matter what. If they raised the white flag of surrender, and if they said, praise be to Allah, Donald Trump is the greatest president ever. We totally concede. We totally give up. This war is over. We have failed. The New York Times and CNN and a couple of others are not all that dishonest. They say Iran had a great victory, okay? And they practically do that. It's amazing. When we knocked out their last ship, they had 159 ships. When we knocked out the last ship, the Times refused to do a story on it. They said, why wouldn't you? They don't have a Navy, and you don't want to do a story on it. They don't have an Air Force. You don't want to do a story. We need a fair press. And that's why they're all doing so badly, because they lost credibility. When I win in a landslide and I had 93% bad press, they take good stories about me and make them bad. But the only reason that happened is because they have so little, the media has so little credibility that the people voted for me. 93% of the stories on network, ABC is horrible. I think ABC is the worst. NBC is terrible. And CBS is terrible. The CNN, obviously. And I never get good stories, no matter what I do. I could do the greatest thing. I won't get good stories on this. I'll get it from fair media. I'll get it from all over the world. They're writing good. But no matter what I do, I'm going to get bad press. I know that. Now, if I did the opposite, if I went out and continued to bomb them for another 4, just bomb the hell out of them, I'd get bad press on that. No, there's nothing I can do. But what this does is it allows the ships to go. If we keep bombing, those ships won't be going. And you're talking about $500, $600, $700 million a day. It's a lot of money. A lot of money. That's why the world is okay. It's liquid. It's fine. Also, we run out of reserves in about 4 weeks. There are reserves all over the world, and we would really run out. And there'll be a time when you wouldn't be able to get it. And you want to see bedlam? So for all those so-called geniuses that want to show me how smart they are, ask them, why didn't they blow up General Soleimani? Ask that of the general and a couple of other people that I like very much, but boy, are they wrong. Go ahead. How about you? Thank you, Peter. I give you more, Peter, but people will say I like you too much.
Thank you, Mr. President. Bonsoir, Mr. President.
He told me that first day in office, he asked me like 7 questions. I answered all of them. Is this true? He said, he just answered more questions in one meeting than Joe Biden did in 4 years. Okay, I'm not going to get you in trouble, but that's what you said. Go ahead.
Bonsoir, Mr. President. In The Art of the Deal, you write about the importance of leverage. Yeah. Obviously, you have a lot of leverage when it comes to Iran, whether it's militarily or through economic sanctions. What leverage, sir, do you have when it comes to Israel and Hezbollah to ensure that they abide by the ceasefire?
Well, I think we have leverage just by the fact that we really have Iran now has to be good. They have to behave. And we might help. That's a much smaller conflict. It's a conflict that should be able to be over with. I'm surprised it's taken so long. And it's a much smaller, but we have a lot of leverage. We have the greatest military anywhere in the world. We have the strongest, most powerful. Look at the blockade. By the way, the blockade was more impactful than all of the bombing raids where we dropped $1 billion worth of bombs on Iran. The blockade was so incredible. The naval blockade, the admiral, the whole thing, not one ship got through. That meant no money got through. They were dying. They had no money. They have inflation that's 250 or 300%. They have no money. We have tremendous leverage. We have the leverage of the economy as an example. We'll get that done. That's a small one, and we'll work with Israel and get it done. But I'd like to do it. I mean, you have people living there. Buildings are being dropped on top of them or right alongside of them. How would you like to live there? It's It's so unfair, especially Beirut. You know, you go into Beirut, and I looked at the scene 2 days ago, yesterday, where they hit. That was a big hit. That was unnecessary in my book. Yeah, please.
Two questions. If you could clarify something you said just a few minutes ago. One of the goals of Epic Fury going into it, you said was...
Say it again. Speak up.
Sorry. One of the goals of Epic Fury, you said going into it, was to destroy Iran's ballistic missiles and its capabilities to build more.
Yeah.
Why is it acceptable to you now that they keep some of that capability? And Iran is...
What are they keeping? What are they keeping? They have less than other nations now. We knocked out probably 85% of their missiles. The rest of them are underground. They can't even get them out. You know, the other night's raid, I think it was on the first night, we knocked out hundreds of their missiles. Actually, by mistake, we were hitting an area, and you can sort of see when the bombs are going off, and then you see one that looks like, wow, what happened? A lot of missiles knocked out. No, but what are you going to do? Let's spend another 2 weeks and give them none. They don't want to be firing missiles right now. They're going to have a hard time rebuilding. They're going to have a hard time rebuilding. And the people from the Middle East, you know, if people want to invest, and again, they don't have to invest at all, but if they do want to invest, it does have oil. It does have probably a future, but it's going to take a long time. But are you going to let the 91 million people starve to death? I mean, one of the things I was very intent on, they have water desalination plants, very good ones. I could have knocked them out in 5 minutes, just like I knocked out Cargill, and I knocked out everything but the oil. I said 25, it was so complete. The only thing there is the pipes coming with the oil, because I didn't want to ruin the world market, because they do a lot of money. But I didn't want to do that, no. It would have been so easy. It would have been easier, and I would have satisfied a group of 10% of the people, but it would have been the wrong thing to do. And it could have caused an international depression.
Iran's position has always been that their nuclear program was for civilian purposes. If they come back after the signing of this and say they want to continue to have a civilian nuclear program, is that acceptable to you?
Well, I've said to them always, I say, look, you have probably the third largest oil reserves in the world. What the hell do you need nuclear for? You need nuclear for some electricity. So I've always felt that way. So we've been pretty tough on that. You know, it is a little hard, though, when you say that somebody wants it, other people have it, other adjoining states have it, and you're not letting them have it for purposes of electricity and things like that. It's always a little tough. You have to use a little common sense, please. New York Times, please.
Thank you, Mr. President, for the question. Now that you're approaching a new phase in this conflict with Iran, can you now say whether you will hold anyone in your administration accountable for the strike on a school that killed more than 100 children on the first day of the war?
No, if it was a fault, and as you know, that's under investigation. It's such a strange question to be asked at this state, because you're talking about a long time ago, but nobody did that on purpose. I guess you'd have to say about them, what about the thousands of soldiers that they blew up when they opened their car door? What about the thousands of people that were killed by Iran? No, mistakes are made. War is nasty. But I know it's under investigation, and I could have a report for you tomorrow. Or I would ask Pete Hegseth that question, because they have it under investigation. Please.
Mr. President, you've been saying all week that this deal permanently prevents Iran from getting a nuclear weapon, but the drafts of the deal that have been floating around barely mention Iran's nuclear program. So can you explain how exactly the deal achieves that goal?
So when I say permanently, it should be permanently. But if it's not permanently, we will bomb them. They will be bombed, just like I bombed them on Wednesday night and Tuesday night, and was going to bomb them on Thursday night at a level that was 3 times greater, and they knew that. I will bomb them. Now, that's with me as president. If you have a weak, pathetic president, maybe that doesn't happen, but I can only do the job that I have to do. I have a long time to go. I have almost 3 years, close to 3 years. Time is going fast. But our country's become we're the most respected country in the world. Those leaders today, they said, we used to laugh at you. 2 years ago, the same guys, they'd laugh at the country. And now they say, you're the most respected country anywhere in the world. militarily, even military. Take a look at what happened and look at what happened in so many different locations. Afghanistan, that horrible retreat that these people made, leaving equipment behind. They weren't under any pressure. You take your time. You can get out. I was going to get out. We were going to get out with dignity and pride, take 100% of the equipment. I was even taking the tents down. But then they got in and they just left. They left all the equipment. I may get all that equipment back. Now, here's the thing. More symbolic, because it's a little old now. But we may get it all back. Afghanistan is kissing our ass. You know that?
Bomb Iran if they don't comply, but there's nothing enforceable in the deal itself. Is that correct?
Doesn't have to be. I let them know. I said, look, if you don't adhere to the agreement, I don't want to do that, but we're going to bomb the hell out of you. And I don't think that they're going to veer from the agreement. What else am I going to do? Am I going to say I'm going to take you to court? Let me take you to court. Let me sue you. No, we're going to bomb the hell out of them if they violate the agreement. I don't want them to. I want them to honor the agreement. Again, the straits close up. Bad things can happen. You know, in war, terrible things happen. Like you mentioned the question before about the school gets hit. Other things get hit. Bad things happen in war. War is a nasty place. I see it. I see it. I see it better than maybe anybody has ever seen it. Go ahead, please.
Thank you, President Trump. Oil prices are now plummeting. How do you see this agreement further affecting energy prices in the U.S. and the U.S. economy in the long term? And secondly, Mr. President, how do you think Vice President J.D. Vance did on The View yesterday?
Well, first of all, thank you for the word plummeting, because that's what's happening. Oil prices are plummeting. And that means oil prices are going to come down. You know, if you make donuts, you have a heating, you have a stove, and you have to buy the heat. You need the gas or the electricity or whatever you're using. And when oil prices come down, oil is the biggest thing. Oil is, you get oil prices coming down, and they're going to come down. And we're hitting into threes now for gasoline, and that'll come down a lot lower. So I was in Iowa just before this started, and I was saying to myself, I can't believe we're doing so well, but I have to go, and we have to put out this fire in Iran, because I don't want them using a nuclear weapon. They would have used a nuclear weapon. 100% they would have used it. The only question is, was it going to be that day or that week? They would have used a nuclear weapon. They were on the way. And I said, we're going to have to put out the fire. And I said, you know, oil prices, so gasoline, we passed 2 gas stations in Iowa, made a speech up there. The people are great. I won it by so much. And I love the people, farmers. And we passed 2 gas stations. One was $1.85. One was $1.91. Now, that's Iowa. But it was, I mean, California has all those crazy taxes that they put on, you know, California taxes. But the oil was down to $2 to, I'd say, between $2 and $2.50. And it was heading down further. And we were going to have a great run. We took a little journey down to a place called the Islamic Republic of Iran, and we bombed the hell out of them, and now they can never have a nuclear weapon. Now, we had a disturbance, but I must say it was much less than anybody thought. The oil never went to $350 a barrel. It went to $115, $120. The oil never went anywhere near that. And the other thing, I thought the stock market would go down 25 or 30%. The stock market a week ago, before we started this, was higher than it was when we started, which tells you that we have a very resilient economy. We have the strongest economy we've ever had. Now, the word affordability is a fake word made up by the Democrats. Here's where it's fake, because they made it up, because I inherited these prices. And when I had my first news conference, first day, they started screaming affordability, the Democrats. Affordability, affordability, they're screaming. I say, what's that all about? They gave it to me. They gave it to me. It's affordability. And they use that word to a fare thee well. Well, they were the ones that created the affordability crisis. I'm the one that got it down. Remember, highest insurance rates in history, highest rates for everything. Eggs, remember eggs? They were 4 times more expensive than they were in my administration. And I got it down, Peter, very quickly. Our secretary did a good job of agriculture, Brooke. She did a great job with eggs and everything else. And Now that the oil is coming down, you're going to see everything follow. Everything follows the cost of energy, and we're going to end up having the lowest energy anywhere in the world. Please. Yeah. No, please.
Thank you.
You're from ABC. You're fake news. Go ahead.
To follow up on oil, can you confirm, will Iran be able to immediately sell their oil to market? And will U.S. sanctions snap back immediately if there is a delay or collapse in the talks? And then relatedly, is there any safeguard in this deal to prevent Iran from charging what they say could be fees after the 60-day extension?
The thing that's going to stop them from doing that, because you can't cover everything in a document, is common sense. They don't want to get bombed. They don't want to get hit. As far as sanctions are concerned, at some point, we have sanctions which will never let them rebuild. They would have no money. They would be in poverty. The 91 million people would starve. So something will happen as soon as they behave. When they behave, we're going to let that go. We're going to have to. I put sanctions on a lot of people, and then I let them go. A lot of countries. Yeah, please.
Thank you, Mr. President. My name is Shinji Abe. I'm a Japanese Yomiuri newspaper company from the Washington Correspondent. My question is about the Strait of Hormuz. Did you ask other G7 nations to send military force? And what specifically are you asking of Japan? Or
where are you from?
I'm from Japan.
From where?
Japan. And is military support?
I just left your prime minister. Japan's doing very well. She's my biggest fan, I have to tell you. She thinks I did a great job. You have to call her and ask her. She's doing a very good job, by the way. Go ahead.
And military support is no longer necessary?
Yeah, but what do you want to know? Go ahead, just tell me. What do you want to know?
Okay. My question is, did you ask other G7 nations to send military force? And what specifically are you asking of Japan?
To send the Air Force? For what? Oh, other countries, not just Japan. No, we don't need it. Oh, by the way, they all want to do it. They all want to do it. Every single one of them. They want to go be a part of it now. Not while the war was going on. I was a little disappointed. The UK, I said, yeah, it would be nice if you sent ships. I didn't put a hard sell on, but I said it would be nice if you sent some ships. And the Prime Minister said, they'll be there, sir, as soon as the war is over. I said, did you just say that? I couldn't believe it, actually. Japan has offered to get involved, but I mean, I'll be honest, Japan was not willing to get involved during the war. I asked her, I said, you want to get involved a little bit? I didn't put the heavy sell on, but they said, no, we don't want to get involved. Nobody did. We did it ourselves with Israel and with the Arab states that got hit, surprisingly hit, yeah. Yes, please, go ahead.
Thanks a lot, Mr. President. Question on Brazil. I would like to know, how was your interaction here in Evian during the G7 with the Brazilian President Lula? Did you talk about the new U.S. tariffs on Brazil? Did you talk about the U.S. designation of criminal gangs as terrorists?
We did.
How was it?
I spent a lot of time with him, actually, and it's become a little rough country, right? Politically, it's been a little dangerous politically. You're talking about Brazil, yeah? It's been nasty. I hear they arrested somebody that's running for office today. I found that out after we left. I just said goodbye to him, and I heard that they arrested the Bolsonaro Jr. He was doing well in the polls, and they arrested him because he made a statement in Texas. They arrested him, or they want to arrest him. They have something out for his arrest. No, they play pretty tough. But nobody plays tougher than the United States. Look, our elections are totally rigged. We have rigged elections. Please, in the back. Yes, sir. Go ahead.
Thank you so much, President.
Thank you.
Susumu Sakamoto, the Asahi Shimbun. For G7, the concept of the rule of law has long been considered the core principle. During this summit, any of the leaders expressed any concerns on the possible violation of international law on the attack on Iran?
No, actually the opposite. They felt they were very dangerous. They were very relieved because they could get hit too. They were very relieved. No, we never discussed that. No, it'd be the opposite. They broke the law. They killed thousands of people. They killed thousands of our soldiers and hundreds of thousands of people. Yeah, please go ahead. Go ahead.
Okay. Mr. President,
yes.
Yesterday, Pakistan thanks for the Chinese government to help make a peace talk between Iran and the United States. So what do you think about China's work to get the United States and Iran sitting down to talk and make the deal? And the second question is...
Okay, let me answer the question.
Okay.
So I think China's been terrific. I told you that before. They could have been bad. They could have sent in to try and block or break the blockade. They could have sent in an oil ship with 6 destroyers alongside of it on each side. They didn't do that. President Xi helped me. He tried to help, and I think he probably helped get it solved. You know, they get 50% of their oil from that location. So that wasn't that easy. President Xi was fantastic. He tried to help me solve it. And he didn't give any big weaponry. I guess we'll find something somewhere along the line. But he didn't give any big weaponry, I can tell you that. No, I think China I couldn't ask for much more. Again, they were impacted because they get more than 50% of their oil from the Hormuz Strait. And no, I thought they were fantastic. Okay, how about one more question right here? Go ahead, please.
The latest YouGov Economist poll shows that Democrats have lost a 5-point edge on the generic congressional ballot. They just have now just a 2-point lead since February. Do you think that they're losing momentum?
Well, I see the Republicans in generics. You know, generics are very important. I don't know how accurate, because I see a lot of bad polls. The polls are very dishonest, just like a lot of reporters, like these people over here, are very dishonest. CNN, ABC, it's a whole group of them over there. They're really dishonest people. But, you know, and really networks are very dishonest. And they have to straighten themselves out, or they're not going to be very successful, because people don't believe them anymore. But no, the generics are very interesting because the Republicans are coming up strong even before this. You know why? They're seeing all these lunatics, like the guy in Maine with the swastika. You know, for 10 years they've been calling me a Nazi. And now they have a Nazi running. He's got a tattoo on him. I've been denying it for 10 years. They know it's not so, but they've been calling. I don't think they can call it to me anymore, you know. One more? One more? Go ahead, Peter. Let me finish with Peter, because he's been better to me than he's been to Biden.
Thank you, President Trump. I have a question about this weekend. Why not stick around for the signing ceremony with this Iran peace deal?
I might.
You might?
Yeah, I might. But I'd rather, this is a memorandum of understanding. It's very important, but it might not be the kind of a document that I should be signing.
There's some element to this where you send the vice president. If it works out, great, you look like a genius for sending him. And if it doesn't work out, it's the vice president's fault.
I like that idea, sure. What? This way, if it works out, I'm going to take the credit. If it doesn't work out, I'm blaming J.D. You better be careful, J.D. He's going to turn his plane around and get the hell out of here. Yeah, I like that idea. I think it's a good idea. Thank you very much, everybody. Thank you.
Right there you have it, President Trump live in France, speaking for more than an hour off the cuff and for an extended back and forth with reporters at the conclusion of his visit to the G7 in France, that taking place in Evian, live here on Bloomberg TV and radio, with the headline on the terminal, the president saying he may sign a deal with Iran tomorrow or Friday, adding this isn't like, in his words, you're signing a lease on a candy store corner. He said it's a memorandum of understanding. If it does not get done in 60 days, we go back to bombing, and I don't want to do that. I'm Joe Matthew in Washington. Thanks for being with us here on the Wednesday edition of Balance of Power on Bloomberg TV and radio. We wanted to give you a full splash there with President Trump in France as we work our way towards another important news conference today, that, of course, being with the Fed Chair, Kevin Warsh. Kaylee Lyons at my side with questions, Kaylee, about the highly enriched uranium in Iran, the president saying that technical discussions on its removal will start immediately.
And of course, questions around what Iran will get in exchange for potential concessions on its nuclear program that will be ironed out over the next 60 days. The president contending when pushed by Bloomberg's Tyler Kendall about sanctions relief on energy products said that will happen when Iran behaves. When Iran behaves, he says, we will do something. At one point during the press conference, also suggesting, I guess we'll have to give Iran its money back, making the case that Iran's not going to get direct payments of U.S. funds, but unfrozen assets, a different story.
Suggesting that the U.S. took a lot of their money, he said, but also returning repeatedly to the idea of resuming strikes if necessary. He also had some tough words for Israel and Benjamin Netanyahu specifically, saying we had an amazing partnership. He's an amazing prime minister, but a dispute over Lebanon, and I say, you can do a little softer touch.
Yeah, it's a lot to unpack, and I'm glad to say that we can do so with Republican Senator Bill Hagerty of Tennessee, who is joining us now live from Capitol Hill on Bloomberg TV and radio. Senator, welcome back, and thank you for your patience as we heard many words from the president there. I would love your take on this memorandum of understanding with Iran, as you have been on this network many times during the Biden administration criticizing President Biden for not having stronger financial restrictions around Iran via sanctions and other means. Does it sit well with you, the notion that we could soon have an easing of sanctions and a releasing of frozen assets?
Kayleigh, it certainly does if that's in exchange for actual performance. And if I can contrast this to what happened during the Obama-Biden administration, if you think about what they did with the JCPOA, they essentially bribed and paid off the Iranian regime, which turned into funding for terrorism. What President Trump is doing is he's forcing the Iranians to pay for the terrorism that they've conducted. If you think about where the Iranian regime is right now, their nuclear stockpile is under a mountain. Their Navy is at the bottom of the sea. They have no control of their airspace. They're in a fundamentally different place with respect to their economy. It's in ruins right now. I mean, this is a very different situation, and Iran has every incentive now to perform. In my understanding, and I've spoken with the White House about it this week, this will be a pay-for-performance type of structure, meaning they're not going to get any sort of relief until they've actually demonstrated concrete performance. Right now, we're at an MOU stage. This is not a treaty. This is an opportunity to lay out the details, work out the details. It's going to be complicated, I think, particularly with respect to the nuclear material that you're talking about. But there's going to be a path now to work that out, and I hope that the Iranians will realize President Trump is dead serious about this, as all of us are here in Washington.
Important what you just said about the MOU, Senator. Does that suggest then that Congress would not play a role until this was a formalized deal and then would sign off on a treaty, as you put it?
Joe, that's correct. An MOU is just an agreement to move forward. It's an understanding to try to get to a point that we might actually have a treaty. But until that point occurs, Congress doesn't have a role to play. Right now, this is just a next step, if you will, for the administration to engage more deeply and in more specific, actionable terms about what the Iranians must do in order to see their economy begin to move back in the right direction.
What about what the Israelis must do, Senator? We just heard more from the president around the issue with Lebanon and the divergence we see between what this administration would like versus the Netanyahu government in Israel. How does that get reconciled if Israel still believes it is facing an existential threat?
Kayleigh, this is something I think is at the very heart of the challenge that we're trying to deal with right now. And the question is whether Iran can actually control Hezbollah. If you think about it, Hezbollah has been like the sword of Damocles over the Israeli government there, over the Israeli economy, because they're there in Lebanon, intermittent strikes on a constant basis. The Israelis certainly have the right to defend themselves. That's what they've been doing. President Trump, I don't think, is suggesting that the Israelis stand down if the Iranians can't control Hezbollah. I really want to wait to see what the details are. Let's see what the MOU has and where we actually get over the course of the next 60 days. But this certainly is going to be an area that's going to require a lot of attention.
Senator, what's going on with the DNI? I'm looking at a tweet from Senator Tom Cotton, who says it's regrettable the president has directed Jay Clayton not to appear at his confirmation hearing today. And indeed, that was the word from the president overnight on Truth Social. Will Bill Pulte end up being the director of national intelligence? And what does this mean for the renewal of FISA?
Well, I think the president has raised a number of concerns, and I understand his frustration with respect to the withdrawal, and I should say it's a postponement of Jay Clayton's appointment, I can certainly understand why the president wants to make certain that the 2nd District of New York, that is filled. If you think about what's happening there, it's the most critical Attorney General's position in the United States. That's where they're trying Maduro. That's where a number of very difficult cases are brought, cases that directly affect our national security. This is why Jay Clayton is such an excellent candidate long-term for D&I. But President Trump clearly wants to make certain that that position is filled. I think he's deeply concerned that President Schumer will, that Leader Schumer will try to block the president in terms of his next nominee, a highly competent person, again, from Sullivan and Cromwell, that he wants to see replace Jay Clayton. That needs to be done. He's basically making sure he's got the insurance to do it. What does that mean? That means Bill Pulte will be in a position to move into D&I on Friday. That's my understanding is how it will move. And again, there should be every incentive then for the Senate to confirm the next U.S. attorney for the 2nd District of Manhattan for the 2nd District.
We want to get into the Fed here, Senator, but do you agree with the president's assertion that Republicans fell into a trap by setting up this fast track to prevent, essentially, Pulte from becoming DNI?
I don't know that there's a trap here, but again, I think the president is looking at the situation as it stands. He sees zero cooperation coming from the Democrats right now. They've done everything they can to lock up the government, to make it non-functional. I think they're going to try to shut down the government at the end of September. That seems to be their playbook, is ultimate chaos. There's been an agreement here, and I think President Trump wants to make certain that we don't confirm before we get the actual performance on the other side from the Democrats. So I understand his frustration clearly.
Well, so there may not be a confirmation vote for D&I in the Senate this week. There may, though, be a vote on bipartisan, bicameral housing legislation. Senator, are you happy with the compromise that was reached between your chamber and the House on the 21st Century Road to Housing Act?
Yeah, Kayleigh, the majority of the Senate did, the vast majority, frankly. It came out yesterday. We voted it through with overwhelming support. I think we're in a position now to see it on a bicameral basis. We have unity between the House and the Senate, so this bill is going to move forward with a large degree of support on both sides.
It's Fed Day. You, of course, introduced the now chair of the Fed, Kevin Warsh, at his hearings on Capitol Hill, his confirmation hearing. Senator, I'm wondering what you think about the rock and a hard place that he finds himself in, with, of course, the president on one shoulder asking for lower interest rates, and I know that was his charge at one point, and we'll have that opportunity eventually, but the price pressure that we've seen, in part because of the war in Iran, has made that very difficult. We've already seen the bond market reacting with interest rates, and I'm wondering what you'd like to hear from him today when he meets with reporters and issues his first policy statement.
Well, Joe, I think the market is largely priced in no action today. I think the question is what happens in the future, and I think that's going to be the real question in my mind, is how does Kevin Warsh, our new Fed chairman, handle his communication about the future. He's been critical of communications in the past, the Fed being too engaged in sending forward messaging. So it'll be very interesting to see how he looks at it today, how this first press conference goes. But I'll say this, he's got a number of variables to examine here. If you think about what the president just covered at his press conference, energy prices are, as they said, plummeting. If you look at the futures markets, there's definitely an expectation. Prices are coming down dramatically today, and the expectation is they'll come down far more in the future as we get more clarity around this memorandum of understanding. We get to a final deal. I think we'll see even further downward pressure on energy. There are a couple of other aspects that I think are inherently deflationary. If you look at where we're going with AI, the actual opportunity for productivity increases, that again suggests that we could see more impact on inflation in the downward direction. And frankly, the deregulatory efforts that are underway here are very, very significant in terms of being deflationary themselves. We're removing trillions of dollars worth of compliance costs that have been imposed upon this economy by the previous administration. The estimates are anywhere between $4 and $8 trillion worth of compliance costs that the Biden administration imposed upon America. Those are being peeled off. The economy is being liberated as a result. So I think that there are inherently a number of deflationary pressures. When will that happen? Again, the markets today have a rate increase priced in by the end of the year. I could see Chairman Warsh being very cautious about how he handles this press conference today, because there are a lot of variables in play, and I could see certainly downward pressure. The question is, when does that really take hold?
Well, we're all looking forward to hearing from Sharon Warsh this afternoon. Senator, before we let you go, I also have to ask you about the Clarity Act, the market structure legislation for cryptocurrencies. We're still seeing a debate between the banks and crypto companies around stablecoin rewards programs. How is this ultimately going to shake out? Senator, when can Clarity move forward?
I think that we've got a number of pieces. Again, the Housing Act is moving right now. That's a banking committee product. My expectation is that we are going to continue to focus on Clarity, probably getting to it in the July timeframe. I'd certainly like to see this done before the August recess takes place. I think the ecosystem here in the marketplace in America needs to see this. We've moved significantly down the pike with the digital asset legislation that I sponsored last year, the Genius Act. That put America in the driver's seat in terms of modern payment systems. It puts the American dollar in the digital arena. It makes certain that America continues to lead when we have a stable coin that is dollar for dollar backed by U.S. Treasury securities. What we need to do now is expand that Clarity, expand that governance system so that it's very clear what happens here in America, that people have confidence to continue to invest in this technology that has great innovative capacity. So I'm very hopeful that we'll get to it in a matter of weeks.
If it's not done by the end of July, is it on to next year?
Joe, it's not clear. Certainly, we'll be back in session in September. I just think the closer we get to an election, the more difficult it is to get anything accomplished here.
Heard that before, Senator. It's great to see you, and thank you for joining us on Fed Day. We'll, of course, be listening closely when the chair does, in fact, meet the press. Bill Hagerty, the senator, Republican from Tennessee, with us live on Bloomberg TV and radio. And as we work our way closer to our special Fed coverage, we want to check in with Bloomberg's Tyler Kendall. She's still in the room at the G7. Now that the president has just left with his top lieutenants, the secretaries of Treasury, State, Commerce, with him as he answered questions from reporters, including Tyler Kendall. Now, Kayleigh just referred to the question that Tyler had for the President of the United States moving forward with the lifting of sanctions. Tyler, do we expect this MOU to be signed tomorrow?
Well, Joe, President Trump told us reporters in the room it could be signed tomorrow, it could be signed the next day. We're still waiting on that official confirmation from the White House, as well as the official confirmation on what is in this finalized text. Now, as you mentioned, I had the chance to ask President Trump a few questions, including when it comes to whether we will see any sort of assurances that the U.S. was able to receive that Iran will not charge what Iranian state media is calling fees in the Strait of Hormuz after that 60-day extension. Our understanding is there are assurances around being a toll-free waterway for that first 60 days. And he told me in part, quote, the thing that's going to stop them from doing that, because you can't cover everything in a document, is common sense. They don't want to get bombed. They don't want to get hit. So it doesn't seem like we will actually get anything related to fees in the long-term security of the Strait in this document. And then when it comes to those sanctions, I asked him if he could confirm that Iran will get that immediate relief to get their crude to market off the heels of some incredible reporting from Bloomberg News yesterday. And he didn't confirm it, he didn't deny it, but he did reference this idea that Iran does need to see sanctions lifted in order for their country to rebuild.
Yeah, he suggested that they'll be lifted once Iran does something. Tyler, just quickly, obviously the president was lukewarm as to whether or not he was going to stick around in Europe for the signing ceremony. Do we know firmly what is on his schedule when he's supposed to return home?
Well, Kayleigh, at this point, we know that tonight he's going to head over to Versailles and have a dinner with French President Macron and his wife. He did talk about that, said he's excited to go to that visit. We know that the pair of leaders have a lot to discuss beyond just the conflict in Iran, including President Trump's threat of a 100% tariff on French wine if France does not drop its digital services tax, as well as what is happening when it comes to artificial intelligence. These leaders met with big tech CEOs earlier today, including OpenAI and Anthropic. I was in the press conference earlier with the French President Macron. He didn't directly answer the question about whether or not France is seeking to access Anthropic's most advanced models amid a recent ban from the Trump administration. Joe and Kayleigh, I bet that might come up over dinner tonight.
All right, Bloomberg's Tyler Kendall live in Evian, France after that long press conference from President Trump. Thank you so much. And yes, the dinner at Versailles still on the president's agenda.
Not gold leaf,
for this
he says.
Trip. Not
the
gold
real
leaf.
gold.
It's the real thing.
Absolutely.
He's excited to see the beautiful building. After, of course, just holding a nearly more than hour-long press conference. We actually thought for a minute that that press conference of President Trump might run right into the other big press conference we're watching in Washington and on Wall Street today, which is, of course, the one that the Fed chair, Kevin Warsh, will give his inaugural as chair of the Federal Reserve after an interest rate decision, which is expected to be, once again, a holding of interest rates. So we want to get into this now as we beat the drum to our special Fed Decides coverage, as we're joined by Kitty Richards of the Groundwork Collaborative, where she is a senior fellow. She's also a former official at the U.S. Department of Treasury. Welcome back to Bloomberg TV and Radio, Kitty.
Thanks for having me.
It's good to see you. So I would imagine you are also of the mind that the Fed is not going to move.
I think that's the expectation from everyone. The real question is going to be what kind of forward guidance or lack thereof we get on how the Fed might move in the future. Chairman Warsh, this is his first FOMC meeting, and he has signaled that he would like to see the Fed communicate less and less frequently. He feels that it somehow binds the Fed. I think markets like to have as much information as they can about what the Fed is thinking, but they will be releasing economic projections and the so-called dot plot, which will tell us a little bit about where the Fed governors see interest rates and the economy going over the next 6 months.
There's a question about whether he actually puts a dot on the plot.
Yeah.
Does the bond market care, and would that be strange if he didn't?
I think it would be an unusual departure, but the Fed is not made up of one person.
Yeah, sure.
And so I think the guidance received from what all the other Fed governors will still be useful to the bond markets.
Well, it's interesting to consider this decision as well in the context of a memorandum of understanding between the U.S. and Iran that President Trump says will mean the Strait of Hormuz is opening back up at the end of this week. He says that energy and oil prices are going to drop. Can the Fed count on that? How do you expect that their reaction function changes to the geopolitical developments?
I think that the past few months have shown us that policymakers can't count on President Trump's pronouncements about what is going to happen in the Strait of Hormuz. When the war in Iran was initially launched, it was supposed to last a matter of weeks. The supply shocks in the oil market have persisted for months now, and they're starting to drive other prices higher. And so what the Fed is really thinking about is how to react to what's already happened in the oil price shocks. And there are differences of opinion on how one should respond to what could be supply shocks that are short-lived, that don't propagate through the economy. But to be honest, at some point, when you have supply shock after supply shock or so-called transitory impacts over and over that keep inflation elevated for long periods, it starts to become a little bit messier of a position for the Fed to be in.
Looking at oil prices today, they're actually slightly higher after some pretty significant declines. Yesterday, there is a thought that $76 a barrel could be our new reality. And if that's the case, if it's months more of this, realizing it's not 100 or 120, what is the impact on prices and consumer spending?
I think that we are going to see prices continuing to rise, and that is going to happen both because fuel costs are a direct cost for families across the economy, but also it costs more to ship goods and provide services when fuel costs are high. And so we might start to see more of those costs showing up in food prices.
That's not a one-time event then. We're not seeing through that, are we?
That's exactly right. It's not a one-time event. And, the Fed's in a difficult position because the reason that they don't tend to want to respond aggressively to temporary supply shocks is that they can't solve the oil supply problem. Sure. All they can do to bring down prices is squeeze families even more with higher borrowing costs so that families can't afford to buy as much and spend as much in the market. But that's really hard on those families. It's hard on businesses that are trying to give people a raise. But another issue is it's not clear how effective it's going to be. One thing I've been really watching is how rising inequality is impacting the Fed's ability to affect inflation with interest rate changes. We now have a lot of data showing that about half of consumer spending is from just the top 10%. And so one question is, how much are those folks affected and their ability to keep paying ever higher prices? How much are they affected by these changes in interest rates States versus the squeeze that it puts on ordinary Americans.
Well, and you mentioned raises there that businesses are not able to give. We obviously are no longer seeing wage gains keeping pace with inflation, even as we're seeing the overall labor market, it seems, hanging in there.
That's exactly right.
When we're considering that part of the dual mandate, what is the real state of things?
You know, it's hard to pull apart. So we've now had 2 straight months of real wage declines, not growth, but they're actually falling. That's really squeezing families. But you know, the unemployment rate is staying low. We saw some reasonable job growth. We're no longer in a position, I think, where folks who are really worried about the labor market side of the Fed's mandate are going to be arguing for cuts. So I think that when you weigh the balance of risks here, I anticipate we're going to see more governors moving toward potentially future hikes. And probably in that dot plot, we're not going to see many people arguing that we're going to see rate cuts later this year.
So how careful does Kevin Warsh need to be in this first dance with reporters? This is not an easy job for anybody, especially with this room of smart people. You know, when Michael McKee comes packing with that question, you need to answer it on international television.
I think that the chair is going to really have to deal with the fact that there are people who have concerns that he is a Trump lackey who is going to potentially abandon the interest rate target, cut interest rates in order to goose the economy, make the president happy. So I imagine there are going to be questions about that. He's going to have to walk a very careful line. What I'm really curious about is whether he's asked any questions about his stance, not just on interest rates, but on the Fed's balance sheet. Yep. So he has said repeatedly that he thinks that the Fed should unwind its multi-trillion-dollar balance sheet, which consists of treasury bills and mortgage-backed securities, and that would have a big effect on the market.
And that's where we could get some real news potentially today. With the help of Kitty Richards, we set ourselves up for special Fed coverage and, of course, the actual event, Kaylee, a special edition of Bloomberg Surveillance. The Fed Decides starts after this. We'll meet you back here on the late edition of Balance of Power at 5 p.m. Eastern here on Bloomberg.
Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance, The Fed Decides.
Good afternoon, live on Bloomberg Television and Radio, counting down to another Fed rate decision. Scarlett Fu in the hot seat, Tom Keene, Jonathan Farrow both off today for a truly revolutionary meeting, something that really doesn't happen very often. This is a historic day when it comes to a Federal Reserve meeting, given the fact that there have only been 4 chairs for the Federal Reserve over the past 30 years. Make it 5, enter Kevin Warsh. This is a new day and a new head of the Federal Reserve.
In a new era when it comes to what's happening with the economy, right? We're making this change from an idea where people thought the Federal Reserve was going to cut rates to perhaps the Federal Reserve hiking rates. So it comes at this crucial time. There's no question that rates are going to stay unchanged for this meeting. So it all comes down to what he says, how he communicates, and how long he talks for.
Yeah, that's some of the big questions that people have. Exactly that. How many words, how many questions, etc. Will they remove the easing bias? Of course, that's going to be a big one. Will there be a dot plot? If so, will he have a dot on that plot? And how long the statement will be, as you mentioned before. This will set the tone, potentially at a time when the market is expecting him to have something of a dovish tilt. How much is that the potential surprise?
Absolutely. Markets are heading into this with the S&P 500, the Dow, the NASDAQ, all near record highs. They've been little change bouncing around all day. Yields have come down as oil prices have really fallen following the announcement of an interim peace deal between Iran and the U.S. We don't know what that peace deal looks like. We don't have the details. Nothing's been published, but right now markets are taking it.
Right now we see the S&P, as Scar was mentioning, down just a touch. The NASDAQ, though, really had been leading the charge. The Russell 2000, though, getting a boost. As people take a look at the bond space, yields just slightly higher as they look towards some guidance, at least on the front end, 4.06%. On the long end, getting a bid with a 1 basis point decline on the 30-year. And really, as Scarlett was mentioning, what we are seeing in the oil space has infiltrated through everything as we talk about a potential deal that could sign in the next couple of days, hanging out there around that $76 a barrel level on New York crude. Coming up shortly, we've got JP Morgan's Bob Michael, SocGen's Subhadra Rajappa, and Bank of America's Aditya Bahave. They will be taking us up to that Fed rate decision at 2 p.m. Eastern. Then we get immediate reaction from former Fed Vice Chair Rich Clarida, Diane Swonk of KPMG, and Deutsche Bank's Matt Lazzetti. And finally, after the fireworks, breaking it all down, who is Fed Chair Kevin Warsh? We'll be speaking with Citigroup's Kate Moore, Jim Bianco of Bianco Research, and Stephanie Roth of Wolfe Research, as well as BlackRock's Jeffrey Rosenberg. Joining us now, I'm so glad to say, is Bob Michael of JP Morgan. Bob, always great to see you. Thank you for being here.
Fantastic to be here. It's a historic day.
It is a historic day. What do you think is the biggest question that could be answered at today's meeting?
I think the question that everyone is wondering, he talks about regime change. What does that actually mean? Does he have a framework that he wants to put in place at the Fed? Is he willing to give us some indication of what that could be? Or is he just going to try to get through this meeting without any controversy, throw his dot in, kind of no change and sort of the average, be very bland during the press conference and then move on?
How confident are you that whatever he says, he will be speaking on behalf of the committee?
Well, I think we'll have to watch that. The good news is we do get a dot plot, so we'll see the dispersion of dots. We'll be able to match his comments to the dispersion of dots and see if he's telling a narrative that explains it. Look, I think there are a lot of questions about a regime change. I think what's important to remember, the Federal Reserve Act of 1913 is 113 years old. Yeah, the objectives of full employment and price stability make sense, but it needs to be modernized and updated every so often. So he is certainly entitled to take a fresh look at it, come up with suggestions. I don't think you do that at the first meeting, though.
You kind of set the tone and, kind of bring people on board. How do you think he will perform for the president? Because he was President Trump's pick. He comes out of central casting, as the president likes to say. And to some extent, part of his role, at least according to the White House, is to say stuff that soothes the president.
He's destined to disappoint. It can't work out any other way. If you look at the economy right now, it's doing great. And we're going to see that in the summary of economic projections. They're probably going to lower unemployment and raise inflation. It will all be fine. But we have to accept the economy's in pretty good shape. That's not an economy where you cut rates. So you're not cutting rates. I'm interested to see for the end of 2026, how many dots are there for rate hikes? Do you get 2 or 3? So the president's not going to like that. The sequence of events that would cause him to cut rates over the next 6 to 9 months, nobody should want that. It will likely mean that there's problems somewhere in the economy, that unemployment is going up, that something's stagnating. That's not a healthy economy. And if he has to cut rates in that kind of environment, the president won't be happy with the macroeconomic environment.
One thing that's marked some of the recent meetings has been the dissents. We've seen dissents for the first time and at the greatest pace going back a number of decades. Do you expect dissents at this meeting? Do you think that that would be really notable?
It depends how the post-meeting statement is curated. If they just drop the easing bias, then I think you'll be able to shift the dissents that existed to no rate cut. I think we'll see 12-0 for no rate cut and no dissents. If they leave in kind of fuzzy language, I think you could see a couple dissents that indicate higher rates, but I don't expect any dissents. I think you just drop the easing bias, 12-0, and move on.
What's the bias in markets in terms of whether this is going to be a hawkish or dovish kind of read? I mean, right now, it seems like people are expecting a status quo. At least we've seen the bond market really do very little over the past, since the last Fed meeting on April 29th. Do you expect people to be more surprised by a hawkish tilt, given some of the political discussion that Scarlett was mentioning?
I think the market would be equally surprised by either a hawkish tilt or a dovish tilt. I think everyone sees the need to do nothing. Just leave rates where they are, see if the MOU in the Middle East actually holds through the weekend, gets signed, where oil settles, how the economy adjusts to all that. We still have tariffs brewing in the background. We move to section tariffs. How does all of that happen? I think the market participants would just be happy to see that play out. If they see a hawkish tilt, they're going to think that's premature. I think they'll get worried that the Fed is seeing something they're not. And if they see a dovish tilt, they're just going to poo-poo it as that's yesterday's news. What's the matter with the Fed? Maybe Warsh is right. It needs some modernization.
In Kevin Warsh's confirmation hearing, he said inflation is a choice. What did he mean by that, and how do you think he applies that thinking?
Well, I think as chair of the Federal Reserve, he's absolutely right. Inflation are prices that are denominated in money. If you want to go out there and increase the money supply and start printing money again and distributing through the system, you could live with higher inflation. You'll have much higher growth, but prices will go up. If you want to start draining liquidity from the system, you want to do things like shrink the size of the balance sheet, then you're going to moderate inflation quite a bit. Yeah, it could have an adverse reaction to the economy and to the markets. It depends how much, how quickly.
Kevin Warsh was Fed governor from 2006 to 2011, so up to, during, and after the great financial crisis, and was pretty vocal as a hawk. Or do you think that's the case? Is that the right characterization, or was he hawkish for that moment, at that time when the economy looked like that?
So here are two interesting fun facts. One, the dots came in 2012, so he never did the dots. Mm-hmm. This would be new to him. How can you just not do it without even trying it? And two, he never overlapped with anyone who's on the FOMC now. He left right as Williams was going on. They never attended a meeting together, a mere technicality. So I think he's in a curious spot right now.
As a bond investor, given that on one side you see a lot of froth in the markets, and the other side people say, well, rates might be slightly restrictive, although probably neutral right now. How are you navigating that? I mean, do you still see bonds as a really attractive investment, both in the corporate space with spreads at some of the lowest that you've seen in a long time, and given yields that have really remained tame given some of the speculation around inflation?
So 4 months ago, the 10-year was 390. Last month, it was 470. You had a dramatic repricing. You have to understand the bond market's different at 470 than at 390. So there has been some repricing that's gone on. The easing bias has been removed. A tilt to 1 or 2 rate hikes over the next year or so are priced into the market. I think the market's in great shape right now. I don't even want to hear about the 10-year until rates get to 4 5/8. Then we can evaluate whether there's something happening that will take them higher. Otherwise, they're with 100 basis points of the Fed funds rate, that's fine. And on the other side, is it 420? Is it 430? Pick your retracement level. You can get down there realistically. Through that, you have to reevaluate.
Bob Michael, you're sticking with us. We'll continue the conversation in just a moment. Coming up, Subhadra Rajappa of SocGen, Bank of America's Adichie Bahave. Both of them will be joining us. That conversation coming up next. This is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
23andMe, I think, is so incredibly valuable. We're coming back.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
In case you missed it, on Bloomberg Brief.
When we were talking about it originally, we thought that this was going to be a very short war. We thought that the energy price hike or increase would be just a spike up and down, but it's been persistent, and that's the concern that we continue to have because we're starting to see a little bit of fragility in the consumer. If we look at consumer inflation expectations, they're much higher than what the market is pricing in.
Don't miss Bloomberg Brief, live every weekday.
I think Kevin Warsh has a dilemma on his hands.
Once you're in that seat, it's a lot different.
I don't think he's going to want to rock the committee.
The Fed clearly has a pretty complicated dynamic.
You do have this higher resting heart rate for inflation.
We have a labor market that looks stable but feels tighter.
The Fed is going to be careful, not to overreact.
We need to see the Fed remove the easing bias.
We're not going to get a rate cut anytime soon.
Most Fed officials, of course, are going to be fine leaving rates as they are.
I think the Fed will do what they can to be on hold. They're just on hold.
The Fed will remain on hold.
It's all going to be about communications.
The Fed will do what they can to leave flexibility in the statements.
The dot plot creates sometimes a bit more confusion.
If they put the dot plot out, it's going to give some indication.
There's always the chance that it could be drastically different.
I don't know how much fundamental change there's going to be.
This is Countdown to the Fed Decides on Bloomberg Television and Radio. I'm Lisa Abramowitz. As everyone talks dots and gets excited when people start talking about what we could potentially see changing communication, let's take a quick look at markets. Markets are in a waiting zone, a landing zone, as they wait for a Fed chair, Kevin Warsh, to step to the podium for the first time at the head of the U.S. Central Bank. S&P futures just a little bit lower. The Russell 2000 doing better as people anticipate maybe a little bit of relief when it comes to not necessarily endorsing the idea of a rate hike. When you take a look at the bond space, it is remarkable to see how stable the bond market has been going back to the last Fed meeting on April 29th. At that day, the 10-year yield, 4.43%. Today, where is that yield? 4.43%. We've done nothing since April 29th till today with the MOVE Index falling to real lows.
Yeah, it's all a matter of what he says and how he says it. And I did see that you kind of paused before you said his name, Kevin Warsh, because we're so used to saying Fed Chair Jay Powell. Jay Powell is still a part of this Fed board. Let's not forget, right? Because he stepped down as chair, but he's still very much a member of the board. He has not stepped down from that position, and in part because he's worried about the Fed's independence.
Yeah, so what will it take for him to step away? Will he make an appearance in any capacity? Where will his dot be, Governor Powell? Meanwhile, we are looking at an oil market that has dictated so much of this. How do they message oil, given the fact that ultimately it is coming in terms of the pricing and potentially could be chalked up as just a transitory issue? Joining us now is Subhadra Japa of Societe Generale. Subhadra, great to have you on the show. Thank you so much for being here. I want to start with what you're expecting today in terms of the length, in terms of the questions, in terms of the tone for the new Kevin Warsh Federal Reserve.
So the economy is in a sweet spot, and this is really a good time for Warsh to start his new job. We've seen a very sharp decline in oil prices. Yields have come off the highs. Equity markets are near all-time highs. Risk sentiment is extremely positive. So for the most part, I think we're not really expecting a lot of changes. I think the summary of economic projections might show modestly higher inflation, as well as a modestly lower unemployment rate. But for the markets, I think what's really going to be market moving is what we see in the dots. Is there going to be much more of a bias towards hikes from the rest of the committee versus where Kevin Warsh's dot would be, and whether we even get a dot from Chair Warsh? And the next thing that I'll be watching to see is how long the press conference is. Is it going to be a short conference, or is he going to spend 45 minutes like Powell did when he was chair?
How much much do they bring up oil prices, Subhadra? I look at WTI, and on April 29th, it was at $100 a barrel. Today, it's about 76. And of course, this is very much in flux given what's going to happen or what's expected to happen by the end of this week.
Oil prices are very, very important because that really pegs the narrative of headline inflation or inflation in general being somewhat transitory on the upside on the headline part. Core inflation, of course, is starting to trend higher. I mean, I think we're going to get core PCE next year, next week, I should say, showing a much hotter print. So the trajectory for inflation for the remainder of the year is going to be on the hotter side. The fact that we're starting to see lower oil prices is definitely a step in the right direction to reinforce that transitory narrative.
You've said the word transitory. We've heard it a couple of times so far this hour. But is that something that the Fed can actually use in its language? Because it's become kind of a dirty word in the Fed world.
So if you kind of step back and look at geopolitical events in the past, we've always seen that the rise in oil prices tends to be somewhat temporary. The feed through to headline inflation tends to be somewhat temporary as well. So in that sort of context, it makes sense that we're able to look past the rise in headline inflation. The real concern for the Fed is, of course, core PCE. Core inflation has been trending higher, probably remains between 3 and 3.5%, or 3.25% and 3.5% for the remainder of the year. And that really argues for the Fed to keep policy on hold, not just for this year, but well into next year as well. So it's going to be a prolonged period of Fed on hold, and with no real case for the Fed to rush into heights.
Bob Michael still alongside us. Is the oil shock transitory, and are we seeing that essentially getting eased through the market?
For sure, the market is far more focused on the Middle East and oil than it is on the Federal Reserve. So you just have to accept that. Is it transitory? Somewhat. I don't think we're going back to $60 a barrel. Do we settle in around $80 a barrel? Are we going to find that it takes a while to get the oil and natural gas out of the Middle East to where it's much needed? Yeah, it probably will take some time. I don't think we go back up to 100, but somewhere around 80 is a more modest headwind than we've seen, but something higher than what existed at $60 a barrel.
There's also some pretty big chip inflation, as well as inflation in the pocketbooks of anybody who invested in SpaceX, who seem to be doing well today, maybe notwithstanding. Subhadra, from your perspective, do you expect any commentary from the Federal Reserve about how broad-based the inflation is? I mean, we saw retail sales today. It was broad-based. It wasn't just coming from oil.
Absolutely, and I think that is something that we should all be paying close attention to, because it's headline inflation, it's core inflation, it's goods inflation, as well as services inflation on the core side. So it's definitely something that we should be talking about. Inflation expectations, however, have been somewhat contained. If anything, we've seen a significant decline in inflation expectations over the last few trading days with the decline in oil prices. So. But inflation in general, I think, is going to be the key topic that Wash is going to be questioned on. And that's really where we'll be paying close attention to see if he actually focuses on the trimmed mean measures as opposed to the headline inflation or core inflation specifics. So the trimmed mean measure might suggest that he's looking to be somewhat more on the dovish side. Again, we don't really expect that he's going to show a dovish bias, but that's something that I'll be paying attention to.
Subhadra Rajappa, thank you so much for your insights. I'm sure we'll be catching up with you post Kevin Warsh debut. Joining us now is Aditya Bahave of Bank of America as we do a look ahead about 7 minutes and a change to that decision. What are you expecting today?
Good afternoon. Thanks for having me on. So we think the easing bias will be removed from the forward guidance language in the statement. We think the dot plot won't show any policy action this year, so the Fed is on hold. An interesting question is how many people will show hikes this year. We've ballparked it at 3, but if it's significantly above or below that number, I think that could be viewed as hawkish or dovish. And then most importantly, what is Kevin Warsh going to say? We think he's going to lean dovish relative to the rest of the committee. Honestly, I think think he could just copy-paste his comments from his nomination testimony, which were viewed as slightly dovish at the time, and I think given the data flow, they would be a little bit more dovish now. He can take a victory lap on his comment that you should look through supply shocks with oil prices falling. He could continue to emphasize the trimmed mean, because that really hasn't moved in the last couple of months, even though core PCE has moved up.
What is he likely to say about AI disinflation? This is one of his talking points where perhaps we're not factoring in just how much productivity gains AI will usher in.
I think he can stick with the story. We need to make a forward-looking bet on this, according to Warsh, and I don't think that really changes from 2 months ago, right? It's something that he's been clear is still in the pipeline. We're probably not going to see it for a while, but he's saying we should be forward-looking about it. So that part of the story doesn't need to change. The challenge for him will be that before we get there, we're now looking at a period of significant overshoot in inflation, and how much tolerance does the committee have for that sort of overshoot? So even if you told me that inflation is going back to 2% 2 years down the line, what's happening in those intervening 2 years? Are we averaging 3%, 3.5%? And what does that mean for the cumulative overshoot since 2021?
Do we think also that under Kevin Warsh, the FOMC, the Fed, is going to be looking more carefully at new data sets, perhaps data sets that the Fed started to rely on during the government shutdown when we couldn't really look at the traditional measures for an accurate reflection of the economy?
He certainly talked about measuring inflation better. Alternative data sets are not necessarily better data sets, and I think that's the sell that he has to make to the committee. So, for example, a lot of the alt data that we looked at during the pandemic was useful for a brief period of time. And then after that, it actually became not very useful at all. So it's a matter of finding better data, not just different data.
Bob Michael is still here alongside us. Bob, are you expecting any commentary about AI at all from this Fed chair, given the fact that there's been a lot of questions, both about the disinflationary aspect of this, as well as potentially financial security?
I think he should be questioned on it. And when I listened to Christine Lagarde earlier today, she talked a lot about AI and the threat to financial stability. And what she meant was that if it gets into the banking system and creates another financial crisis, what do you do? How do you deal with it? So central bankers have to start thinking about that. They're there to backstop the banking system. And this is one of the great existential threats to the banking system.
And this would be a Fed chair that comes in after being a governor at a time of the last financial crisis. Adichie, are you expecting any kind of nod to that type of backdrop, given exactly what Bob's talking about, very much front and center for a lot of bankers?
Right, so that's a regulatory issue. I think it's kind of more of a medium-term issue. I don't know it necessarily gets addressed at the June meeting. Let's not forget he's only been in the seat for less than 4 weeks now. So it's probably something that the Fed is discussing. I don't think he's going to be ready to talk about that just yet.
Adichie Bahave, thank you so much for your thoughts as we count you down to that Fed decision about 3 minutes away. Bob, that is going to be a big issue. And the fact that he is new, I mean, this is the other thing. He is new. He is coming in. And the market tends to test a Federal Reserve chair. What do you think is the biggest test for him right now? Inflation, financial security, or just getting the whole committee together?
I think he should be asked if the expected disinflation is transitory. There's a broad CapEx cycle underway globally. Everyone talks about AI. Well, every major sovereign is interested in investing in AI and the power grid they need to power it. You tell me a sovereign that's also not interested in border security and investing in its defense. You tell me a sovereign that's not also invested in energy security and investing in that. There are 3 massive CapEx programs underway globally that will need capital, compete for capital, and create a cost for that capital.
And certainly not limited to the U.S. We can see this around the world as well. What kind of commentary have we gotten from other central bankers? You mentioned Christine Lagarde talking about cybersecurity in the context of it being a risk to the financial system, but what can we glean from how other policymakers are thinking about this?
I think they're all gathering information. I think they're worried. Aditya said it's a regulatory issue. I would remind everyone that housing was also regulated going into the GFC, and yet it spilled into the financial system. I think what Christine Lagarde is doing is she's thinking ahead. She's looking to be preemptive. If something does happen that's unforeseen, that we don't know today, how are we prepared to deal with it? I think every central banker is thinking through that. Not many have been as public as she's become.
Bob Michael, you're going to stick with us as we wait for that decision. We are about a minute and a half away. You can see markets treading water ahead of that, Scar. It seems like people don't know what to do given the buffeting news of both what's happening in the Middle East, as well as who will the real Fed Chair Warsh actually be?
Yeah, it's a big question mark, especially since he hasn't been that vocal. And there's all this expectation that under Chair Warsh, Fed communication is going to change. Perhaps it'll be less robust. Perhaps there'll be fewer instances of it. It feels like every week there's 5 or 6 Fed presidents speaking. Will that still remain the case going forward?
Yeah, communication is going to be a big deal. And right now, people have been looking at a yield curve that earlier this year was steepening. Suddenly, it's been flattening, and it's now the flattest going back to early last year. As people take a look at a potentially more restrictive Federal Reserve, about an 80% chance that there is one rate hike this year. Will he push that off, or will he kind of lean into that? How does this Fed chair potentially wrangle all of the committee members together at a time where there have been an increasing number of dissents? Will he take questions? How long will he speak? What word count will there be? Check out Polymarket. I'm sure it's all there as we await for this decision. And frankly, for the tone to be set, it cannot be emphasized enough how historic this day is. There have only been 4 Federal Reserve chairs in the past 30 years: Jerome Powell, Janet Yellen, Ben Bernanke, Alan Greenspan. Let's get to Bloomberg's Michael McKee.
The Warsh Fed holds the benchmark rate to 3.5 to 3.75%, significantly changes the statement and splits evenly over whether there will be a rate cut this year. They see a rate increase this year. They see one cut each in 2027 and 2028. 9 members see at least one increase this year, with 6 of them seeing 2 moves, but 9 see no moves or a cut. The median dot this year does move to 3.75%. From 3.375%. However, for 2026, there are only 18 dots, suggesting the Fed chairman did not enter one. He said he doesn't believe in the dot plot. 2 members did not submit a dot for 2028. The statement was cut to 4 paragraphs. The first, the vote unanimous, then the decision, along with a statement that the committee reaffirmed its policy of maintaining ample reserves in the banking system. The second and third graphs are the economic assessment. Activity is expanding at a solid pace despite elevated uncertainty that owes, in part, to conflict of the Middle East. Productivity growth and capital investment are strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. There is no balance of risks anymore. The statement concludes the committee will deliver price stability. All 19 members of the committee did submit economic forecasts. GDP this year, 2.2%, down 0.2 from March. Unemployment will be 4.3%, up 0.1. PCE headline inflation will come in at 3.6%, significantly increased from 2.7% in their March projection. Core similarly moves much higher to 3.3% from 2.7%. Growth and unemployment for 2027 are unchanged from March, while PCE inflation falls back to 2.3% and core to 2.5%. So some significant changes already under the Warsh Fed. We'll see what the chair has to say coming up in about a half an hour.
Michael McKee, stay close. Definitely putting his mark on this Federal Reserve. Just to underscore what Mike was just saying, it looks like potentially Fed Chair Kevin Warsh did not put a dot. That is speculation. There were only 18 dots. There are 19 members. And meanwhile, you're looking at 9 of 18 FOMC participants penciling in a 2026 rate hike. When you take a look at what that is in markets, you can see a huge shift up in the 2-year yield, a market shift of about 7 basis points to 4.13%. You can see stocks rolling over as this continues, people bleeding in the idea of a more hawkish central bank, given that an increasing number of Fed participants are looking at a rate hike this year. When you take a look at the NASDAQ, that is continuing to decline, the S&P 500 down about 0.5%. Bob, what's your initial reaction, given the fact this does seem to be a hawkish tilt on the committee and a very different statement?
It is a hawkish tilt from the committee. Half of the committee is expecting rate hikes this year, which is, I think, a real shot across the bow to the market. We were thinking 2, maybe 3 to be decorative. We didn't think half the committee. You know, it's something quite different. When you look at the inflation projections, you know, we were thinking up a couple tenths. You're up 6 tenths, 9 tenths for this year. So nobody at the FOMC is thinking that this inflation will be transitory enough and we'll see disinflation between now and the end of the year. So yeah, I think this is a Fed that is sending a hawkish message. I think you have a Fed chair telling us he can't be bothered with the dots. I think that's a slap across the face. We'll see how he deals with that and the Fed going forward.
Scarlett, it seems like this is a real change, both in tone, both in substance, and frankly, points to a hawkish committee and, as Bob said, a Fed chair that is doing away with the dots.
So it'll be really interesting to see how Kevin Warsh comes out and frames everything when he does begin speaking, because if he leans dovish, it'll certainly be a case where he doesn't appear to be speaking on behalf of the committee. He's kind of speaking out there on his own, expressing his own views. It's fascinating because, again, he has not said a whole lot about his take on the economy, aside from his confirmation hearing before the Senate. So all of this raises a lot of questions. As you mentioned, stocks have extended their losses, and we now see the S&P and the NASDAQ losing 2/3 of 1%. Yields, again, have continued to stay higher. The 2-year yield up 9 basis points, the 10-year yield up about 2 basis points right now.
Joining us now to extend the conversation, former Fed Vice Chair Rich Clarida. Rich, are you surprised that it appears that one member of the Fed did not submit a dot?
Well, Lisa, thanks for having me on. No, I'm actually not surprised. I actually was inclined to think that Warsh would not submit a dot. But certainly the news that Mike McKee just shared with us, that you had 9 participants write down a rate hike, was certainly above what I've been thinking going into this meeting for sure.
Why do you think that is? What is it that the 9 members see that has taken the market by surprise, certainly?
Well, there was a big markup in core inflation projected relative to the March SEP. And I think the reality is that the pressure in core inflation that we've been seeing in recent data is not just a pass-through from energy prices, but it does appear to be more broadly based. And I think that's probably a factor in these in this reassessment.
Rich, the last line of the statement is the committee will deliver price stability. Nothing about full employment. How do you interpret that?
It's not in front of me here because I'm doing your show, but that is an important change to the statement. You know, by statute, the Fed does have a dual mandate, and that's also highlighted in the firm's policy framework. And I hope Kevin will be asked to elaborate on that at the press conference. We're at a point where we're at full employment, or at least close to the Fed's assessment of maximum employment. So I wouldn't read into this that they're abandoning the employment mandate, but clearly some important change in the language for sure.
Bob, what's your take on that?
I think they are concerned by the level of inflation. They are concerned about what they see in the CapEx cycle. They are somewhat scarred for 2022, and they don't want to repeat that mistake again. And they're watching other central banks coming out and lifting rates, and their bond markets responding well to that. So I think they're reconsidering certainly where they were last meeting, and they're getting us ready for rate hikes.
Rich, is there anything at all dovish in any way, shape, or form of any part of this 4-paragraph statement?
Not at first glance or at first listen. Again, at least for this meeting, Chair Warsh will have the bully pulpit, and I very much will be looking forward to seeing how he frames this and provides his own perspective. But certainly, I think we have an indication here, especially with that sentence, the committee will deliver price stability. That sounds like where he's going to land for sure.
So there's a comment here from Joseph Richter. He's one of our editors at Bloomberg Intelligence on our live blog, and he says that those who looked for a quiet first Warsh FOMC meeting must be disappointed. Rich, what will you be listening for in particular from Kevin Warsh when he speaks today? I know you said it'll be interesting to see how he frames his thinking, but what will be the one thing that you want to hear from him?
Well, let me give you more than one. Certainly, I would like to have him flesh out how the dual mandate fits into this at this point. Also, importantly, you know, he spent the last 15 years criticizing the Fed's big balance sheet. The Fed's growing, expanding its balance sheet now, and so perhaps moving beyond this meeting to the rest of the year into next year, how he's going to try to change minds on the committee about the balance sheet size as well.
Mike McKee, jump in here.
Well, I think Rich raises an important point. The only reference to the balance sheet is the Fed reaffirming its commitment to the ample reserves policy, which is generic enough to encompass both Warsh's desire for a smaller balance sheet and others' desire to maintain the quarter system that we have now. But the question is, do they go to that later? Is it just too much of a bridge to cross right now? Other points that I think are worth making is that while the committee dropped the bias statement and doesn't give any quote-unquote forward guidance in the statement itself, the dot plot is forward guidance, because all you're talking about right now is the 9 people who think that we're going to get a rate increase and that this tells you that the Fed is hawkish. So if Kevin Warsh wants to walk that back, he's going to have to do that in the press conference. Otherwise, the markets are going to be tilting in that direction. It's also interesting that they did say they're committed to price stability. What it seems like is that the people who were worried about inflation, that worry has spread. And as Rich noted, the core inflation has broadened out some. And so they are sending a message to the markets that we're not going to let this get out of control. We're not going to repeat what happened in 2021-22. We are going to focus on price stability right now. The unsaid thing is that we're basically at full employment, so we don't have to worry about that for the moment.
Mike, the other thing that jumped out at me is you said that we went from 18 dots to 17 dots for 2028. Is there an undercover supporter of Warsh policy in the FOMC now?
It does seem like there might be, at least someone who supports the idea that the dot plot is not worth considering. It could also be that one member decided that there's just too much uncertainty for 2028, and why bother to add to that by just guessing at where rates are going to be. We've had a lot of Fed officials over the years tell us that they just kind of throw something in for the third year out because it's just too hard to project anything that far out. I wouldn't read too much into that, but the idea that Kevin Warsh did not submit a dot kind of tells you that he's going to maybe push to do some change to the dot plot going forward.
If you are just joining us right now, we did get a statement that's 4 paragraphs long, much shorter than usual, with no reference to the employment mandate, with 9 of the 18 members opting to support some sort of rate hike this year, leaving the others either in support of just keeping things where they are or potentially cutting rates, being taken as incredibly hawkish. You could see the sell-off in treasuries extending. You could see 2-year yields now up 8 basis points across the curve, all rising, although this is yield curves flattening, this idea that potentially there will be some sort of tightening in policy. Former Fed Vice Chair Rich Clarida, final word from you. What's your question right now going to be for Fed Chair Kevin Warsh?
Kevin, you did not submit a dot today. There's no forward guidance in the statement. The markets are taking the information today as hawkish. Would you be prepared to comment?
Former Fed Vice Chair Rich Clarida, who might make a sneak appearance because that was pretty good. Thank you so much. Joining us now, Diane Swank of KPMG. Diane, what's your first take on this?
Well, I'm actually not all that surprised. We saw a major move in the minutes to the last meeting where a lot of people were moving towards that hawkish stance and saying we may need to consider rate hikes later this year. And in the interim period, we have seen even Fed governors, which usually hold their cards a little closer to the vest, some of them who I've never seen actually take a firm stand, talk about how the price stability side of the mandate is more important now than the employment side of the mandate. And that's exactly what you saw with that last sentence in the statement, was not that one was that we were not having a dual mandate. It's that the focus is on price stability, given the stability we've seen in the unemployment rate. And I think that's very important. What the Fed is saying, we're not going to take the inflation as transitory. What concerned so many at the Fed meeting in March, when we saw sort of the initial forecast, and there was a lot of uncertainty, but the minutes from that meeting really revealed how many people were already concerned about the data that was coming out that suggested that underlying core inflation was not only sticky, but maybe reaccelerating again. And I think that is where we're seeing this come from. It is beyond the energy shock. It is beyond tariff shocks. It's in that core super services component of inflation that we're seeing get sticky and hot and accelerate and not consistent with anything that resembles price stability.
I want to go back to that idea, Diane, that the statement ends with the committee will deliver price stability. From where you sit, what are the most reliable inflation indicators that the committee will then focus on? If it's, of course, the reported numbers, but when it comes to inflation expectations, you've got market-based measures, you've got survey-based measures.
You know, and none of these measures, they have at times, the Fed will never say inflation expectations are unanchored. And I think that's important. And a lot of these inflation measures on expectations do not look unanchored, although consumer sentiment certainly is not high at the moment. And I think the decoupling we've seen between consumer attitudes and their actual spending reflects the burn of inflation. And they're seeing that out there. They're also seeing in surveys like the ISM survey and the purchasing managers surveys, things where manufacturers are front-running future price hikes. That's the exact behavior the Federal Reserve is tasked to prevent, because that kind of hoarding behavior reinforces its own inflation cycle. So I think those kinds of behavioral shifts they're seeing out there, they're worried about the muscle memory of inflation. We're 5 years in, and inflation is still a problem. Whether or not it's all the Fed's fault or not is only one institution's responsibility to derail inflation, and that is the Federal Reserve. And that's what you're seeing them sort of put their foot down now that the labor market situation, although not perfect, is not in the precarious situation it appeared to be last fall.
You've noted, Diane, that one of the largest near-term hurdles for the central bank is the persistence of service sector inflation. What has proven to be the most effective way to bring down inflation in the services sector?
Well, it's a sector that has been sort of impervious to some of the increases in interest rates we saw. We did see wages cool, but they've not cooled enough to bring it down. And I think part of the problem we're finding in the service sector is, one, demographic, and the aging demographics and upward pressure on some healthcare costs. But we also have other factors pushing up service sector inflation, and that is inequality and the ability of very high-end consumers to spend up, to buy at the front of the airplane and buy first-class tickets, to spend at high-end hotels. All of that is buoying inflation at a time when many who are on the lower end or even in the middle part of the income strata are seeing their wages eroded relative to inflation, where we know at the highest end of the income strata that wages are actually going up more rapidly than inflation. And so that's one of the challenges the Fed faces, is they've got to manage to the economic aggregates when the devil is in the details underneath those aggregates.
Bob, you know what strikes me is that if you look at some of the economic projections here, a lot of people do seem clearly much more concerned about inflation. They revised up their core PCE between 3.2 and 3.5% for the entirety of this year, from 2.5 to 2.8 in the previous one. Throughout all of these, even the Fed funds rate central tendency was moved up between 3.6 and 4.1. At this point, Can we say we're at neutral? And can you say that right now, this is a Fed committee purely trained on inflation, just as Kevin Warsh reflected in that statement?
They're telling us that we're not at neutral, even though they're, the median dot. There's enough dispersion for higher inflation and higher rates. It's telling us that maybe the market was right. Before the meeting, the market was pricing in one rate hike over year end into next year. It looks like they looked at the market and say, hey, it's giving us a rate hike. Inflation's not going to be at our target for 5 years going on to 6. Maybe this is the opportunity for us to step in like every other central bank and hike rates. I thought we would get there. I didn't think we would get there at this meeting. The long end of the market likes it. Look at that. The front end's up 6, 7, 8 basis points. The long end's down a basis point. A Fed that's vigilant again creates support for the long end of the market.
Well, and actually, Diane, do you think that in some ways, just to conclude, this is actually a way to get the ultimate goal of rate cuts down the road by job voting the market into seeing this as a hawkish Federal Reserve?
I think it's important, and I think it's also an acknowledgement, though. I mean, the context is important here. 5 years without hitting its inflation target and 5 years of compounding inflation is a problem for the U.S. economy. And they now have more flexibility with the labor market showing some signs of finally generating jobs, stable unemployment rate for a while now, with the exception of the 6-week government shutdown and the weakness we saw at the end of 2025. And they're squarely focused on what they should be focused on. And I agree that the neutral rate is actually likely higher than what they thought it was. There were some that were moving there prior to this meeting as well, which means that in and of itself suggests they should have a higher short-term rate. And on top of that, we may need another hike as well. I still expect 2 hikes by year end.
Wow, Diane Swonk, thank you so much. 2 rate hikes by year end. Can you imagine what that would do to markets?
There are a couple of dots that point towards that direction, but the majority see 1.
Do you see that in any capacity? 2 rate hikes this year?
Oh, I think it's possible.
You do?
Absolutely. There's a lot of underlying growth and CapEx in the economy, and we don't know whether the Middle East will be worked out. It's certainly not impossible.
Joining us now is Matt Lazzetti of Deutsche Bank, who's had a few minutes to look through this statement. What's your first reaction, Matt?
Yeah, I think this was towards the hawkish end of what we could have expected. The 2 things that I was focused on ahead of the meeting were, 1, how many dots were going to show hikes this year. You have half of the dots, 9 of them showing rate hikes. 6 of them showing 50 basis points or more of rate hikes. That has to be towards the hawkish end of expectations. The second thing, and what drives the hawkishness in the dots, is the upward revision in their core inflation forecast. This year they went up to 3.3%. I think really critically next year they went up to 2.5%. You have a median expectation in the committee that more than 6 years into the inflation shock, inflation has still not gotten down to 2.5%, and within 50 basis points of their target. That is what's driving the necessity for potentially higher rates.
So one of the comments from Ira Jersey, who's our interest rate strategist here at Bloomberg Intelligence, says that Warsh's stamp on the statement seems fairly evident, with language moving closer to the style used before the global financial crisis. Is this a move to make the Fed less transparent, Matthew, with the statement really brought down, the word count brought down, and the length of it reduced to the point where this is going to be a Fed that perhaps will surprise markets going forward, as opposed to really calming them into submission?
Yeah, I don't think that we learned too much about that from the statement today. I think the reality is that there was a lot of superfluous content in the statement. There was a 4th paragraph that has been in there really since the COVID shock, and was probably unnecessary from that perspective. But it is clear we're just going to get less information in the statement. It'll be interesting to see how much additional information Warsh provides us in the press conference. He's been both critical of forward guidance, so I don't think that we get much more of that, but he's also been critical of data dependency. So the ultimate question is, what do we hear from him about at the press conference? That's still an unknown from the market's perspective.
What's the one thing you want to hear from him?
So I think I'm going to piggyback on Vice Chair Clarida's question from earlier, and it's a clear signal from the committee that higher rates might be needed to tame inflation. The market also believes that higher rates might be needed to tame inflation. We know that he didn't submit a dot yet today, but does he agree with the skew in those expectations that higher rates might be needed? And if not, why does he not agree with it?
Matt, don't you think that the dots give us a lot of information? Won't you be sorry to see them go? Look how we talked about the dots nonstop. We looked at the 9 voters that were looking for rate hikes. I would miss them. I don't know what being less transparent and more opaque actually does for the markets or for the Fed.
Yeah, I don't know that I'll miss the dots, to be honest, Bob. I think too much focus is put on them. I'm sure Chair Warsh is going to mention that as well. I think ultimately, over time, they will go away. I think Warsh doesn't think that they serve a good purpose of actually providing meaningful forward guidance. I think they think that it's too precise. The market focuses too much on it and not the uncertainty bands around it. So eventually, I think that they will go. I think we'll be left with an SEP that shows the central tendency on Fed funds rate expectations, shows the range on Fed funds rate expectations, and that gives us the sense of overall where the trajectory of policy is going to be without kind of catalyzing us around one imprecise estimate from the median.
You know, Matt, even if Kevin Warsh doesn't want to talk that much, the Fed chair can't muzzle everybody else. And there is a risk that potentially everybody else will talk a lot and give their perspective and suck the oxygen away from him, who's not saying very much. I mean, at what point do we end up in that type of scenario if the press conference holds true to what we're seeing, at least in the statement?
Yeah, I think it could be over the next week. I mean, if we don't hear very much from Chair Warsh today, I would expect that we do hear a lot from other committee members over the next week. It's a very strong signal from the dot plot and the SEP that higher rates might be needed, and so I would expect that we hear from a number of those committee members. But exactly because of that, I actually don't expect that Warsh gives up his opportunity to do the press conference. There's some questions or speculation that he might not do a press conference after every meeting. I think he will, because it at least gives him the first chance to frame the meeting. Today gives him the first chance to frame that dot plot, which kind of clearly skews hawkish, and potentially push back on it if that's in fact what he wants.
Bob, who would you listen to on the FOMC if Fed Chair Warsh takes a back seat to communication?
I'd listen to Waller. I think Waller, to us, was somebody who is very reasonable, very rational, is very balanced, looks at the full picture. He would have made a very good Fed chair. It didn't work out that way. Look, Kevin Warsh will be fine. He's a very credible, capable Fed governor. Clearly, he didn't go in with the dovish bias that we all assumed he was sent in with. I'm dying to know how the president's going to react to this. His first meeting, everybody wants to now start hiking rates. That's certainly going against his thinking. But look, Warsh has proven that he's his own Fed chair. He'll do what the data tells him. We're in good hands with him.
As far as I know, we don't have any social media posting from the president yet. We'll wait to see when new Fed Chair Kevin Warsh begins speaking. Going to the idea of forward guidance, I wonder if the effectiveness of forward guidance is asymmetrical, Bob. I ask because Rick Reeder of BlackRock says that you want to over-communicate when you are loose, when you're tightening policy, but you want to surprise when you loosen because it's more effective that way. It packs more of a punch. What do you think?
I don't think so. It reminds me of the years when the European central banks used to ambush the market and come in, and it created a shock one way. It was very disruptive to the markets. I don't think it accomplished anything other than create losses in some areas, and it wasn't sustainable over time. I think we're in a world where there's a lot of information, there's a lot going on. The complexity of what the Fed has to deal with is real. They have a lot of tools at their disposal which didn't exist pre-COVID or pre-GFC. I want to know how they're thinking about them. I want to see detailed forecasts. I want to know what direction they're moving in. Yeah, I may agree, I may not. It's not a big deal one way or another, other than it just gives us more information.
Matt, do you think that there's plausible deniability? Potentially, you have a Fed chair that says, you can't say it's hawkish, I just didn't say.
I think maybe he takes that tack, but I think he's going to have to present an alternative case at this point, because the case that is presented by the forecast and the dots at this point is clearly hawkish. And so if he's not in line with that view, I think he'll have to present an alternative case. At this point, there's not a kind of a plausible or realistic alternative case, I think. I think you have an economy where the labor market is strengthening. It's at worst stabilizing, at best reaccelerating. You have inflation, which is entrenched at elevated levels. It's broad-based. It is not simply about tariffs any longer. You have financial conditions at very easy levels. You see growth is actually solid, as we saw with today's retail sales report. And we've argued in recent research reports that the Fed very likely could be accommodative at this point in time. So I don't actually see the strong case to push back against against it, but he would have to present that case if that's in fact how he feels.
Matthew Lazzetti of Deutsche Bank, thank you so much, and I look forward to catching you in the weeks after the press conference. Bob, just about 2.5 minutes to go before we hear from Fed Chair Kevin Warsh. What are you expecting as we see two-year yields now 9 basis points higher, with people really surprised by the hawkish tilt?
Yeah, and again, and I think Diane said it, you know, she kind of expected it. Maybe we should have expected it. We all thought it was coming in 2 or 3 meetings from now, not this one. So clearly the market's telling you it didn't expect it. For me, the question for Warsh is, removing the dots isn't a regime change. That's part of it. What is it that he finds most outdated about the Fed's framework, and how would he go about changing it? The dots are just one component of what bothers him.
Yes, also the balance sheet. Also, when it comes to just how liquid some of these instruments have actually been. Bob Michael, thank you so much for being with us. It is always a pleasure having you in studio. Scarlett, we are awaiting Fed Chair Kevin Warsh to step to the podium for the first time as head of the U.S. Central Bank, the central bank to the world. This is the 5th central banker, the 5th Fed chair going back in the past 40 years, and clearly he is putting his stamp on the institution.
And a lot of people say maybe he's going back to the Alan Greenspan era, where you don't say a lot and you kind of keep the market guessing, rather than what Ben Bernanke ushered in, which is more transparency, and Jerome Powell kind of took that to new levels as well. It's worth noting here that not only are yields higher, stocks are lower. You've got the S&P 500 down 0.6%, the NASDAQ as well. The president, of course, is in Europe right now, has not, as far as we know, given any kind of comment. He had just praised the stock market, saying it was the most brilliant thing and smarter than anyone else. So we'll wait to see how this all plays out over the next 30, 40 minutes.
Yeah, if you take a look at what Scarlett was just talking about, when it comes to the equity market, you're seeing S&P in particular take it on the chin. Also, the NASDAQ, as people look forward to hearing from Kevin Warsh. In the yield space, two-year yields really leading the charge here, 4.14%. That has ricocheted higher by about 9 basis points. You could see a similar move on the 10-year yields, but the long end of the yield curve, as Bob Michael mentioned, really likes this. You can see a 2 basis point decline, 4.92%. A promise for stability, a promise to get some sort of control over inflation that has been, clearly they predict it going up in the near future. And this, to me, is sort of the interesting thing in their forecasts.
Yep. Kevin Warsh due to come out any minute. There's a lot of question marks about whether the news conference itself will be shorter in the same way that the statement was.
Right now, we have Kevin Warsh going to the podium. Let's take a listen to new Fed Chair Kevin Warsh starting his news conference.
It's an honor, a true honor, to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment, both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little.
We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something, a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Howard Schneider.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall and hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Colby.
Thank you so much. Colby Swift from the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then, I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and, forecasts that are coming down the pipeline.
Yeah. I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market, but broadly I would say Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
Mike McKee.
You've said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end of the year. And the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability. And there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly, through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come, and some of those might well be worthy of a press conference.
Chris Rugaber.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trimmed the mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this. Almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Edward. Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable.